And we're back Monday. Oh, slight echo in here. Oh, well, we're gonna have to deal with it.
All right, sounds good. Frank, good morning.
How was your weekend?
It was good. I was out in Denver visiting some friends. It was even hotter than it was in Chicago, 100 degrees. But I didn't mess up the moneymaker. Didn't
How would that happen?
get too sunburnt.
Okay.
It happens quite easily for
You're
you
looking
boy.
actually very pale, if I'm gonna be honest. I don't even mean that in a negative way.
You kind of did though.
But how do you deal with the sun? Like you don't
I wore a hat.
but you don't let your skin get any sun prior to putting lotion on.
I did. I went a few hours this weekend. No SPF. Sorry, Mom.
Seriously.
Yeah.
Maybe it's the lighting.
Let's go with that. Yeah, I'm feeling tan. This is about as good
You
as
look
it gets.
great. You look really
Thanks.
good.
Yourself? Weekend? Exciting?
I want to hear more about Denver.
It wasn't too crazy. We went to a creek where all the Colorado Boulder students go. It was popping off.
So you and your 23, 24-year-old friends went to the local college.
Literal. No, we went. Stayed in Denver. There's not, as much to do in Denver
As
like
Boulder.
proper. Boulder. My friend's parents have a place up there. It's 5 degrees
okay.
cooler.
All right.
So we stayed up there, did a little hike, and then
It
went
is
to this.
beautiful. Boulder's beautiful.
Went to Boulder Canyon, and to my surprise, there were a ton of because school is out, but I guess people stay the summer in Denver or in Boulder. So
That makes sense.
college town, whatever. It was good. time.
Anything nefarious?
Nothing nefarious. Went to a pool hall. But it was really
man.
bad. Yeah. I wish I had more nefarious things to do. But
It's just not fun anymore, dude.
I know I'm trying.
Like I supplied this network with 5 years at least of just like doing a lot of dumb stuff from like 23 until really honestly maybe the pandemic. So like 2016 until the pandemic, I was like squarely doing dumb stuff.
I mean,
For you it was like 6 months before you got like a girlfriend. All your friends have girlfriends. Like you're not.
One of them was married that I was with.
One of your friends is married.
Yeah.
Okay.
So yeah, not the crowd, but I did like drink a lot. Is that cool?
No, that's the least cool thing. The drinking is only cool if you ended
If
up
it
doing
leads
cool
to-
stuff. Yeah.
Got
But just like,
oysters.
I had like 50 beers and then shot pool with my buddies.
Not as cool.
Not fun.
Damn. All right.
I could do that, dude.
Anybody do that? Yeah. It was good.
Okay.
World's hottest plane on the way back. Oh my
Oh, really?
god. It was 100 degrees in Denver. The plane was probably 98,
That stinks.
and they were like, "Oh yeah, we're delayed because we're trying to fix the AC. Sorry to you guys in the back." And then it just never got better. Luckily, we took off, but it
Wait,
was
they
just
were
constantly
delayed because they
sweating.
were trying to fix the AC, which they didn't.
Correct. So I think they
Air
were like,
travel is just brutal.
it's so tough. And so and then I was starting to go crazy because they didn't make that announcement for the first like 30 minutes.
Okay.
And I was like running a
You're
little late.
hungover. You're like, oh
And
man,
I
am I dying?
Seriously, was like wiping sweat and checking everyone around me like,
Everyone's just
is
staring
it just
at you.
me? Yeah. Someone like put on a sweater. I was like, gosh.
Well,
Yeah.
I'm glad you made it through all of that.
Man, me too.
And
Still
then
hot
you
here.
got here and it's super hot.
Yeah, man.
I'm sweat. My shirt is is wet. I walk into work. It's beautiful. It's nice to see the sun is up now at like 5
Great.
here in Chicago. It's amazing, as opposed to walking here in the dark, which I do for half of the year. But now it is like I have to find it. I just got a new backpack as well.
Nice.
And I need to find one. I'm getting older, and I feel like older dude with backpack is not a cool look. And then
I
two-
contend that you walking down Milwaukee with a briefcase, walking as fast
I'm
as
not
you
wa-
do,
with a
looks-
briefcase.
Gotta go to the most important thing ever.
I do need some kind of alternative though, because your back just gets rocked. In
Messenger
the summer
bag?
heat.
A little satchel?
I had one of those, but like you put a computer in that, and it's like it doesn't like it just bangs against your hip. Also, any of the crossbody bags, and this is no anybody who wears these or anybody who's maybe sitting 10 feet away in the production area that maybe wears one of these, no disrespect whatsoever. The crossbody bags, they present as soft.
You could have just said not for you, but yeah,
I could have
sure.
said that. I could have said that. But especially when people started doing the fanny pack across the chest thing,
Yeah.
instantly out. I was just like, I don't even know where we're coming from with this.
That's a UK thing.
Is that where it started?
The Mendem. Yeah.
What does that mean?
Ask our friend Kyle.
Mendem?
Yeah, the Mendem. The boys. You lot.
I don't know. I don't know what any of that means, but that was one of those trends that I was like, okay, maybe I just don't get it, and then I absolutely never got it, and now I think it's fully aged out. Like,
All right,
does
well,
anybody your age still do the crossbody
No,
fanny pack?
just my British friends. A couple of them still do it.
I didn't even know that it was a British thing.
I don't know.
I thought it was like a streetwear guy thing.
Yeah.
Like around, I live
But
near the Supreme in Chicago, and that's probably the highest per capita fanny pack across your
Okay,
chest.
but think about it. Streetwear, where does it always come from? Something
I don't know,
cooler.
the U.S.? Dude, you
No.
really have this thing wrong, and I'm
No.
excited for you to age into respecting and appreciating U.S. culture. Because
I'm just saying
they were like
streetwear comes
drinking
from-
tea and wearing big like frilly dresses
I'm just
until
saying-
we started showing them what to do.
I'm saying streetwear usually comes from something more practical or like more original, and so like UK gang culture started.
don't
I
have the
think.
internet. I don't have the internet.
And
Look up where the fanny pack across the chest thing started. And actually, it kind of proves my point. This is one of those rare occurrences where I'm covered on both sides, because if it is the UK, it just proves that it's dumb. And if it's not the UK, then the US is the center of innovation once again. Origin, just search origin. Australian women?
well, that was not on my bingo card.
Okay.
Okay, medieval era Britain.
Honestly, respect. Australia. That's one of those places that, like, if it's goofy, you kind of just have to be like, good for them.
You got something.
They rock the goofy stuff.
Because what they don't have right now
Oh, man.
is a strong currency.
No.
Sorry, Australia. Sorry to dunk on you this early, but yeah, it's when we're looking at our biggest movers of the morning, a lot of action overnight as we expected, but maybe not where you would have thought. We've got U.S. dollar strength against European currencies, a big bid in the U.S. dollar against the Japanese yen.
Yen's just getting rocked.
Yen's getting rocked, and then Australian dollar, New Zealand dollar, in a big way, getting rocked. Most surprising to me, unchanged. U.S. dollar, Swiss franc, getting a lot of U.S. dollar strength across the board, perhaps getting canceled out with some sustained safe haven demand in this Swiss franc. But yeah, this Australian dollar, we'll see similar charts here across the currency space. It was a bit surprising, Sunday night open, not seeing U.S. equities definitely open lower. Now paired all those losses, but we did have some gaps in currency markets, U.S. dollar pairs in particular, opening lower, staying around there through the Asia Open, and then through London till now, getting hit really hard as we saw a lot of this U.S. dollar demand come in this London Open.
A couple interesting things. You're exactly right that the Open was so much more boring than I thought it was going to be. I talked with our mutual friend Peter.
Good guy.
And I think we were all expecting a U.S. dollar bid, and it was just not really there. I mean, you see that gap, but that's all of 20 points here in Aussie. And if you go to, I mean, you can go to, Euro dollar.
A bit bigger.
Yeah, opened below 115. But like I was fully expecting
No
some
momentum.
100 point plus moves.
Sure.
And we didn't see, I don't think, any 100 point plus move in any of the US dollar crossed with other major currencies. Now, what's been interesting is as the news has started to be digested through Asia and Europe here and heading into the first US session of what is likely to be a pretty volatile week here. It's all coming out US dollar, which is, again, I think what people would have expected. But that head fake is really, really interesting to see us open down at 114.60, which again, we opened down there and they press those lows for a little bit, and it's like, oh man, like we might get down to 114. And I'm talking to Pete, and it's like, man, it'll be interesting if they try to take this market down to like 113 or 112 this week. Very much doable. And then they erase all of it. And yeah, we're back above 115 by pretty much midnight in the US. And it's one of those rare occurrences of like, you think one thing, you start to see that move play out, they completely erase it, and it's like, okay, actually, this isn't that much of a story at all. And now as we get into the U.S. session, they are putting a pretty good bid in this U.S. dollar. And I think back, if you go to the daily chart on this euro dollar, if you think back to what was, put more data in this, what was one of the big movers for Eurodollar to the upside. I don't know if it was that early March move or maybe it was that early April move. One of those moves was that Germany is ramping up their military production, and they're going to put a lot of money into whatever, the whole thing.
Defense spending on the heels of Ukraine, Russia.
Exactly. And it was one of those stories that, like, again, I don't subscribe to pretty much any news sites, but it did shake this market out of a range. And again, I don't remember if that was, remember we were trading the 102 to 104, and then we completely moved beyond 104 and haven't looked back whatsoever. And then we were trading that 108 to 110, and then we completely wiped that out, and we haven't looked back at 110 since. It was one of those moves. I think it actually might be that one of those mid-April moves.
This was
there was tariff stuff going on.
Liberation Day was one of these.
Yeah, whatever. Anyways, this very much feels like and felt like one of those news items as well, where it's like, okay, like, you know, you can interpret Trump and everybody else however you want, but we flew a bunch of missiles into Iran, and it doesn't seem like we're going to stop spending on defense. It seems like at this point, everybody is into the idea of at least more defense spending, if not war. And how that doesn't translate to bullish US dollar is, it's hard for me to make a case for it not to be. Now, of course, the flip side of that coin, that, well, then Frank, why aren't we down at 112 or lower? Because there still is very much a case for there's a little bit more spending on defense, but this isn't war.
Right.
Iran and Israel, the Middle East tensions kind of calm for a little bit. Of course, this is, you know, an over 100-year tension, so I don't think it's necessarily going away, but it's alleviated in the short term, and then the euro dollar stories that have been going on take over once again. That's what makes, you know, an even 50-50 market here at 114.50, even though, yeah, I would have thought that this US dollar would have been on a much bigger run against euro and pound. And yeah, I'm surprised to see them wipe away all those dollar gains, but I'm not surprised now as we enter the U.S. session to see some pretty big U.S. dollar bids.
Yeah, I absolutely agree that in terms of headlines, that feels like it carries similar weight. But I guess it kind of when you think about it, we already have such a robust defense budget that maybe this doesn't even mean we need to spend more. We just happen to use something that we've been stockpiling for decades. But yeah, I think right now with this London Open, what it calls out to me is that right now we're just kind of seeing some of the oil play out, that, not necessarily any particular safe haven demand here, but perhaps euro, pound, Europe in general has a bit more of that oil dependency, as now an Iran escalation could, last week we completely, the initial headline was, oh, they're going to block oil through the Strait of whatever that is, and then that kind of went away. Now I think that's back a little bit, and the U.S. definitely less affected as such a major oil producer. But what's been surprising to me over this hourly candle is, you can see absolutely where the buyers are and forming pretty strong resistance over the past week here, not getting too beat up past 115. Definitely sets the week up very interesting in this market in particular, with an 80 pip range, 70 already coming into this
for sure,
and two-way.
Yeah,
So.
nice to see. It's a solid range, and you're exactly right that now just getting into the price action of it all, this market completely unable to fall below 114.50 for the last several days, even again on news stories like what have been developing the last 48 hours or so. But if we go over to dollar yen, completely different story.
Yeah.
This has just been a runaway train here. A market that looked at 145 for a long minute at the end of last week, and has looked at 145 so many times over the course of the last several weeks, and has been unable to sustain bullish action above 145, and has now just completely blown it out. And this is what I was more envisioning for that euro dollar market, for these dollar-based pairs across the board, is a dollar bid on the open, and then just like some new range.
Yeah.
Again, going back to that euro dollar story where it was just like, I remember coming to my monitor and I'm like, oh man, euro's up 200 points. What the hell happened? And it's like, oh yeah, Germany's, doing whatever. There's always a reason for these things, it turns out.
Really? Just that.
and then it just never came back.
Yeah.
And it was
we've had 3 successive moves like that, where the trading range just categorically changed to the euro's favor.
And it's so interesting to me to see, and look at right now, they try to break 148, but have given back 30 points. Pretty interesting price action right here at 148.
No gap here, and same kind of stutter, little fake out.
Well, this is what I'm saying. Yeah, I was watching the open, and then I was checking in on prices during the Thunder game, and it was just like, oh man, this is all over once again. Like, this is completely done with. But it's funny, in the same way that euro seems so strong because they're unable to get even down to 114, this yen seems so weak because they're unable now to even bounce off of 145 or 146. We're clear above 147 at this point, and we'll see how much ground they give back here at 148.
This is looking stronger by the minute.
But it's funny how different the dynamics here are, because you go to those commodity currencies as well, and I would have expected that with a bounce back, if euro was going to outperform yen, let's say, I would have expected Aussie to outperform euro, and this one is now threatening to completely unravel. This Australian dollar, as you put more data in here, is now back to lows for the last month of trading, and is, in my mind, vulnerable of getting back into that 62, 61, 63, that kind of area that we were just stuck in for months.
And finally building throughout the start of June, breaching 65 cents. Yeah, I mean, once you're through this 64-cent level, I mean, that was pretty strong support on the way back to where we are. But yeah, now we have a lot more recent historic context for, moves all the way down to 60 cents. But again, to me, it's after looking at this yen chart, most surprising to me is that this dollar Swiss franc pair is staying as congested as it
probably
is.
A lot of canceling out. Like
Right.
if Swiss franc is going to be the true like neutral flight to quality, and U.S. dollar is kind of the flight to quality for this story in particular, a little bit of canceling out here. But yeah, man, I mean, some pretty interesting price action. If you were trading,
why so disconnected to the yen then? If that's another historic safe haven?
I think yen and Aussie have some specific
Larger
dynamics
export ties, perhaps.
that are really, like flight to quality has nothing to do with yen at this point. It's like, I mean, if you pulled up the euro yen chart or the pound yen chart, it's a bloodbath for the yen compared to any of these markets. It's been absolutely brutal. I mean, yeah, we're staring at now here in euro yen 170, which is
Oh man,
right back to those highs for multiple years. And so, yeah, some interesting dynamics. I think that if this euro dollar market gets down below 114, we might see that kind of all out dollar bid that I was thinking might happen last night. And I think a lot of people were probably projecting going into this week. Thankfully, and nothing against the holiday last week or the holiday this upcoming week, but this is just a solid, no weird schedule week. No 4th of July, no Juneteenth or anything. I believe that Trump already has some scheduled speeches he's at some summit, which I am positive there will be some volatility around that. Powell speaking as well. I don't know how interesting the Fed activity is at a time like this. Oh man, this is his testimony, so he's got 2 days.
Yep.
A lot of stuff here this week on top of just the organic price action of the potential U.S. entering Middle Eastern war. I mean, I don't know what technically we call war, these different things, but the action over the weekend, obviously this isn't over with for at least the next couple of weeks here. So much stuff to be trading around and so much back and forth already.
There you have it. We're set up for an exciting week here in the currency space. A lot of movement overall, but to take you into the trading week, we have Tom, Tony, and Vanetta up next, so stay tuned. Actually, it's Liz and Jenny up next. Stay tuned on Tastylive.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
You can can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your It's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Hello, everybody, and welcome to my favorite show of the week. Actually, you know what? I can't say that because we're going to be doing this again on Wednesday, Vanetta. I would like to welcome my two gorgeous brunettes, one to the left, one to the right of me, one Vanetta Logan, and one Jenny Andrews. Hello, ladies.
Good morning. Good morning. Vanetta, I was so looking forward to this coming on with you, but it was funny when you texted the other day and said, looking forward to working with you. I said to Liz, are we going back on the road with Vanetta?
Yeah. He said, Vanetta, this is what I have to deal with. And I was like, no, we're on the morning show.
We're on the morning show, yeah.
Yes, because the boomers are having a European brat summer, and that no one wants to work anymore. So we are switching up the scheduling and the programming every day this week while Tom and Bat enjoy some much needed time off in Europe.
I mean,
Today the ladies take over.
So they are in Milan. Well, not Tony, but Tom and Dylan are in Milan, and we believe
Rich,
we're just
and
wrapping up
Rich
the show.
McDonald, yes.
Oh, I love Rich McDonald. I've never met him in person, but I love his energy. Doesn't he? You've met him, right, Vanetta?
Not in person. Not in person.
Yeah, I love his energy.
But yeah, he's super nice.
Yeah, he's the best. He is the best. So, Vanetta, did you have a wonderful
London show
weekend?
was Friday, and I heard that was a huge success. And then they just finished the Milan show. Sure, that was a huge success as well.
I believe so, yes. We got a couple of photos and videos from London. It looked like a packed house. But obviously I was not there, so I can't tell you. I mean, you know as much as I do, but Brittany sent some photos, and we have some photos.
Oh,
there they are.
Oh, this is awesome.
Dan in our London office. Dan is our London Garrett. So
That's I like that description. Dan is our London Garrett. This is perfect.
Yes.
Oh, there's Rich.
Oh, yeah, there's Rich. And looks like a good turnout.
This is awesome.
Tom looks tan.
Yeah, that's what I was gonna say. Looks like he got some sun.
Okay, and the guy behind him is from the not the SIBO, the
CME?
CME,
thank you, yeah.
Yeah, look, he's got some color in his cheeks. Look like a big crowd. Look at the crowd. Looks great.
Yeah, thank you to our sponsors.
That's the SIBO and the CME. Yeah. I didn't know they were taking them with overseas. That's fantastic.
That's how we get money. We're like, hey, you want to go to Europe in the summer? Give us some money.
Yeah, because this tour sponsored by CME.
Yeah, there's Bat also looking very tan.
Oh,
you know, it was so cute. Bat's wife was posting his pictures of him on stage on Facebook. It was so cute.
That is cute. Yeah, and then he took his wife and his son Vinny, and I think they went to Paris and they went to the Louvre, and they're doing a bunch of other things across Europe. So not too bad. If I was a teenager, I would have loved to have gone to Europe for the summer.
No kidding.
Vinny lives the life.
Vinny Van Gogh is living the life, but that's okay. We love it. We love Vinny Van Gogh. He's like the cutest.
Yes, but you can check out our events page, tastylive.com/events, to see if we are coming to a city or country near you. This wraps up our international component, but so many more places to come and visit. And maybe next year, you ladies will be on the road.
You know, Vanetta, we're going to Germany this fall.
You are going to Germany. I was remiss when I said that wraps up our international event because you guys are going to Munich for Oktoberfest.
It's a different event. It's actually through the SIBO. Which, Vanetta, did you hear the breaking news? Tomorrow, you're doing the show with Mike and Nick, and they're fantastic. We love them. They're doing a wonderful job, and I like when you guys do the show together. But we're doing the opening bell live from the SIBO tomorrow.
That's amazing, because normally you guys are a little bit later in the trading day, but you guys are going to be right there when the gun goes off.
Yes, and they actually have someone ringing the bell tomorrow, so there's going to be a whole group ringing the bell. We'll get live footage of it. It's going to be a lot of fun.
It will be fun.
It is fun.
So I would be remiss to say it's interesting because we are down there now, twice a week. And I feel like there's a lot of action. But when you talk to the viewers, I don't know if it comes across as a lot of action. That's where, right, Jenny, don't you kind of agree? Sometimes people tell us that, oh, it seems so quiet there. Well, we can see the action around us. So hopefully the bell will be a little bit more different
and
too.
We're using unidirectional microphones to pick up, to get super technical, but to pick up your sound and then sort of mute some of the other sounds. So it's there's some production tricks that are in there.
Right. So it's definitely loud to us, but not to the viewers. So, but it is very busy down there. Very busy.
It is. And I've been down there and I can attest that but it's fun though.
It is fun. It is fun. It is fun.
So much energy. We love it.
And Vanetta, I don't know if you saw this, but JD and his bunch of his friends came down, so we had him on, and we were.
Oh,
and
I
the
didn't
whole way,
see that.
Yeah, and so he just was on for 30 seconds because I was like, the viewers have seen him grow up, so I was like, let's just pop this kid on for a couple seconds. He was so nervous.
He was so cute. He did such a good job. He was so cute on air.
Yeah, he did a good job. Okay, Vanetta, did you survive?
Sorry that I missed that.
Did you survive the heat this weekend?
I did. It was obviously it was too hot to take the bike out because I would have died.
Yeah.
But it was hot. But I had a friend. She came into town, so I got to have dinner with her Friday. And Friday was not too bad. Like downtown, we like walked around afterwards on the Riverwalk. We got some pizza at like a new pizza place. It was actually really good. So that was like not too bad. But Saturday and Sunday were like really, really, really hot.
So is it cooler in Chicago? I mean, I should know this, but like, isn't it just?
It is cooler by the lake. It is.
Yeah,
it is
you
a
get like a lake
phenomenon that naturally happens, but it's still like. But I don't live by the lake. I was downtown, you know.
So
but I
I've been watching. So I've been on the lake all weekend, and I've been watching my Boaters app. There were like 20 plus knot winds coming straight from the south, blowing in the hot southern air, and it was also creating. Over the last few days, we had so many rip currents on Lake Michigan. I don't know if you heard the news or saw the news, like 12 people. Yeah, 12 people were rescued from Lake Michigan over the last few days.
Well,
I think a lady died by Navy Pier, which is so sad.
But so with the massive winds, and then you get like it's got to be a certain, movement of the water, and you get these rip currents. And there was red flags at our beach every day, and on Facebook they kept saying like red flags, don't go in the water, rip currents. So
you gotta heed those warnings. Like you gotta listen.
But that's why it was so hot. The high winds coming straight from the south.
Jenny will heed all warnings, so it's fine. Like,
Lily was into her knees, and I was yelling like, "Rip currents, get out of the water!" It was so hot, so everyone was still in the water. Even though the waves were bad, everyone was still going in because it was so hot.
Sure.
Yeah.
Yikes.
So it was a crazy day on the lake, a crazy weekend for sure.
No,
Liz, how was your weekend?
I don't know if you guys can tell. This is the tannest I've ever been in my life. I spent the entire time in the pool. I did not get out. I did not pass go. I did not collect $200. I stayed in that pool all weekend.
See, that's where it makes sense to have a pool. Is then that way there's no rip currents and there's no sharks, and then you're fine.
Correct. All I had to deal with was 18-year-old boys because they didn't leave my pool either. And I was like, get out.
Well, you look tan, Liz. You look tan.
So at one point, my husband goes, should I go put on a Speedo and see if that can get him out of here? I was like, do it.
Oh, no, Dan, no, don't do it.
I was like, do it. I want him out of here so bad. It's pretty funny.
More importantly, how is Will Ferrell?
Oh, he is on Prozac now.
Yay!
So
sometimes we all need a little bit of help.
He's calmer. He's much calmer. It's pretty funny because there's so many people in and out of my house, and he's a very aggressive dog, so he had to take a little bit of the edge off. But he's doing great on it. So yeah, he's doing great.
Yeah, how is he? How is he now being on Prozac when the people come in and out?
Great. Like the 18-year-old boys were in. Like I said, I've got, and they're all huge because the basketball team. So everybody's 6'6", 6'7" coming in, and he'll just like roll over and let him pet his belly now. So yeah, Prozac.
I got to get clearance on Prozac.
Prozac
and Sophie. I think everyone.
Oh, well, I'm glad he's okay. That's so funny. Oh, Will Ferrell.
Oh, yeah.
Will Ferrell is Liz's dog, for people who are confused. They're like, why are they talking about the actor Will Ferrell being on Prozac? We're talking about Liz's dog.
And we have to pet his belly every time people come in, yes.
Yeah.
He's a rescue. He came with the name Will Ferrell. So he goes back. So he goes back to the rescue all the time because anytime we go out of town, I don't leave him with the kids because there's too many kids in and out of my house.
Sure.
Maybe now on the Prozac we can, but he's going back to the Clink on Wednesday But yeah.
Oh, because Liz leaves for the Mayo Clinic this week, Vanetta. I don't know if you knew that.
Oh, and Vanetta, do you know how hard it is to go into a rescue and not try to take them all home? I almost walk home with that cat every single time.
Adopt all the animals.
They're so cute. And I want to be like, I'll take that one and that one and that one and that one. Right? You can't go there without wanting to take them home.
Yeah.
Oh, my goodness.
Yeah. Yeah, so this week is a crazy week because we've got the morning show today. We're at the SIBO early tomorrow. We're doing the morning show Wednesday. And then Thursday, I have Glenn on, who I love Glenn from FX. And then Friday, I have TP on. So it is a busy, busy, busy week. Lots of guests, lots of schedule changes.
Yeah, we're going to be trying some new things this week with varying results and switching up some of the things, but I think it's going to be good. Like, you know, just good to try new things. That's all. So.
And then next week, Tom and Tony will be back from their European vacation.
Yeah. What's your over under on them bringing us back some presents or gifts?
Zero. Zero. No. Tony will bring you something. Tony will, right?
I'm asking what your over under is.
I say Tony's 80% and Tom's a 0.
Okay. Wow.
I don't think I can guarantee you 100% they're not going to bring Liz or I anything, but Tony might bring Vanetta something.
I just like when it's like snack. Like I love European candy and like snacks and stuff like that.
Well, you went to London. You went to London with Tasty before.
Yeah. We were doing some work over there. But that you guys should go. That our London office is really cool. There is a rooftop garden on the top of the IG building. It's very British. It's gorgeous. It looks out over the Thames. And it's just a really nice manicured garden, just like right on the roof of the building. So it's really nice.
And what is it that you love? Toasties? Isn't it Toasties that you love?
Oh, Toasty. Yeah. Toasty cheeses. Yes. I love Toasty cheeses.
What are Toasty cheeses?
It's like a grilled cheese. It's just like, and like chicken bakes from Greg's, which is like a Dunkin' Donuts. I get like the British Dunkin' Donuts. I don't know. I'm very easy to please.
No, but when I go there, I'm going to think of you, and I'm going to get a Toasty, and I'm going to Greg's.
Yeah, because right next to the IG office, so you can go right there. So it's
very
maybe
cool.
I'll go over spring break. We keep trying to decide what to do over spring break. Maybe I'll take Lily. We'll go visit London and Paris. Go on the What is the train called that goes underwater? The Channel?
The Eurostar is the train line that goes. Yes, it goes under the Channel. Yeah, it's only like a 3-hour train ride to get to Paris. So
I've taken it. I've been in the Channel.
I've taken it, but so long ago, like decades ago.
Oh yeah.
I know, but like here, like the Midwest is so vast. Like you ride for 3 hours, and it's like, well, you're in Battle Creek, Michigan. You're like, welcome to Battle Creek, Michigan, everyone. Like, I don't know. But
no, it's true. It's true. Because right now I'm on the border of Indiana and Michigan, and the kids are like, oh, it'd be nice to go up to Traverse City or Mackinac Island. I'm like, that's like a whole day's trip just to get up from the south.
Hours of driving. Yeah.
Yes.
Where Europe has a really good rail system, and you can, you just hop over to another country 2-3 hours.
Hey, when I was in college, I had the Eurorail pass in one backpack and went from southern Spain all the way up through France, down through Italy. And by the end of it, Vanetta, I lit my backpack on fire. I look at it one more day.
Dude, that's awesome. I'm glad that you got to do that though in college. See, that's perfect.
Yeah, stayed in hostels.
Did
the
you
whole
really
thing.
light your backpack on fire?
Yes.
I believe you did.
When I got off the plane back, I was there for a while. I was there for like 6 months because I was in school, and then I did some touring. And when I got off the plane, kissed the pavement, and then lit my backpack on fire. Because I couldn't take living in I was a poor college kid, so we were living in really, really like cheap places.
Sure.
I think if I were lived in luxury resorts, it would have been wonderful.
But that's what builds character, so I don't know.
Look at me now.
Anyway. Well, hey, congratulations to the Oklahoma City Thunder. They won the championship last night, if you care about basketball. So
I do care about basketball. I had zero knowledge of this, to be honest with you.
Okay, when you said Oklahoma City Thunder, number one, I'd never ever heard of that team, and number two, I thought, is that the World Series of baseball you're talking about? So
no, that was actually LSU. I think LSU won the World Series of baseball there, but yeah, Oklahoma City Thunder. They were Seattle. They were the Supersonic. No, you don't care.
Oh, I know Seattle Supersonics. Sure.
Yeah. So then that team moved to Oklahoma. So it was their first championship. So.
Vanetta, I love how up on this you are. You get a gold star.
One thing that was interesting. Well, two things. One, like one of the Pacers stars, like blew out his Achilles in the middle of the game, and it was really sad. And then the other thing was that footage came out before the game of buses already painted with the championship title in Oklahoma City. So the Pacers coach was like, what the hell? And so, but obviously they make shirts ahead of time for both teams. And so it makes sense that they would, of course, paint the buses because it does take time to, wrap them, and so, but somehow that photo got leaked and, but they ended up winning. So
what were people saying, that they fixed it and they knew they were going to win?
Well, it's just kind of like
I'm sure there was a Pacers bus somewhere too, right?
Yeah, I don't know, but
if they didn't win, they're all going to feel like fools going into that bus.
There's a decoy bus.
Well, they did, but no more basketball. So basketball is over, finito. So.
Well, I mean, it's almost July.
Yeah, so basketball's over, hockey's over, so we just have baseball until football.
I do love. Okay, so I'm a White Sox fan. I believe Vanetta's a White Sox fan. I know Jenny's a White Sox fan. We know the Pope is a White Sox fan. But I do love seeing the Tasty trade on the mound of the Cubs games because we had that.
That is very cool.
It is super cool. Yeah.
And there's nothing, in the baseball, experience. There's nothing cooler than going to Wrigley Field. So
true.
It is an iconic stadium. So, but
now, hey, the Pope has taken over. Have the White Sox turned the corner? Are they improving?
No, they've lost like 9 games in a row. But they did win on Friday.
In the chat, James a while ago was telling us that they've turned the corner since the Pope is now praying for them.
They have. They brought up some younger players from the minor leagues there, from the farm system. I'm probably messing that up, but from whatever. They brought up some players, and those players have been doing better. But, I mean, the bar is on the floor, so.
Okay.
When the bar is so low, it's easy to get over it. Yeah.
It's easy to get over it. But, hey, the bar for the show today is really high because we're providing you some really awesome content. See how I pivoted out of that? At the top of the 8 o'clock hour, we got Kai in for his little research corner. Kai lays out basically what he thinks the market's going to do for the week, and always a good segment. And then, of course, Dr. Jim in the house, skinny on options, abstract application, how to find your next trade. Ladies, make sure to compliment Dr. Jim on his hair. He's very sensitive about it.
I hope he comes in. I hope is it long enough now where he can put like a
It is very majestic. Not quite top knot status, but it is very very regal.
Tom could top knot it. Tom could top knot it if he wanted to.
You know how the Who's have, like, in Whoville, they have I feel like his hair could be all up and curled over.
Well,
in the
say
Grinch
that for
movie.
him at 8:40. He will be in on 8:40. You take that up with him.
I'm looking
And then
forward
9
to
o'clock
having
market
Jim on.
measure, optimizing trades by capital constraints. And oh my God, I'm so excited. Scott Sheridan is back. Fresh off of his Asian adventure. You guys are going to have to get all the details because, men don't ask questions. Men are just
nothing.
They ask nothing. I was like, I hope you're hungry for nothing. But you guys are here, which I'm so glad. Scott is back. He went to Korea. He went to Japan. He was hand painting in a kimono factory. He was eating $28 grapes. He was doing the most. That's why he's my favorite rich guy. But I need you guys to figure out what he likes the best. And he will be on at around 9:30 with the lovely ladies. So I'm looking forward to that. Gonna set my alarm for that. And also counting down the top trending tickers over at Tasty Trade. And we're playing a repeat. If you missed our latest Rising Stars, because you guys are on with me right now, so we are doing our Rising Stars. I don't know if you saw Emily. She was a stay-at-home mom, and she was a jewelry designer. I don't know if you saw this, but she's maximizing with like 122% returns. Really remarkable story. But I was like, let's talk more about this jewelry. And Tom was like, get out. And so I did.
That's gonna be a good one. I missed it, so I'm gonna watch it. That's gonna be a good one. I'm glad we're replaying that one.
Yeah. Go ahead.
So speaking of Scott's trip, when you do so much and you're going so far, and he's painting in a you said painting in a factory or in a store?
In a kimono factory.
In a kimono factory. Do you think he hired a tour guide and had a tour guide take them everywhere?
100%.
That's a good question that you can ask him. I'm not sure how he figures out his itinerary, but I'm sure.
I would argue 100% yes.
Yeah.
To do those kind of behind the scenes things. Yeah.
That's why he's the best.
In my mind, he is the best rich guy. To steal Vanetta's line, he's the best rich guy. I guarantee you, he's got people taking him. He's got people on top of people on top of people taking him everywhere.
But hey, I don't have anyone to take me anywhere. But we're gonna do Daily Dose, though. You want your Daily Dose? Yeah.
Yes.
Wait, Vanetta, is anything happening in the world recently?
Yeah, nothing going on. No news. Slow news day. Let's go.
Our leading story. Breaking news. Coming across the wire. Leading story. Top story. Jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today's a magnificent Monday. It's June the 23rd. This is a part of the show we call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Ready for the news. So investors are going to be bracing for a knee-jerk sell-off in the markets on Monday after, the weekend military movements. But on the week ahead, so NATO is meeting. So the 32 nations of NATO are meeting supposedly this week. There is maybe going to be a Senate vote on the budget. You're going to have flash PMIs. Consumer confidence. Powell is testifying in front of Congress. There's a GDP revision, weekly jobless claims, durable goods orders, and PCE. Oh my.
And all this coming up this weekend. Right now, SPOOs are down $1. Nothing's happening.
The market is sharply unched. Unched with all this stuff.
Right.
It's crazy to me because that's the first thing I did this morning and last night before I went to bed, being like, where are the SPOOs? What is happening?
And
it's
oil
really been
is back. Like oil's back in the 73 handle. It's just below 74. So it's like there's nothing happening right now in the market.
Well, let's go to that. So U.S. calls on China to prevent Iran from closing the Strait of Hormuz and disrupting global oil flows. Around 20% of the world's oil passes through the Strait of Hormuz, and China is Iran's biggest oil customer and maintains friendly relations with them. But of course, what all investors are looking at this morning, like you guys said, is what is oil doing? Are we going to have, $10 a gallon gas, or can we all just quietly keep going about our business? How do you guys like to trade crude oil if you do trade it, and what's happening this morning?
So, honestly, it's pretty crazy how that crude oil is back, and we're just looking at forward/CL. So I know there's different types of oil that it's priced differently, but CL is really unchanged. It's back in the 73 handle. It got as high as what, 78 last night, Johnny?
78 is the highest. Oh my God! Right. Yeah. So you look at there's like a big bar. It spiked up to 78, but now it's trading not much higher than it closed on Friday. So. There's high vol there, right? There's high vol, so definitely opportunity. I might look at a Jade Lizard in oil where you sell that put and sell a call spread. So if it does spike up, you don't have the risk to the upside.
Maybe we look at that really today. High. I do believe the vol has been pumped up in there, so that means it's going to move in one direction or another.
Just
but I think
we're kind of careful.
I think we're kind of on a sit and wait. I would be real careful in there too, real careful, because this, I think, just because. There's a lot of opportunity there, and this is when trying to jump in front of a bus with this opportunity, you're seeing a lot of volatility.
Well, that's why I kind of like the Jade Lizard, where you don't have that naked call. And the puts, with the high vol, you could probably get pretty far. I don't know. We'll have to take a look at it when we're in the platform later today.
Yeah.
In other commodity news, when I pulled this headline, gold was a little bit higher in Asia, but I'm not sure what gold is doing this morning. But if it's like the rest of the market, it's also not doing anything.
Gold's down. Gold has reversed, which I found fascinating. So that's what I think is crazy. Gold GC is down right now, where I would have thought gold would have been up. But once again, if you give me the news ahead of time, I don't know what I'm going to do with it. So, but I was surprised gold was down because Bitcoin was down. That's the one thing that was moving too. And I know
we'll get to that. Yeah.
Okay. Go ahead. I'm sorry. I'm not going to step on your stories.
But because you were like the biggest gold bull that I knew, Liz. Like, what are you doing?
I am still a gold bull, but I'm a gold bull in a different way. And I think I've said this multiple times. And that's one of the questions that people keep asking me about this is I just am slowly building gold. So I'm not crazy. I'm not like a huge gold bull. I'm slowly building gold, meaning like selling puts until I put the stock and then I just accept it in GLD, little bits. Yeah.
Okay. All right. Good to know. Shifting gears to the dollar. Dollar gained a little bit in early trading as the world awaits Iran's response. Seems like the dollar strengthened a little. I'm not sure if that is still holding, but let's just talk currencies in general.
So the dollar
we just took off today our
euro dollar US.
Our euro dollar US pair. Now we're trading FX. Now that we have FX.
Yeah, but that's funny because the euro dollar is neither the euro nor the dollar. It's so confusing. As a new trader, you're like, wait, what is this?
Yeah, but the dollar has been getting hammered lately. So I mean, a little bit of a reversal is warranted, I think.
Right. Yeah. So got a little stronger. We took off that pair. And it actually had a pretty decent move compared to last week as we were watching it. We just put the pair on last week, and today was the biggest move we've seen.
Nice. How are you guys liking the Tasty FX?
Laughing and learning through it, Vanetta.
We love it, but I feel like there is a lot to it. So I had Glenn on for an hour last week, and I'm going to have Glenn on for an hour again Thursday. So if anyone wants to learn more about FX during the Liz and Jenny show on Thursday from 10 to 11 Central, I'll have Glenn on for the full hour. We have a handful of positions on, but it is it's new to us, right? So we just kind of slowly get in small positions and learn as we go.
No, that's great. That's very cool. And Thomas said the same thing. Like he really likes it, and it's just adapting to figure out the ways that it fits best for the way that you trade.
Mm-hmm. But Vanessa, you know what I thoroughly like about it, and one of my friends from the trading floor a long time ago when we left, she was a little sister of one of my friends too. She said she loved trading it because you can trade it so small. It's the one thing where you can place a trade in that she's like, I would make $20 and then just walk away. And I was like, that's great. That's a great.
Oh, wow.
You can take it down very, 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 very small in FX trading.
Okay. Right. Yeah, I think you could put on a position that might only use $20 or $23. Yeah. Now, in our position that we just took off, we only used $350. It was on for less than a week, and we took it off for an $80 profit this morning. Yeah. So that's not bad.
I like those odds.
Yeah. Right.
Yeah. And it moves quick. It's a quicker, with us, with what we're doing in Tasty, we kind of are waiting for time to march on because we're the insurance salesman, we're selling things, where this is if you get a move, you can get out pretty quick too.
Well, those are our platform innovations. JP Morgan Chase is trying to beef up their mobile app with more bond trading. What? As the bank is targeting $1 trillion in assets. JP Morgan Chase on Friday said they were going to unveil new tools to allow investors to research and purchase bonds and brokered CDs through its mobile app. What are your thoughts on this? And then what are you guys doing in bonds?
Well, I think that's insane because you can just do it right here. But bonds right now, bonds are up. Like the 30 years, 114.
Okay.
114. 114, but it's up. They're up a little, but you look at the chart and it's just it's been in this tight range for a few weeks now.
So in bonds, every time it goes down to the 113 level or lower, we have a tendency to get long it, and then we get out real quick.
Yeah. Skedaddle.
Yes.
All right. Well, that's good. I'm glad that they're up, and I'm sure that'll make Tom happy too. And as you mentioned, Bitcoin briefly sunk below 99,000 as the U.S. launched airstrikes on Iran, and it did it did trigger a crypto market sell-off. More than $1 billion in crypto positions were liquidated in 24 hours, most from over-leveraged long bets. Let's talk about crypto and what you guys are doing in crypto.
I mean, dipping between that, dipping under that kind of 100 level. I think the 100, I mean, I'm going to sound like Tim Knight right now, but the 100 level and the 110 level are super, super important, I think. And dipping beneath that, I could see the sell off. But that was the only thing that you could have traded yesterday with everything that was going on. It was the only thing that I could find that was open.
Yeah, and so I was kind of surprised, like, oh, geez, why is crypto going down? But to Liz's point, there wasn't much else trading at the time. It was still early, and our market wasn't open yet. Like, I don't know. It didn't seem like there was too much to do, so maybe that was the only thing people could do. I'm not sure.
Yeah, I'm not sure either. But it was like you said, it was a swift and kind of violent move. But in other crypto news, Coinbase has secured an EU crypto license, and they are swapping Ireland for Luxembourg as their main hub. Ooh, they've obtained a markets in crypto assets license from Luxembourg's Commission de Surveillance du Secteur Financier.
And Coin is actually, Coin had a huge move on Friday up, but it's down a little bit today. So Friday closed at 308 and it's trading like 302, 303 right now. So
yeah, but don't you think the Coinbase move has to do more with the Bitcoin move? Because sometimes they'll move in conjunction with each other versus this news. You know what I mean? That's why Coinbase is down in my small mind. Yes.
The move Friday might have been on this news Vanetta's talking about, because it hit a huge move on Friday from 250 up to 308.
Yeah.
Yep. Who used to say, do you guys trade Coinbase at all?
I have for a while, but now when it gets so high, then I kind of step back. But I was just selling puts in there.
That makes sense.
And I like trading Coinbase, but then, you get, when something gets so high, you get to a point where you're waiting for it to come back down to get back in. And I don't know if it'll come back down. So we'll see. But now up to 303. Crazy.
Chip stocks were down at the end of last week on a report that the U.S. could terminate waivers for Taiwan Semiconductor and others. The U.S. is reportedly weighing canceling waivers that allow some global chip makers the ability to send American technology to China. That's according to a Commerce Department official. Semiconductor stocks did decline Friday following the report. I'm not sure. I think they're still down this morning. I think NVIDIA is down, SMH, TSM.
I see that Taiwan Semiconductor is down a few dollars this morning, but it had a big move down on Friday.
NVIDIA's doing the same thing. NVIDIA's down like $1. I mean, they're making small moves down, but yeah.
You got to buy those dips in NVIDIA.
You got to buy those dips. Well, that would have been done well for you if you bought those dips in NVIDIA over the years, Vanetta.
Yeah. Do you guys trade SMH ever at all? I know Mike and Nikki do.
Smash, I do trade it. I think it is the world. Jenny, how do I feel about Smash? It's the world's slowest moving vehicle. Like, if you try to sell premium in there, you have to wait until the bitter end because it doesn't come out.
And it looks appealing because you could get so far, like, whoa, look, I could sell this Strangler, I could sell this Jade Lizard, and it looks so far. And maybe that's why we're sitting on the trade forever, because we're going, really far deltas and waiting to make $50 on a $100 Jade Lizard. But if you bring it in and sell more premium, sell a higher delta, maybe it comes in quicker. But we don't trade Smash that often. I don't know.
I'd rather trade, your NVIDIA, your other chip stocks, the individual products versus that ETF. Because in my mind, like I said, I've been looking at these every time she brings it up. I was like, not that again.
No.
I'm curious what Mike and Nick do in there.
You'd have to ask them.
Well, it's expensive. It's a $259 product, right? So I'm sure they're doing diagonals or some type of defined risk instead of selling premium. Yeah.
I don't know if you guys saw this, but maybe your kids will ask for it for the upcoming holiday season. Meta is partnering with sports eyewear brand Oakley to launch AI-powered glasses. They have already a partnership with Ray-Ban.
But
on Friday, they're teaming up with Oakley. They are expanding their push into the wearable tech after the success of their Ray-Ban Meta glasses. It allows you to record video and audio and make clips and stuff. And they've sold millions of Ray-Ban Meta glasses since their launch. But the limited edition products are going to be available for pre-order starting July 11th at $499, with additional products starting at $399 launching later this summer.
Okay,
I've tried them. They're very cool. I've tried
Which
them.
ones did you try? The Oakleys?
I've tried the Ray-Bans. I've tried the Ray-Bans.
I loved
cool.
them.
Yeah,
they were super cool.
Where did you guys try them at?
My neighbor has a pair, and he literally you just go like this. You would go, you hit the side of it, and it starts recording everything around you.
Yeah.
So and you can take pictures like of his family. You can just go like this and take pictures. It's crazy.
So
well,
I
now
was
they
at
can talk
Sunglass Hut, and they'll let you. Sunglass Hut will let you try them.
Or I lost Liz.
Somebody? Oh no! Can you hear me?
Oh, I can hear you now. I can hear you now. Yep, okay. Gotcha. That's cool, but is it worth $500?
Yes.
I think they're cool. I think they're cool, and Sunglass Hut will let you try them if you go to a Sunglass Hut. And the Oakleys now, everyone wants the Oakleys for sports. So if you're an athlete, and my son wanted the Oakleys for golf. So if he's a golfer and he wants to, record where his ball's going.
Or you can play music too. It does a bunch of stuff.
Can play music. Can't you ask it questions?
I don't know.
I think we can answer questions for you too. Just be like, man, what is this?
That's cool. What are you guys doing in Meta as a underlying?
So Meta has been super high lately.
I know Vanetta, we've got so many stocks that are back to near highs. Although Friday it fell quite a bit, but it's up a little bit today. And when I say fell quite a bit, went from 700 down to 682, but it's still from a couple months ago being in the 400s, now at almost 700. So
and keep in mind it split. So it was split to 100, and now it's back up to 700.
Whoa.
So it is challenging trading some of these products when they're at such high prices.
That is true. Apple, this is interesting. So Meta has been spending a ton of money for their AI ambitions, buying that Scale AI company for like $14 billion. But Apple executives actually had internal talks about buying Perplexity. Bloomberg reported this over the weekend. The discussions are at an early stage and may not lead to an offer. Perplexity is basically just an AI chatbot. But Apple is being sued by shareholders because they're not happy with how Apple is promising and under-delivering on their AI ambitions. So they had their WWDC conference earlier in June, and the stock didn't really go anywhere. What are you guys doing in Apple? Because it's
Apple
a laggard.
can't get out of its own way. We talk about all these tech stocks. That's the one that has not participated in coming back up. I mean, Apple's only trading 200 right now, and it seems to be stuck at 200.
Right, so that's one of those where it's not at all-time highs. So I don't mind selling puts in Apple. The rank's only a 23, though. Well, it's worth taking a look at today.
Yeah, all right, there you go. I'm skipping a story here, John. I don't know if you saw the news, but dubbed the mother of all data breaches, the data breach involved 16 billion user credentials, impacting the vast number of accounts on platforms like Facebook, Google, and Apple. And data breaches are common, but this one seemed pretty bad. But I can't keep up with all the data breaches.
What are they going to get from my information on Facebook? So you have my family photos.
Well, the big problem though, Liz, is that they don't really care about your Facebook, but if you're using the same password credentials that you're using for Facebook, that you're using for your bank app, that you're using for, credit card, that you're using for other more valuable things, because people, everyone does it. Everyone uses the same password for everything. You should use a password manager. But once they have one little bit, they can sort of figure out, the rest of it.
Yeah.
And then you are in a world of hurt.
Yes. I will tell you, my Facebook password is secure, and if they get that one, they can't get anything else.
Yeah. Hey, I wanted to talk about this with you guys because I had you on. Women are getting wealthier, and they don't invest the same way as men. Women's share of retail financial assets in the U.S. and EU is expected to reach between 40 to 45% by 2030. Factors like declining marriage rates and higher earnings have played a role in the trend. But I wanted to ask you guys, what do you think are some of the differences between the way women invest and the way that men invest? But great that women are getting wealthier.
We've talked about this for a long time, and we meet lots of women on the road and through our show and through all this. I think women are so much more methodical than men.
Oh, interesting.
Well, they don't let their emotions get in the way. With a bad trade, I think we can keep a cool head. Don't get emotional. Like if we lose money in a trade, we're not, dying to make it back in that particular product. But I do think over the years we've seen the amount of women who are part of Tasty Nation grow every year. We would see more and more women at our shows. It's really great to see.
I do think that, like Jenny said, mentioned the ego, where I think that if this is just from an observation. I'm not saying this of everybody, but the people that we've seen so far, they seem to follow the mechanics more, where guys will have a tendency to be like, now, how about now? Now, how about now? Like if something, you know what I mean? Sure. They're going to tin cup it, where women are like, okay, I'm done. I'm going to walk away and do something else.
I just think it's interesting, and I wanted to ask you guys. You guys have been trading. You guys are the women that I know that have been trading the longest, and so I thought I would ask. But good job, good job, women.
Interesting. Like our kids are getting older and they're learning to trade. And I don't know about you, Liz. I know your son's getting into it, but I feel like my daughter asks more questions, more into it than my son. And I think Annabelle will be a really active trader too when she gets her account.
Yeah, she will. JD's dipping a toe in the water, but man, 18-year-old boys, like I said, their frontal cortex is not fully formed.
Have you seen that viral video of the two guys where they made a bet of $100 that the operator of the gambling hotline would be a woman? So they called like the gambling addict hotline, and they're like, okay, we have $100 on this. And then you just hear a lady go, hello, gambling hotline. And they're like, yeah. They're like, sorry, wrong number.
That's funny. That is funny, Vanetta.
I was like, oh, dudes are the best. Sad story to report, but I found out a really hilarious tidbit. Fred Smith, the man who founded FedEx and revolutionized the logistics industry, passed away on Saturday. He was 80 years old. He started the company in 1973 in Memphis, Tennessee. But the best story about this guy is the company was down to $5,000. So he went to a Vegas casino and played blackjack, and he turned that $5,000 into $27,000, and it was enough to cover the fuel expenses and to keep the company running for longer. And for that, I say, I salute you, sir.
What a story. Fantastic. What a story.
I had never heard that story, but then it came out on Twitter. I was like, dude, that's awesome.
If you're going down, you gotta fight. You gotta fight for it. That's the only way to do it. Good job.
Yeah. I was like, that's a good story, and I like it. I like it a lot.
I just looked. FedEx is unchanged today, but that is a great story.
Yeah. Oh, also Hims is moving around this morning. I think they are. Their Novo Nordisk has stopped their partnership for Wegovy. So Hims is down on that news.
Yeah, Hims
is down from 64 to 48. So big move in Hims. That's gonna hurt. I have a Hims position. I see their ads.
Yeah, I just saw it come across the wire, so I was like, I should mention this. So
yeah, I'm looking in our account, Liz.
I do not
have a Hims position. Their ads are everywhere. I think I'm targeted because we talk about Hims on the show. And so they're not down quite a bit. Trading 48.80 right now in early.
Because it seems like a license to print money, because you're like, oh my God, everyone wants the skinny shot, the skinny pill or whatever. Yeah. Like I would just get long Hims. I was like, yeah, do it. Everyone wants it. But obviously if your main supplier breaks up with you.
Is this an opportunity? I think for us, let's look at selling puts in Hims today. There might be a big expansion in vol, and down to 48, those puts might be pretty juicy. We'll take a look, but they've got other products too.
Was Hims one of those products where it was super expensive to trade?
I don't I don't know. I've been selling. Gosh, I'm kind of afraid to actually look in my account, look at what my commissions
it is
are.
because it's a $40 product. I'm just glancing right now. It's a $40 product, and so right now it's 60, 40, whatever. But it's $3,000 to sell a put, and that's a lot of margin for. I think that's a part of the problem with HIMS.
So I've got the 55 puts. I can see that.
Ruh-roh.
Yeah, I have the July 55 puts, and it's trading 48. So I don't know. We'll see what how much premium gets pumped into those options today.
Yeah, there's something that all traders should look out for this morning. Again, it's something that just happened pre-market, and I just wanted to let you guys know. Hey, John, I'm going to my last story here. Weber Grills is facing a trademark battle with a top Chicago barbecue restaurant. Weber wants to release, Weber has released a new pellet smoker called Weber Smoke, SMOQUE, and it's a pellet smoker that costs between $800 and $1,000. But there is a Chicago restaurant called Smoke Barbecue, which opened in 2006 on Chicago's North Side. And so the owner of the restaurant was like, hey, Weber, not so fast. You can't spell smoke this way, I guess. I don't know. And so they're fighting. But Weber is also based in Chicago. So I just think it's interesting. I was like, you should have known. Like, you would know.
You should have known. Come on. Throwing a Q in there. You don't think that's been done before?
I know. Anyway, finally today, I have a video for you guys, like to show a viral video. And this is so funny because sometimes, influencers will do like a sponsored post. They're getting paid by a brand to, promote something. And so Liquid Death, have you guys ever had Liquid Death? It's just water in a can. Yeah. Genius marketing. I love their marketing. It's so edgy. But they have like Liquid Death, like a really spicy version. It's still just water, but it has, capsaicin and like peppers and stuff in it. So this influencer tries it and it does not go well. Watch this.
Sparkling water, right? How bad could it be? Okay, y'all, I might regret this, but I'm going to try and chug this extremely spicy sparkling water. What? I know. Liquid Death sent me their limited edition Deathberry Inferno flavor, which apparently is strawberry and ghost pepper. Yo, it has literally a warning on it. They're calling it the One Chug Challenge. Here I go. Why not? Okay, I'm not even going to smell it. I'm not going to overthink it. I'm just going to start chugging. Here we go.
Ghost peppers?
Yeah. Oh, instant regret.
He did it.
No, it's spicy. No, it's spicy. It's in that throat. It's in that throat for sure. Oh, God. I can't stop.
Oh, my gosh.
Oh, my God, I'm sweating. My lips burn a little bit. I think the burps are done, which is great. Oh my god. Oh my god. I lip like at this point. What am I supposed to do?
I will say though, Liquid Death was a genius marketing idea because I will go out and spend $100 on water for my kids' parties, the younger kids, like because they want those Liquid Death cans. They like them. They feel cool. Yeah, they feel cool.
Yeah.
I've never had a Liquid Death.
Oh, no?
Never. I've never purchased it. I've never had a Liquid Death. It's just a water, right?
It's just
You come to like a teenage party in my basement, they're all drinking Liquid Death.
Well, ladies, this was extra fun. I will see you again on Wednesday, but we're going to take a quick 90-second break, and when we come back,
well, before we take a break, Vanetta, we are not doing Confirm and Send next. We're doing a Tasty Extra where Jenny and I may or may not be taking tweets. If you put the hashtag LIZJNY, we might take some live tweets. I just wanted to give a PSA right
maybe in the YouTube chat. There you go.
Yeah, take some chat, take some tweets. Frank the Great's on the YouTube chat, sending tweets over to us. So
my bad. All right, there you go.
All right, everyone, stay tuned. Thanks so much, Vanetta.
Thank you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, Jamal. All right, Nick. All right, Mike, do you have a long-term trading goal for this year from a dollar or percentage standpoint, or do you have any personal development goals, anything new you'd like to learn?
No, I think that's kind of hard to do. I just try to identify good opportunities for the long term. I have a whole separate account for long-term trades, so I just try to make those trades, whether they're leap calls or whether it's just long stock, and just hold out. I never really put a percentage on it.
That's a great question. Longer term goals would be to get into more futures, building into a core portfolio of futures. I think I've got the options down. I think adding in a little bit more futures trading.
It's a good one. I think everything's always compared to the alternative, which is passive investing or the S&P 500. In really turbulent years like this year, I think if you can beat the S&P, even if you're losing money, if you're down 5% and the S&P is down 10, you're doing better than the alternatives. I think it's a little bit of a different way of thinking of it, but I think if you can beat the S&P this year, if you're making money at a scratch or a small loss and the S&P ends up down on the year, you're doing just fine.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome back. We are going to do a little bit of a Tasty Extra segment right now. Jenny, are you ready?
I'm ready. So we're taking live tweets, answering questions in the chat.
We are. I've got the chat pulled up. It's going to be kind of hard to monitor. This is going to be a pretty quick segment. But I was thinking, Jenny, just because of what we do on a daily basis, and I know it's not opening bell yet, but can we jump in and take a look at the markets?
Sure. Let's take a look.
Okay. So let me know when you can see them in the live thing so we know what everybody else is looking at. So we have the markets pulled up right now. Are we in there yet? No, right?
Let's see. So, yeah, take a look. I don't know. John, do we have the platform pulled up?
So
yes.
We're taking the platform up.
We do.
So the SPOOs are up right now 7. So this morning, Jenny, you and I have watched them. I saw them up as high as like up 15, and then we've seen them down. But it's pretty much an unchanged market. Are you shocked by this? Are you shocked by this?
I feel like so many times when something happens in the world, we think the market's going to do one thing, and then we're always surprised at what it actually does. So we had some people here this weekend, and everyone kept asking, what's the market going to do? What's the market going to do? And I said, you might think the market's going to be down, but sometimes it's up, and it actually turned out to be a non-event in the market, mostly.
Well, I
know oil hit its spike up, but oil's actually, look at oil. It's almost where it closed on Friday.
Let's take a look at this chart. See, that's absolutely factually accurate. Take a look at this big spike, and then it came right back down. So that was the knee-jerk reaction, was the oil, in my opinion, right? So it went all the way up to what was the high? 78.40, and now it's right back down to 73.67.
Yeah, I mean, look where it is down on the chart, right where it was on Friday, like Friday's close. It closed 73.65.
Now, I do think all eyes are going to be on oil, and all eyes are going to be on the bonds, given what's happening, and hoping that 20% can still get through. But so we are going to keep an eye on that. But take a look at this IV rank, 78 or 87. That's pretty high. So I know you were talking about maybe selling something in there. You can go to micro crude as well, but you can get pretty far in this now.
I'm very curious as to the skew, like what kind of skew we're going to see here in oil. Is there going to be huge call skew?
So let's just take a look real quick, and then I will pop into Twitter to see if we have anything going on. But I'm just going to go, say we're trading, 63.50. So 73.50. So go to 71.50 and you've got $3. And then you go to 75.50. It's pretty even. $2 up and $2 down. It's pretty even, Jenny.
Yeah. Now if you go, go a little further, like 73, 74. It's like 78.50. Where's 78.50? You got 290.
Yeah, 78.50 is 290, and so what is that? $5 down. So if you're going to go $5 down, you're
68.50.
You're, I mean, it's close. They're not. There's a bit of a call skew, but nothing that.
Well, a third. I mean, you're trading $2 versus $3.
Yeah, I guess that's true.
Yeah, and I mean, $2 versus $3. It's a big. These are big.
Well, and you would see typically a normal skew would be to the downside. So this does have call skew in it. But you can take a look at MCL too. If somebody wanted something smaller, and go right back in there and it's the same thing. And this is where I would lie if I'm trading oil. I have nothing on an oil right now, and I don't believe we do either.
I think I'd be afraid of the naked calls in oil, but it's when you have really high call skew, the call spreads don't give you anything. Yeah, pop back into MCL. Let's take a look at the trade page.
And we will. We're going to trade this soon. I want to keep an eye on time, Jenny, because we have 2 more minutes left.
Oh, yeah, I know. We don't have much time. Pop into Twitter. I know I saw Hell of a Stella coming in.
So she said, snap, listen, Jenny on the Vanetta on the live show. I love it. And she's always great to see.
Yeah, great to see you, Stella.
Frank the Great has come in with all of our economic calendar, which we also learned from Vanetta this morning, which we super appreciate. And then we do have one question here from AI Gone Wrong.
Yeah, but that was from the weekend.
That was from the weekend. Okay, there we go. Here's Mikey coming in. Good morning, ladies. What an upgrade for opening bell. Thank you. Work has been kicking my butt lately, but we had a new grandbaby.
Yeah, you need to get some pics. You and Trade Small Trade Off and John, he had a grandbaby too. So both of you recent new grandbabies. Congrats.
I love babies, Mikey. Please, please, please send me pictures. And if you ever want to bring the baby down, and I will just hold it for the whole time.
Liz might steal it. Watch out.
But I did want to go to this AI Gone Wrong, because this was one of the questions that I also got on email. So the question is, and we've been doing these every day, Jenny, where not every day, but when we're in the SIBO, we talk about those 0DTE SPX trades, and people are just asking, the question is how wide, right? How wide? And you see many people put them on almost every trading day. And I think the Tasty back test says to avoid Thursdays. We did get one test saying avoid Thursdays. But I think how wide is basically a personal trading question, right? Meaning how wide do you want them to be? Because Jenny might do the 20 delta and I might do a 40 delta. It really doesn't, that is kind of like what you feel like you want to be trading.
And we see Jack Tucker making his spread with, like, he's doing more around a 20 delta, between 17, 20 delta for shorts, and making his $25 wide, his spreads. We see other people making him $20 wide. We see, we'll put on Iron Condors $10, Iron Flies $10 wide. But the nice thing is, being on the morning show, we'll be on at 8:30. We could take a look at these at 8:30. There are certain trades I would do at 8:30 versus other trades I might put on at 9 or 10. With the market, I don't know. Are people going to shy away? Today's Monday. Usually it's double down Monday.
It's double down Monday. And I don't think so. And I can't wait to see if something comes through for JD. He's at the golf course right now. He works at Cog Hill. But when he did it on, was it Friday? He did it from the golf course. So
yeah, you got to see it, and
we'll see if this one comes through. And he's just following my mechanics, but he's so small, he's the Iron Fly, right? So that's what I'm saying. It's a personal question on how wide everything needs to be.
Yeah, it kind of depends on your account size too, right? If I had a really big account, I probably would be like, this show account that we trade in is smaller, so we're not selling $25 wide. Collecting $5, risking $2,000. But if we had a bigger account, we might do that. Like, I'm more. We'll look at when the bell rings when we're in for opening bell, because it is 8:01. See if there are any other tweets or if you see anything on chat. But then we've got to get to Kai and Option Jive.
We do have to get to Kai. So no, a lot of people in the chat are saying that they don't have a lot of the capital to do the SPX, and you got to be careful with the SPX too, because SPX has the pattern day trading rule, which is why I've got my son going in ES with these trades. So I know it's more expensive, but that's where I'm leading him into, is doing the Iron Condors in ES. You got to make sure you close it, but it's just a little bit of a nuanced trade that you can do.
Okay. I know this was quick and we didn't do too much, but Kai's waiting in the wings. I saw him come into the room. Should we take a break and let Kai on?
Yeah, let's take a break. We're going to stay on schedule, Jenny. We're going to be back in 90 seconds. We're going to come back with Kai. Stay tuned.
Stay tuned.
In the the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Hola!
Look at you guys looking like spy versus spy.
I'm in the UK. Vanetta, I got in. They let me in.
So how's the vibe in London? How's the weather? What's the tea?
So Britt and I are getting off the plane. We're like, should we wait for Batista's? And I'm like, she's like, should we wait for the Batista's? It's the right thing to do. And I'm like, all right, yeah. And it's like European vacation. You know, we are traveling with that, you know, with that crew. So I have a little suitcase and a backpack. Britt has a little suitcase and a backpack. The Batista's, 75 bags. It's like coming to America.
We have a rule in the Batista house. The wife has to pay for the vacation when we're on vacation. So she has one suitcase full of shoes. So we need to just...
She's paying it forward.
She's paying it forward.
Then why does your son need a suitcase that's bigger than me? So anyway,
Vinny's frosted tips aren't gonna frost themselves. He needs hair products.
Against everybody else, because I didn't want to embarrass him in front of his wife. Everybody else knows the rule. If you check bags, we're leaving you.
That's right.
You get left behind.
You get left behind.
You get left behind. You get left behind. That's the rule. An hour later, we're sitting there like, oh my God, they're coming off one bag at a time.
It was about 45 minutes. I will give you that. It really was. And I was embarrassed. You know, my wife is in this train with all these people and everything, you know, like Tom. We're traveling with Tom. We didn't get into the concierge level. We sat in coach. We're sitting on a train.
So anyway, we made it. We took the train. Then I had to walk. Britt made me walk like a mile.
Then it should be nothing. A big, strong man like you.
You should have carried it. I've never seen it before on a train. There were women getting up for him and saying, will you please sit? Would you like my seat?
I mean
seriously.
To be fair, when he starts lurching, it's jarring if you're not used to it.
Good morning, you knuckleheads, and welcome back to the show, Tastylive.
That was kind of low energy.
Good morning, knuckleheads.
It sounded like he was going into like a dramatic monologue.
Right?
Yeah, Beth, was that okay?
No.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's options. Jive.
Hello, everybody. I love that it's Tony Batista saying it's options. Jive. Hello, Kai. Thanks for joining us today. We get Kai, our favorite researcher, live with us today.
Looking good, Kai. Looking good. Did you get a haircut just in time for the heat that came through?
Yeah, last Thursday.
Looks good.
It's pretty hot here, 95 degrees for the whole weekend.
We have to give you a massive shout out, Kai. We talk about you. I talk about you every Tuesday and every Friday because you have been amazing at sending us these pieces that kind of recap and giving us the market measures. And so a lot of times on the SIBO floor, we go over the same options drive because it's a recap from the week before and it kind of keeps us in check. So we appreciate you coming on live.
Yeah, we have a lot of great info in the research corner.
You do. You guys do have a lot of great info.
Yeah, you are a very hardworking group, and I don't know how you come up with new content every single day. It's amazing.
I know, it's crazy.
We're trying. We're trying.
Well, you've got a good crew. I saw all the new summer interns coming. Did the research group get any summer interns?
Yeah, we got Thomas. Thomas, great. Yeah, he's very efficient. He's working on some program stuff, but probably start from this week or next week. He's going to start work on the second.
Okay, nice. Very good.
Yeah, he's really, really smart.
Very cool. I love it.
All right, Kai, what do we have today?
All right, so last week, so let's go to the first slide, the summary of what was going on last week. I would say last week was a quiet week because across different market, nothing changed, or we didn't see too much change. Expect the oil. So the interesting thing is the implied volatility is still elevated above 20. So even the stock price didn't even change for SPX, ES, all the indices, but the implied volatility kept above the 20 level.
Okay.
And and also the second point, definitely the crude oil increased to I believe close at 74-ish. On Friday, this is highest level since January, above the long-term average. We've been trading below long-term average for quite a while. So we're going to see more detailed data in the following slides.
Okay.
Yeah. So last week, the all indices barely moves. The SPX, the NASDAQ is actually very close to zero. Only Russell is up tiny, less than 0.5%. So this is what happened last week. Not too much talking about it. Even we look at the intraday move, it's small. I think there are only one day SPX trade more than 1% and actually came back within the 1% range. Only one day, I believe.
And most of this probably turned negative because of Friday's sell-off, right? Because it was Friday that everything kind of sold off a weekend.
Yeah, it's because of the Friday.
And I mean, it's not even that negative. It's just, I consider that unchanged. But this is probably red because of Friday's move.
Yeah, it is pretty much unchanged.
Yeah.
So the expect move. Next slide. The expect move from last week. Of course, they realized the actual move is within the expect move. Expect move is 1.8% at the beginning of last week. And this week, at the Friday afternoon, I checked the SPX price for the end of this week. It's 1.7%. They're very close. Main reason is the VIX is trading at almost the same level as the beginning of last week, 20.8, 20.6. We're going to see VIX. I saw it was down 1.2 points for VIX futures. So probably it's going to do very similar to VIX.
So let me take a look. Right now we've got VIX at 2081. The last was 2081.
And the VIX futures are 21.15. But Kai, do you know what's crazy is each week that we've been doing this, and I love it, we've been watching the expected move for the week go down and down and down and down, right, Jenny? Like, it was 110 last week. The week before that, it was probably 120, and now it's 103. So we're watching the expected move go down.
Oh yeah. If we're comparing what happened in April, that was crazy.
Yeah.
We rarely see intraday move for SPX. It's more than 2%, but that was kind of a normal for April. We have one day is more than 6%.
Yeah, it's crazy.
Yeah.
And June's almost over. We've got one more week of June. Is this the last week of June?
Yeah.
Right?
Yeah.
Yeah.
In 2 weeks, we're gonna see the tariff.
Oh yeah, what is the deadline? Is it like July 8th or something?
Yeah, I think 8th or 9th. Yeah.
Yeah.
So has that stopped you at all from, rolling positions out from June to July, or from rolling things, or do you want to keep things closer? Do you think people should be worried about that deadline?
Oh, that's very subjective. I think for people, if you worry about volatility coming in, and which definitely will, especially implied volatility will definitely come in, taking off some position is probably the best way. We have so many studies showing if you want to add like hedging positions, it's going to only increase the complexity of your portfolio, which might not be a good thing. Sometimes you just cannot control it. You have 10 position and you add 2 or 3, 4 hedging positions, and it becomes a 15 position portfolio. When something goes wrong, you have more position to become even worse.
Yeah.
And that happens.
So instead of hedging, you're saying reduce, right? Instead of adding that something, reduce your position size instead of hedging.
Yeah. If you don't have to hold that long stock position, right, because of tax or whatever purpose, take them off.
Yeah. Mm-hmm. No, I like it. All right. Next slide, you think?
Yeah. Next slide is the IVR change. So the equity market, definitely the implied volatility increased instead of decreasing, even though the price didn't change. Most of the other bonds, euro or currency, precious metal, crude oil, they drop from last week. So crude oil
is crazy. Crude oil dropped 86% in IVR last week.
Yeah, but it'll bounce right back up today.
No, sorry. Right? This is not the drop 86%. The IVR dropped to 86%. Still very high.
Dropped to 86%.
To 86%, yeah.
So, Jenny, I just want you to see that. He dropped to 86%.
Not drop 86%.
Okay, thank you.
Okay, got it. And I see, so natural gas last week was up every day for most of the week. And that's why, and you saw the, in natural gas, you see it increasing, increased. And so when you're saying increase to 58%.
Correct. It increases to 58% IVR.
Okay.
Yeah.
Got it.
Natural gas?
Natural gas. I was looking at natural gas. That was one of the things that increased last week. But natural gas is up almost every day last week.
Yeah.
But that's one of those. That's one of those where it can, even when it's up, it can still go up in value.
Okay.
Crude oil implied volatility dropped simply because the end of last week, the crude oil IVRs actually jumped above 100%. So that's why it's very difficult to keep going up, unless there's something even bigger happen.
Kai, it's funny to have you on because when we first started getting these from you, we were like, it moved 58%? It's up 50%. Like we would think, we thought at first.
I forgot to explain this to you. This is only the IVR. I just put those arrows for readers to easy to understand.
No, see if it's up or down, but that's the percent of it.
It moved to, that's what I was saying, it moved to 58%, not up 58%.
Yeah, we got it. It didn't move 58% up, it moved to 58% from 49% the week before.
Yes.
Yep, exactly. So some major assets movement last week. Next slide, please. So the first one, definitely the crude oil. So crude oil closed at 74, which is the highest level since this January. And so for long term, the 5-year median 75%, we're still slightly below that. So 10, 20 years median is 63 and 71. So we're trading above the long-term median right now, which we haven't seen now in the past 5 years because of the war. The average level is much higher, but long-term is only around 70-ish for crude oil.
That's pretty interesting. I'm glad you went a little farther back in time with it to kind of put it into perspective.
Right.
Yeah, because we can see after the Ukraine war, the crude oil jump up to 120, which actually, dragged the average numbers all the way up to 75 in the past 5 years.
Right. That's pretty interesting.
Did you see the gas price jumped from
to 78 or so for crude oil?
Oh, he's talking natural gas?
No, I mean, no, sorry. I'm just talking
you
about
mean gas at the pump?
Gas station.
Gas at the pump.
Yeah.
I drove to Kentucky. We drove to Kentucky last week and filled up, so we're good.
Oh.
But honestly, so Kai, you're in Chicago. What is it in Chicago?
I believe it's $3 and $3.25 to $3.45 in Costco. So I believe the other gas station at least 20 cents higher than that. That's for regular. Premium is four some ish.
So still, like, I was looking when I filled up the gas tank, I thought, oh, geez, let's see how much gas is. And it's still in the three something, which I don't think is bad because, Liz, like, we had years and years and years where gas was $5, $6. It got high. It got high for a while.
I moved to Chicago for 10 years. I think the worst time is right after the Ukraine-Russian war, right? It jumped
and did
up
it get as high as like $8
or $5?
I think some areas of the country like California, maybe even seen $8.
But California,
Oh yeah, 7.6. I saw the tag.
Yeah. That's California.
So under $5, I think it's all right. It's not terrible. And you're not driving too far.
Yeah, but the traffic's worse right now.
Oh yeah,
traffic is bad. I'm telling you, the natural gas. With my pool, I always tell my husband I'm using natural gas futures to hedge the gas that I'm using to heat the pool. Okay.
All right. Slide. What do we have next?
All right. Next slide is I'm talking about. So because we see the high implied volatility, and also I want to check the historical volatility, so realized volatility. So I found the spread is actually started to widen in the past week or past 2 weeks. So right now the IV, which is VIX, minus the weekly realized volatility, which is HV, is 8 points right now. So this is close to the 80th percentile in the past 20 years. So long-term average is only 3.5 points. So between VIX and the realized volatility. So you can see this trend. The green bar is the implied volatility. The yellow bar is the historical volatility. Now the green bar is much higher than the yellow bar, which means the market's waiting for something to happen or unwind, right? The highest gap.
Yeah.
Is at the end of last year, right before the election, we can see that spike for the implied volatility, but realized the volatility didn't even change.
So what's the trade here? Sell premium?
I keep selling before the tariff, like the beginning of July.
Yeah, because then that's where all the uncertainty will hopefully be shaken out, and it's an event risk, right? It's almost like an earnings move.
Yeah. So I watch the zero DT trading or intraday information too. I watch the difference between VIX 1D and VIX on daily basis for a couple of months right now. I saw the VIX 1D jumped quickly last Friday from 10% to 21% of last Friday because of that big drop on Friday. So you still can get a lot of premium from the high elevated implied volatility, even though there are a lot of expectation things are going on, but the realized volatility is a different story.
Yeah.
You don't know, just like what you said like 20 minutes ago, we don't know what's going to happen for all those big events. The news expect one thing, but realistically, anything can happen.
Anything can happen, and that's why the premium's staying a little bit higher. All right, let's go to the next slide. I just want to make sure we make opening bell.
Sure. Yeah, we have enough time. All right, so the top 5 and bottom 5 performers from last week. The top 5 is Coin, Kroger. Coin is probably the biggest winner, up almost 20%.
Yeah.
Kroger, Caesars, Dell, VST. These are the top 5. Not too much, right? Between 5 to 7% because the whole market was so quiet. So for the downside, definitely the energy stocks. If we check the energy stocks, we pretty much can put all of these energy stocks in the top 5. So EMPH down 22%, First Solar 17%, and also with very high IBR. Adobe, Google, Lulu are down like 6%. So a lot. Also, some other high tech stocks are down pretty big, around 5%. If we make the list a little bit bigger.
And all those solars got hit last week. Yeah.
Oh, that's right. Yeah.
Yeah.
And Lulu's just a continuation from the week before because Lulu was down a lot the week before, so it's continuing to fall.
Yeah. I think it's a 3 or 5 year lows right now, right? Or it's really low price.
Yeah, Lulu's losing its stronghold. There's so many competitors out there now. You know what I mean?
Well, and are people not in athleisure every day anymore? Are they dressing up again to go to work?
Not me. I'm just kidding.
I brought back the 80s puffy sleeves today.
right, next slide.
Okay, next is the earning. We don't have too many earnings. Some interesting ones, so that's why I add this slide. We have the Carnival, FedEx, KB Home. I don't think many people traded because the liquidity. And then Wednesday we have the Micron. A lot of people trade MU, right? And Thursday,
and a lot of people have Nike on because Nike's vol's been inflated for weeks. So a lot of people have Nike on.
yeah. And Nike is trading out at the in the low range right now for months.
Yeah, and it's had that high vol. So it's funny because Micron and Nike are they're two crowd favorites as far as like our Twitter segments go.
Right.
Oh, really?
Yeah.
Okay.
Well, a lot of our a few of our viewers like those and are in those, so we're in those.
Yeah.
I know we're Nike right now. We might not be in Micron.
I don't believe we have Micron on. No, but we do have Nike on.
So we'll have a handful of things to watch today, but not a ton of earnings.
Yeah. Yeah.
Okay.
All
Last
right,
slide. Last slide. I just want to summarize what happened this season. So this is the quarterly earnings performance. The performance, I mean the 1 day performance from the market close to market close on that 1 day. So the largest, the bar to the upside is what happened in the past quarter. We have more than 3,500 companies already announced the earnings, and the average daily movement is plus 0.5%, plus 0.45%. So this is actually the highest, the best quarter in the past 3 years.
Which is interesting because when we would see the earnings, it looked like, 51% up, 49% down. It looked pretty equal as far as what some were up,
Very
some were
close.
down.
Even this season is 50.5 versus 49.5. So very close to 50-50. But the return, we saw the best return this quarter. There are a lot of articles to analyze why this happened. I think one of the reason is a lot of companies try to prepare things for the worst tariff situation after the July. Right, and also they didn't, and more company don't even provide the guidance for the next quarter or the next year because they don't want to. They don't even know what's going to happen. They want more information.
Yeah, we saw that, and I think it's kind of pleasantly surprised when things were right.
Yep,
that's why it went up so much. I don't know. I like it, Kai. This is one of my favorite segments. I like seeing this.
Thank you.
Yeah, thanks so much, Kai. Thanks for joining us. And right on time, we're going to take a quick break, and we will be back for the opening bell.
Stay tuned. We'll be right back. Thanks, Kai.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid. Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Jenny, we are back, and the opening bell is imminent in about, 30 seconds.
I know, it's 8:29, so we made it just in time. Let's jump in the platform, John, so everyone can be watching the market when the bell rings. Who would have thought?
I mean, Spoons are up 7.
This is up 7.
Yeah, it's not an event. I actually, if we're in the platform, I actually have oil pulled up. That's the one thing that I think all eyes are going to be on. I don't know if it's going to move that much on the open, but I'm really surprised the market hasn't done anything. We're just kind of sitting on our hands. Bonds are up 14. Bonds are up 14.07. So bonds have had a little bit of a move, but that's about it. Can you see what I'm saying?
Do we still have a TLT position? I don't know that we.
We do.
Yeah, we do. We have Zebra and TLT.
And take a look at this. It should be right about what we were. It's right there. It's right where we put it on.
And when bonds, we put this on around 86. It looks like we're going to be opening around TLT around 87. It'll be up a little bit, but nothing crazy. So now 8:30. Let's jump in and look quickly at that SPX. I'll show you what I would look at 8:30. And what some of our viewers look at, you're looking at 20 delta, so the 59.40, 59.20. That's like make a $20 wide. Let's just make a $20 wide. There we go. And then 20 delta on the upside, so the 60.05 and the 60.25. So there's a $20 wide, and you're getting close to $5. And this is what I typically see for something on a $20 wide. Now with this market, I don't know. I know we had VIX. I'm curious. Where is VIX right now? I don't know that I'd put this on today. And maybe, I'm sure people will. And today's Monday, Double Down Monday. Maybe we should. VIX is at 20.
It is Double Down. No, we're not going to do this in this account. It's too wide for us. Like, we're not going to do a one lot that could take us out for $1,500.
$1,500. Now, if you want less risk, you can do 40 delta, $20 wide, because then you're collecting $10. Then you're risking $1,000. And that's another one that's not bad.
40 delta. It'd be right on top.
It's very tight. You're right on top. 40 delta, $20 wide, and then you're getting $1,000. Or here you're getting $1,200, so risking $800. These aren't bad either.
So your drawdown is less. Now, once again, this isn't what we do in our account. Usually at 2 o'clock we'll do the Iron Fly because it's a much lower drawdown.
And 10 o'clock, not 2 o'clock.
Oh yeah, sorry, 10 o'clock. So look at this. The SPOOs are down a little bit, but we are really not moving. Let's see what oil is doing. It's up a little bit as well. So I don't know that you and I have anything really to manage in here. Taking a look at this oil, I want to take a look at the bar, and so we can see what happened last night.
The rank in oil is an 80. Again, if I were going to do anything in oil, I might look at a Jade Lizard, see how far I could get with my put, and we'd probably do the MCL, the micro crude.
So let's take a look. So I would go to the 24 date only because it's still that same cycle of where they are. And if we're going to do a Jade Lizard, Jenny, we're going to do a traditional Jade Lizard. I'm going to go down to, I could probably move it down.
Yeah, the 60.
63.
I don't know. I think you got to do the 60.
70 cents.
Yeah.
I'll bring it up one. I'll bring it up.
No, that's fine.
I'm going to bring it up to the 64. Bringing it up to the 64, and then I'm going to put a call spread on top. Now, I can't see the buying power because there's something in front of it, but that's
$500.
okay.
I'll tell you, $500. And you probably, there we go. So we've got 83.84 call spread, 64 put. We're getting $95 using 500. This is a smaller scale. This is MCL, the micro crude. It's just, if we want to be in, take advantage of the 80 rank. We have.
Yeah, let's do it. Hold on. I was just kind of going around with this. I'm going to go with the 30. I just want to stick to round numbers. I'm going to go 95 cents. I'm shipping this.
Selling the 83.84 call spread and the 60, what was it? The 64 put. And we're getting $95. And this only uses $550.
It's a 14 delta, and I'm going to show you where our break even is on here. It's all the way down to about right here.
63.
Yeah.
Yeah, 63. So, and this is only a 24-day trade. So if oil skyrockets, we don't really have risk to the upside. The only risk in the trade that we have is to the downside.
Yeah, we just want the vol to come in there, and we're going to work that. Is there anything else that needs to be managed right on the open? Intel seems to be up, which is, counterintuitive to Intel. We have 2 puts.
I know.
Isn't that crazy?
And I took a look at him. It's down more. It was trading around 48 on the open. Now it's 44. So I was, I had a working order in for some position that I have. It's not even close to what I thought.
Look at that.
You know, you'll put in your working order. You're like, I'm going to hope to get filled here. Not even close.
Not even close.
Not even close.
A valiant effort. Okay. So TLT, that's exactly where we thought it was going to be. There's nothing that needs to be managed. You and I have been running a tight ship in this account, so it looks good. These, let me turn my phone off. Sorry about that. You and I have been running a tight ship in here, so there's not much that needs to be managed. Bonds, I just want to take a look at the real bonds.
The real bonds instead of the fake ones. ZP.
I was like, oh, I want to see how big the move was. Look at that.
No, I know. 114. We've seen this a couple days ago. Like, it's nothing really. If you go to our Tasty FX, well, you don't have to. We closed it, so it's gone. We closed. So if you see positions, one of our positions is gone. We still have the USD shekel. We have the euro pound, but our euro US dollar is gone. And if you go to history, can you see that?
Yeah.
Yeah, euro USD. You could see we made $78.90 on it.
And that's after fees because I think we closed it for 81.
So that's not bad.
Here's what I would like you to ask Glenn when you see him, and we can talk about this at a later date as well. I'd like to be able to click on this and see the chart, please.
Just click on the ask. Click on the ask, and you can see the chart. Yeah. So here we go. You'll see the chart. There we go.
Oh, I would have expected a little bit more of a move in the shekel, given the.
If the bar goes up, if we're going to see that chart increase, that means the shekel's getting weaker compared to the dollar.
Correct.
And that's the position we have on, thinking that the shekel will get weaker compared to the dollar, and it's not really moving that much.
I just like having something on where we can say the word shekel every day because it's fun.
So, anything moving?
I want to take a look at gold. I want to take a look at Bitcoin. So Bitcoin was the one that was moving for me, that was moving last night. Gold really hasn't done much, right? Taking a look at this, it did come down a little bit, which I thought gold would have been higher. Everything that I thought would have happened did the exact opposite. I thought the market would have been down, gold would have been up, and Bitcoin would have been up. Bitcoin was down, gold was up a little bit, and then it has now come back in.
I was surprised. I was just surprised at the crypto move. If you look at IBIT, we have something in there. So you see Bitcoin had, look at that red bar from overnight, right?
Wait, let me get to the one where it's under 100. There we go. There's your 98. This is the low, 98,735. Now, I'm going to be totally honest, and Jenny and I talk about this all the time. I don't know when the exact time of the open and close is on Bitcoin. I don't.
I don't either, but I just looked at the price. I open my platform and look at the price and think, oh, whoa, Bitcoin is, in the 90 handle again. It's below 100. And Ethereum, look at the price. It was down to like 2,100. If you go to ETH, Ethereum was pretty bad last night. Take a look at that red bar, see how low it got. 22,063. It was ugly.
It was pretty ugly.
It was pretty ugly considering we got to like 2,800 or 2,700 earlier last week. So, Ethereum just can't seem to catch a bid or hold a bid or.
I know it's been staying in this range, and then it just seemed to fall out of bed. It's pretty interesting because Bitcoin seemed to have kind of kept its wings up a little bit. Oh, we're filled in MCL. Awesome.
Okay.
So that seemed to have kept its wings up a little bit, but everything else. I know when we were talking to Vanetta, we wanted to take a look at Apple too. We thought it was worth a look. So Apple's got a 21 rank. It's staying in that 200 level. But once again, this is what Apple looks like, where everything else still looks like it's up near the highs of its range again.
Right. And coin, take a look at coin, and you can see that coin move, which is really, really the move coin had on Friday. Look at that move on Friday.
Yeah. Big move.
And so, it's down a little today.
Has it pulled back? Yeah, but not really. Do you know what I mean?
Yeah, it's tough getting in now, but I don't know. Yeah. I don't want Jim waiting too long. I know Jim's waiting in the wings. I'm trying to stay on schedule. We can come back to this stuff later, but let's take a quick break and let Jim in. Liz, what do you think?
You got it. We'll be back in 90 seconds. Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid. Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hello, everybody, and welcome back. We get to do a segment with one of our friends, Dr. Jim Schultz. Welcome, Jim.
Welcome, Jim.
What's going on, man? I mean, this is like such a huge uptick for me. Like, normally I'm with Tom and Tony. I get to be with Liz and Jenny this morning. Like, this is unbelievable. Liz and Jenny on the Tasty Live Network, this is unbelievable for me.
Jim, I tell you this all the time, but I look at you on a daily basis because I have all of our album covers right here. So I get to see you every day.
That's scary. That's way too much, Dr. Jim. Like, you know, you can do maybe like 30, 40 minutes at a time, like some days. But, man, if you're hitting it every single day, that's way too much. That's way too much.
I cannot believe how long your hair is, Jim. I haven't seen you in a while, but I like it. I when we were talking earlier and Vanetta said your hair was long, I had no idea it was that long.
Oh,
yeah.
I've been watching the segments with Dr. Jim because nothing says Monday like this guy, right? That's what Tony always says. And every week they talk about his hair. Every
It's funny. I just listen. I listen in the morning. I don't have it. I just have the audio on, not the visual. So I haven't seen it.
Yeah, you know, it's been fun, and I've never had long hair, never in my life. I've always had short hair, and I don't know. It's just like last year, I can't remember when I started. I guess it was the beginning of last year. I was just like, man, let's mix it up. And not only that, but I mean, I'm 44. You know, I'm not young like you spring chickens. Like 44. I'm like, man, like this hair is not going to be here forever. So it's like, man, let's leg it out while we can. Let's see what we can do. And, you know, it's funny. We were talking before the show. I can't, like, if I tried to do like I can do like a little pineapple.
Yeah, you need like a top knot. You need like a top knot. I can do it back out of the face.
I can do a little top knot. I can do a little something. And Amelia likes to kind of like, ooh, let me brush Daddy's hair. Like she'll go get her brush and she'll brush my hair. Like she thinks it's amazing. And she's like, Daddy, you look so beautiful.
It looks good. I like it. I think it looks good on you. And if you're 44 and you still have that much hair, I don't think you're going to lose it.
Man, maybe not. Maybe I'm past like, you know, we're past the point of no return. Like, you know, we're in the position. I'm just inventorying this hair now, possibly. And so that, I mean, it could be worse, right? I mean, it absolutely could be worse.
Yeah, I think.
But I don't think I'm going to go like, because it's really long in the back. Like, it's really long in the back. I'll probably get it trimmed up for Boston, which is in 3 weeks, by the way. For people that. Yes, Options Crash Course Live, July 13th in Boston. There it is right there on the screen. It's totally free. And, you know, man, we need bodies in the seats. We need heartbeats in the room. So come, bring friends, bring family members. It's going to be amazing. I cannot wait. It's going to be in about 3 weeks. And so,
well, this is a more intimate setting, right? It's not a big venue. So there will be, and you've already done this once in Chicago. I heard it was amazing where you vetted and did the whole options course in Chicago when you came in. So it's going to be very, very good.
Yes, it's going to be great. I can't wait. Like it's going to be very, it's probably going to, I mean, well, it did in Chicago, but it takes me back to my professor roots. It really does. Just because, I mean, I love what we do. You guys love what we do. Like what we do is so special every single day, right? But you guys know, because we've been on the road so many, I mean, we've been on the road, I don't know, 60, 80 times together, hundreds. I don't know. It's a lot, right?
A lot.
There's something just really special about the live interaction. There's something just really special about the live learning environment. And so I'm very, very excited about that. And I can't wait.
So I've said this before. We've been on the road, many cities. We've been on the road with so many people from Tasty, of the Tasty, on-air personalities. Jim is by far the best speaker, best storyteller. If you have never seen him on stage, you should get your tickets and go to this because you're always entertaining, Jim. Always entertaining.
You are,
my gosh.
and you know what,
Thank
and informative as well. So your delivery of the information is a sight to be seen. So yeah, I encourage everybody to go out there.
You guys, man, you guys, come on now. You guys are doing too much. The hair, the this. Come on now.
Well, and I don't want to keep going on with compliments, but I have a question. How did you get that blue lit background?
No, it's just the virtual background.
But you see how
no, they can change that, Jenny. We'll talk about this off air, but they can change that light anytime they want.
It's nothing.
Every one of the shows has a different light behind them. I don't know if you've noticed that or not. Like Jamal has a different one than Dr. Jim did, and we got this color.
I kind of want the blue. I'm going to call for the blue. I'm going to call Garrett up after the show and ask for the blue.
Tell you what, Jim can send you that background and you can change it.
There you go. Yeah, 100%. I can send it to you, no problem. I'll tell you when the show's
we can get this. Dreams come true. You could have this by 10 a.m.
All right.
There you go.
All right, Jim, what are you bringing today?
Man, let's talk about how to find your next trade. So, I knew it was going to be a super special treat to be with you and to be with Liz. And normally on Monday mornings, I'm just fighting with Tom, man. Normally I'm just battling Tom, just down in the slop, just two pigs rolling around. And it's like, man, we can't get any actual work done because he's just he's so hard. He's so difficult. He's impossible. But with you guys, I'm like, oh, this is amazing. Let's actually do something that's going to benefit everybody. So
we can do anything we want to. He's not even watching. We can do anything
we want to. I know, it's amazing. He's not even in the same country right now. This is so amazing. This is incredible. So how to find your next trade. So, all right. So sometimes, obviously, on this segment with the skinny on options, abstract applications, we go super theoretical, we go super mathematical, we kind of reach and go out on a limb and those kinds of things. This morning, I thought we'd go in the other direction. What I want to give everybody out there, especially the new traders, let's talk about a streamlined process for finding your next trade. Now, one of the things I love about Tasty, and all three of us have had this conversation before, here's what I love. We've got so many personalities on the network. We've got so many different kind of ways of implementing the same core strategies that we all kind of agree on. We all agree on the same 5 or 6 things. But then how we actually go about executing on those things is not necessarily the same. And so I'm going to be very curious to see what you guys think about the streamlined process that I have for us this morning.
All right. I love it.
All right, let's go. All right, so John, go ahead and get us going here on the very next slide. All right. So finding a new trade can be a very overwhelming endeavor, and it can certainly feel like there is an endless number of boxes to check, something that can plague even the most seasoned trader, but is especially a sticking point for traders just getting started. So today, let's streamline the process for what to look for on entry for your next trade. Okay, so we try to make things as black and white as we can, right? We've tried to systematize and commoditize the process as much as we can. But I think, and I'm curious to hear if you guys agree, so much of trading is actually gray. We try to make it black and white. We try to make it on and off. But I don't know, Liz and Jenny, what do you guys think? I think most of what we do on a daily basis is actually somewhere in the gray area. What do you guys think?
Oh, I think it's for sure gray because I think the loose set of guidelines, we try to make it black and white for easy entry, but you are spot on accurate. It is a loose set of guidelines, and loose is gray.
Jim, do you know how many times people have emailed and asked for a decision tree? Give us a decision tree. Then you start making it and you never finish it because it's too difficult. There are too many variables.
Yeah.
That's a really, really great point. It's funny because I've never been asked by a viewer for a decision tree, but I've thought about that on my own because I'm like, oh, this is so simple. Let me just make out this quick little decision tree, right? And you're 100% right. You get to the first 2 nodes and you're like, oh yeah, this is easy. But then once you get to the third one, you're like, wait a minute, there's 7 different ways I could go right now.
Yeah, right.
So it's it's almost impossible. And I just think so much of what we do is gray.
I agree.
So what I want to do this morning is let's try to make it a little closer to black and white than gray, but understand that there's going to be a ton of gray that's baked into the process.
All right.
Okay, so John, get us going here on step number 1. Okay, so the first thing that I like to do, and I'm going to be curious to hear if you guys agree with this or not. I like to look at what my portfolio goals are. So I like to think about the macro settings first, in a sense, rather than the micro settings. So let me set the macro first, and then I go to the micro. So for example, I'm looking at my portfolio delta. I'm looking at my portfolio theta. Now, quick little shout out to one of the crash courses that's already on the YouTube channel. There's one about how to build your portfolio. It's like a 4-episode course. It's in the playlist with all the other crash courses. In episode number 1, I actually talk about exactly how to determine what these numbers should be for you, because they're going to be different for everybody, right? Yeah. Portfolio delta, portfolio theta. So if you want to check out, like, how do I figure out what this number should be for me? Check out that course. It'll give you some ideas, because it is going to be different for everybody. But I think first and foremost, you need to figure out, what is my portfolio delta? Do I want to be bullish? Do I want to be bearish? Do I want to be neutral? Right? You can make a strong case for any of those three. But then after that, how much delta do you want to carry? And I'm actually curious to hear how you guys think about this, because I think, so we've got the delta to theta ratio, right? The research team has done some amazing work on that in the last, 3, 4, 5 years, and it's amazing. But I actually think it really only works if you want to be short delta. It doesn't really work if you want to be long delta, because the delta theta ratio it's put in place to help you kind of guard against any big down moves in the market from a volatility spike. And so it's like, all right, if I'm long delta, that's not really going to make any sense, because my delta is not even there to help me to begin with. Mm-hmm. So if I'm long delta, I actually like to look at how much leverage am I carrying relative to SPY. Am I 1x? Am I 2x? Am I 3x? Am I half an x? And how many x's do I ultimately want to carry in terms of leverage relative to some major index where SPY I think makes the most sense? What do you guys think about starting with portfolio delta? And I'm also curious, whether you're long delta or short delta, how do you guys determine how much delta you want to carry?
Do you want to go first, Jenny?
I was interested listening to this, Jim, because I never ask myself, do I want to be long delta? Do I want to be short delta? I just go in and find the opportunities I like, and then that makes me long or short. But I don't ask myself the question first of, do I want to be long or do I want to be short?
So when you have a quick follow-up on that, when you're looking at a watch list, right, which we're going to talk about the watch list here in just a minute, but when you're looking at a watch list and you're looking at Lululemon or you're looking at Chipotle or looking at whatever, so how do you determine whether to be long or short? Is it mostly gut feel? Which, by the way, that's what I do. So I'm not trying to trap you, of course, but I'm just curious how you figure that out.
Well, I sell a lot more puts than calls, so I guess I'm mostly I'm always carrying. I guess I don't ask myself, do I want to be long delta? Because I'm almost always long delta, because I sell more puts than calls for sure.
Yeah, but puts are neutral too. Even though they carry long delta, puts are neutral too, Jim. That's the one thing that I think that as you become a seasoned trader, you realize you just want to see where your risk is going to lie. So just because she's selling puts doesn't mean you're not neutral. You just think that you don't want to be burned to one side or the other.
Yeah, I mean, sure, it gives you the long delta, but my portfolio is mostly short puts. So it's going to give me long delta, but if they're out of the money, hopefully they're gone before they ever become in the money. Mm-hmm. But I don't know. What about you, Liz?
Well, and that's kind of what I was going to say too. I look for I think I look for the opportunity, and so I'll look for high implied volatility versus bullish or bearish. Now, what's weird though, Jim, and I think what you're trying to do is break it down for the newer traders walking in for the decision tree. But so you, me, and Jenny, I know right now what my portfolio delta is. I know what my portfolio theta is without even looking at it, because it's inherently something that I know. So I don't want to be like, oh, if I'm long, and I'm making this up because hymns, I'm not going to go in and be, get long Pfizer and get long every other drug company. Like you just kind of inherently know instead of looking at the numbers.
Yeah, I think that's a really good point. And that's one thing that I always have to stop myself often and remember, like, all right, I'm a lot further down the road than somebody just getting started. So let me try to remember.
This is why you're amazing at this, because you're good at breaking things down, even though you're so far down the road. I think Jenny and I lack that special skill. Like we do.
Being able to go back 15 years or 40 years to when we started, or I guess not 40 years, but 30 years ago to when we started on the trading floor, to go back to when we were beginners and remember how that felt. And you're great at that.
Oh, yeah. Well, thank you. I mean, you guys are too much this morning. But if you want to come back next week, I will absolutely be here. So, no, I have to give all the credit to all my students over the years. Like when I was in the classroom for 6.5 years, teaching undergrad, teaching MBA. I mean, or not actually go back before, like during my PhD program, we had to teach. So I mean, I was 26 years old. I walked in. I'll never forget this. I'm 26 years old, second year PhD student. I started teaching classes. I walked in the first day. I mean, I was like sweating buckets. Like as I walked in, I'm just like dripping sweat. I'm so nervous. I'm walking in, big lecture hall, like 80 kids, principal of finance class. I'm walking in, and immediately all the students are looking at me, and they're like, "Wait a minute, he's gonna teach us? He should be sitting next to me. Why is he up there?" Like, I mean, I did not command any type of authority. I did not command any type of domain expertise, anything. And I got absolutely grilled. Oh my gosh, I got grilled so hard. And I didn't have like any of the answers. I was not ready at all. And so I have to give all my students over the years, because they really challenged me to really have to bring my A game. And it was bad. Oh my gosh, it was so bad in the beginning. And so, but I got better over time. Like I started to plug holes and started to kind of plug leaks. And then it forced me to keep coming back to, what is it like to be a true beginner? What is it like to actually, step into the market? You open up your portfolio, you're looking at all these numbers, you're like, man, I don't know what any of these mean. And so that's why looking at something like a portfolio delta makes so much sense, because it just gives you a nice reference point along the way to like, all right, this is how directional I am. So if the market does X, my portfolio should do Y. And it just gives you some kind of baseline.
And I like seeing that. Oh, go ahead, Liz.
No, I was going to say, I'm glad you said should, because it is a theoretical number, right? So just because your delta is X doesn't mean if the market does this, it's going to react exactly like this. It's in theory, not in practice.
But I like seeing like what's
every
your
day,
leverage
2
to the
o'clock
SPY.
Eastern, by the way, on the Tastylive network.
So if I'm more of a put seller and I'm short puts, you have to always ask yourself like, what is my leverage to the SPY? What will this do if we have a big move down? And always be aware of that and be aware of your risk. So that's important to not just be out there selling a bunch of puts because vol's high and it looks like good opportunity. Always be aware of what's your leverage and how can this move.
That's exactly right. And that's another thing. It's like, I think this really surprises a lot of new traders, but this is just, it comes so automatic to us. It's like, man, people will email me and say, my delta is, 300. Like, is that too much or too little? And it's like, I have no idea. I have no idea. I can't because I need to know account size. I need to know what you're trying to accomplish. I mean, I need to know, you have to know so many more details, because if you have a delta of 300 and your portfolio size is like $10,000, that's a huge position. That's a huge position.
Yeah.
But if your portfolio delta is 300 and you've got 500,000, you have zero. You have nothing.
Yeah.
And so it's all contextual. And so that's why I think it's so important. From a portfolio theta standpoint, so this is the second piece to the macro puzzle. Daily theta targets. Like, what are you trying to accomplish? Where is volatility? So how do you guys start to think about how much theta you want to carry? Again, if you're using a delta theta ratio, it's already baked in there for you, but that's a little bit harder to do if you are selling puts or if you are carrying long delta. How do you guys figure out how much theta you guys want to carry?
Jenny, you do this a little bit more than I do. You want to make sure you make a certain theta per day.
I'll look and see, I want to make sure I've got the potential to make X amount next week from my out of the money options. But then you get into periods where it's slow or everything's at all-time highs, and then I don't have much on, and you're kind of at a sit and wait, or your theta's way down. So it almost depends on what the market is giving you, because there are times where your theta can be huge when the market's just fallen and vol is exploding. But recently, my positions have been cut down as everything's been rising. It's hard to keep selling puts. You almost are like waiting for a new opportunity to come.
Yeah, and you're not looking at calls as adding theta. I mean, calls do add theta, but it's kind of you're just looking at them from like naked calls are a little bit difficult to add theta with.
I mean, Liz and I never really sell naked calls anymore. Very rarely.
And when you say that, you're referring to a standalone naked call, because you're obviously selling strangles. You categorize those differently.
No. Like, I rarely sell strangles.
You sell strangles. Oh, no, look at you.
We'll do a Jade Lizard. I'll do a Jade Lizard before I'll do a strangle. I got burned too much to the upside, way too much to the upside. All of my major losses have been to the upside, never to the downside. So I will do a wide Jade Lizard, but it'll be a Jade Lizard.
This is so fascinating. It's just so fascinating. Seriously, you guys got to come back next week. So I knew this morning. I'm like, man, there's no way we're getting through this segment in 15 minutes, because we got 2 more steps and it's already 10:01, or 9:01. Like, this is crazy.
Oh,
no, it's
yeah,
okay.
yeah.
We'll get through it. We'll get through it. Don't worry about it. But one quick comment about naked calls. It's a real so naked calls. So everything you guys said is 100% right. Like you're gonna get crushed, positive drift. Especially in individual stocks. Like it can be really really difficult. 100%. But man, they're a fascinating little strategy because when you actually and whether it's a standalone naked call or as part of a strangle. I'm kind of more referring to a standalone naked call here. It's a fascinating little strategy because when you actually go a couple layers deep in the onion, it's like, man, there's more going on here because if I have a naked call, right, and the market, if the market goes down, it can be hard to make money because of the volatility spike. That's one of the reasons why it's tricky. Same thing with call spreads, all that kind of stuff. But here's what's fascinating. If you actually find yourself in kind of a slow grind, positive drift, you actually don't lose that much money because the opposite is now happening. The volatility compression that's coming alongside that positive drift is actually shielding the naked call. And so I'm like, man, this is really interesting. So that's why, personally, I'll dabble with some naked calls. And people that watch from Theory to Practice, they know that we do that from time to time. I don't love to do them in individual stocks. I will from time to time. But in the indexes, they're going to make a lot more sense because I think you're kind of removing some of that huge outlier risk to the upside. And that can really make them a bit more manageable.
Sure. And if I ever do them, it's in an index, but not in individual products. Individual products, we've seen too many wild events and that you can't control.
And don't get me wrong, I love calls. I love selling calls. I like selling calls against a position, right? So against a position, and I do it. So I will sell. I have long positions, especially my IRA. I have stocks that I've been compiling, and I will sell stocks until sell calls until my hands bleed against those. So calls have their time and their place for me. I just do not want to lose to the upside in a call.
No, that's good stuff. Good stuff. All right, let's go to step two. So step one, macro portfolio goals. Hopefully people got some ideas regarding that. Step two, the watch list. So I'm very curious. Which watch list you guys lean on? So, I think Tasty makes it so easy. So, number one, it's like, all right, I've set my macro goals, delta, theta, whatever. Number two, now where do I even begin looking for stocks? Well, I think using the pre-populated watch list on Tasty Trade is the best way to go. I personally use the default watch list and Tom's watch list. I use the default watch list because it's the default watch list. I use Tom's watch list because Tom makes me use Tom's watch list. I'm sure you guys.
That's what I was going to say. He's not watching. We don't use Tom's watch list.
I like that 52-week low. I like the 52-week low.
What? Because you're selling puts. That makes a lot of sense, right? You're going to step in. Yeah, okay. I like that a lot. So once you have the watch list, now I sort the watch list. Usually I sort it by IVR, high to low. And then I also like to look out for upcoming earnings. So I want to know if anything's on the horizon for whatever stock I might be interested in. One of the great things about using the Tasty watch list here is you don't have to worry as much about liquidity because whatever's, at least the two watch lists that I've mentioned, the default watch list and Tom's watch list, they're already pre-screened for liquidity. Like we're not going to put some junk on. There's not going to be some junk on there that has super low liquidity where you're going to have super wide markets where it's going to be really, really difficult to trade. And so I can't necessarily speak for what Tom's trading. He trades some junk from time to time. So maybe just go with the default watch list to be safe. But liquidity is obviously number one. Like you want to be able to get in and out easily at a good price, at a fair price. And so by using these two watch lists, I think it really makes the process so much easier when you're trying to find a strategy. So Jenny, you go 52-week low from time to time. Liz, what is one of your go-to watch lists that's not on this list?
Honestly, I'll go to, no, I do like the default. I don't use a lot of watch lists. I'm just looking for high IVR. So if I am looking for it, it'll be on the show and we'll go to the default and just sort by high IVR. So that's
okay. So but you're not
default.
using a watch list, but you got to be using something to sort.
No,
by
I'll
IVR.
go to Tasty default, like the default, your top one. Yeah, that's usually what I'll look.
Yeah.
But once you have been doing this for so long, you know what products you're in. It's like the same products you keep going back to.
And that's what I was going to say. I built my own watch list as well, products that I want on there. So a lot of times I'm just using my own watch list. But
so here's a question for you guys. So Jenny, you're 100% right. Like we start trading the same products, you start trading the same stocks, you start like, hey, I really like trading Tesla, I really like trading Lulu, whatever, right? Do you guys think that once you start trading a stock for a lengthy period of time, do you think that you can develop a feel for that stock such that it can actually give you an edge, even if you can't necessarily quantify it and you can't produce a market measures that's going to back it up? Do you guys think there's something there?
I think your confidence in what you believe gets higher. So you trade more confidently because you think you've seen it before.
And you think that matters. You think at the end of the day that matters with your P&L.
Yeah, no, I do. I think that if you let me just use natural gas for because I know it's a random thing. Natural gas and I have a very storied relationship, and I think that I trade.
You're not alone, by the way.
I know. So, but I've been trading it for years and years and years. And anytime you open up my position, I've got natural gas positions that are just like this, and it's something that I trade and I look at and I know, and so I feel comfortable at certain levels with natural gas because it's had my number and it's not had my number, right? So I've beat natural gas and it's beat me, so I feel comfortable trading it.
Okay.
That's I
Jenny,
think
what
where,
do you think?
where I'm at.
But I do think, though, if we've got products that we've been in for years, Liz, where we're just always selling puts at a certain level, or if it gets too high, then we'll change our trade up a little bit. Or there are products we've been in for so long, and it's like we just keep those going. At the end of the year, when you're looking at, like, you could probably call my accountant and say, like, what are Jenny's products that she trades year after year after year, and tend to have a positive P&L, and he could rattle off a handful, because it seems to be the same year after year after year.
But you're more comfortable with it. You know this level, and I'm gonna sell puts there. When it gets to this level, and I'm gonna change my trade. So you just I think you become more comfortable with it.
So do you guys think it impacts your P&L positively?
Yes.
Mm-hmm.
Jenny, what do you think?
I think so.
I actually agree with you. I totally agree with you. And I would file this under the category of like things I believe, but I can't necessarily prove. Right? Like I can't give you an options jive to say, hey, here it is. But I actually do think that, and it can even be in an index. Like if you like trading the NASDAQ or you like trading S&P 500, whatever, I actually think there could be something there. Again, I can't prove it, but I'm in good company.
It's market awareness. It's market awareness, kind of understanding it's kind of understanding your surroundings. You just become more comfortable with it.
Yeah.
And so again, to my point, like you can't. Where does this go on the decision tree, Jim?
I think we're at like the 27th note at this point.
No. This is age. What's your age? So you know what I mean? What's your age? How long you been trading? This way, then this way. Yeah.
How do you feel today? On a scale of 1 to 10, how would you rank your confidence level?
Yeah, you got the smiley faces there. There you go.
Yeah, that's so good. Do you feel hot or do you feel cold? All right, let's go to step 3. So John, go ahead and get us going on step 3. All right, so now we got to select a strategy. So this is the coup de grace, right? This is where the rubber meets the road. Okay. You've got to select an appropriate strategy. Again, I think it's helpful if you do step 1, you kind of know if you want to be bullish or bearish. You know what kind of theta you want to carry. You do step 2, you're on the watch list. You've got a stock that might jump out at you, whatever. Now you have to pick a strategy. Okay. Bullish strategy, short put. I put it number 1. It's my favorite strategy too, Jenny. So I'm right there with you 100%. Short put spreads, long call spreads. If you're bearish, short call spreads, long put spreads, you could do a broken wing butterfly perhaps. And if you're neutral, you could do a short triangle, iron condor calendar spread. You could even do a jade lizard, of course, if you're neutral / bullish. And so these are just some ideas. But here's what I want to know from you guys. How do you decide whether or not to go undefined risk versus defined risk? And how would you encourage everyone out there to help make that decision?
I think it's a price of the product for me. It's capital required in there because I always prefer naked options over any type of defined risk spread. But if it's too expensive of a product, I have to go with a defined risk spread.
And
why do you always prefer naked? I'm curious if you could.
Because it's easy. I know with a decision tree, if this then that. If it's a naked option, I know exactly what I'm doing with it. If it goes down, I either put the stock or I'm rolling out my put. Right. So if I'm going to go, I would always prefer it because I know when you put on a put spread, if it goes down, sometimes you're just out. You can't roll that. You can't roll into perpetuity. So the naked options are easier to manage, in my opinion.
And they get you so much further.
Just one more thing quickly, Jenny. When you have a short put, Liz, and it goes in the money, and you roll it out, so are you okay holding it in the money short put for a lengthy period of time?
Yes.
Yeah, me too, 100%. And I actually think that's a huge advantage of the short put because now you've got the positive drift, you've got the natural tendency of the market to go higher. That's working at your back. That's helping you over time, 1,000,000%. Okay, go ahead, Jenny.
Or Jim, you know what we'll do? A deep in the money short put, we'll turn it into a zebra.
It depends on how deep it goes. We turn it into a stock position. That's spot on accurate, Jenny.
Right. So, and the short put, like I always say, if you can't afford short puts and you have to do a spread, find lower price products. Find lower price products where you could afford the naked options because I just think the results are better over time. Your probabilities are higher. Your short strike is so much further. It just over time is going to give you a higher pop portfolio.
Yes, that's 100%. So I love the ideas this morning. I would just add on to that. So I what I'm hearing you guys say is you guys are both leaning towards undefined risk. I absolutely lean towards undefined risk too. I think most traders should be working towards some type of state where they're doing mostly undefined risk and a little bit of defined risk that's kind of splashed in there. And it's very counterintuitive. But when you actually go more undefined risk, you actually get smoother results. You actually get smoother P&L. You actually get less volatility over time as long as you're sizing correctly and not taking super huge swings or anything like that. But I would just say a couple more things. If you're just starting out, like if you're brand new, don't worry about the undefined risk. Don't worry about biting off a ton of strangles and short puts and stuff like that. Like start with spreads, start with iron counters is totally fine. You've got to build up that market awareness. You've got to build up that experience. And there's no YouTube video, there's no podcast, there's no book that's going to replicate what actually being in the arena is going to do for you. And so you need to build up that experience. And so I would encourage everybody out there to do that. When they're trying to figure out undefined risk versus defined risk, you want to get to undefined risk mostly. I think we're all in agreement with that. But starting out, it doesn't have to be today. So that would be my biggest
I just want to add like a little asterisk. When we say undefined risk, I'm not referring to the 0 DTE SPX trades. So those, I'm always defining my risk.
Oh.
Yeah. And so where do we put that on the decision tree, Jenny? Is that in the beginning or at the end? Yes. The 0 DTEs, that's a whole separate category in my opinion.
Right. That's not in this.
No, that's like its own genre. Yeah.
Hey, but we can't. I'm not gonna lie to you. It goes in my decision tree because I can't afford to hold a naked position in SPX 0 DTE. No account can, except for maybe Tom.
Yeah. No, that's a good point. So it's at the beginning of Liz's decision tree.
Yeah, it's at the beginning.
Maybe towards the end of
the product.
That's really, really good. All right, hey, you guys want to get them a few takeaways? I know you got to get to market measures, and I knew we were going to be super long today because I knew it was just going to be so much fun. The world of options can often feel like information overload as there are so many different concepts and strategies to understand, but a process like trade entry can indeed be streamlined down to the few main parts that we've covered today to help make the next time you screen a trade all the more efficient and effective. And I thank you, ladies. I thank you, ladies, so much. Please come back next Monday. Save me next Monday morning.
Thank you very much, Jim. We appreciate it.
Yeah.
Bye, Jim. Have a good day.
Bye.
We'll be back in 90 seconds. Yeah, that was fast. Thank you, Jim.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as explore traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Jenny, we are back, and this is a Market Measures that was sent to us by Gad, and I'm very excited to see it.
I know, me too. So it's already 9:17. The morning show is flying by. It always does. So let's jump right in.
Let's do it. Let's jump right into the Market Measures. I don't know how many slides we have on here.
Well, once we get to slide 1, I think we'll find out. Or slide 2. Let's see. Let's take a look, John. Let's jump right in. Okay.
So optimizing trades by capital constraints.
All right, here we go. 7 slides. 1 of 7. When aiming to gain exposure to a particular underlying, the limiting factor is the buying power requirement of the trade.
Huh. Weren't we just talking about that?
Yes. Yes. Perfect timing.
I actually did not look at this. Expensive underlyings are tradable with virtually any account size, but the appropriate strategy is going to depend on the total buying power of a portfolio.
This is perfect. This is great for a Monday show. Let's compare the buying power reduction requirements for different types of neutral strategies. Love it. Perfect. All right, slide 2.
Okay, so here's the study. I'm just going to go through most of this because it's pretty easy. So 2015, so 10 years of data. SPY short 45 DTE contracts. Okay, managed at 21 DTE. Pretty standard.
Okay, compare the average BPR as a multiple of underlying price upon entry for the following positions: 10 delta, 16 delta, 20 delta, 30 delta, strangles, and iron condors with 16 delta short strikes and long wings of 5 delta, 10 delta, 13 delta. So they're using delta here, but when you're looking at these studies and you're trying to back test something, like you've got to put in a delta. So they're taking a look at, having the longs at 5 delta, 10 delta, 13 delta.
And this is all in SPY. Keep that in mind. So the premiums will be there. So a lot of times when we're looking at something, if you're looking at a delta, you're like, oh, you're not getting enough credit. There's no common sense. You're going to get enough premium in all of these deltas.
Okay, let's on to slide 3.
Okay, for short strangles, so both sides, the average buying power reduction underlying price ratio ranged from 17 to 21, meaning that these strategies would require roughly 10,000 to 12,000, and it's 10,200, 12,600 in buying power if SPY is trading at 600. So let's look at that down there.
Okay, yeah, right. So selling strangles in SPY, it's not cheap, right? It's not cheap. Think about when we started the show, how much buying power strangle in SPY was. Not much. And but now with SPY at 600, 10 to 12,000 for strangle in SPY.
Yeah, but you're going to be getting a decent return on those, right? So if you're going to go in SPY, and so you're 45 days out and you're doing, I'm just going to say the 10 delta. I'm just going to glance at my account and tell you how much you're getting for that 10 delta. You're getting $3 on the 10 delta put. So you're
getting
probably
$1.50 on the call. So you're $450 using 10 to 12,000.
Yeah. So you're going to get paid for it too, though.
Right, yeah. So again, SPY is a higher price now, is using more buying power, but you're getting more premium. Let's move on to, and so when you look at the average buying power underlying price, it's either 17x or 18x or 19x or 21x, depending on the delta. So with the higher delta, you're taking in more of a credit, but it's also, then you're at the higher end of the buying power.
And you are at the high end. It's kind of, in the words of Dr. Jim, for every gimme, there's a gotcha.
Yeah. All right, next slide, please. All right, varying the deltas of these strategies has a fairly small impact on the buying power requirements of the trade, meaning that strangles with expensive underlyings are generally unsuitable for smaller accounts, right? Because smaller accounts don't want to tie up $12,000 in one strangle.
Is this very TP-esque? Because I remember you've had him on before, and he's like, well, just keep bringing it up because your buying power isn't changing that much. I mean, it is. 17%, 17 times to 21 times is a lot, but it's not that crazy much more.
He'll always tweak the strikes, looking at buying power and theta, trying to watch where his theta per day is the greatest compared to his buying power. So
that's what he's looking at, is theta per day, right?
Yeah.
So sometimes he's bringing his deltas way up because of the theta per day.
So again, short strangle delta and average buying power over the underlying price, it's not changing too much.
It's not changing too much. That's why a lot of times you're going to bring it in. Where it seems kind of counterintuitive. If I'm taking in such a low credit, you're so far out with your deltas, but sometimes it makes sense to bring it in a little bit, take a
greater credit in when you're using that much buying power.
When you're using that much buying power. I don't know if that's what's going to be the, because I didn't get to the takeaways yet.
I don't know. I didn't look at the end. Let's see. Next slide. Slide 5, please.
Okay. Comparatively, iron condors with the same underlying have significantly lower buying power requirements. Correct. Depending on the long wing width. They should have. Anytime you're in an iron condor, it should have significantly lower buying power.
An iron condor would require about $600 to $4,000 in buying power if SPY was trading at $600, making it much more appropriate for expensive underlyings and smaller accounts. And here you can see the closest to the strangle is the 5 delta wings, because those are the furthest out wings. But if you've got 13 delta wings or 10 delta wings, your average buying power over underlying price is decreased like exponentially. I mean, you're only using 1x or 3x versus 18x or 20x.
And this is kind of what we were talking about with Dr. Jim, but this is a higher price product. So here it's very rare that I would just be selling. Here you almost have to define your risk, especially in our account. And I'm going from that perspective of our account. Jenny and I trade every day in almost a little bit more than a Tasty Bites account, but you have to be very, very, very conscious of your capital. You don't want to only have 3 trades in, right? You need to get your numbers of occurrences up. So sometimes you'd have to, anytime we trade SPY, it's defined risk.
Right. So if you're in a Tasty Bites account, you're not going to be able to sell those strangles. You're going to be looking at these defined risk. And we were just talking about this with Dr. Jim. If someone wants naked options and if they prefer naked options, stick to lower price products. If you want to trade SPY, if you want to trade the ETFs and you want to do a neutral strangle, then I would spread it off.
Yeah, you almost have to if you have a smaller account. Okay, let's go to the next.
All right, optimizing trades by capital constraints. The choice of long delta for the iron condor also has a much larger impact on the buying power of the trade compared to the choice of short delta for the strangle.
So this makes it fairly versatile strategy, offering a high pop, high buying power profiles for larger accounts and lower pop, lower buying power reduction profiles for smaller ones. It does make it so iron condors are a very versatile strategy. I'll put a gold star on that one because you can make whatever risk reward scenario you want in there and you can kind of retrofit it for yourself.
And this is almost taking me back years and years and years when we had Robin come on as a rising star and she turned her husband's IRA into, had such profits in there and all she was doing were SPY iron condors.
Yeah, and I mean, I don't remember how wide she was, but she was spreading them off because you could, and for the capital constraints of them.
And there are people who this is what they like. They like this, Okay. And there are many choices depending on your account size.
But don't you think, Jenny, and I know we were kind of talking about the decision tree, so it's kind of fresh in my brain right now. But when I'm putting something in Inspire and I'm buying something just for capital, a lot of times I'm not looking at that as an iron condor, but you know what I'm saying? If you have a wide iron condor, that is, in my mind, a naked position.
It's a synthetic strangle. It's not like, you know how TP has these guidelines of collect a third of the width or collect this much. You need to get X percent of the spread width. If you're buying wings just as you know, a little bit of buying power relief, you could treat it more like a naked strangle, where if your put's getting tested, you might want to roll that call down. Or you make it tight enough where it is defined risk and you are getting a third of the width of the strikes, and you treat it more like a defined risk trade.
Right. So there are so many caveats to this, and there's nothing wrong with iron condors. There is nothing wrong with iron condors. But we were just talking about how we prefer the naked options.
But you look at this, it makes sense spreading it off, I think.
It does make sense. Yeah, for sure.
When we were talking about the naked options, we were talking more of individual products. There's a difference. I have a different trading style if I'm trading, SPY or SPX than I do if I'm trading individual equities.
I know.
Or commodities.
100%. Yeah. It's a completely different. It's almost, you need that as part of your decision tree too. What product is it? Because there are certain products that I won't trade naked with Tom's money.
Right. That's a good point. What product is it? All right. Last slide, please, John.
Okay, the takeaways. Expensive underlyings are tradable with virtually any account size, but the appropriate strategy is going to depend on the total buying power of the portfolio. That makes sense.
Okay, strangles with expensive underlyings are generally unsuitable for smaller accounts, regardless of delta.
True that, Gad. Okay, and then comparatively, the buying power requirements for iron condors are very sensitive to wing width and offer high pop, high BPR profiles for larger accounts and lower pop, lower BPR profiles for smaller ones.
Perfect.
Yeah, that was a good. Great. I think that's a good review too. And I like that they do these market measures, because we take things for granted that we take for granted sometimes what we know about trading and being like, oh yeah, if it's a high price product, you got to spread it off. Like we take this for granted.
And honestly, with VIX around 20, maybe this is a good strategy right now. SPY iron condors.
SPY iron condors.
Maybe they're back. Maybe
they are. We'll have to take a look at it.
All right, everyone, thank you for tuning in. We've got Scott joining us, and I cannot wait to hear about his trip.
Oh, I can't either. All right, we'll be back in 90 seconds.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan. I want the car.
That's right.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out, Pastor Hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Hello, everybody. Welcome back. Jenny, this is the moment we've all been waiting for.
Hey, I've been dying to get Scott on to hear about his trip. So let's bring him in.
I know. Do we have to do this? Please. There he is. Are you in studio?
I am in studio.
Oh, it is great to see you.
Yeah, thank you. It's great to be back. It is, it's crazy. It's been gone for 2 weeks. It's to me, it's the perfect amount of time because you can just really just get away. One of the things for sure, being 14 hours ahead and just busy traveling, I felt like I was out of the news loop for a while, which was amazing. Just amazing, because there's things I think that we just have come to accept as normal in our day, like the craziness, that when you get to take a step back, it's like, oh, wow, there is actually another way to go about the day where you're just not reading all the posts and saying, here's what this person said, and here's what that person said. So awesome.
That's what I love about your family, that you can unplug and go and enjoy your vacation and not feeling like you're missing something.
No.
We need all the details. So were you all together? Was it the complete set 5, right? Of 3 kids?
All 5. Yep. So Lila just graduated. Yep. This was graduation trip. So she was graduated from college. I'm losing track of time, last month. And yeah, so we're a good traveling family. To me, if you have the opportunity to travel, it's the greatest gift you can give to somebody outside of a formal education, just because when you get to move around the world and see how different cultures operate, for me, it like the brain just kind of goes like this. You say, wow, like amazing. So we started, I have to go through and look at the list. I know how many states. I think I've been to 30 states, but I think 45 to 50 countries. So
45 to 50 countries?
Yeah. So
that's you. And now the kids haven't been to that many, right?
Oh, a lot, because, well, yeah, a lot. It's close. I think Levi's probably the lowest. I want to say he's 32 to 34. But Lila studied abroad last year, so she went, to some places I haven't been to. I haven't been to the Scandinavian countries, which I look forward to. But for all of us, we've been trying to go to Antarctica. I never remember to plan the trip far enough ahead, and it's so limited on the amount of space. But that will complete the 7 continents for us. So
unbelievable.
So tell us about this, and tell me, do you hire someone there that takes you from place to place?
Yes. So I am big on, for me and for our family, I know a lot of people just like to go wing it and figure it out. I really like guides, because for me, wherever we are, the guides really make or break a trip, because you can walk around, and again, with technology, you can get so much on your phone right now. You can find most of the places you want to go. But to me, when you get the little details about something and just the backstory, for me, it's just significant. What's interesting, because we've been doing this for a long time, it's a special skill set as a guide to be able to talk to adults and young kids. Now, all 3 of my kids are adults, so it's very different. But when we started traveling, my youngest, Lyle, was probably 4 or 5 years old. And to keep a 4 or 5-year-old engaged when you're going out and traveling, it's a skill set for sure. So we had some really good guides. My one downside, the disappointment for you on this trip, was the food. We had some amazing food. We didn't have enough reservations, and that was on us. So we had some okay food. And it just seemed like when we were there's so many restaurants that I've heard about. And unfortunately, we weren't able to get into some. But we did have some amazing, amazing food. Have either of you been to Asia?
No, never. It's on my bucket list, but I never have.
So right before, I don't know, you probably won't remember this. Tom remembers this because he doesn't want to let me forget. But we moved up the launch of Tastytrade by about 3 months, just because circumstances made that have to be the case. Well, I had a 2-week trip planned for a long time to Southeast Asia, Vietnam, Thailand, and Cambodia with my family. And Tom called me. He's like, "You're not really going on that trip, are you?" And I said, "Yes, I am." And he said, "But we're launching on January 3rd. I said, "I know, I'll be back on the 1st. And he's like, "But how are you going to do that?" I said, "We're going to be okay." And went for 2 weeks, landed on the 1st, was in on the 2nd, and we launched on the 3rd. And for a month, I mean, forget just the jet lag and everything else, just from launching the business and the craziness around it. Literally, I felt like for a month, I would go home, I'd look at the 6th and say, "I'm sorry, I just needed some food, go to bed, wake up, and go do this again." But I wouldn't have changed that for a second. So if you are open or inclined to going to Asia, do it. It's far. And Southeast Asia is really far because you fly into.
How long was the flight? Yeah.
Well, we flew into Seoul, and from Chicago to Seoul is 14 hours. But when we went to Southeast Asia, late 16, you fly into Tokyo, which from Chicago is probably 12 and a half. And then once you get to Tokyo, it's 8 hours into Vietnam. Like on a map, you go like, it just kind of looks like you drop down a little bit, but it's 8 hours. So
it seems so far. You have to be gone you're gone for 2 weeks on these trips. You have to be gone that long if you're going that far.
You really do, because you lose a day on either end of travel, and it takes a little while to get acclimated. The longest trip we ever had was 37 days. And we went to 5 countries in Africa, the Seychelles Islands, and finished in London. That was amazing. We actually had about, I think, 4 or 5 days in there where we had no cell service. So imagine being that detached. There aren't a lot of places you can go in the world and not have cell service. And maybe today, the places we went to, that was unbelievable. In 37 days, unbelievable.
So, Scott, for people who have a week off,
yes,
what would be your best trip for if you have a week?
Depends on what you want to do. You know, some people, I'm not a beach person. I'm fine going someplace and just relaxing for it, but I'd rather go out and explore. Mm-hmm. So it really depends for me, you know, and it's funny because the 6 and I have actually talked about, because we just run into issues with travel agents. It's a very conflicted space. But it depends on what do you want to do. Do you want to sit, you know, with your toes in the sand, or do you want to go out and see the local
No,
sites?
Not a beach trip. I'm trying to plan. So my son graduates in May,
yep.
And I'm trying to plan like our last family trip before he starts working. But I figure I've got a week to work with. Maybe take the weekends on the either side of it, 10 days.
Yeah, 10 days. Great. Well,
but not a beach trip. Not a beach trip.
All right, we'll talk. I need more details, like where you've been, but I could come up with some good suggestions for 10 days. And get Tom, see if Tom will pick up the tab, because I know he's offered for Tony. If Tony, he's always said, if you're willing to go somewhere for 10 days, I'll pick up the tab. Tony always will say, well, I can't go do that. So I think Tom's not afraid to say it, but see if Tom just say, you know, see what he says. It's worth asking.
Oh, it's worth asking.
Right. So, and it's funny. I don't know if you saw any of the clips, some of the videos I sent. The commentary from Tom and Tony was absolutely priceless. So I like experiences. I'm not a shopper. So for me, you know, going out and seeing local crafts, love it. So we went to a town called Kanazawa, and it's known for their gold flakes. They make the pressed gold. It's amazing, the technology that they've used for, 1,000 years, how good they are at it. But also it's where they, a lot of specialty kimono shops. So that was where Tony said I was tracing something, and he said it's nice as like his 19-month-old grandson could do what I was doing. But when you watch the process and what goes into it, the level of detail, and it takes about 3 months to make these high-end kimonos, which it takes, they showed us how women get into these things. It could take half hour, 45 minutes to get the kimono on. Forget the hair and makeup, just the kimono.
Get the kimono on?
Yeah. Yeah.
Isn't it anyone in your family come home with a kimono?
Fortunately, no. But the 6 and Lila did put them on, and so this is a 3rd generation facility. You know, it's pure artistry. That's what it is. So they tried on some of the kimonos that the father had made, but it takes about 3 months, and they're around $25,000 for one of these. Whoa. Yeah, for one of these high-end kimonos. It's crazy. So the bullet trains are very, very common, and they're amazing. You could set your watch to when they arrive and when they depart. And what's so fascinating to me, you know, I'm sure you've been on the subways in New York, Chicago, wherever you are, it's a free-for-all. Like when you're on a subway, it's like, who even knows what you're going to see? You know, who's going to be there? People playing boomboxes, forget earbuds. They're so respectful. Forget no phones. If you are watching something on your phone or on a tablet, 100%, you know, earbuds. And super clean, super smooth. You have no idea. They go up to 199 miles an hour. So we took a day trip. It was 130 miles to some little town outside of Kyoto. It was an hour.
Oh my gosh.
Like an hour.
That's crazy.
It's an hour, but you think like now if you're heading north, I was talking to Pete. It took him 2.5 hours to get home the other day because of construction, and he went he went 14 miles. So here we went 130 miles in an hour. Beautiful. We get out to this little town, and one of the spots we went to was a person who makes swords. Now, when I say make swords, any person, swords like samurai, like real Japanese swords. So for sure, a dying art form, no question about it. I asked. He said there are about 200 people that still do this. He is a master. There are 13 masters. So I have no idea how this trip was even planned because this guy doesn't have a website. This is just, we're in the middle of nowhere. We walk in.
Doesn't have a website.
He's working on the original stages of pounding out, the metal. It's an 1800 degree oven that he's stoking and pouring coal into. We walked into this room. I'm like, oh my God, how is this guy in this room for more than 5 minutes? He spends 8 hours a day in this room. It takes him, again, about 3 months to make a sword, and they sell for $50,000, and you can't get them. Like, there's a waiting list. There's a waiting list.
Did you come home with a sword instead of a kimono?
Did not come home with a sword either. Can't get them. I'm not a sword person, and $50,000 seemed like a lot for a sword. But I could see if somebody wants it as an art form. I mean, truly an art form. Yeah. Mm-hmm. So what I love, and one of the things that I love about the culture there, how passionate they are about what they do. They're so proud of whatever it is they do. We stopped at a little matcha shop. And when I say little, it was on wheels. Like this guy just had a little, it wasn't, I don't know if 3 people could have fit inside this. He was so proud of what he did. And I don't drink matcha, but my family members who did said it was amazing. And he came out and he was talking to us and he gave us some treats. And he's like, thank you for stopping by my store. And I'm like, Starbucks, you're lucky if they don't yell at you, when you go over and ask if your mobile order pay, where is it? They're like, oh, just wait for it. And we were on one of the bullet trains we were on. Somebody had hit the emergency button on the platform ahead of us, so we had to stop. 4 minutes. It was a 4-minute delay. They apologized 3 or 4 times for a 4-minute delay and said, we hope that it doesn't interfere with the rest of your day. Coming home, we flew from Tokyo into Minneapolis, then down to Chicago. Delta, 2 hours late. 2 hours late. You think they apologized for being late? No, they're like, it's America. We're 2 hours late. Who cares?
Scott, last time Liz and I were on the metro train coming home from our day at the SPX pit, and there was a delay, and nobody says anything. And there was actually, Liz, remember that there was a man from the train who hopped off the train and was climbing underneath the train. Like, we've got crazy stuff going on here in Chicago, and nobody says anything. Nobody.
Yeah. So
what a difference. What a difference.
Yeah, put it on the bucket list. And also because the dollar against the yen is so strong right now. So it makes it much more approachable than where it has been in the past. So, but anyway, Jenny happened to.
You were gone 2 weeks.
2 weeks.
And then flying home, how did you fly home?
We flew through Minneapolis and then down to Chicago. Yeah. So it was about, coming home was a long trip. It was about a 20+ hour day.
See, that's tough.
I'm gonna guess the Sheridans were traveling in style, though. I'm just gonna take a little bit of a guess.
It's a safe bet.
It's still long. It's still a long flight.
Yeah, going over, because we were also there, because we went over we were guests of the Cubs when they played the Dodgers in March. And going over, and I remember this, the 6 I would both wake up like 3 in the morning, 3:30 in the morning, because it's just hard to get acclimated. So for the first few days, this morning I was up at 3:45, so I'll see how I do later today. But I think give me another day or 2, and I'll be all right.
Can I just? I still want to hear more about your things for the purposes of when Jenny and I are on, because we're going to see you today and then again on Wednesday. It's not the 6. When we're on, she's a 10.
Yeah, don't call her the 6. Yeah, you're right. Call her the 10. You can't keep. I know it's funny. This has been going on for a long time, but we don't want to hear it.
I'm done with it. When you're on with us, you call her the 10.
Done.
Scott, do you know your wife? So I go to her Facebook page anytime someone tells me I want to go platinum or I want to do this to my hair, and I say, I'll show you the most beautiful hair. And I search for your wife on Facebook and show people her picture.
Well, thank you. Thank you. Yes, she does. It's amazing. She started wearing gray when she was 14.
Is she really?
Yeah.
And her color is gorgeous.
Yeah.
Oh, it is gorgeous.
Thank you. So after we had our first, she felt old and she wanted to color her hair. And I've never say yes or no to anything. I'm like, look, you go do what you want to do and I'll support it. I pleaded with her not to color her hair. I said, people stop you walking down the street and tell you how gorgeous your hair is. Why?
It is gorgeous.
Why are you going to color your hair? She's like, I'm doing it. She did it and regretted it for however, I don't remember how long it took, 9 months or whatever for it to grow out. And she said, okay, I will never do that again. So, but thank you. So,
so she's the 10. Wednesday,
she's the 10.
Wednesday, we're going to ask about the 10.
And when it's the three of us, it's the 10. I'm good with that.
Good.
Perfect.
Oh, well, welcome back. I know we're running out of time. What's going on? Do you have the top symbols running through the platform?
I do, and it's really amazing.
While we've got you, what do you think about this market and how it's not really moving? I mean, we're up.
So
Correct,
what's amazing is I think for the 2 weeks I was gone, I don't know if SPOO's net or moved before today. I mean, even today, I don't know if they're off by 30, difference of 30 or 40 S&P points from when I left, and there was some pretty good movement in there. So, last night we had some internal messages before the market opened, like, hey, it could be kind of a crazy day. And I'm like, I don't think so. And I said, the 10 asked me, she's like, how bad is this going to be for the market? And I said, I'll be shocked if they're down 50 and I won't be shocked if they're up. And they were down, whatever, they touched down 50, 60, something like that. And then boom. And now I don't know where they are now, but up like 30.
SPOOs are up 30 right now. Yeah, they're 27.50 right now.
Now, why do you think crypto went down?
It was the only one. It was the only thing open.
Yeah, and listen, we've had this conversation. I know Tony wanted to bet me. I personally, I don't think that the lows, and again, I'm not saying today, tomorrow, or in a week or two, but that 4,800 on the ES I believe we will be heading back down there at some point in the next handful of months to a year or something. There's just too much negativity right now that you just look around and there's nothing out there that's screaming, oh my God, we should be at all-time highs, at least not to me, other than it's happening. So there is a street, and it's actually an interesting psychological experiment, and I'm going to say this, hopefully this is relevant to the conversation. There's a 6-corner intersection in Tokyo that you need to go to. It's the equivalent of Times Square. But
6 corners?
It's 6, and when the light changes, everybody just goes in every direction. And it's a sight to be seen. So I said to the guide, what's here? Why are people here? And he said, because it's the 6 corners and this is just people just want to come see this. There's really nothing to do here. And I looked at my son, I said, crazy that this is what people do. You fall into the psychological trap of, well, it's on social media. I got to go see this thing. And then it just perpetuates and it just goes. To me, that's kind of the market right now. And listen, I have no idea where the market's going. So none of us do. But as Tom and Tony always like to talk about, I don't know if you guys talk about pot odds. To me, pot odds are to the downside, not to the upside here. There's so many things that could go wrong that aren't, and that's why anybody's bullish is saying, well, you're a boomer and you're an idiot, you're looking for a crash. I'm not looking for a crash. I just think that risk reward right now is to the downside, not to the upside. So makes, when markets absolutely do not make sense, and somebody could say 4,800 didn't make sense, and clearly people didn't think it did because we snapped back and we're almost at all-time highs again. So it's going to be interesting to see what happens, for the rest of the year. And then obviously we'll take it. We'll see what the Fed does. Our rate cuts coming. What's going to happen to the tariffs come back? There's just a lot of unknowns. So clearly the market didn't like tariff talk the first time. We'll see if it comes back or if tariffs are going to fade away.
Yeah, we're on deck. That's what I think we were talking about that with Kai. July 8th or July 9th is his deadline, which is 2 weeks away.
Okay. Deadline subject to change with this administration. So we'll see. Clearly, I hope cooler heads prevail, and let's just kind of get the world back to some semblance of order, as opposed to it just feels like everybody hates us right now. So.
Oh, yeah,
all right.
Kidding.
All right, let's get to the top 15. Over under on if Tom's listening. I'm going to say no, but I'm going to do it anyway. Top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures by the off chance if Tom is paying attention. Number 15, Microsoft at a 7 for everybody else. Tesla at a 33, HIMS at a 39, Apple at a 20, AMD at a 14, NVIDIA at a 3. CRCL at a 147, PLTR at a 20, GLD at a 41, IBIT at an 18, Google with an L at a 33, Amazon at a 14, TSLL at a 42, CRWV at a 25, MSTR at a 9, and number 15 for Tom, Microsoft at a 7, rounding out the next 10, UNH at a 31, MU at a 34, and USO at an 80.
Wow.
What do you guys think of the market?
I was just looking at that list. I have 90% of the things on that list.
I was going to say the list. Looking at it, to me, the circle going up every day, having these huge moves every day. What does the risk team think about that? Do you see a lot of people with short naked calls in there? Are there issues in CRCL?
You know, it's funny because a lot of this has happened while I was away, with the whole stablecoin. With the change there. So I haven't heard anything. I haven't seen anything. My guess is we've heightened requirements. I believe the stock is hard to borrow. So
no, Circle's the one where Jenny was asking you about the margin.
No, that was CoreWeave. That was
CoreWeave.
But it's Circle, that the stable coin that's just like up every day.
Yep. So
I don't know, but that's been some of these recent IPOs have been crazy movers.
Crazy. Some big ones. So listen.
You know what I thought was interesting? What Kai said today, and he said, like PLTR and HIMS. What did he say? Their revenue or their
market cap?
Not market cap.
PE,
no,
the PE was the same.
No. The PE is way off. But I want to say that their revenue was almost the same, but their PE is way different, and Palantir's PE is way higher. But HIMS and Palantir last year, like their revenue was the same. Yet Palantir is priced so much higher. So that was an interesting thing that Kai brought up today. And you see HIMS taking a huge hit today.
Oh, is it?
Taking a massive hit.
How much?
Yeah, it's down $20.
Oh, it's a lot.
Yeah.
HIMS is newer though, isn't it? I guess it's new to me.
No, I think it just there was like that, and I don't know if it was this January or January 2024 when they had all the HIMS commercials on the Super Bowl, and I felt like that brought more awareness to it. But now it's just getting into more of those, diet pills, and I think that's why it was more.
And it's interesting because I saw something talking about how we have limited regulation, so that you're talking about like the GLP-1s, all that stuff, and that these companies can come out with their formulated mix.
Yeah. So we'll see. I don't know. I'm taking a little bit of heat in HIMS today. I've got a couple positions. Liz, you've got something in HIMS, I think.
I had a short put in HIMS, so I'm feeling it today, but it is what it is. So the chat's asking if it's buy the dip in HIMS. Is HIMS buy the dip?
I'm going to sell more puts in there today.
That's buying the dip. That's buying the dip.
That's buying the dip. That's buying the dip.
That's buying the dip. You sell more puts.
I thought vol would be a little higher. I don't know.
Yeah, this market is interesting. I mean, I think it's going to keep its wings up today, but I think we're on bated breath. You were asking what we think. I think we're on bated breath, waiting for anything to topple it over.
And because we all think that means we're going to continue to go higher.
To go straight up.
I don't know. With VIX at 1920, we could just have a slow grind and see VIX at 15 by the end of summer.
Well, hope not. And just as long as VIX doesn't go back to 12 again.
I don't want it back to 12 either. All right, I cannot even believe this, but it is 10 o'clock, Scott. This is the fastest hour of the day. It's done and dusted. Are you jet lagged? Inquiring minds want to know.
Yes, that's what I said. I was up at 3:45 today. But I feel fine. Let's see how I feel later today. I think another couple of days I'll be all right.
Okay,
so what's going to be in the office this week? I'm going to be in Thursday. I would love to hear all about your trip.
So we'll talk on Thursday.
Okay, good.
Yep.
And lunch today is Tempesta Market.
Oh.
Habanero Grill, Greek Kitchen, maybe Malnati's, some pizza. I don't remember which pizza. Some pizza on Thursday.
Oh, Thursday. Jenny loves the Malnati's.
It's pizza.
Malnati.
It's pizza. I think it's Malnati's, but it's definitely pizza.
All right. Well, Scott, thank you so much.
My pleasure. Have a good rest of your day.
You too. Thank you, everyone, for watching. Fastest 3 hours of the day for us.
It is fastest 3 hours a day. Scott, thank you so much. We will see you Wednesday. Jenny, you're going to talk to him on Thursday as well to get some travel details. Everybody out there, happy trading today and peace.
All right, welcome back, everybody. We are here for another Rising Star shoot today. I'm excited about this one. We don't get a lot of women in here. Emily, welcome.
Thanks.
It's really fun to have you. We've been dying to have a woman rising star on here. We've got you.
No.
We trapped you. We trapped. You're in from Ohio.
Mm-hmm.
And I guess you spent some time in Chicago before.
Yes. I went to school here, University of Chicago, and then I lived here afterwards. So I'm sort of a Chicago native.
You're kind of a South Sider, like the Pope.
Yes.
University of Chicago, you were a history major.
Mm-hmm.
And then you got your master's, you almost got your PhD. We got your whole history, educational history down. And yet you ended up as a jeweler.
Yes, I did.
I mean, you're also a professor and English professor, but I'm just giving people a little bit of a background.
Uh-huh.
But what's with the English professor stuff makes sense to me, but the jeweler stuff, where'd that come from?
My mother-in-law is an artist, and she got me started in jewelry. And it was my hobby and stress relief while writing my dissertation. So the jewelry became more and more time. Dissertation.
So you liked it. And
yes.
The dissertation took a back seat. And yes. We have a couple of people here like that. Also from University of Chicago, where after about 6 or 7 years, the dissertation got lost not in the jewelry making, but in something else. It's amazing how life works that way. And I guess you had a pretty successful jewelry business from what I hear. Yeah. And what happened?
Well, I was making some silver ingots in an artisan studio, and I was melting the silver, and then you have to put it through this rolling mill, which is like a pasta mill, except metal comes out, and you have to hand crank it. And I was cranking away really, and it was really hard, and I happened to glance down, and my wrist bone was popping out. And so I stopped, and
That's a good time to stop. That's what we call an act of God. That's God telling you that it's time to stop pumping.
Yeah. So I couldn't use my wrist the next day, and the doctor said I couldn't work for like 6 months. So I had nothing to do.
And at this point, you are like, what year is this?
This was 2019. So the summer of 2019. So I asked my dad, I was, telling my dad about this and telling him I didn't have anything to do. He was an options trader in retirement, and he told me.
Oh, what did your dad do before he retired?
He was an actuary.
He was an actuary. Okay, makes sense. Okay. So, and then he was an option trader.
Mm-hmm.
So as a customer, not as a professional, he was
a
retail customer.
Yeah.
Okay. All right.
So he told me about Tasty Trade and that I should trade options also, and that I should just simply go on Tasty Trade and learn how to do that from them.
Also, we got to thank your dad for all this. and had you ever traded stocks or options before that?
No, I never even paid any bills. I just I was not interested in anything financial and just.
So you'd never made a trade before 2019?
No.
But your dad had?
Oh, yeah.
Yeah. And so was he like, does your husband trade at all?
No.
No. So it was just your dad kind of saying, hey, maybe you should check this out.
Right.
And what were your first impressions of checking out Tasty?
Oh, it was really relatable and understandable. Because at the same time, I bought this textbook and I opened it up and it was like the math equation.
Hold on, a textbook on option trading? Oh my God, what's that
One.
book?
There is one. It's a big textbook. It says options across the front. And you open it up and there's all these math equations in it. So I was like, I'll read that later.
Okay.
But I went through a lot of the Tasty videos. I did Mike and his whiteboard. And, I rewatched them. I took notes on them. I watched them over and over again until I got the hang of it. And then I just started trading.
That's great. I love the story. It's 2019. Do you mind if we say your age?
No, go ahead.
Because you're 51 today now. So you were about 45 then? About 6 years ago?
Yeah.
Great. And so you start trading when you're about 45, knew nothing about options.
No.
And what did you do? Like, what's your first? Well, let me put it this way. How much did you fund your account with?
Well, it was just going to be a test to give me something to do.
Okay.
So
That's all right.
my husband agreed for $5,000.
$5,000. And he's probably like, what is this so-called tasty tray?
Yes.
It's, exactly. And here's $5,000. Try to make it last as long as you can.
Yeah, basically, yeah.
Okay. And what'd you do?
Well, I started selling bull put spreads on Apple. And
Why was that your strategy or trade of choice?
the put spread allowed me to, well, one, it limited the loss, and two, if I didn't want to have the loss limited, I could sell the insurance put and then take the stock and then just sit on it like it was an investment. So that was my backup plan.
Okay. So when you first started out, obviously you did it really small. And were you nervous? Like, I'm going to lose guys. Oh, you were?
Yes,
Okay.
I was nervous and I wasn't sure what I was doing. I was afraid to put in the first trade.
And you did, and it worked?
Yes, it worked right away. So I put in the second one. And then I was really astounded because it was like
It worked too?
Yeah, because it was like doing the crossword and getting paid. So
So you're making a couple trades in 2019. The market was going up. I mean, I don't remember everything about 2019, but the market was actually heading towards record highs actually just before the pandemic in 2020. So you caught that little move to the upside.
Yes.
Did the pandemic, what happened? Because Apple got killed.
I know. I was flying back from an art show in Baltimore right before we closed down. And I remember coming back and the market was crashing. And not only that is that they closed down all the gold suppliers, the jewelry suppliers, the art shows. Business was done.
Okay.
So, and I had been making so much more money trading with less physical labor than goldsmithing. But we did have the crash, and I had been very careful with my margin and my account, and I just simply rolled out the puts 1 year.
Oh, you pushed them out a whole year.
Yeah, I pushed
So you went into some leaps.
leap puts, I suppose. Yes.
Yeah.
Yes.
Yeah.
And then I waited, and then when they just announced that they were easing, I took all my cash or everything I had, and I bought back in.
Nice. Okay, worked.
Yes.
And that's 2020.
Yes.
And so by the end of 2020, let's just say, either you sat down with your husband or he came up to you and said, hey, you're doing pretty good.
Yeah.
Yeah.
It wasn't like a mutual agreement. Just more money kept showing up in our account. Like he would just deposit more money in.
So he wouldn't even talk to you.
No.
So he just did it because why didn't he tell you he was doing it? Because he just
That's the way we handled things.
Oh, okay. You don't talk about it. I like that actually. I might need a little marriage advice. But so he would put more money into your account. And because, well, obviously he believed in what you were doing.
Yeah, he was watching the returns. He would look like every week or two.
Did you actually let him log into your account to see it, or he looked over your shoulder? How'd this happen?
Is in computers, so I guess he
Figured it out.
Yeah, he has access. I gave him access to the
You gave him access to your platform.
and the behind the scenes where the
Got it.
Apex where you can pull the
Sure.
Yeah.
So he saw the results, and for about a little over a year, you were pretty consistent. I mean, yeah, you didn't really have any drawdowns. He kept adding capital. You got, I'm not going to talk about the exact number, but you got up into the mid to high six figures, right? So that's where and that's kind of your starting point. Now where are we now? Where are we year wise? We're kind of like 21-ish, 2022.
Yeah, probably about 2021. Yeah, or 2022. Probably 2021. Because after I came back on the end of 2020, that's, I think, when he put like the last infusion in, or it was the beginning of 2021.
Sure. So finally, and of the money that you guys had saved up, nest egg, whatever you want to call it, he was pretty committed.
Yeah, a really big chunk showed up in our trading account. It was a lot of our savings at the time.
That's a hell of an endorsement. I mean,
Yeah.
were you nervous?
I was really scared, but he totally believed in me and supported me. And he said, "You're trading this."
That's unbelievable.
So-
That's a great story in itself. And so, because you don't, like, that's just a tough thing to do for you. It's a tough thing to do for him. But what's interesting about it is you didn't change your style, right? You kept doing the same stuff.
Yeah.
And 2022 was a pretty nasty year. Market sold off pretty good, 2022, because we had the rally after the pandemic in 2020. We had the whole meme stock explosion in 2021. And then in 2022, we kind of had this little bit of a nasty sell-off.
Right.
How'd you survive 2022?
2022 was tough. So I sort of survived by rolling things out.
Yes.
I did get into a sort of bad habit of rolling things wider to still get a credit. And that worked along just fine for a long time. And so 2022, I did not make as much as the other years, but also my account wasn't on mark to market yet. So there was a tax.
You mean you weren't portfolio margin, you hadn't switched to professional trader or mark to market?
Yes, I had to switch to mark in 23.
Got it. So now at this point, what you're mostly selling put spreads. How wide are your put spreads? What is the duration of your put spreads? And what is the underlying product that you're using?
Okay. So I would try to keep to the tasty principles, though I know you're not supposed to roll them wider.
Okay.
A little bit of cheating.
That's okay. No, whatever works for you, of course.
So I would sell them 45 days out. I would sell them 10 wide to start, sometimes 15 wide. And I would usually do like 10 contracts. And it would be on an underlying stock. And I think sometimes at that time, I also did the indices like triple Q,
Okay.
stuff like that.
But did you mostly use equities?
Mostly equities.
And how do you pick your equities?
The stocks that are going up. They have to
Very
be,
sophisticated method. Right? Yeah. Done.
they need to be large liquid stocks in the S&P 500 and keep it to a small handful that you watch very carefully and you do.
How many positions would you have on it once?
I would have like maybe 10 to 15 symbols, but I'd have a lot of trades within each symbol. So maybe like at that time, maybe like 50.
So
Sure.
50 positions.
Yeah.
So give me an example. Let's say we took a liquid stock like NVIDIA. Did you trade NVIDIA at all?
At that time, probably.
Okay. Let's say it was a liquid stock like NVIDIA. So you would do multiple 10-lot put verticals, sell multiple credit spreads, like up to what,
Well, I would try to keep my margin, leave a reserve of about 50%.
Okay.
So that,
So the total capital you're using was about 50% of what you had, capital. But how much would you commit to a certain underlying, like like how many different, you said 10 different underlyings at least, or?
Yeah, it was a lot. I mean, the core trading strategy would allow me to really concentrate on certain underlines that I wanted to bet on. And so,
Can you give me some examples of some of them? Like what names?
like Meta at the time, it's usually the big tech stocks.
And how far, what was your short delta? Like what strike would you sell generally?
I would usually sell the 20.
20 delta?
Yeah.
So that's your default. Now, did you ever do the call side?
I did the call side in 2023, but I didn't quite follow it exactly, and I never did naked calls.
Okay.
And I would have been better off, ironically, if I had done exactly what you had taught to do, the naked calls, because the insurance call would cut into my profit margin too much.
Got it.
So,
but mostly you were selling put spreads. Occasionally you'd sell some call spreads. And how often were you trading? Like multiple times a day, I assume.
yeah, I was.
Are you pretty much a full-time junkie?
Basically, I am now.
You are now. 122% profit in 2023, which is amazing. But 2023 was a very bullish year because we came off of 2022. And if you're selling put spreads, it works. And like that's probably more money than you'd ever made before in a year in anything, right?
Yes, it was a whole career's worth of money.
Career's worth of money.
Yeah.
Were you wondering like what's going through your head? Like, why doesn't everybody do this? Or why doesn't what's going through your
I
head?
was wondering why, yeah. And I was trying to recruit other people to do this.
And nobody would they?
They were scared.
Yeah. Yeah. At that point, you have an unbelievable year in 2023. Like I said, up 122% on a significant amount of capital. What'd your husband say then? Like,
He was really happy. He retired recently. So I guess I make enough money for both of us. So
that's incredible. And so you've been disciplined enough to keep doing the same thing. Like you haven't changed.
I change according to market conditions.
What does that mean?
So I've noticed at some point the premium is, in some days, the premium is not high enough to justify the risk that you're taking for selling. If the premium is artificially low, I will buy leaps. And the leaps do really pay off. And then when the premium is really high, I'll just sell the puts.
Got it. So you're kind of legging some of this stuff a little bit.
A little.
Okay. In 2024, because I think people kind of want to know the progress, because you know, this is remarkable that you started, with a $5,000, let's see what you got, to now you're basically, supporting the family. I mean, you're just, it's an incredible, you're a rising star. But it's make 47% in 2024, which again, I'm going to go through a lot more of the details in a second, but how's 2025 going so far?
I have to beat the S&P 500 every year. I mean, that's what I set for myself.
That's your goal?
Yeah. Yes, I must beat the S&P 500. So I am beating it fine so far this year. I think I'm at 12%. S&P's at 2.
Oh, you're up 12.5%. That's great. Are you still using in 2025 now? Is it mostly equities, or have you gone back to some of the indexes? Because we had that vol explosion in April. So does that change the way you think?
I haven't been doing the indexes because it seems to me that the leverage, the momentum on certain equities is a lot larger than the momentum on the index only, and that the returns are better if you pick out the largest stocks in the S&P 500 that are at a higher momentum and higher profitability than the slower moving ones, rather than then you just cherry pick off the top, most liquid, most probable stocks in the S&P 500 and trade that instead of the whole SPY.
Maybe that's why I don't make money a lot of times, because I'm doing the exact opposite, looking for the stocks that are going up so much and then trying to sell them. I'm a contrarian. But it's really interesting to me that, because what happens a lot of times is that people that have a similar approach to you, they get, it's very hard to check your ego, because you start to think, okay, well, why am I even buying the wings? Why don't I just sell the puts? Why do I even need to spread it off? But I guess by spreading everything off, it gives you just so much more capital to work with that you can.
It does give you more capital. It cuts into your profits.
A lot. Yeah, sure.
Yeah. And so sometimes I do sell the naked puts, but I am very careful with the naked puts.
Are you conscious of your overall deltas? Like, do you look at those? Like your
I used
beta-weighted
to in the
delta?
beginning, but then I just,
You don't look at your beta-weighted deltas now?
not anymore.
Okay. And do you look at the amount of data that you've collected? So you're just thinking about it, just you're a pure premium. This is how much extrinsic I've sold.
Yes, this is how much I can extract and produce.
This is how much premium I've sold. This is how much I can extract. And what percent do you think you can keep on that?
Well, I know I can keep more than the 50%, but I usually close it at the 50%. So when I sell a spread, I close it at 50%.
Got it. And what happened in April of this year?
This is like a
Early April, when we
trick
no,
question.
when the market had when the whole tariff thing came into play and the market sold off. We sold off from let's say where we are now, a little under 6,000, all the way down to a little under 5,000. So the S&P sold down 20%.
Right.
There is no strategy that you can have when you're short put spreads where that works.
Right.
So you must have taken a lot of heat in the beginning of April.
I do. My strategy does take big drawdowns. What I did is I split the time frames on my account.
What does that mean?
So I bought a bunch of leaps at the bottom. A bunch, yeah, call leaps. Yeah, I bought them, and for 1 and 2 years out, like like Palantir and stuff like that, and
Okay.
Nvidia and stuff. So,
Because you thought these stocks were cheap.
oh, they were cheap. Yes.
Well, in hindsight, they were cheap. But at the time, you didn't know that. I mean, you
Kind of know, because the macro picture, the larger picture for these stocks hadn't changed, right? And so
100%, but you still don't actually know.
you don't know for sure.
Yeah, right.
Yes, it is a
So you bought a bunch of long-term leaps,
yes.
and it actually worked out.
Yes, I'm still holding the leaps though, and then I took my freed up cash and I short-term traded with that. So I have like a long time frame, and then I have a short time frame within my
And
portfolio.
on the short time frame, your short put spreads must have lost money
They do.
on the way down.
They did. I closed them out, and I usually don't do that because I didn't want to take a really big drawdown. So I closed them all out early because I was like, the macro picture has changed. We cannot follow the same rules. Just close them out. And I saw your video like last week, and I was like, I shouldn't have closed them out because I was looking. They would have, if I could have rolled them, and I could have not taken that loss. So
Well, you in the last couple of years, well, since you've started, you've got to experience, virtually every market condition. You've had bear market, you've had bull market, you've had extraordinary, binary events like the pandemic, meme stocks, the tariff thing. So you've basically seen everything. Are you trading any commodities, any futures options?
no, I'm not trading futures options. I am experimenting with the metal futures. I feel more comfortable with that because I used to be a goldsmith, and I
So
trade.
you think because you used to be goldsmith, you can trade gold? That's a very, okay, got
That's
it.
exactly what I think.
So in other words, you're buying gold.
No, I'm actually sort of trading it, so I'll buy and sell it.
The
But
futures,
no, micro,
the micro futures,
really small.
the MCG,
Yeah, but I also do. Most of my money is in GLD.
GLT.
Yeah.
Okay, and so you're basically short put spreads in GLD and scalping micro gold futures around it.
Yeah.
When you kind of plan out your days now and everything that you do, like are you pretty much in front of the screen all the time?
Yeah, it's hard to tear myself away. There's always something else to learn, and I still feel like I'm at the beginning and there's so much more to find out about.
There is.
I know.
We're still all learning.
Yeah.
Have you been experimenting with any other kinds of strategies?
I did experiment one with I would buy a long straddle on the VIX.
Oh God. Okay.
And it did turn out, but the conditions I don't think are not there where I could repeat that right now.
Got it. When you put your positions on, and you have a lot of positions on, do you ever take losses or do you always roll out?
I used to not take losses, but I take losses now.
Okay, so you found it a little more effective to take losses. You don't put stop orders in. You just take losses. They're mental stops.
Yeah, mental stops. I will take losses if I think that it's not going to come back, or more importantly, if the macro condition has changed, like tariffs or something like that.
So if you're short a put spread in XYZ and the market starts to go down and you think the conditions have changed suddenly, you would close that position out rather than sell a call spread against it?
Yeah. I would just simply, with something like a very large macro change, I can't be sure, exactly what's going to happen. I have sold call spreads out before against the put spread, and that actually does turn out pretty well. It's just recently this is the first time I've done it. I just took them all off.
That's wild. I like it. So, right now, what % of your capital are you using?
Right now I am using 95% of my capital.
95%. So you're all in right now.
Mm-hmm.
Got it. And mostly the same kind of positions?
Yeah, the large liquid S&P stocks where I cherry pick off the best ones, and then I accelerate the trade by putting options on it on top of the stock.
Because since the meltdown in early April, May and June have probably been pretty good for you.
Oh, they've been really good.
Yeah, I was going to say, yeah, they've probably for your style, they've probably been great. What's the game plan here for the rest of the year?
Well, we'll have to see. I'm thinking it may be time to take profits at some point.
Lighten up a little bit?
Yes. Yeah.
Do you ever lighten up a little bit?
Oh, yes, I do.
Okay. So you are comfortable taking profits?
Yes, I will take profits and then I will sit back, but I usually will keep something on in the core positions.
You have to have something on, otherwise you will go crazy.
Yeah.
It's not possible to wipe the slate clean.
No.
Yeah. Is there anything that makes you nervous?
Yeah, I think the idea of undefined upside risk makes me nervous.
Undefined upside risk.
Yeah, though I know, and I think that's more emotional that's the last hurdle to get over than actual mathematical. Though the market does go up 1% more,
Is there anything like trading wise, nuance wise, know-how wise? I'm not saying it not intellectual, but just like it'd be know-how, product wise, that you feel uncomfortable with, or you think like, hey, you know what? I understand all this.
Yeah, I pretty much do. And if I have a question, I could just go back to the videos and watch them.
Got it.
So,
well, that's been a lot of fun, Emily. This has been, your story's amazing. And like I said, we need more women like you, and we need more stories like yours, because this is great. So thank you so much for coming.
Thank you.
Welcome, everybody. And that's time for another episode of Rising Star. Ross, how are you?
I'm good, thanks. How are you?
Welcome to Chicago.
Thanks. Good to be here.
You are kind of, you live in the middle of nowhere.
Kind of, yeah. I like it there. Yeah, small town USA.
Small town USA. Yeah, that's what I like about this story. It's you are a Spanish teacher.
Yes.
Well, you were a Spanish teacher.
Yeah.
For a long time.
Yep. Slowly evolving out of that.
Why Spanish?
Actually, I was a history and biology teacher, but then they found out I spoke Spanish. And they can find history teachers anywhere, but said, you just
How do you speak Spanish?
My wife's from Costa Rica, so.
Oh, so you learned to.
I was
okay. So you were forced to learn.
Forced to learn. I had a good teacher.
Okay, got it.
Yeah. I had good motivation.
Got it. Got it. Perfect. Now that all makes sense. So, and you've been doing this for a long time.
Yeah. Yeah. We got married in Costa Rica in 93, I think.
You better get this right.
Yeah.
Hey, don't mess this up.
Yeah.
Okay. You got married in Costa Rica in 93. And she teaches Spanish, you teach Spanish, or taught Spanish. Also, just giving some background so everybody kind of knows. You also coach sports.
Yep.
And this is all on a high school level at a prep school.
Yep. Boarding school, so you're on the clock. There's no such thing as a weekend at a prep school.
Yeah, you're always on.
Always on.
Kids are always there.
Yep.
They never go there. You turn to your left, there's kids, same kids.
Yep.
To your right, they're everywhere.
They're in your living room and your kitchen. Yeah.
Yeah.
They're everywhere.
So take me through kind of your financial, like, just the challenges. I mean, I know I have no idea what a teacher makes at a prep school, things like that. I don't really, it's not part of the story, but it's, you're not making a couple $1 million a year.
No.
Okay.
No.
And so, so you guys are grinding.
Yeah.
You and your wife, you're just basically, you're working your butts off and you're doing things you love. And it's probably a good life in upstate New Hampshire.
Yeah. Good place to raise kids and dogs.
I don't know what your history in finance is. I don't know kind of what got you engaged in financial markets, stock markets.
Zero. I've never taken a finance math course or any of that. It was my dad saying, I don't have any money to give you. If you want some, you better figure out how to get it.
Yeah, but there's a lot of things
and
you could have run drugs, you could have robbed banks. I mean, what?
And then him encouraging me as soon as we were married to say, hey, put some money in a mutual fund.
Okay.
And encouraging me this basically the passive long.
So what did your dad do?
He's a pipe fitter, installed sprinkler systems.
Okay.
Yeah.
Got it.
And he didn't start until his 40s maybe. So he was figuring it out later in life going, oh shoot, if I want to retire, I need to start saving some money, and not just saving it because you're not going to build wealth by saving.
Sure.
But investing it.
Sure. So you did what at first? You started buying a mutual fund?
At the school I was at, their retirement account, you open these 401ks and they give you funds to choose from.
A box to check.
Yep. Check 4 boxes.
Yep. Sure.
And when I got the prospectus, I guess at the end of the year, I looked at the top 10 holdings and they were virtually the same in 4 different things. So I thought, why not just buy these things? Things like Home Depot, Microsoft are in there. Sure. So I started, my little bit I could save each month is what I would buy a share and another share. Or that.
How much money could you save each month?
Maybe $50.
$50.
Oh yeah, you're not. Yeah, you're
$50.
You're not a lot. Not a lot.
So you're literally buying one or two.
Yeah, one person working, kid, and
yeah. You have to
trying to get a life going.
Yeah. So, but you're literally doing this one share at a time.
Yeah, 1 or 2 shares, and of course the fees at that time are you're paying $10 or $20 to buy your share.
That's true. I forgot about that.
Yeah.
Yeah. In the 90s, we still charged commissions.
Yeah.
With a minimum ticket charge.
Yeah.
So you weren't gifted a few $100 million.
No. And then .com wipes a lot of that out.
Sure.
Start again.
Well, the early 2000s was tough on any portfolio.
Yeah.
But you hung in there.
Yeah. Hung in there.
And then, so what happens, like, let's say 25 years ago, 2000 to 2000 and through the financial crisis of 2009.
Yeah.
You don't get disillusioned?
No, I just hung in there, just putting it in, and not really looking at the passive long thing. But
So
it was
true passive long.
true passive long. I know taking some interest in the stocks, but
How'd you pick stocks?
there was no system there. It's whatever caught my interest or what I thought was, I had the idea. I thought I knew something.
Were you doing it yourself on a self-directed platform?
100% myself. Yeah.
Okay.
Yeah.
Yeah, because those platforms were, they were pretty basic.
Yeah, they were very basic.
Yeah.
Yeah.
And so you're working your way through the entire process. I mean, 2008, 2009, survived?
Survive, but this just you passive along. What can you do? You take your beating and keep on going.
And you kept doing the same thing through.
Yeah, until I don't remember the year, 2016 maybe or 17. Somebody on one message board somewhere says, "Hey, check out this Tasty trade." And I don't remember if it was Dr. Jim then, but he's the one I found anyway when I first came there and watched the word.
So you found a Dr. Jim doing Where Do I Start?
Yeah, with Brittany. Yep.
Oh gosh, yeah.
And just walked me through. And it was the opposite. Like I'd heard about options before, but the only idea you had was, oh, you buy this thing and hopefully it turns into something. And that was the opposite side.
So you really knew nothing about options.
No.
And you sit there, you have a passive long portfolio. At the time, how much was your portfolio worth?
Maybe $500K.
$500K. I mean, you're doing it $50 at a time for 20 some odd years.
It's pretty good. It's pretty good. I was feeling good about it. I was feeling very good about it.
That's awesome.
Yeah.
I mean, that's in itself, that's impressive.
The snowball was growing and I was feeling like, oh, it's starting to grow here now. It's starting to build, build.
So when you're watching Dr. Jim and Britt and you're sitting there and you're saying, well, this looks kind of interesting. Were you thinking about it as like a cost, like a basis improvement type of potential, or were you thinking of it as an opening trade?
I was thinking of it as both. Like if I want to be cautious, this lets me reduce my cost basis to start with and see what happens. That kind of selling the put thing that you can start with, and that's a good way to start people on what you want to do. Well, the price is 100. You could sell a put at 90, and then you get paid if it doesn't do anything, and if it comes down, well, then you get your shares cheaper. So that kind of selling point was very interesting to me. Who was thinking buy low, sell high,
or were you going to sell calls against your existing portfolio?
That was later. But definitely started with the selling puts.
Okay, keep going. So now 2017,
I got my accounts over to Tasty Trade, Tasty Works at the time.
Yeah, we opened in 2017.
So I must have been pretty early then.
Okay,
and yeah, got my accounts over there, and then I started trading against the positions that I have. So I've got some stocks there. There's 100 shares. Why are we not reducing cost basis and selling covered calls? If I've got a position that I like and I'm thinking about selling puts, but I'm not too sure, maybe ratio spreads then, and I start expanding into jade lizards. And
so hold on, so at that point, 2017, 2018, you're starting kind of like a core portfolio of or a bunch of different strategies you're testing the waters with.
Yeah.
You tried everything.
I tried everything. Yeah.
Defined risk, undefined risk?
Defined risk, mostly defined to start with. And even if it was undefined, it was a put that in my mind was cash secured, even if it wasn't really cash secured.
Got it. How much time did you spend doing this?
Well, whenever I could, which was between classes and things. So, maybe an hour or two total a day.
Okay.
That'd be on the high side because you're just busy as a teacher.
Anybody think you're crazy?
Yeah, there's a couple of people who are into investing where I am, but as soon as you talk about
derivatives,
they just see the loss. A little bit. I've just to scalp them just to test the waters, and then they're like, geez, this is really big. Yeah, I shouldn't be doing this.
No option contracts in the futures?
Yeah, I've done that, sure.
Okay,
yeah,
of course.
Yeah.
Okay, so you've really done. So I mean, I'm not going to fast forward.
I got to try everything.
But you tried everything.
I've tried everything.
You basically tried every product, every strategy.
Yep.
Everything.
And you find out quickly that some I don't really like, and others you just kind of gravitate to, going, this is good.
So, as you were starting to figure out strategic trading, what kind of products did you like?
Well, I was originally picking stocks, so I was going with my original assumptions and opinions and saying, well, I like this thing, so I can now reduce cost basis in it, or do some other trades around that position to maybe expand it if the price comes down a little bit.
Yeah.
So I was going with those, but then I'd expand into the ETFs and SPY and gold and GDXJ and all the different ones, all the little ETFs that are pretty liquid in the
all the underlyings that you never thought you needed to know.
I never would have traded GDXJ, but
Yeah.
Yeah.
So then how did you start to incorporate all these different strategies? The same approach, like I'm going to try all these different stocks, but now I'm going to try all these different strategies?
Yeah. Some would be on what I'd hear here on Tastylive, or you talk somebody talking about, oh, the broken wing butterfly. I'm like, what is that? Wait a minute. How can I take this this ratio spread and define it? Or how are they doing a long and a short spread together? I got to test it. I got to do it. I got to just see what happens.
So what strategies did you ultimately gravitate to? Like what worked the best? What'd you feel the most comfortable with?
I love jade lizards. I love short puts. I love covered calls, covered strangles even, to kind of do everything. And ratio spreads a lot. Put ratio spreads or broken wing butterflies in bigger puts.
Those are all relatively high probability trades.
Yeah.
Did the probability aspect of this, was that a big part of it? Did it come into play for you?
It does. I want to win. Like, any day you can say, how's it going? Even if I'm winning 90% of the trades, that 10% is in my mind. That sucker's.
So on a daily basis, what do you watch? Are you watching your P&L? I mean, what do you watch?
Yeah, I'm watching. Well,
that's watching individual P&Ls?
Yeah. Okay. Individual. I mean, the overall is where I'll start, but then it's individual.
How many different positions do you have on at once?
Ooh, maybe average of 50.
Oh, so you have a lot of positions.
Yeah.
A lot of positions, 50 positions, a lot of positions all over the place.
Yeah.
You have any problem watching 50 different positions?
When I'm busy, yeah. But now I have a little more time in the summer when I'm not working. It's a lot easier.
The exciting thing here is you're basically able to, you called it semi-retirement.
Yeah.
Which means you work part-time still.
It's freedom. Yeah.
Yeah.
I can do what I want to do.
Right. So semi-retirement, and you've turned, a $500,000 portfolio into a couple $1 million.
Yeah.
And it's essentially all through trading.
Yeah.
And so what you've done is you've essentially used the world of strategic investing. And by the way, since 2017, there was a down move in 18, there was a down move in 20, the pandemic.
Yep.
There was a down move in 2022, and there was a down move in, recently.
Yep.
So I've had like 4 or 5 down moves, pretty significant. I mean, the market's higher, obviously, but you've navigated all those down moves, and you also, increased your account fold, almost 4x.
Yeah. Only one of those was my net lick down.
Which one was that?
22, I think.
But
I still was able
prolonged sell on.
Yeah, but I still was able to generate a good return with the trading.
Yeah. So you've been able to generate. We backed into it, but it looks like you've basically been able to generate about 20% a year over the last half a decade, let's say. And that's really impressive because that's, I didn't find any of those years essentially easy. I mean, some were a little easier than others, but I didn't find anything easy the last 5 years.
Right. Especially the past couple of weeks. Yeah.
Yeah. Especially the last couple of weeks. I definitely didn't find that easy. That's pretty damn impressive. You're not really an amateur.
It feels pretty good to do, but sometimes you don't know because you're in a vacuum. It's not like you guys have a whole floor of people and everybody's kind of doing the same.
I used to think that was helpful, but maybe it's not.
I don't know.
Maybe I should be locked in a room somewhere in central New Hampshire.
Yeah.
It is fascinating though, isn't it? That there's this stuff out there that, 99.9% of people have never heard of. Right. It's interesting.
Yeah.
It's strategic. It's challenging. Do you find it what's the most challenging part? The economics of it, the math part, what's the most challenging part?
I think that right now it's that it's bigger and I've got more things to do.
Yeah.
And I've got to start to compartmentalize, have a sort of a defense category and then the offense category. And, I've got to keep it more compartmentalized so that I know, given what happened the past couple of weeks, I'll live to fight again another day, no matter what.
How did the last couple of weeks, what did you do right?
Well, if we had been sitting here 2 weeks ago and you'd asked me what my biggest struggle was, it would have been, I don't trade big enough. I still will start with one lot and then decide what to do after that. now I'm pretty happy that I trained at that size.
The best defense is to stay small enough yet you don't have to worry about it.
Yeah.
It looks like that's what saved you.
Yeah, staying small is really important.
You know, it's so, people used to say to me, it's so overrated. Okay. And I'm like, when we have the right kind of move, when we have that nasty move, you're never gonna say it's overrated, because a one lock can be, can cost you some money.
I survived COVID and I survived this.
Yeah.
And yeah, I had some things to do. Some positions got run over, but others did okay.
Did you put new positions on during this move?
A very few, yeah. Thursday I did on that down move, a couple. Friday was at a funeral and couldn't, and obviously those got run over. But
how many trades? Well, you went from 89 trades in 2016 to over 1,000 trades in 2019.
Yeah.
How many trades do you make now?
About 1,000. Yeah. I'm trading every day, a little bit. I try to do something every day.
4 or 5 trades a day.
Yeah.
Okay. That's very active.
But I'm slow to roll. I'm slow to respond to things. I don't like the whiplash.
Is that intentional?
So yeah.
Okay.
Yeah.
And do you manage things on an individual one-off basis, or are you managing the total position?
A little of both. Basically a one-off. How's this doing? How's that doing? But like in these big moves, all right, time to get rid of some things and package some buying power together so we can do something else.
So who do you talk to?
You guys. I listen to you guys all the time.
What do you do? Talk to the screen?
I basically, my wife is a sounding board, but she's not really interested in what's going on. Just to be able to say things out loud. Oh yeah.
So she thinks watch you guys.
Where's the money? I want the cash on the kitchen table. That's how I just
like, who are these guys?
Yeah. Yeah.
But you don't have too many friends that trade, or?
My brother-in-law's trading now.
He's trading off Tasty, or he's just trading?
He's trading off Tasty, yeah.
It's great.
Yeah. He started paying attention to what I was doing and wanted to know some more. And
wants to learn.
Yeah, so he follows you guys now.
I love it. Now what?
Trading wise?
Yeah. Now what?
Yeah, now I think I compartmentalize and pull a bit of a chunk to be defensive. I think Tony from Mexico was on a few days ago or a week ago, and he talked about different components of his team. He needs to have a good defense. He needs to have an offense.
I missed that segment, but yeah. I can go back and watch it.
Yeah, he had some short spy puts the day before the things really crashed. So, but I think that's what I need to do, because I think I can trade bigger. I do want to trade. I don't want to keep trading. I definitely want to keep trading, but I want to package some chunk.
Of course, you're going to keep trading. Do you ever see a time when you're not going to trade?
No.
No, because this is what you do now.
This is what I do. Yeah,
and you could do this till you're 100.
Yes.
Yeah. I mean, there's no. Yeah.
It's very fun to have your finger on the pulse there, and you know what's going on in the markets. You see volatility moving and different things, and
how come you guys aren't teaching this to your students?
I would love to. I taught one course. They called it Finance 2 because Finance 1 is real, like balancing a checkbook.
Yeah. Stuff. Yeah, you can't.
And then when I went to Spain the following year, they didn't have anybody who could teach it.
Oh, I see. Okay.
Yeah, I gave them all the stuff, but yeah.
Would you want to teach that?
It's fun. I mean, to have kids that are interested in this.
Yeah.
And it's what if I wish I knew then what I knew now.
Yeah.
It's very powerful.
So do you think you've done so well because strategically you've done well, or do you think you've done well because you've picked good stocks?
No, consistency is king. Consistency is king here. It means I gotta keep going. The math will play out, right? That's really it. I like to think I can pick good stocks sometimes, but I can't. And that's what's gotten me in. When I've had problems, they've all been times when I thought I knew something. So it's consistency is king. Keep doing this. Keep at it, and it plays out over time. And you see the dollars coming in and the returns coming in.
There is, when you get to a certain level, and you're getting there with the amount of capital you have, it gets a little more difficult to make the same kind of returns.
Yes,
because it's easier to make 15% on $10 it is to make it on $1,000.
Yes, ignores that.
So, so how do you scale?
I think I probably won't for a little bit, but then I will slowly scale. So I'm like when I was starting out, and you had a stock that would do well. I sell 50%, and then you're playing with the house money. So I'm thinking I will move some profits to the defensive side of things to sort of guarantee our quality of life and what we're doing and our plans for the future, and then keep 50% of whatever winnings and slowly scale up. So I won't scale. I'll scale up half the speed that I would if I were 35.
So,
and what
do you tell your son?
So we do talk about investing.
Yeah. What does he say?
He's interested, but he's more cautious. He's just buying things right now. Well, I've got something to buy this, but I tell him about, well, you're in this position. Hey, if you have the stock that's gone down, you could sell calls against it. You have the stock you're interested in, you're waiting for it to come down. You could sell a put spread and see what happens there.
Sure.
Yeah.
And does he listen?
He's listening a little bit.
A little bit. Okay, that's a good start.
He's
That's a good start. So growing from, you've taken this account from a couple $100,000 to a couple $1 million.
Yeah.
Now what? Like I kind of asked this before, but I'm really curious. It's like, because I personally find this is the most difficult.
Yes.
When you get to a couple $1 million, trying to scale that up to the next level is very challenging in a world of active trading.
Yeah. It definitely opens up the products that I couldn't consider before.
That it does. It opens up strategies and expensive indexes, things like that. But the reality is still nothing's easy. Dollars at risk is still the same thing.
Right. I like the idea of the zero TTs that they trade sometimes. I've traded a little bit of them. But I think that's more, like you said, an engagement tool than
definitely an engagement tool.
It's not a core position, but it's something to do to stay involved and to see what's going on.
What's your go-to strategy in this current environment?
I'm pretty bullish. I've got the long bias overall in the market, and that's so
you always have a long bias?
Pretty much.
Okay.
Yeah, I pretty much have that. And it may just shift from, well, it's not so much in this sector or that sector, but I like positive drift. I like to be in the boat on those things. So Jade Lizard is a good thing, or covered strangle if I've already got shares. I've burnt on naked calls a few times, so that's got me cautious on those. So I love covered strangles where I'm
like, give me an example of a covered strangle. Like you buy a stock and then you sell what delta call and put?
If just starting out, 15 or 20 is good. And
on both sides.
On both sides, and that would give me room to be able to roll up if it slowly comes up. And I have a couple of those that I've been running for a long. It's a base hit. It's not a grand slam.
No.
But it is just going.
How much capital do you commit to each trade?
I start small, so maybe 1%, but maybe it can grow from there.
Got it.
Yeah.
Got it. So you kept your size really small.
Yeah.
And how much capital do you use of your total capital?
For trading only, maybe 30%. I'd have to go and look exactly, maybe 30%. There's some big core stock positions that I will trade against those things, but I'm not really calling them part of my.
What's a core stock position like?
Like I've got Visa.
Okay.
And I love to sell calls against Visa. And
it's a little illiquid, but I guess you.
But if I've done it, I think I'm in the 40s for how many calls I've rolled against that. And
got it. Yeah.
So if it blows through the calls tomorrow, I will have made money more than if I just held the stock.
Got it.
Yeah.
Do you trade mostly liquid underlyings, or do you also trade?
No, I have some illiquid junk too, which some of those have been losers.
Yeah.
I do like to hold some of those in my portfolio just to look at it and go like, don't do that again. That was a bad idea.
I got a lot of those.
Yeah.
I got like a lifetime of those for it.
Yeah.
Yeah. But when you do in the overall portfolio, how much of your portfolio is like kind of your core positions?
Maybe a third again.
God, that's not that bad.
Yeah.
When I think of kind of like where you've come from to where you are today trading wise, what could you incorporate into your trading that will give you kind of more vehicles to use? Like, is it futures options? Is it?
Oh yeah. Yeah, that's a good one. I think So I've tested everything. I found that I really like puts, covered calls, jade lizards, that type of stuff. But there's others that I know I've done and just haven't really gotten deep into using them regularly and trading them a lot. And it's futures options. That's definitely the next layer that I'll explore more.
What's the key? Was it like commitment? Like, well, was it your discipline? There's something.
Yeah.
What you did is very difficult to do. Like, not that many people are able to do it. Why you?
I don't know why me, but I think consistency is king here. You've got to keep at it. But most people
Is that just because of your discipline?
The things I've been successful at, that's what I've done. It's a small step today, another small step. Just be better today than you were yesterday. Tomorrow, all you got to do is be better than yourself today. And if I can't compare myself to...
Yeah, but the problem with the markets is you can be as great as you want, but sometimes the markets just don't cooperate.
Right.
You need cooperation from the other side as well.
You do, but I think so. For me, it's the smaller, higher percentage over time, the base hits over time than the people going for the home runs.
Sure.
That temptation is, if I buy that 5 Delta call and it goes up, the money I'm going to make, that temptation is the lottery tickets.
Yeah.
Right. But what if you're selling those lottery tickets? And if you're just getting consistent over time? Not the lottery ticket is probably not a great analogy because I don't want to, when I get the pennies in front of a steamboat.
No, right.
But I want that consistency, those base hits over time. Just keep going, just keep grinding it out, and don't rely on luck. What was the title of Julia's book?
The Unlucky Investor.
Yeah, that's it. You don't want to be lucky. I mean, you want the luck, but luck will teach you the wrong lessons. And you won't be consistent.
In any business or any trading or whatever, you need a little help.
Yeah.
Something's got to break your way.
Yes.
That's just the nature of success. Something has to break your way. But the rest of it that you control, when you have, when you make that all work, that's on you. You own that.
Yeah.
Do you feel like, I'll end it on this. Do you feel at this point that you own your success?
Ooh, that's a good question. I mean, I like to think so.
I think so.
I like to think so, but I'm not sure. I know I haven't been lucky. I've just been disciplined and
personally, I think you sound like you own your success. I think the whole key for me when traders get to a certain point is you have to own your own success, you have to own your own failures.
It's definitely had some failures.
Yeah, well, we all do, but but a lot of people think it's on somebody else.
Yeah.
And when you finally own both sides of it, that's kind of when you get successful.
Yeah. It's been good. It's been really good. It's not just setting up the trade, it's to manage. What do you do from here on in? You got it. It's hanging out there. And now how do you handle this thing?
Well,
yeah,
that was awesome, Ross. That was a really good story. I mean, it's kind of like, it's a played out success story. It's really cool.
Well, thanks.
Thank you.
It's been great to be here and see everything live.
Thanks.
Yeah.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tastylive, come to our channel, give us a like and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddy Mikey Butler. How are you, sir?
Doing great.
Yeah?
Doing great. It is hot as hell in Chicago.
Insane.
Well, this is what we've been asking for. Is it not?
Kind of. I mean, you want it to be like sort of mild.
Yeah.
But yes, the warmth is welcome, I guess.
It is big humidity.
Yes.
Big
bigly.
warmth. But yeah, I am kind of shocked to see the market behaving the way it is. Given everything that's happening around the world.
Climbing the wall of worry,
Yeah.
as they would say.
Feels like it.
Yes.
Bitcoin.
Tariffs, bombs.
Yeah. Bitcoin.
Nothing stopping the train.
Yeah, Bitcoin was sub 100K over the weekend.
Yes.
I thought we might open up down 100.
I know.
And we opened up.
It's very fitting that our special guest, Mr. Ryan Grace, is out on such a volatile day in the Bitcoin market.
I know.
It's okay. It's all right. The busy boy.
This is true.
Yes.
It is 6 o'clock in Milan right now. I'm pretty positive the show in Milan is happening now.
I think so. I believe so. Yes. Got a ton of good feedback for the London event. People loved it. I did hear that there was no AC in the building, though, so that it was very, very hot. But overall, some good feedback, which is great.
Yeah. But yes, I saw a picture of Tom holding a bottle of wine on Twitter. I don't think I've ever seen him just so genuinely happy. His smile was just so large.
He's not usually a wine guy. He usually does like a lager, just like a light beer.
Yeah. I was talking to Tracy, and she was like, does he drink wine? I was like, there was a time where he didn't really drink at all. Like, I never really saw him drink. And then one day, I saw him with a cocktail in his hand. I was like, what are you doing?
Mm-hmm.
And he's like, yeah, just having a cocktail. I'm like, okay, you do you. But yeah, Tasty has cometh to Italy.
Yes.
The Milan show is happening literally right now. So yeah, it's crazy. We're all over the place. Next one is July 13th, Dr. Jim, Options Crash Course in Boston. I can guarantee you he's going to a Boston Red Sox game.
For sure.
For sure.
For sure.
Assuming
Are they
they're
good this
there.
year? I don't really.
They're okay.
Okay.
But they just gave away Rafi Devers, who's a stud on their team, just basically just like gave
Shipped
away
him
for
off.
nothing. For nothing. A lot of people are saying it was one of the worst trades ever.
Wow, really?
So.
Okay. All right.
I'm sure he has his opinion there. But yeah, the Sinclair in Boston, July 13th. Doors at 5, shows at 6. It'll be a good one. Don't miss it.
Yes.
And then, yeah, we got plenty more. Another one in July. Tom and Tony will be back for Denver. That'll be a nice one. And then we are going to Seattle.
Yeah.
Yeah.
Seattle's our next one.
So, yeah, the summit in Denver. Then the whiteboard tour in Seattle, August 10th. And
Sign up, support us.
I mean, it's like there's 2 shows every month is
Yes.
what I'm getting here. There are actually 3 shows in October.
No days off.
No days off. Hashtag no days off. And then, yeah, the last one that we will be doing will be San Diego in November. So busy. Yeah. Here's the full list. If you want to sign up, tastylive.com/events. Totally free shows. Some of them will have libations.
Yes.
Beer and wine. I'm very glad that we didn't have anyone, go nuclear on the overboard.
There were
winos.
a couple that were questionable. There were a couple that we,
in DC.
Yeah,
You'd see a little wobble.
Yeah, we should do some sort of
little wine wobble,
like make the bartender mark your hand or something, so we know how many you've had.
Yeah. Or we could get little cherry stickers. Every drink you get 1 cherry sticker, and if your hand's covered, I mean.
Yes.
Are you here for options trading?
Yes.
Or futures trading or crypto trading? But yeah, plenty of events around the globe. So hopefully we can see you.
Yes. Sign up. tastylive.com/events.
Sign up.
Quick little market update. You got E-minis only up 14 now. I say that sort of facetiously because everybody kind of thought there'd be a meltdown.
Yeah.
After the events that unfolded this weekend. That is not the case. We have climbed the wall of worry. We're back to 60.32 here, about 20 points off the high of the session. We've had about a 100-point intraday range, including the overnight session where the open was essentially the low of the day. It was like 40 or 50 points.
Yeah.
And we were basically flat within an hour. It was a pretty wild thing to watch. You got the NASDAQ up 82, some big moves in Tesla, up 32 and change after the robo-taxi event. NVIDIA has been basically unchanged all day. Amazon and Apple are kind of the weaker of the two. Meta was up a handful as well. So it's definitely a mixed bag in the NASDAQ here. Dow up 24 and the Russell down 4. The Russell actually ticking red here. Oil basically unchanged. It looked like it was going to open 6 or 7% higher from the overnight session. We got up to 78 and change, 78.40 the high, 72.56 the low. So we're just about $1 off the low here. It's been some wildness in the oil markets. If you pull up oil volatility, OVX.CGI, it's actually come in pretty significantly today and over the last couple sessions. Volatility futures actually upticking here. They've stayed relatively bid into this rally. This morning they were down to 20.65. That was the low of the session. We're up at 21.25, so we're right in the middle of that range. They've stayed stubbornly bid, I would call it, from where we, from given the rally that we've had, really, of 2 or 3% from the low. Bonds up almost a full point here. Gold has bounced off the lows. It actually sold off a little bit last night. It's up $18, hovering around 3,400. Silver continuing its strength of 22 cents. And then, as you said, Bitcoin taking it on the chin a little bit. It's usually been the first mover because it trades overnight or over the weekend while the markets are closed. So I've been using Bitcoin as like my proxy for my outlook for Mondays.
Yeah.
And it's actually moving in the opposite direction. You got spot up $600, which is from the open of the overnight session. Futures down $2,000, but we've gone, from 107 to just under 100,000 in the overnight trade yesterday. Got to 98,700 on the spot.
Yeah, it's been pretty crazy. I mean, oil futures intraday range has been nuts.
Yes.
I did do some stuff this morning.
Okay.
So I closed the DraftKings inverted strangle for $100. just to take some risk off.
Mm-hmm.
They have earnings coming up too. So like the July cycle is coming closer to 21 days. If I roll out in time, I'm rolling into the earnings cycle, and I don't want to have risk on both sides going into the earnings cycle. So I just closed that for $100 net profit after a bunch of rolls, and I'll be back for earnings.
There you go.
Speaking of earnings, actually, before I get to that, gold futures. So I have the Brooklyn Butterfly on the downside.
Okay.
It's up $120 right now. But I'm going to hold on to this.
How many days? What are you in?
35 days.
35 days.
Yeah.
What do you got?
The 3240, 3220, 3180. So removing risk and buying power from this position would mean rolling the 3180 long put to the 3200 strike. That would create symmetry for the options. But I think this is one I'm going to press. I'm going to keep this on because I just don't see a scenario, given the global events that are happening, I don't see a scenario where gold just like plummets to sub 3,200. I think we chop around here at the very least, and I think I'm leaning more towards like a bullish move here in gold.
Okay.
So I think if we get another move like this, 20 or 30 points to the upside, then I will remove the risk and move it up because it will cost me maybe $1 to do it around there, and I can lock in a nice credit because I sold this for $250. I could remove the risk right now for $1.90, but it feels a little expensive given my assumption in this current state. So I'm going to hold on to it. If we get another rally in gold, especially a big one, I will then remove the risk, lock in $100 or $150 in credit, and then we'll be in a really good spot. Earnings this week: Micron, MU. Why don't you pull up that chart?
Yeah, it goes straight up.
Have a little giggle.
I mean, I was chatting with Chris today about Roblox, which is a trade that I got in last week, and I'm like, these charts, some of these are just so incredible.
It really is something. So yeah, Roblox, it has doubled from the low in April.
Yes.
Micron has doubled from the low in April. Micron was at 61. It's trading at 123 right now. So what's interesting about Micron, I just wrote an earnings preview that'll be out today.
Beautiful.
On the News and Insights tab. But interesting thing about Micron, of course, they're expected to post good numbers, but they are investing $200 billion in U.S. stuff. So they're building new...
Company is worth $138 billion.
It's crazy. They're basically removing the tariff implications from anything that could possibly happen. Their $200 billion plan includes, I think, up to 6 plants in New York and Idaho, and then $50 billion in research and development. So you love to see that kind of stuff, especially if you're worried about like tariffs and how they might impact these companies. I think if you're bullish on a company like this, and maybe that is the result of this rally, because that announcement was made mid-June. Markets always know before we do, ultimately. So I don't know. Maybe it's the result of the rally, but they're making big adjustments to be much more U.S. based.
A little bit of upside skew.
Yeah.
I just went to the 4-day options. $10 out of the money, you go to the 112. It's trading at $1.36. 132 on the upside, $10. It's trading at $1.90-ish. Even if you go to the 33, still, a little bit of extra premium on the upside.
Yeah.
Not shocking considering everything just goes up.
Yeah.
Yes.
It's insane.
Yes.
But yeah, Micron earnings preview coming out in a little bit on the News and Insights tab on Tastylive. We'll definitely be trading that one. And then Nike is also this week. So Nike is the 26th after the close. So I'm going to write a preview for that this afternoon. But yeah, Nike is just,
the dog.
It is at the bottom end of the range here. And, $4 expected move against a $60 stock is pretty decent. Super cheap. You can do whatever you want in here. Like even a diagonal long the August, short the weekly, it's $3. Like that's probably what I'll end up doing. Just taking an upside shot, see if they can do something. But yeah, I'm definitely going to lean bullish here versus bearish.
52-week low at 52.28.
It's crazy.
I think I'm just going to sell a naked put, the 57 strike in the 4-day for $1 and change.
Mm-hmm.
I mean, that's a wheel situation. You get a move down there. Your base is at 56, couple dollars off the lows.
Yeah.
$800 in buying power.
I mean, yeah.
Got the buying power, so.
Here you go. Instantly filled. They wanted you to have that.
Yeah.
But yeah, that's pretty much it.
Mm-hmm. I got a lot of capital freed up, so I'm ready to rock.
Sweet.
Yeah, I was going to look at the oil futures because I put on that broken wing butterfly in the cherry picks last week. You've had a vol crush. Oil is basically unchanged from middle of last week, even though it's had a wild range here. I have this butterfly, the 80, 83, 88 that I did at 11 cent credit. So if I were to be able to buy in this 86, 88, I would have a 3x3 butterfly. I could do it and lock it in for $100, but let's try and do that. I'll put this at 21 cents, which would make it $100 net debit for this 3x3 butterfly. But just given the move and volatility coming in, I might just leave that there. And then I have a little bit of now short delta, but it's kind of a jade lizard of sorts. I'll roll this up. Like put you all the way down here. I think I'm gonna roll up this put spread. Bring it filled above the mid price.
CL. Yeah, this thing's, I'm actually shocked.
Volatility is still super high. So if you don't have a position, it's still worth looking at. All right, I got filled at 15 cent credit to roll that put spread up. So I have a 3-point wide put spread by a 1.5 point wide call spread. And I have this on for an 87 cent credit. So I've got about $600 in total risk on the upside if we stay above here. So ideally we get a little bit of a down move.
Yeah, I would agree. I've got an iron condor, the shorts at 70, 71. The 70 short call, defined risk at 71. So yeah, I need this thing under 70. Please. Please. Yeah, some people in the YouTube chat asking about time frame on the Micron stuff. Looks like 2027 is when they'll start on Idaho.
Might as well be
fake news.
Yeah, I don't like that. I'm talking 2, 3, 4 years out.
Yeah. At least
why make it 200 billion? Say 500 billion.
You could do whatever you want.
$1 trillion.
Hey. Anything to bring the stock price up.
Yes.
Right?
That's what it seems like.
Yeah. But that could be problematic if they're like, and to point of the people in the YouTube chat, like you're seeing this big rally, if they come out on Wednesday and they're like, actually, it's going to be delayed, like you see the stock price drop $20. So
MU is one that has tortured me multiple times, and I'm not going to trade it. So don't give me any MU trades. I'm not trading it. It has tortured me. It's tortured me more than just recently. It goes back many years.
Please give me the trades. I'll do it.
Yes.
Although, yeah, my results have been mixed here.
Yeah, MU is not one of my favorites.
It's tough. If anything, I don't know. We'll see. We'll see what happens on Wednesday. We have plenty of time.
Okay.
But yeah, if you want to join us on the YouTube chat, we're streaming live there. Just pop over to Tastylive. You can throw in your trade ideas, questions along the right-hand side chat. We've got the Cherry Picks newsletter pinned to the top of the chat. You can get that for free.
Yes. Coming out tomorrow, we're going to look at more skew, I got a nice little piece about Bitcoin options and projecting prices of Bitcoin into the future, some ways you can do that or see what is priced in, or at least the projections that are priced in. So
Yep.
should be a good one.
And
We're going to have Dr. Data on the show
tomorrow. Yes.
At some
we are taking over the morning
Yes.
show.
Yes.
We've got last call today, morning show tomorrow, morning show Thursday, morning show Friday.
Yes. And we're going to have a special event tomorrow with Liz and Jenny live from the CBOE for the Open,
It's
which
gonna
will
be
be
glorious.
fun. Which will be really fun. So you'll be able to see that. So tune in for that.
Indeed. Beautiful. Well, I'm gonna pop over to the YouTube chat now.
Sure.
See if we can get some trade ideas here.
Yes.
Circle not stopping anytime soon.
Crazy. I know it's one of those. The borrow rate is not super high, so I don't think this is a short squeeze. But I've been trying to look at something to do with 136% implied volatility. It's nearly impossible to trade. I mean, the 370 calls. Let's look at these, like the weekly calls. I mean, the 370s in the weekly are trading at $5. That's a 50% rally in the stock.
Yeah.
In the next 4 days.
Yep.
I mean, that's pretty wild.
These options are insane.
They're so juiced. I mean, you can't.
Even if you bought 100 shares right now into the high, you can, like, if you just sold a covered call, like, it's actually insane. You're getting 25%.
Yeah.
For a 50-day cycle at the 300.
If you rode this wave higher, if you bought 100 shares at 60, you gotta be selling some calls.
Yeah.
I mean, you can even do
a
collar trades. I just pulled up here, like, this is, if I didn't have a position, I had Tom FU money, I would do these wide ratio spreads, long the 300, short 2 of the 340s, something like that. If you want to go further out in time, you certainly can, but just to show the collars. So let's go to, like, a $20 option. We'll call it the 285 on the upside. On the downside, let's call it 255. I mean, you can protect your downside $10 and give yourself $20 of upside.
Yeah.
In the weekly. Yeah. And I mean, this is probably very similar in July. Like, let's just go to a $20 option.
Yeah, it's silly.
205.
It's silly.
And then on the upside, I mean, you could sell the highest strike call, the 370 call, and buy the 205 put and do it for still a small credit. So you have $55 of downside risk and 110 on the upside. So it's double. The call skew is double what it is on the put side. So
yeah, if you have 100 shares and you've ridden this wave, like, this is what you do.
Yes.
Because the fact that you can just collar this off and get so close to the stock price is nice. That's the nice thing about these call skew products. If you have done well and timed it right.
Yeah, you could even, like, calendarize it. Sell the 4-day call and buy the 25-day call.
Mm-hmm. Yeah, you can do a lot.
It gives you $50 to either direction, but your 4-day, your call is only 4 days.
It's nutty.
Yeah, it's crazy.
But yeah, big move to the upside there, which I think just speaks to the adoption of everything crypto we're seeing.
Yep.
Katanen was in London. It was super hot in the venue, but the beers were flowing.
There you go. That's why we do it.
Yep. That's why you gotta, have a cold beer in your hand at all times.
Yes.
Okay. All right. Speaking of Circle, intending to short Circle about 6 months out, I'm thinking of doing a put broke wing butterfly around the 100 strike and intending to turn into a risk-free butterfly if it continues rallying.
6 months out. So what are we calling that? October?
Yeah.
I mean, that's not 6 months, but January?
Yeah.
You want to go?
January. Around the 100 strike.
Yeah, I mean, It's just going to be super slow moving.
Yeah.
That's the problem here is like you got to hold this the whole way.
Yeah, you got to do.
It's pretty expensive.
Yeah, you can't. It's really hard to make this wide. Like even if you do a 30-point wide butterfly here,
I pulled it up.
It's
60.
still.
Or no, 40 points.
Yeah, like the 60, 100,
140.
140. Can you even route this for credit? You can't route this for credit.
No. Well, that's the equal width.
Yeah. But
I mean, that's the way you have to do it because you don't want to tie up capital for 200 days, other than what you're paying for the trade.
Yeah. Yeah, it's tough. It is certainly tough. But yeah, in this case, I think maybe you just like do a standard butterfly as opposed to a broken wing.
Mm-hmm.
But yeah, a 60, 100, 140 symmetrical butterfly costs you $7 with a max profit of 3,200, 3,300. So, yeah. I mean, the nice thing about this product, the IV's through the roof, first of all, 115%. So if it does go back down to 100, you're going to see a big implied volatility crush as well.
Yes.
So that plays into a symmetrical butterfly in that sense. Same with the broken wing butterfly, but I think in this case, instead of trying to route it for credit and turning it into a free butterfly, I think maybe you just start with the butterfly. Because this $700 for 200 days isn't going to move much against you, even if it continues rallying. So, yeah.
Tough one to trade.
Mm-hmm.
It's got almost too high implied volatility.
Yes, it is at that level for sure.
You know,
That's
170%, 150% implied volatility it gets to, you know, unless you have the capital to be naked in here, it's a little bit too, because the wings are so expensive.
And that's why, like, once you get to this level of IV, pairing stock with options is the way to do it.
Yeah.
If you can do it. Because
But that's capital efficient too, or
Exactly.
inefficient.
Yeah.
Inefficient.
But yeah, like you could do like a calendarized collar where you're like buying July 250 for $4,300 and you're selling August 320 for the same price for a scratch. That's kind of, you know, how you can skew it in your favor. But yeah, it's tough. Brandon, looking at AMD, covered strangle for $1 credit. Already sold. I've been rolling the puts for a credit. Call is tested. Should I roll it for a credit or further up for a debit, but maintain a net credit of $1?
Do we know the strikes?
Yeah, give us the strikes and we can look at it. But yeah, I mean, you have no upside risk. So with that said, I think you can do whatever you want. If you've been rolling puts up and increasing that credit and you're trying to just stay offensive and roll your call up and out, you could totally do that, or you can roll it up and out further in time to force a credit. But yeah, it depends on where that strike is. If the strike's in the money, it's going to be a lot harder to do that.
Mm-hmm.
But yeah, you have no upside risk with a covered strangle, so totally an option.
Another stock that's just gone nuts.
Mm-hmm.
Ivy rank low. Yeah, where's our high volatility at? Let's go to the S&P 500. Let's see. Gilead, Enphase, FedEx.
Yep.
Favorite.
Someone's asking for a FedEx trade.
Ooh.
One standard deviation strangle ahead of dividend and earnings tomorrow.
Ooh, they have earnings coming up. So one standard deviation, let's call it 205.
Yeah, the dividend was today. So, or the ex-dividend date is today.
245, 207 and a half.
Yeah. $5.40 credit, playing for a vol crush.
What about just like a short put spread? 52-week low down at like 195. Maybe an iron condor. I mean, you're the FedEx whisperer.
Well, I mean, all I've ever done is trade it to the upside.
Mm-hmm.
And it has worked more than it hasn't. But I was doing diagonal spreads in there for earnings, just because the IV is pretty low in August and not so low in the 4-day. Like, look at that, 16-point expected move for the 4-day, 20-point expected move for August. It's pretty big. 230.
What about like a little broken wing butterfly on the downside?
Could do that too. But yeah, the strangle, I don't love the strangles for earnings. Just because, like, if something really goes wrong, there's nothing you can really do. Or at least a definer strategy, your risk is defined. But
markets aren't horrible, but it doesn't look like there's a whole lot of liquidity here. Tomorrow, we'll check this one out tomorrow.
Yeah, tomorrow after the close.
And see if there's a little more activity here. Yeah. E-mini's down too.
Yeah.
They're crashing.
Bitcoin down 3K.
Yeah. Big move.
Mm-hmm. Sign up for the Tasty Crypto newsletter.
Yes.
Put that in the YouTube chat right now. TastyCrypto.com. You can see it on the homepage too. Another free newsletter. Ooh, now everything's red. Ooh. Let's see. What are we doing with the Google diagonal? Close the short or roll it? So if you look at a chart of Google, see those 3 red bars?
Gross.
I placed my call diagonal the day before that.
Yeah.
So I've been really good at picking the wrong direction recently with end phase and now this. But what are you gonna do? Define risk. The one of the nice things about this trade, even though it's a loser, is that the 190 call 25 days out we've captured 75% of the value there. I could roll it into the next week's cycle, which gives you a big boost to implied volatility because the earnings are there. However, Google is down over 10 points in the last 3 days. So, like, do I want to do that now? Not really. I'd rather do it into an earnings or into a rally if I can get it. But that would be the next move, is just rolling into the earnings cycle, which is the July 25th cycle, and maybe bringing it down a little bit, because this is a 15-point wide that I paid $9 for. So I can move it down from the 190 short call to the 185 short call in the 32-day cycle. Pick up some premium doing that if you want to hedge the downside, but I think I'm going to wait and try and do that into a rally.
Yeah, I just bought back the short call that I had as part of my call diagonal spread that I put on.
Yeah.
While we were hosting the show last week, and that's just a pig of a stock.
Yeah.
Not a single good thing. No news, no good news.
No. Just down only.
Yeah.
Meanwhile, Microsoft just ripping through all-time highs.
Back to green.
Yeah.
Yeah. It's a wild market. This year has been
very weird.
Something for the history books.
Mm-hmm. Where is Bat?
Paris.
Paris?
Yes. I think today's the last day.
Nice.
So he'll be back, but he's off all week.
Very nice.
Yes. A much-deserved vacation for the big bat.
Have you been to Paris?
I have not. No. Got to put it on the list.
Yeah. It's a fun little spot. Why not trade USO instead of crude CL?
Can. Markets are typically not as good. I mean, just looking at July, they're not too bad. 20, 30 cents wide. I just like trading crude because you got pretty tight markets. You can get pretty big relative to the size. I mean, it trades, it's $10 per tick. So a spread that you sell for 22 cents is $220. I just prefer crude. Trade the product directly.
Mm-hmm. Do you have an Excel spreadsheet you use for options tracking? Not anymore.
No. I think once you get to a certain amount of activity, it becomes, it's just too cumbersome. I think, and we've talked about this before, like understanding the concepts and the main Greeks and how positions work, and your overall like SPY beta weighted delta and understanding changes in volatility, how that will affect your positions. I think once you kind of get those basics down, hyper analyzing each single position, it becomes too cumbersome and just, I know how my positions are going to move day to day. I don't really need to like track it.
Yeah. Understood.
When you're doing 2,000, 3,000 trades a year.
Yeah.
You'll spend all, I like to go out for dinner and,
Yeah.
watch
tracking stuff.
Watch TV shows. I'm not digging into my Excel spreadsheets.
But yeah.
But if that's your thing, do it. Go for it.
Yeah, the order chains feature took out a lot of the headache of rolling and not knowing where you stand. So
yes,
just make sure you're grouping positions by order chains, and that will give you your P&L open reflective of all of your rolls that you've done.
Mm-hmm.
So that takes out a lot of of everything, really. Calendar on Circle.
It's an option.
Could be tricky. I think if you're doing calendars here, I think you're probably selling the weekly week after week after week, because that's really what you want. You want to get all that premium out of that option as fast as possible. I mean, you could do it, but it's still expensive.
Yeah, it's going to cost you $2,000.
Yeah.
And you're technically long volatility, which means you want big moves.
Yeah.
So it's tough. It's a tough one. I still think you lean to diagonal spreads if you're doing any sort of calendarized trade here. But again, it's just a tough one.
Yeah.
E-mini's down 23. What's happening?
Something.
Oil moving a little bit higher. You got volatility futures almost at 22.
Yeah, it looks like some, I don't know.
Post it in the chat so we're in the know.
Smack Lovin considering a Micron trade.
Okay.
Short 105 put with a 125-130 call ratio.
The weekly? 125.
Probably the July cycle. 105 short put, 125, 130 call ratio. Certainly possible. Picking up 370.
Yeah.
370. You got a little kicker. Break even to the upsides at 140 almost. Break even to the downside about 102. So yeah, I like that. I like it.
Mm-hmm.
Any trade idea on HIMS or NVO?
Saw HIMS getting whacked today.
Yeah.
$21. Woo!
Yeah, that's big.
This is when we did some butterflies on the upside, ratios. I just got filled on my oil. That was buying in. So you got oil now down 46 cents. We got some movement. I just bought in the risk on that upside butterfly. So I'm very neutral oil. I wonder what my overall delta is here. Basically zero. Because I have this pseudo jade lizard with an upside cheap butterfly here. Anyway. What were we looking at?
HIMS or NVO?
NVO, yeah. I saw like NVO canceled the contract they had there. Maybe we do something in NVO.
Yeah, I feel like HIMS is less tradable than NVO. HIMS 100% IV, big move today. NVO, big move today, but more manageable IV.
What about a naked put?
In NVO?
Yeah. 142. Do you want to do a diagonal spread? August 70, 75. Yeah, August, July, cheapy, 381.
Yeah, August, July, I like that. You're in the earnings cycle for August, which keeps that extrinsic value boosted up a little bit.
see. I can even get filled here. 385. There you go. Was him still, did the call skew come out of this? I mean, this has been like a meme favorite. Let's see.
Good question.
Let's go 10 points out of the money. 32. Oh, they don't have upside. Yeah, I mean, you still have tons of call skew here.
32, 52. Oh, yeah.
What about like the call ratio spread here? 45, 50, 55. In the July. Oil down $1 now.
Yeah, big moves in oil. Markets flying around. People in the YouTube chat saying there's some U.S. bases in Qatar potentially being targeted.
I saw that earlier, but did it actually happen?
I don't know.
I mean, oil being down this much says whatever happened is over now.
It's crazy.
It just happens so quick.
I mean, even is NASDAQ about to take green again?
Yeah, we just had what, a 30-point rally. Trying to get filled on this for a debit. Not getting filled. We're gonna move this. We're gonna do the 45, 50 for an 80 some odd cent credit. We'll try and get 90 cents here.
As you should. What else do we got? Are there any other?
85 is the lowest I'm going. Of course. All right, we're in. Hymns. What else we got? Volatility coming in significantly too. Look at this. That was quick. You missed the dip. You don't buy the dip the first second, you never get a chance again. That's it.
This market's nuts. Everything's crazy. Everything's crazy. Nothing makes sense. Sometimes it be like that.
Yeah.
Yeah, I'm still looking. Look at this gold selling off too. What?
Oil is now down at
almost $2.
Yeah. Wow. Look at this move.
Things are flying, people. Things are flying. Bitcoin briefly dropped below 100. Yeah.
Did we get that just like while we were sitting here? Yeah.
A little bit. SPX target 6010. Hey, we were calling for that 6,000 pin last week. We'll see if we get it. But what do we got on deck for announcements this week? Anything?
I mean, I think just the current state of events.
Yeah. PCE on Friday.
I don't know if there's anything specific other than craziness that's
SPX expected move. SPX expected move for the rest of the week's 90 points. So it's not terrible. Still some volatility there, but yeah. 20 points for the rest of the day today. Disgusting. 40 points tomorrow. Small. Everything's pretty narrow here, but that's what you get when IV's in the teens in SPX.
That was a move in vol.
Can you explain the NVO trade one more time?
Sure. I just went with a call diagonal spread. I bought. It's going to be around a 40-ish delta, 50 delta, right at the money. So 70 strike in August, selling the July 75 against it. So you have a 5-point wide diagonal spread. It looks like this from your risk profile. So we go in here and go to analysis. As time passes, you get a little bit of decay coming in from the 75 strike. If you do get that move higher, you can see you have a higher profit potential because your long option has long delta and positive gamma, so it gets bigger as the stock goes up. And then when you get to expiration, you're obviously left with just the call here. So it's an upside / neutral play. You can see if the stock goes basically nowhere, you're basically at a scratch. So it's an upside play, just like playing for a little bit of a bounce after the move today.
Yep. Perfect. And yeah, in these high heavy stocks or stocks that are moving, defined risk diagonals still take advantage of that near-term IV being boosted, and your risk is defined in case it continues.
Cheap too. I mean, $300 and change. Like you got very minimal short-term risk. You know, $100 over a couple weeks. E-mini's up 10.
It's as if
I think 6,000 was like basically the low. What do we get into?
Yeah.
59.93. That was the low tick for just a moment.
A moment's notice.
Yes.
IBIT short put from Theta Trader or ETHA for the Johnnies out there.
Yeah, we could do. I have nothing on an IBIT.
45 days, pretty close to the money. Yeah, totally fine. I have an IBIT position on forever.
Mm-hmm.
I'll never close it.
I could do
until 2026.
I could do another diagonal spread here.
There you go.
Maybe do like August 50. Sell 2 of the 60s, like a poor man's cover call / crab trade.
Mm-hmm.
We're gonna get spicy with this. Yeah, so this is essentially a crab trade. Put this on for today. So you're long the 50, which is your synthetic stock position. You're short 2 of the 60 calls, which nets you out at basically 0 delta, if I had to guess. So the 60 calls are, let's call it 70 deltas together. The in-the-money call that you have in August is a 78 delta. So it's basically 0 delta with that part. Your upside call that you're buying is going to be minimal because it was like an 18-cent debit. It's like 6 delta. So you're basically flat delta on this trade. You can see it. It looks like an iron fly. As time passes, though, you get that decay from the short premium that you're selling there. You have a little bit of an upside skew because you're long this 50 strike. You got a little bit of positive extrinsic value, so you've got some positive decay in your favor. You can roll into long call spread if you get like kind of a sideways move. Got about $2 in extrinsic value here. It's a calendarized, it's a crab trade. Trying to make it into something it's not. It's a crab trade. We're going to do this. It allows me, should I go further out in time?
Good. I mean, IV's pretty low.
Yeah, I'm going to go, we're going to do this. We're going to add an extra. Yeah. So we're going to do September so that I can roll this into August. Hopefully into a move back to 60.
Yeah.
So
you could even roll it into a diagonal.
Yeah.
Get the premium out of it.
In August.
Yeah.
But I need to move the long option, the 50 strike, out to September so that I can roll into August and still have a diagonal.
Yeah. I like it.
All right. 721. Well,
yeah. If you want to sell premium in there, that's totally fine too. Even though IV ranks low, 50% IV is still plenty.
ETH too.
So yeah, you can sell a put at 55, 56, 57. Anywhere in there, you're picking up almost $3 or more. Yeah, ETH A is much cheaper. So kind of like the idea of like an in-the-money short put, if you want to do that. Like a 17 or 17 and a half or even 18.
Like cover call, and then you just buy a cheap wing.
Yeah.
I was thinking like the 9 strike.
Yeah. You could buy the 11 or 12. There's no bid on the 9 if you're in July. Unless you're
I was looking at August.
But yeah, the 9 strike. Same story.
Yeah, let's do this a little shorter term. Let's do the 1712.
There you go. And that just reduces buying power dramatically.
Yeah, as opposed to using the $1,200.
Yeah.
Pay 8 or 9 cents.
Yeah, you're just buying the option that has a bid, assuming it goes to 0.
Mm-hmm.
There you go. Can you explain why Circle is untradeable? I sold a short call spread 53 days out, the 325, 330.
It probably hasn't moved.
It probably hasn't moved. And if it has moved, it's all just fake numbers.
Not fake, but wide bid-ask spreads. Yeah.
That's the problem. The problem is you have a $300 strike selection.
What is it? 300, 320?
325, 330. So a narrow spread in a 160% IV stock where the strikes have $3 bid-ask spreads. Like I've had this up just watching it. I've seen it go from 65 cents to $1.90 just in the bid-ask spread movement. Yeah. So it's you're already in it. So like if you want to stay in it, that's fine. But you're gonna have a really hard time getting out of this without like knowing what price to use. So you really need a big sell-off here and a big vol crush for the price to become more clear for an exit point. But yeah, you're just gonna have to hold this pretty much. You're gonna have to hold this for a month at least.
Yeah,
I would say
you're not getting out of this trade.
Yeah.
Unless you pay up. Like
Right.
there's no decay on this trade.
Yeah. The bid-ask spread is $6 wide.
Yes.
So it's if you're in for a decent credit, you can hold it all the way to expiration. And if you're right, you're right. It'll be fine. But getting out of this is going to be troublesome, especially if it keeps rallying and the markets get more wide. But yeah. Tesla's going crazy. Yep. Do you have anything in there?
I do not. I mean, vol is higher now, but 350 now. It's tough. Probably lean towards like an iron condor if I didn't have position on and wanted to trade this.
Yeah, this thing's moving. Those robo-taxis
I guess.
taking over.
10-point wide, 275.
Why the sell-off in CL?
I don't know. We're here.
Yeah.
We're
But-
blind. You gotta tell us what's happening. Are there bombs dropping? Is it over? It seems like it's over.
Yeah, I mean we've just been using it as a proxy for things that may be happening overseas, like pipelines getting attacked, like stuff like that. But this huge sell-off, especially from the high of 78, is very interesting considering the contradictory headlines we are seeing. So I don't know. But either way, this thing's moving. You should expect it to continue to move with such high implied volatility. There's an 8-point range in the futures for the next 24 days, which is pretty big. You can see the oil volatility. What is it? CGI.
OVX colon CGI. I want to do like a broken wing butterfly in Tesla.
Yeah, so the vol is still near the highs. The height was 2 days ago. 2 trading sessions ago, I should say. On the 18th of June, but still elevated for sure.
Yes.
People get scared too easily. Total risk off move. Yeah. We are chopping.
Yeah, it's a chop fest right now.
Gold still staying up a little bit. But yeah, it'll be interesting to see like what breaks out. Like one of these things is probably going to break out at some point. In which direction, in which product, I'm not sure. Could it be oil? Sure. Gold. But yeah, this is kind of crazy that the market is still staying bid. Kind of crazy. What else we got, peeps?
I don't know if you looked at like Amazon or Apple. They're both off the highs that they had last week. Apple's kind of an interesting one. I have some long delta there. I just have a leftover call.
I have a leftover call in Apple.
I didn't have anything. The 190 puts, $2 and change.
Yeah, Google's killing me here.
Is it down more?
Google's interesting. I think if you're fading every single news thing you read, and you just assume eventually it'll go back up. But yeah, this is not a fun one right now. 175, 190 is what I've got. But give me a $3 reversal of this, and I can roll the 190 down to the 185 for a much bigger credit. Coca-Cola staying bid. MRK staying bid. Silver staying bid. Silver's not rallying nearly as much as gold is, though. Everything's crazy. That's all I can say.
We got this 80 strike put that's up 30 cents in MRK. That was from Fast Market.
Mm-hmm. Why not do a diagonal on IBIT versus the crab?
Selling a little bit of extra premium on the upside. So you certainly could do the diagonal. I mean, it's not a huge difference, but you're selling this call spread for $1.10 and not using any additional capital because you're covered to the upside. So it's the same sort of directional assumption, but you have an upside tail risk. So if Bitcoin were to make new highs in the next 20 some odd days, you'd miss out on some of the upside. And the IBIT high 63.70, which is basically where our break even is, up on the upside in the next 25 days. Yep. And even then, if you get some time to pass and it kind of stays around that range, you'll be able to close that and roll to a diagonal spread in August with the short in August. And, you know, you don't get hurt by the crab trading unless you get a tail event to the upside in this situation.
Indeed.
God, they are flying.
This is something else here.
Yeah.
Yeah, it is hot in Chicago. Data traders.
Some today.
Yeah. Yeah, Milwaukee yesterday was hot. Yeah, our AC's been pumping for sure. Let's see. A couple minutes left here. E-minis flat, NASDAQ flat. Bitcoin down 3K. Yeah, I mean, this is interesting, but
vol futures are staying bid. They've been staying bid.
Yeah, that's kind of the checkpoints. You check vol,
but you can't get a sustained down move. You cannot. No, everything is just instantly bid higher, which you want to see like a washout. You want to see that big candle.
Yeah,
you just can't get it.
And that's kind of like that's kind of our sentiment with these markets. It's like there's a sell-off. If there's a sell-off, but the VIX is at 19 or 20, it's like, do you think it's going to keep going lower? And if it does, then that's when you see the VIX pop. Mm-hmm. So like when we saw the first April moves, we saw the moves, VIX was increasing, but when you see volatility futures go into 3, 4, 5 point backwardation, that's when you take it seriously, more seriously, because when you just get these moves and VIX isn't moving, VIX futures aren't moving, and they stay in contango, it's tough to really take it.
They're pretty flat now, the vol futures.
Yeah.
21 and 20, 10, 20 cents.
It's something that's kind of, and you can obviously be wrong. Like even if you see a sell-off and vol futures don't move, for you to see a continued sell-off and vol futures rising, like you're gonna need a downside move for that to happen. So, if the market was down 40 or 50 and vol futures were still right here, I would say, I would lean towards a bounce back versus a continued sell-off. But always beware of backwardation in volatility futures that's the takeaway here. If you have big backwardation in volatility futures, you should expect to see more chaos to the downside.
That it?
I think so.
Cool.
Sweet. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's a Trader Nikki Bat. Check out the events tab on tastylive.com. We got plenty live free events for you. Also sign up for the cherry picks. We're going to be walking through those tomorrow. You can get them while they're hot in your inbox. Also sign up for the tastycrypto.com newsletters. Those are free as well. But yeah, Plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back for last call today, morning show tomorrow, morning show Thursday, morning show Friday. So it is the takeover of the 30-somethings.
Perfect.
We'll see you tomorrow. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We are back. It's Monday, June 23rd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, the news is flowing here on Monday.
We'll do it live
because this is happening as we're speaking. Obviously, the market's had quite the seesaw from the open to now, and maybe we'll seesaw again. Maybe right here as we're in here in for Futures Power Hour. Who knows? It's that fluid at this point.
Well, things are heating up in the market. Cold War II is heating up. It's hot here, Ilya. Right now, the wet bulb temperature in New York is 108 degrees. It's absolutely miserable. So don't go outside. If I lose power,
you all enjoy
rolling blackouts.
It's a nice 65 here in San Francisco. Just a little soupçon of fog.
Okay, don't. All right. John, we can go to the slides before I attack Ilya through the screen. We find ourselves, of course, on the other side of a weekend of dramatic risk. It looked like Friday Trump was telling everyone 2 weeks to stop the spread, if you will. That, of course, came to fruition because technically it was within 2 weeks. On Saturday, we found out that the U.S. had bombed Iran, of course. How did the market react at the open, Ilya? Yesterday, you and I were on First Call. Oil was up 5%. Yeah. Stocks are down a little over 1%. Gold, 1% higher.
Dollar was a little higher.
You look at the cash equity open today, you would think that there was no news over the weekend whatsoever. The headlines, of course, are heating up here.
What?
Yeah. We are seeing the headlines heat up here a little bit more right now. Iran has apparently launched missiles towards U.S. air bases in Qatar and in Iraq. So there's some footage circulating on social media of air defenses. But what's going on with the actual markets, it should be worth noting that oil prices are falling at session lows. And oil vol is now the lowest it's been since before Israel and Iran kicked things off on June 12th, Ilya. Mm-hmm. So if you're looking for a read-through on whether or not the market thinks this is going to be a game of escalation, perhaps that's the place to look right now. But overall, Ilya, this is a market where this is now the new normal here. According to the Federal Reserve's economic database, we have a world uncertainty index here, which really hasn't ever been this high before outside of COVID. Is this the new normal? Is this the noise? Is this part of the wall of worry that traders are just going to have to contend with for the foreseeable future?
I mean, we can certainly point to this and say, we've been saying that this would happen for a long, long time as a consequence of deglobalization and the inherent instability of saying countries are going to be more unilateral in their actions. And most importantly, the United States is not going to spend much of its time defending global norms and the rules-based order that it itself established in the wake of World War II. As you see the U.S. pull back, as you see deglobalization, the two things that you and I have been talking about for years at this point, probably started talking about it before COVID, and have talked about COVID really as an accelerant, not as a change in theme. About, look, you're going to have more global conflict because the big scary global policeman has apparently become disinterested, and you're going to have more inflation because if globalization reduces trade barriers and makes commerce cheaper to do by making it more frictionless, and therefore makes everything cheaper for everybody, deglobalization does the exact opposite in exactly the same way. It makes everything more sticky, more difficult to do, and more expensive. So if you like inflation, shouldn't like globalization. I digress. This is increasingly normal, I think. Obviously, this is a level of escalation that's very, very intense, even for any kind of post-U.S. order, anything. You certainly see the U.S. here attempting to kind of thread the needle between we're not going to get involved a la Iraq, Afghanistan, but we are going to get involved. And you're seeing a little bit of a kind of return of the U.S. to the Middle East, but attempting to do it in a one-off controlled kind of way. And we'll see, I suppose, if this is a thing that works. But the read-through from the markets increasingly looks like the markets are starting to treat this exchange between the U.S. and Iran given how asymmetric it is, as perhaps adjacent or thematically similar to the exchange we saw with Israel last year. The markets did not freak out as Israel and Iran were lobbing missiles at each other last year, but for the first volley, because it became very clear in the signaling that nobody's actually interested in escalation. That what we're seeing is a kind of face-saving dance, where everybody's got to lob some missiles, but ultimately we're going to step back. And last year, it was Iran that initiated the exchange with Israel in support of Hamas, ostensibly. And that was after Israel conducted an assassination on Iranian soil of a Hamas operative. So we have a little bit of back and forth. The markets go, oh, okay, nobody actually wants to go to like a troops on the ground war. This will end after a few volleys. The signaling from the White House is they don't want to escalate. And so
bombing for
maybe
peace.
This is a face-saving exercise from Tehran. And we might end it here.
Maybe we end it here. I think it's awfully convenient that why isn't the market reacting more negative right now to these headlines? I've been tweeting about this for the past hour. If you've been following along my Twitter feed at CVecchio FX, if you put together the news of Qatar's airspace closing and U.S. moving military personnel off of out of Qatar, where we hold our central command for what it's worth for the region. It looked like something was happening. Also, you can piece together some previous headlines. Israel does control the skies over Tehran, don't they? Wasn't President Trump in the Situation Room for a 1 p.m. meeting today that was announced yesterday? It all seems a little convenient for me. Very theatrical here.
It's starting to look a little bit like that Kabuki theater that we watched last year with Israel and Iran. I should point out, none of this makes me any less concerned about Iran's asymmetric response over the coming months. But for the markets, that's a different kind of a narrative. The markets aren't going to freak out because Iran might strike with non-state actors at soft targets. It's a terrifying proposition, but it isn't.
I will fade the hell out of that sentiment all day long.
I'm saying it's a terrifying proposition, but it's not a market disrupting proposition.
I think the best thing for the market is that Iran has responded right away. Because if it's a sort of Damocles over the market, then you get that sentiment of, oh, well, what are they going to attack? Who are they going to attack? Is it going to be a soft target? Is it going to be a civilian target? Civilian infrastructure, right? They say they're going to respond proportionately. They've maintained that this uranium enrichment is for civilian purposes, although if you just do a brief skimming of Wikipedia, and trust, I got 3 on the AP physics exam. So like when I say I'm a tourist here, trust me, I just happen to remember things that I read recently. But you don't need to enrich uranium past 5% for civilian purposes, maybe 20 on the absolute high end. So it's 60%.
And also when your geopolitical network is a bunch of terrorist groups that you fund to stir havoc all over the Arab world, all over the Middle East, all over Latin America, all over, your words don't carry the kind of weight they might.
Regardless, right? You're just in a territory where, okay, if you're responding immediately, it means you're not doing something that's going to be like what a non-state actor would do, like what ISIS would do. Sure. And instead, this is going to be like face saving, as you note here. After the U.S. killed Soleimani in January 2020, which, it feels like that's a little bit memory hold because January 2020 was notable for something else that came across our news wires. But Iran did send missiles back at 2 U.S. bases in Iraq. While there were no one killed, there were reports of servicemen having some brain injuries there afterwards. Yep. They ultimately downed a Ukrainian jet that was taking off from Tehran. And that kind of put a cap on the retaliation, but it was just firing missiles back at U.S. bases. So if this is if we're going to see this exchange today, Bahrain right now, just going across the wire, people told to shelter in place. If this is it, okay, It's unfortunate what's happening, of course, but from a market's perspective, oil vol at 68.4 IVR here. Ilya, we end last week where we're in the 85, 86 range. We're spiking up this morning, 85, 86. We're nowhere near the 142 that we were just within the past 10 days. You know, if we're using oil and oil vol, and we're starting here, even though this is supposed to be the equities portion of the show, but if we're following this as our guidepost, which is what we typically do during these periods of geopolitical risk tumult.
Middle East especially.
Well, think about what happened on April 19th, 2024. I would encourage people to go back and look at the chart, but when oil vol broke that night and oil prices started coming in, that's when risk assets started to rally. That's when you see stocks begin to bottom around this last episode, and gold begins to fall off a little bit there too. And so oil vol breaking down here, we get the missiles flying. Okay, this is an immediate response. Iran's doing their usual kabuki theater. Do they have a right to respond? Perhaps from a certain perspective. Stocks here are just riding it out, though. NASDAQ is back in positive territory after a brief dip into the negative there. We started the session lower, of course, Ilya, and it's been a steady climb to the upside all day long. Same thing for the S&P 500 right now, which sitting here up by 0.25%. We've closed the gap from Friday's close, and we're kind of just bobbing around. If outside of the risk sentiment part of this, and perhaps a knock-on effect of a Strait of Hormuz being closed, which I think is, again, worthwhile of a discussion here to gauge our appropriate level of fear around such an event, the S&P 500 derives 0.003% of its revenues from Iran or Iran-related companies globally. It's like $575 million at the very, very high end on an annual basis. That's absolutely nothing, okay? That's certainly less than what we see at a treasury auction in any given week. Okay, so will this have any substantive impacts on companies' earnings? No, it's different than Russia, Ukraine, right? Where Russia is an integral part of global supply chains, particularly for energy
and
inputs.
Nuclear power.
And Iran is not those things. It's been ring-fenced for a number of years. Can it do things? Of course, but Elliot, 22.3 IVR here in the S&P. Vol is up a touch from Friday, but I suppose not really. What do you make of the fact that volatility in stocks hasn't really done anything after what's a weekend to remember?
I think it goes back to the conversation that you and I had on First Call yesterday, which is the sort of polar extremes of the readout on what's going on here seem to both be wrong. One side is screaming World War III, but it's obviously not that, because we're not engaged in a firefight with something like Russia directly. Certainly nobody's suggesting that Russia is a significant military power conventionally on par with the U.S. They're struggling to make way in Ukraine. But they are a nuclear power. Certainly, this is not an exchange with the likes of China. This is an exchange with a hobbled regional power that can't deploy nukes, that can't challenge the U.S. conventionally, whose proxy network has been utterly dismantled, and whose main patron, Russia, is plainly not coming to help. So World War III, this is not. There's just not the kind of symmetry between the two sides to say that. At the same time, a controlled strike with defined outcomes, this is not either. And so the optimist side is obviously wearing the thickest rose-tinted glasses you could possibly imagine.
Okay, can I give you some funny rose-tinted glasses here? Qatar says that Iran's missile attack on the U.S. airbase, Al Udeid, if I'm pronouncing that correctly, it says that's a flagrant violation of its airspace and territorial integrity. All missiles were intercepted, and it reserves the right to respond. So I just want to be very clear here, right? I'm smirking because one of the knock-on effects of October 7th, an attack against Israel that Qatar and Iran both helped co-finance and co-sponsor, could ultimately be Qatar and Iran going to war with one another.
Oh, yeah.
It's just unbelievable. Just no notes.
Right.
Perfect.
Well, and there you go. And so that, I think, is why the story in equities is basically of the same standstill where we've been now for going on 3 months.
You mean some of the worst people we know are fighting? Oh no.
There's that, and also this is not going to impact global trade. This is not going to push the world any closer to recession. This is not going to do much of anything from a macro global growth financial stability perspective until you start worrying about those kind of asymmetric responses. And before Iran can do anything like that, we're talking months, maybe. So if this doesn't end up in regime change, either organically or forced, then
Iran just declared victory.
Of course they did. Of course they did.
Look, the Supreme National Security
Act 2.
Supreme National Security Council confirms a devastating and powerful missile attack against the U.S. Al Udeid base in Qatar.
Almost reads like a Trump tweet, doesn't it?
In retaliation for, quote, the blatant military aggression of the criminal regime of the USA against the peaceful nuclear facilities of Iran. Next quote, the number of missiles used in the successful operation was the same as the number of bombs used by the United States in its attack on Iran's nuclear facilities.
That's cute.
Tit for tat.
That's cute.
I don't know. It doesn't seem like Iran wants to escalate this. If I'm Trump, and Trump said something very hawkish today. He came out I thought Trump was, politics or a horseshoe. So, Trump's in one place. Maybe he's going woke at this point. But he said that no one should use the N-word. And of course, he's referring to Dmitry Medvedev in Russia talking about nuclear weapons and how Dmitry Medvedev said that, Iran is now going to pursue nuclear weapons and other countries might give Iran nuclear weapons, to which Trump obviously had an understandable freak out about.
Keep talking, Russia.
But that's,
you're going to talk your way into a situation.
It's Iran, given Trump's rhetoric, very public rhetoric here, and quite frankly, this Operation Midnight Hammer was brilliantly done from an operational perspective with the decoy and how, if you read much into it, I don't need to go into it here. This is not the forum for it, but it is a flex, right? No Middle Eastern air systems picked up any of our jets or bombers in any of their airspaces. If you read any of the flight logs or the reports from the region that night, even allies. Okay, Israel was tipped off to it, but Jordan didn't know. People in Syria didn't know. Turkey didn't know. They didn't pick up our bombers as we were transiting the skies.
This was a statement. This was making a point.
Right. So, okay, Iran's backing down here. Oil vols continuing to come off. Oil's now down 4% on this session for what it's worth. This is a market that opened up higher by 5% yesterday. Ilya, we're continuing to plod down into session lows. It's a 67.1 IVR. There's a lot to say about oil right now, but watching oil and the oil vol here is probably the most instructive thing we can do in terms of how this series of events is unfolding. So with that said, what's changed for stocks broadly here as we see IVRs for the NASDAQ dip back below 20? Well, nothing's really changed for the month of June here, Mr. Spivak. We can just extend this out. We'll just kick you out there for a little while. The trading range, 21,600 up to 22,350. We continue to chop, 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 chop.
Yeah. Yeah. I mean, there's nothing about this that suggests, I think, to you or I that the markets need to be worried or I mean, maybe they need to be worried, but they certainly aren't about this becoming anything bigger than now. Everybody says their thing.
New York Times reports that Iran gave advance notice of Qatar-based attacks to minimize casualties. We really think we're going to World War III here? Like, armies lining up on either side and shooting at one another, or is Iran de-escalating?
I sold some premium in crude.
Just to be very sober about these headlines. And I think actually right now, because this is probably going to be a more fluid episode given how just everything is kind of moving at the same time, the Strait of Hormuz is fascinating because having read into this a little bit more over the weekend, and we referenced this on First Call yesterday, but in the 1980s, there was what was known as the Tanker Wars, where the Iraq-Iran war ultimately spills over into Iran shooting vessels that are from Kuwait and Saudi Arabia because they're deemed to be, with their large majority Sunni populations, to be on the same side as Iraq. Okay, and this is the situation of the time. This is obviously before Iraq invades Kuwait and everything else that occurs in the 90s. The way this is ultimately resolved is that Kuwait goes to the United States and says, we need your help. So the U.S. allows Kuwaiti tankers to reflag under the United States, and therefore they're afforded U.S. military naval escorts over time as well. And that basically puts a cap on the situation. As we move to modern day, the U.S. Navy obviously still is heavily involved in the region. The main trade routes for the Strait of Hormuz run through Oman's waters, not Iran's. So for Iran to produce a naval blockade that cuts off the Strait of Hormuz as it pertains to trade that impacts the U.S. and its Western allies, it would have to blockade international waters and effectively declare war on Oman, which would bring in the rest of the Gulf states like Saudi, for example, to take active measures. And obviously, if that blows out Iranian export facilities, which are going through that side of the strait, that's something negative for China. So I'm just reading the tea leaves here, Ilya. These are bad headlines. Okay, the U.S. and Iran haven't really had direct military engagement since, ever. I suppose Iran shooting missiles at U.S. bases in Iraq was the first time that happened. In 2020 was the first time that happened, going back to the fall of the Shah in 1979.
Yeah, that's what I'm thinking. I'm thinking like direct military engagement. You're thinking 79, and everything else is sort of by proxy.
Everything else is sort of by proxy here. So our 4-hour candle here, we put in a new low relative to the last one. We're pulling back up. Is it going to be an engulfing one? We'll get through 22,018. That's, we'll call it, 24 NASDAQ points right now? That's not much of anything. Same thing for the S&P here. You're squeezing up above 6050 right now as the market's digesting these headlines about the Iranian missile attack. Apparently a well-choreographed,
Here's the thing, though.
Given an advance notice missile attack.
As we're talking about this, one thing that it strikes me that's important to note here is that this is not a reason to buy equities because equities didn't sell off on it to begin with. We're still in the same range. We still haven't gone anywhere. So, yeah, crude oil had a wild move on this. And I understand fading it. I'm doing it now. As I was saying, you and I are talking here. As we have, I've priced up a little vertical selling puts in oil. So just looking for vol contraction. Basically 1-to-1 risk reward.
Oil off 5.5%, now down below 70.
There you go. So
I was thinking I was going to have to sell a kidney yesterday.
There you go. See?
I'm going to be buying a kidney today. In fact, I'm now in the market for kidneys.
Yeah. I mean, I am strictly looking for vol contraction here. And
66 IVR continues to fall.
And when you look at this, then you have a situation where obviously oil is very, very active. But when you look at what's going on in stocks, they never really crashed on this. So expecting this to unwind and be a reason that stocks go up, probably not.
If the Iranian government is declaring that they have responded proportionally here, then you go back to the steady state of what's happening between Israel and Iran. And that does not preclude further escalation right now. But as it pertains to our equity markets here, you have vol contracting. NASDAQ IVR is below 20. It's now below 22 here in ES. The Russell not quite getting its sea legs under it yet today, although that's not a small rally, Ilya, right? We're talking about up over 1% from the lows now, 21.28 here for RTY. I'm still leaning long deltas. in stocks. I was a little more concerned when I saw the headlines over the weekend, given some of my positioning. The way that the market has responded since then, and having had a chance to digest it, I've seen no reason to get off that train right now. And this is, if this episode is over, stocks getting close to those session highs right now. You have a squeeze at the first part of this week, the economic data this week, Ilya. We talked about the calendar on Friday a bit, but tomorrow Powell's talking, and you've had Fed speakers now, first Warsh and now Governor Bowman, saying that maybe a July cut could come together.
Well, I wouldn't go so far as to call Warsh a Fed speaker. He's not currently a Fed.
Former Fed governor.
He's not currently a Fed policymaker, but
he's the next Fed chair. He's the next Fed chair.
We are paying attention to what Uncle Kevin says. Yes,
he's the next Fed chair.
He definitely might be the next Fed chair.
He was really favored by Trump over a number of years, right? Powell ultimately gets the job, and then Warsh is the first person, as in the immediate wake of the White House saying they're starting the search for the new Fed chair. Warsh is coming out calling for rate cuts, which has been the line that Trump. Okay, right? This is not high level analysis here. This is just common sense. If you've been paying attention for enough time.
For the record, the markets are calling for rate cuts as well. They're still priced for a lot more for next year than the Fed is forecasting. So Uncle Kevin's position is not exactly out of step.
When we were talking about this all last week, we were contextualizing what was happening in the market by really the only perhaps relevant data point that we have. You can look to what happened when the U.S. bombed Libya in 2011, or when Trump launched the strikes against Syria in his first term. You could certainly look to when the U.S. bombed Baghdad in March 2003. And what you see is when the market thinks it's limited in scope, stocks tend not to suffer. Bonds don't do that well either, which is to say that why are you going to jump into safe havens if you think there's no significant long-term escalation? Interestingly enough here, while bonds are trading higher on the day, when we look to, say, our 4-hour chart right now, as the market's rounding into this view with oil coming off and stocks rallying, that maybe this is the end of this episode, why are you going to hold a safe haven? Not really needed. So it's been a good move up to the top side here. You and I are both leaning long deltas in this, but I don't want to dismiss the fact that if the market really starts to go into, okay, this conflict is winding down now, we're de-escalating, the Iranian nuclear threat's been neutralized, they can have their, glowing rocks, but as long as they don't have any more centrifuges or processing facilities, enrichment facilities, who cares? Yeah. It's going to take them years and years to rebuild all that stuff anyhow. So whatever.
Yeah.
Bonds probably stuck. So I like leaning long delta still, at least in ZB. ZN, this is the short iron condor. We're at the midpoint of the year-long trading range, and that's kind of what I'm hoping for. So I think everything is kind of working out neatly so far. May need to make some adjustments on duration, but couldn't ask for a better set of outcome, at least in the bond market, on the other side of what was a caustic weekend of headlines.
Yeah. I am looking at this and saying, okay, obviously the bond market is not concerned about an oil price spike. That's all the more reason why my short call vertical here looks more convincing. It's modest. It's just looking for vol extraction. I still like the long end the most in the bonds, and we're making a little bit more progress there. In ZB, we're starting to kind of crawl up that range that we've been watching. It's choppy and slow, but these are bonds. When they're choppy and slow, that's normal. You don't want bonds to move like crazy. They're not supposed to. If the bond market is swinging like it was swinging in April, then
something's wrong.
That's where you start to worry about existential things like the future of the financial system. So it's working. It's working slowly and begrudgingly, but it's working. So, okay, fine.
It's working slowly. There's also the idea here that even if bonds are going to move slowly, one of the problems for the bond market, if you will, can the Fed cut? We were just talking about this a week ago. If oil prices stick up and stay up here because of this war, how can the Fed cut when there could be a little bump of inflation coming down the pipeline thanks to energy prices, right? And that only feeds the stagflation argument even more. Well, now energy prices are collapsing today. We're off 4.66%. Okay, so we're back above 70 there in oil, but we're not at 78. And oil at $70 is not something the Fed is worried about or will be worried about, even if there's volatility in the energy prices. But removing that upside threat, inflation expectations come out of the long end of the curve. So, I mean, I still like leaning long deltas in ZB. ZN, obviously, you could see is only up by 0.39% compared to ZB's 0.6% rally. Maybe it's that fall wedge that's coming together. Either way, though, one has to be content with the notion that these are markets that are stable, and the tariff talk that we have been ignoring for the better part of the last week, the cans are probably going to be kicked down the road, because you're not going to have a situation where the U.S. allows China to have lower tariff rates than some of our allies. That does not incentivize friendshoring. It incentivizes you to build more stuff in China, which is not the administration's stated outcome. So Fed's a non-issue right now. More cuts might stabilize things. I don't really care, but Fed Chair Powell speaking tomorrow. That's the most important event for the bond market this week, removed from anything Israel-Iran.
And it looks like we have Chris having frozen here a little bit. Oh, there he goes.
Did I? Was I gone?
You got stuck there for a second.
You know, it's these rolling blackouts. I blame RFK and Andrew Cuomo.
There you go. But you're right, though. I think we do have Powell speaking this week. The markets will pay attention. They always do. But the bigger question, as you and I have talked about here, isn't about where the Fed is going this year, because that's increasingly a function of the calendar, and it looks like we're going to get the 2 cuts that everybody said. The Fed said 2 cuts. The market said 2 cuts. We're there now. La-di-da. The larger issue is next year. And if the Fed and the markets are left kind of to their own devices, somebody's wrong. Because the Fed is saying 25 basis points and the markets are saying 60. So somebody's wrong. And somebody's going to have to figure out which way this has to adjust. Now, the Fed is not going to say anything else on forecasting basically until Jackson Hole. So, yeah, we're going to get a Powell press conference after the policy meeting in July where they won't do anything again. Okay, right. What's the dance going to sound like? Probably much like we've heard it already, unless the economy really falls off a cliff. In which case, it'll be unmistakable and we'll play it live as it goes. But short of that, you're looking at a situation where the next time the Fed really updates its forecasting, September. In Jackson Hole, they'll come out and say some stuff. They'll probably set the stage for the cutting of this year to begin. I think this starts to increasingly look like last year. And that's a recipe for bonds to go higher.
So the Fed's going to cut twice in September. That would be the funniest outcome. The Fed gives us 2 cuts in September, just like last year.
Yeah. Yeah.
You know, it's not, I haven't really entertained that, but that's probably something we should talk about, because if the Fed misses the boat in July and then things start to go sideways, they may say like, oh, geez, we're behind the ball. Okay, let's
it again, Chris.
Oil here cracking again, down 5.25%. NASDAQ now up over 1% on the session here, session highs right now, Ilya. I want to make our way over to what's happening in the metals market, which I suppose it's, given the headlines, maybe the flip side is that gold is holding up, silver's holding up a little bit better than one might surmise as oil vol cracks. Then again, they didn't really rally that significantly, only up 1% or so in gold on the open yesterday. Silver's had a little bit of a struggle. Copper's bouncing a little bit back, I suppose. Ilya, what's the move here in metals? This thing feels heavy. I'm leaning long, but it feels heavy. The technician in me says I can't get off the trade until we close back below the 1 month moving average, which we haven't done since prior to May 20th. But the vol's dissipating and we are no longer rallying on the news.
And when you look at this, you end up saying, okay, what's been the trend since basically mid-May? And you start to look at it in much the same way as you would the bonds. Seems to be higher highs, seems to be higher lows, seems to be we're retesting former resistance as support and we're holding there. Yes, it's slow and it's annoying, but is it broken? Doesn't look like it. So I'm sitting on the long side, and with plenty of duration left, I'm waiting, because what is there to do here? What has changed? Nothing. If anything, if you're not already long, you might be looking at this line in the sand here at about 2,500 and going, that's the point against which you short, unless it breaks, in which case you go long here. But if you've been long from lower levels, as you and I both have, until this thing capitulates, if it capitulates, there's nothing to do. Because you can say any number of things about this, a crowded trade, blah, 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 and that's not wrong. But also, markets don't just correct in price, they correct in time. And this thing has been drifting sideways since mid-April. This is the kind of digestion that may give you the next leg higher without a pullback.
Oh, that's exactly what I want to hear.
I mean,
yeah, that's what I want to happen. That'd be ideal.
I mean, I'm long.
It's
until
not,
this thing tells me otherwise.
You're not seeing, that is one thing that I like. Dude, I like to say, like, the indicators are being digested by the market, right? You feel full, like we're really overbought, you're bloated, and so you got to cool down, but that doesn't mean you're done eating. Okay, it just means that you're taking a little break. And so the indicators cool off, but the uptrend remains in place. The uptrend here remains in place. It's not that stellar kind of breakout that you have or you'd like to see, but the former swing high close level is up at 3397.20, and we are still just barely holding above there today and above that 1 month moving average, above that 1 week moving average, again on the close. Technical momentum isn't dead. It's just been disintegrated, or at least digested, I should say, to continue with that eating analogy. It's been digested where everything's cooled off. Stochastics, MACD have cooled off, but price hasn't lost its ascent. Partial to think that you could see a more significant pullback tactically. Again, it's a crowded trade right now. It's very crowded, both by sentiment when you look to positioning surveys like the Bank of a Manager Fund Manager survey, or even the CFTC COT report for actual futures market positioning. But still, I will retain longer-term upside bullishness, if not continuing to hold the outright. But when there are opportunities to get out of the money call exposure when vol's cheap, that's worked well for me in gold. Silver here is probably holding up at the levels that you and I have been talking about in recent weeks, right? Can we sustain our move through 36? The former highs we had in October, then again back here in March prior to Liberation Day. And thus far, it seems a lot like former resistance is proving itself as support, even with this news today, Ilya. Silver also has a 16 IVR, so vols come in just like for gold, and there's been no significant pullback in price.
Yeah, I mean, this is not anything that tells you this thing has made up its mind, but it does seem to be holding former support or former resistance as support. It is pointedly not breaking down. So if you were long, is there a reason to get out? No. Are you seeing some signs of, let's say, negative divergence on the oscillators that maybe tells you you've lost some momentum? Well, yeah, but you can see that with the naked eye because you've been looking at a range here since the beginning of June, essentially. So again, this might be something that corrects in time and not in price. With vol this low, if you really wanted to take a flyer, I'm not going to, because silver has a risk on flavor to it, and my bias is still risk off. But just sort of tickers aside, looking at just the chart here and going, what would I do with whatever asset this is? Forget that it's silver. What would I do with it here with an IV rank of under 16? Long. Calls. Just straight up a call vertical. It's cheap.
It's cheap. It's just the reporting here coming out about what's happening. It's pretty clear that Trump can end this cycle of escalation now. That's it. We can go back to our previously scheduled programming of heeing and hawing and hem-hawing, or whatever the expression is, about tariffs and growth and recession and the Fed cut cycle and corporate earnings and whether NVIDIA is going to beat expectations for the billionth quarter in a row. We can get back to that world. Copper here is telling us that maybe things aren't so bad, although it continues to chop around, something barely moved by any of the headlines that we've seen come out over the past 2 weeks regarding Israel, Iran, and now Iran and the United States. It's a 37.1 IVR, so it's not the beefiest volatility to sell right now, Ilya, but it's still been a lot of chop. I still have a short call spread on here against the 505, 510 figure, the spike highs that we had back on June 5th. I'll continue to hold that, but if people are looking at this and saying, it's just a lot of sideways chop, short iron condor seems appropriate too. We've explored that here. You can go out to 64 days. If you wanted to explore the recent highs and lows, that's down near 410 or up closer to 450, right? Well, you can go inside the 1 standard deviation move and then 550, right? There's your, we'll call it 20 cents wide on either end. 63% probability of profit. You're risking 2.5 to make 1. You can be directionally neutral with something in that type of pop percentage range with a decent risk to reward. You don't need to be directional in gold, silver, or copper. At least in copper, there's some volatility to work with, whereas the 30s IVR in gold is really actually quite low, all things considered. We got to talk more about oil, though, a little bit explicitly here as the session goes on, because I can't help but notice that we're now down 6% as oil comes in here today. Good news for the short call spread at 53 days to expiration, which looked like it was being challenged last night, among other oil exposure I have. Ilya, what kind of reversal candle is that? That looks pretty bad.
That's like a bearish engulfing in all caps, because it engulfs not one bar, but apparently, 4?
I think that, we're engulfing Friday, Wednesday, Tuesday.
It's a bearish engulfing.
Yeah, that's a bearish engulfing candle. That's, you could call it engulfing. You can call it a key reversal, because technically it is at the trend high. It's at a 52-week high, I believe, as well. Okay, so the technical pattern here is when you set a new high relative to the prior candle and close below the prior candle low, that's what's known as an engulfing bar. In this case, because it's at the top of an uptrend, it's known as a key reversal. Even here on the weekly chart, you're starting to get in that territory where down below 67.84, it becomes a little bit more viable. But that compression in vol is the most noteworthy thing. If you want to combine the technical and the quantitative analysis, you have a reversal candle coming on the day when oil vol absolutely cracks and breaks lower. And we've now cleared out the oil volatility lows that we've seen since the start of the Israel-Iran engagement back on June 12th. I don't know what more of a signal that you need from inside the market. And that's not to say anything of the headlines that we've talked about over the last hour, but there's clear pricing and movement here where the market is saying this can be finished. This need not escalate anymore. The game can be over. We can move on.
Take a look a little bit downwind. Take a look at the CLU5 contract. And take a look at it on a daily chart, because this is a very interesting situation here. So zoom out a little bit here, and let's go to where the October 8th high is, 2024. Now, what does that look like to you? Because it looks to me like we gapped over a very clear level of horizontal resistance, having tested it over multiple days, and now we're back under it. Looks to me like a failed breakout. And frankly, the September contract I'm looking at a little bit more closely than August, because it looks like the markets are giving themselves a little bit more time. You can just look at the candles here. This is the more liquid, the smoother of the two current active contracts on CL. So you look at this and you go, okay, well, these technicals are crisp. This is about as textbook as it gets. You have a very clear testing of resistance, a market that tries to go over it in a choppy, weird way, but nevertheless, and has now cracked back under and is on pace to close well under. It's about as bearish as it gets.
It's not looking good. There's more headlines that Kuwait's closing its airspace. The Gulf Coast countries are condemning Iran violating Qatar's sovereignty here. The fact of the matter is that oil prices have cracked. So at the end of last week, I was expecting this show to be very different. I was preparing a whole okay, listen, sometimes you just short oil and stuff like this happens. I digress. Shorting oil last week was the right decision. Okay. I stand by that now after today's price action.
Yeah.
But this is why
second thought, no, I was right all along.
No, but this is why, again, following, yesterday I made the case at the end of First Call that it's really important to follow the news flow around what's happening here with the Strait of Hormuz and the Iranian response, because the fact that, at noon Eastern time, I started basically tweeting out shortly thereafter, it looks like there's a response coming and we'll see how this plays out. Just by monitoring how this was unfolding, no panic, right? Should I be leaning long deltas in stocks? Yeah, right? Should I be keeping my short oil position on? Yes, right? Because it's unfolding in a manner that follows a prescribed path of de-escalation, which again, bombing for peace is crazy, but that is something the market has embraced over the past few years as a viable way to get volatility off the board, which is just, that doesn't make sense to me, but that's just the thing.
Doesn't make much sense to me, but
it's a thing. So everything's in today, right?
Apparently.
Even natural gas is in. Iran produces about 6% of the world's natural gas supply. Of course, most of that is consumed domestically. But if we're not deliberately attacking their key infrastructure, Israel's not attacking their infrastructure, we find ourselves swinging back into the midpoint of this multi-month trading range. We did see it advance outside of that 5, depending upon what contract you're looking at, but it was basically 5.42 up to 5.85 in previous contracts, maybe kicking that higher to 3.5 to 3.90. It doesn't really matter. Natural gas isn't doing much of anything. I still have a short put spread on here. It's still in the money, so I'm not crazy about the last 2 days of action. But we are ultimately seeing a lot of sideways chop play out. And that is the course of action prior to this Israel-Iran conflict spiraling out of control, which is worth noting. If there's no conflict here, you go back to the world we were in, and the world we were in was we were trading below 3.6. So just something to keep in mind.
Yep. Yeah. I think probably as we wind down here, the most interesting thing on the board here, after all of these shenanigans, is the U.S. dollar. Yeah. Because
let's go there right now. We only have 5 minutes.
It never found a haven bid of lasting hold, and it's tempting to say, oh well, this is a reason to want to be short. I'm not quite so sure, because you and I were talking about this last week. The euro looked like it cracked a little bit last week, and I think that still holds here. Just like we haven't really gone anywhere in stocks, we haven't really gone anywhere on the dollar, but a crowded trade this is by any stretch of the imagination. And everything we heard from the Fed suggests, well, if we're not going to get any more cuts this year, well, then the expectation for how long the U.S. will maintain a yield advantage against other currencies needs to shift out, because the markets, as we see, are still off sides. They're more dovish than the Fed is beyond this year, and there's some adjusting to do. So I'm still broadly bearish the U.S. dollar trend-wise. I expect to be back on the short side before long, but I think you could have an opportunity here for a correction the other way, and I'm especially interested in being short Europe, but also the Australian dollar, also the Canadian dollar. I have all of those shorts on because I think of all the things here through all of what we've just seen, the kind of interesting risk reward here seems to be this, and it seems to be largely ignoring the geopolitics, which is very unusual for the dollar.
You know, I think I really want to focus on what's happening with the yen right now, because the yen did not fill the role of a safe haven.
Not
the
at
markets
all.
were in panic overnight. Okay. And I think that's a direct, there's basically no one left to buy the yen as a safe haven at these levels. Granted, positioning in the futures market has thinned out, but I ran the numbers based on the most recent CFTC COT report that was released Friday afternoon. The Z-score right now for the most recent yen positioning is still plus 2.97. That's on a rolling 2-decade basis. So this data goes back to the same corresponding week in June 2005. The market is still crowded. Now, the Z-score got as high as like 3.35 a few weeks ago, and that perhaps explains why the yen has had such difficulty rallying, even as U.S. yields have come off, geopolitics flaring up, right? Everyone's in that trade right now. So it's worth noting the yen rallies back today as oil prices go down. We've seen this before. The yen is a currency of a country that imports over 90% of its energy. And so when oil prices go up, it needs to exchange more of those yen for US dollars to purchase said oil. Okay. And so the yen right now isn't behaving like a safe haven. It's behaving like a currency where everyone is already on board. And if there's any reason for this thing to break down, you know, higher US yields, we see gold break down. We see energy prices go back up, right? The yen is probably not the place you want to look. And with an 18.8 IVR, all the more reason not to pay attention to this thing. If you want to have dollar trades, there's opportunity elsewhere. It's decent high volatility in the pound and the euro. Believe it or not, the highest IVR that you see on the board is with the Canadian dollar at 55.7. Just to put a capstone on it, the yen is not the place to trade right now, IMO. In my opinion, I'm not tech speaking here. I agree. There's too many confounding factors, and the positioning is far too stretched to rely on any typical fundamental narrative.
Yeah, I don't have any exposure in the yen here. I'm not touching that one. The last thing I was in the yen was long. I unwound that exposure a few weeks back, and I'm not looking to reestablish or to flip to the other side. Frankly, the very dramatic looking hammer in that you have hammer candle on 6J here doesn't imbue me with confidence one way or another. I mean, yeah, it looks like it's bottoming, but would I be long here? No. I don't think that makes sense. I don't think you have that kind of confirmation here until you break higher.
It's going to bounce, given the positioning, sell into a rally. Right?
Yeah,
use the opportunity with low vol to buy. Like, I will be using it as an opportunity to buy some deeper out of the money puts because the vol is so down. I'm not going to, right? Like, we don't. I'm not playing
euro makes sense. Shorting euro makes sense. Shorting pound makes sense, even on risk reward grounds alone. Yen, I'm not touching that one.
Calendar for tomorrow. There's a bunch of central bank speakers from around the world, Bank of England, European Central Bank, even Fed Chair Powell talking tomorrow morning, 10 a.m. Eastern, 9 Central Time. Those remarks will be released ahead of time. You also have some Canadian inflation data. Is it a canary in the coal mine for the economy? We'll see. Highest IVR on the board, though, for the Canadian dollar, so there may be an event risk play tomorrow morning. Ilya and I will be back later today. We're on overtime today with one Mike Butler. Dylan, Tom, they are doing their event in Milan. So hopefully you can check that out if you're over in Italy. If not, we'll see you guys on overtime later today with Mike Butler. Until then, good luck trading. Up next, after a brief break, you got Dr. Jim Schultz with From Theory to Practice here on Tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How many positions do you currently have open? How many positions do you have open currently? How many positions do you currently have? How many positions do you have open right now in total? How many positions do you currently have?
And I've got to say,
I'm gonna say probably
probably around like 30 to 40 positions. I've got a lot of positions, a lot of put spreads, a lot of iron condors, some naked puts, some futures. I got a little bit of everything on right now, but when volatility pops like this, I'm looking for new opportunities. So I took advantage of that over the last couple weeks here.
20.
4. Yeah, I think 4.
Maybe 10, maybe like 10 or 11, something like that, yeah.
Off the top of my head, maybe about 15 to 20 positions right now. Most of them are short put spreads. Quite a few positions, and I'm just trying to take advantage of all these different moves and these big ranges we're getting in the markets.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I'm
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, man. Thank you guys for being here. Thank you for being a part of what it is that we are trying to do, because without you all, we could not do what it is that we are trying to do. So if you guys are watching over on the Tastylive network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Guys, we got to talk about something, man. We got to talk about this. Nobody knows anything. Not one single thing. Not the internet bros from over the weekend. Not the weekend Wall Street bros and bro sets. Oh, they had me sucked in too, man. Y'all know a little something about weekend Wall Street? Yeah, you need to throw that thing in the absolute garbage. So weekend Wall Street, man, they had NASDAQ down 300, gold up 40 to 50, oil up 1,000,000%. I'm like, let's go. I'm ready, man. I'm ready for the volatility. I'm ready for some craziness on Monday. Man, let's do this. It is the exact opposite. It is literally the exact opposite. Market up huge, oil down around 30, and you've got gold basically unched. So weekend Wall Street, absolutely useless. Do not use that anymore. But nevertheless, here we are together trying to make a little something out of this crazy, crazy market that nobody knows a single thing about here together. So, John, bring us into the market. Now I'm all fired up, man. Liz and Jenny got me fired up this morning, too, man. Love being on air with them. Man, Liz and Jenny this morning for the skinny on options, abstract applications. That was a real treat indeed. And so if you missed that the first go-around, definitely check that guy out in the archives. But you got EMEA S&Ps up 47. You got the risk-free instrument doing risk-free things. Got the NASDAQ futures up 270. Got the boomers up 300. Got the Russell 2000 futures index up 9 on the day. Got bonds up a few ticks. Got notes up a few ticks. Yeah, look at oil down 470. Guys, not a single person had this on their bingo card. Not a single one. Like, I was assured by the internet bros and the internet bro sets that we were going to oil 85 minimum. Oil 90, probably oil 100 by the end of the day. And here we are going in literally the exact opposite direction. So oil at 69. You've got gold basically unched up a few bucks, up to 33.95. And then the British pound is up. The euro is up a little bit. And you got a little something. So volatility down. Volatility futures down 20 cents. And you got the old VIX, VIX, down 56 cents, down to 20.06. And yeah, man, I was sucked in. This weekend. I don't know what's worse, man. Red Sox second base or weekend Wall Street? I'm not sure, man. It's close. It's real close. But, man, Red Sox second base is real bad. And so maybe weekend Wall Street is just slightly above the Red Sox second base. But anyway, I'll see you guys in the house, man. I'm going to get to as many of you guys as I can here in a minute. Let's see. We got Gapper X in the house. Theta Traders in the house. Who else is in the house? Let's see. Brian Dowdy's in the house. Daniel Perkins in the house. David Gallimore, Rob Banks in the house. Sparky Dog in the house. Joel James in the house. Man, look at you guys. I appreciate you guys so much. And yeah, let's do it. So, okay, let's go ahead and let's see here. If we go to the portfolio here, you've got, oil down 450. And so oil down 450. You've got oil at about 69, which is good. And that's going to help out the inverted strangle quite a bit. 67, 73 are the strikes here on the inverted strangle. You know, looking at this, I'm like, all right, man. I mean, should we have even gone inverted? I'm like, man, maybe we should have done nothing. Like, maybe we should have done absolutely nothing, and that would have been much better for us. But again, you know, hindsight's 20/20. Like, hindsight's 20/20, and you know, everything is crystal clear in the rearview mirror. But instead, you know, making the adjustment at the time that we made it is probably the way to do it. So 67.73, and so with the oil strangle, inverted strangle, I should say, we're not going to do anything. Like, we're not going to do anything. You know, you've got the trade price at 725. That's what we've collected along the way. You've got the mark price at 1070, and so we're only down a few bucks. Like, now we're down 350. That's not bad. Like, that's not bad at all. And so from the standpoint of, you know, management and adjustments and things moving forward, you know, there's nothing to really do here. It's very much a sit and do nothing type of situation. We're not even stewing in filth anymore. Like, I'm not sure what this is, but it's not filth. I mean, filth was oil at 75. Filth was oil at 81. Like, oil at 69. Like, this is perfect for this strategy. Now we just have to sit tight and kind of let it cook. Now, we are getting close to 24 days to go And so we need to be a little bit careful with, holding this guy too close to expiration, carrying this guy, a little bit too close to, the final week when the gamma risk begins to tick up. And the final couple of weeks really. And so we're going to be mindful of that, of course. But now that we've finally done some incredible work, man, I've exerted so much mental energy on this position. I would like that mental energy investment to pay off at some point. And so we're going to sit tight and do nothing for now. Again, it's a super tiny position, very, very small position. And so only a one lot in MCL. So we have the luxury to do nothing, and we have the luxury to see if the market doesn't play out for us. So all right, so that is MCL. So now you've got let's see here. We've got MCL. What else do we want to do? Well, look at Wolf. Man, I totally lost track of Wolf on Friday, which is kind of amazing because we had an extra long show on Friday, but we had some tech issues like in the middle of the show. And so we had a little bit of an intermission like between kind of Act 1 and Act 2. And I had every intention of managing the Wolf position before we took it to expiration on Friday, but it didn't happen. And alas, Wolf is essentially going down to zero. Look at that. We bought the shares. We bought the shares for like 60 cents and a couple of pesos, I guess. Wait, no. That's what it's marking for. It's marking for, 60 cents in U.S. currency and like 16 or 17 pesos in Mexican currency. We bought the shares for $3 a share. It's Wolf, guys. I don't really know what I'm supposed to say. I don't really even know what we're supposed to do at this point. I think we're just going to close it down. And I think we're just going to be, completely, we're going to wipe our hands from Wolf. We're going to just completely be done with Wolf. Like, let's move on. And then we'll move on, hopefully greener pastures. So let's see if we can close this guy for, again, a little bit of U.S. currency, a little bit of Mexican currency, a little bit of a hybrid there. And let's see here. So there you go. Look at this. Man, they're coming to get us. Man, I thought these markets were international. Like, I thought we were doing things kind of, Globex style. Apparently not. Apparently, I have to trade this in only U.S. currency. However, it's marking for increments of a penny. So how interesting is that? Like, how interesting is that? So we've got increments of less than, am I crazy? Look at that. That's less than a penny, correct? We're basically, this is like looking at a Glenn Freiberger, Euro USD chart. This is like looking at some Danish kroner, man. We've got less than a penny, bid and ask, but I can't trade for less than a penny. And so that's a little bit of a disconnect, I think. Like, I feel like, if you're going to give me quotes in increments of less than a penny, then let me trade this guy in less than a penny. But maybe that's coming on down the chutes. Maybe we can start to, everything is becoming so interconnected with, Tasty FX and, obviously the regular platform and all that kind of stuff that maybe coming on down the chutes here pretty soon, we will be able to do a little bit of, let's do a little USD, let's do a little Danish kroner, and let's get this total transaction done and dusted. But I should probably close this pretty quickly because it's dropping pretty fast. Wolf is going to be pretty close to zero here pretty soon. So let me go ahead and let's see. Let's delete that. Let's edit the order. Let's do 60 cents, and that's obviously in an increment of a penny. And maybe we'll be done with it. All right, so they won't give me 60 cents. Let's see if they'll give me 59 cents. Well, they give me 59 cents. They should. It's below the bid, so they should. All right. Oh, look at that. Did you guys see that? Am I going crazy right now? Like, look at this. 59 cents, right? And we filled it at 59.77. That's crazy. So I went in with just straight USD because, Scott Sheridan and the boys, they were making me go in with straight USD. But I came out with a little USD and a little Danish kroner. Like, that's kind of nice. I don't know exactly how that's going to work out on the back end, but I'll let, the powers that be kind of figure that guy out for me. So Wolf is over and done with, never to be spoken of again on this show. I can assure you of that. I'm done with Wolf. And so I think one of y'all brought me some Wolf here on the show. And so, it obviously could have been a lot worse since it is basically a penny stock. And so that is a good thing. All right. So the other thing I want to do today, I want to get a couple new trades on because, if you look at the portfolio, we're pretty pretty sparse these days. Like, things are looking a little vacant these days. And so Bank of America, I think I'm done with Bank of America. I've been looking at this thing now for like 6 months, and we're basically, look at this. We're even on the trade, right? Like we are even. And we've got plenty of other opportunities for this long stock project that I wanted to engage in. We've got Starbucks. We're going to hold that guy forever. We've got Best Buy. We've got Nike that we're still going to be holding for quite some time. And so I'm like, all right, let's get rid of this Bank of America because this is some straight garbage. Like this is some absolute garbage. It's funny. I'm glancing over at the chat, and several of you guys mentioned that Weekend Wall Street is IG related. And so let me make my official statement right now. I think Weekend Wall Street is amazing. I think it's incredible. I think it allows me to look at the markets on Saturday. I think it allows me to look at the markets on Sunday. So that is my official response, not anything that I said earlier. And so Bank of America, let's be done with Bank of America. And so Bank of America, I think we're done with Bank of America. Let's go ahead and just put this guy in the it can join Wolf over at Greener Pastures. So 49 or 45, I should say, 45.90. And so boom, there you go. So we're out of Bank of America. And so the Bank of America project is done, probably never to be spoken of again on this show. But one thing that is interesting is if you go to, if I go to the activity page and I just type in Bank of America, right? We type in Bank of America. I go to, start of the year, January 1. Oh, did I do this in December? I guess I did. Yeah, so there you go. We just did 2 trades, right? We did 12.13, and here we are, 6.23. So 6 months, was that 6 months, 7 months? 6 months, I think. We made 29 cents on the trade. Okay. So we made money. We made 29 cents, right? This really highlights, though, long stock is a great position. Long stock is an amazing position. Like long stock, long term, you'll get your 8, 9, 10%. Like it's all good to go. Everybody's happy. Nobody gets hurt really, except for obviously the 20 to 30% drops that you have to stew in the filth. And then you just kind of make your way over to the other side. Okay. Long stock, though, is an amazing trade long term. Nobody's going to argue that. Tom might argue that. Tony might argue that. Others might argue that, but I'm not going to argue that because I think it is a great investment long term. However, it is very, very, very one-dimensional. It's very one-dimensional. Now, I have to be fair, of course. Maybe it's not one-dimensional. Maybe it's like 1.5 dimensional or 1 3/4 dimensional because you are picking up dividends, and we did get some dividends from Bank of America for the 6 months that we held. I think we got 1 or 2 dividends. We'll take a look at the history tab and kind of get a final tally on that. You can dollar cost average if you are in long stock positions. We didn't do that here, but you can certainly do that. So there are some other things you can do. But man, look at all the things we've done in Starbucks. I'm not going to talk about that right now because we've talked about that just recently, in some detail. Look at everything we've done in Starbucks. Look at everything we've done in, even Nike and Best Buy. You just have so many more alternatives available to you if you want to have a core long stock position that you then do other things around it. You're selling calls. Maybe you're selling even calls and puts. You're doing kind of covered strangles. I haven't done one of those in a really, really long time. Maybe we should do one of those. I don't know, but you're so one-dimensional with long stock. You just have to understand that's what you're signing up for. You just have to understand that if you buy a stock and it doesn't go anywhere, there's not very much you can do. Because if you buy a stock and it doesn't go anywhere, that's not really the best opportunity to dollar cost average. Like dollar cost averaging is really more well suited for when the stock is actually dropping to improve the overall basis, improve the average entry price, and then, benefit more when the stock recovers and rebounds. When the stock is going nowhere, you're just kind of sitting on your hands. Now you're collecting some dividends. So again, to be fair, Bank of America, let me go to the history tab here. If I go to Bank of America and, if I go to, it's going to be, well, let's see here. If I do, let me go since the very beginning. So December 13th. No, let's just look at dividends. So there you go. I haven't gotten any Bank of America dividends? Really? I thought Bank of America paid a dividend. No? Wait a minute. Am I missing something? Yeah, they definitely pay a dividend. Look at that. Why isn't it showing up? That's so weird. I don't know. Man, maybe Tom just took my dividends. Now that would make some sense. So I don't know why it's not showing up. Usually it shows up in the history tab here, but it's not showing up. And I can't really explain why that is the case. But I think we looked at this before and it showed up. So for whatever reason, it's not showing up today. And so I would just imagine that, Tom scooped it up. Tony scooped it up. They had to finance the Europe trip somehow, right? And so I would imagine they're just taking my Bank of America dividends, my Starbucks dividends, and then, getting some croissants for themselves while they are abroad with all that cash flow. But anyway, it still doesn't change the fact that when you buy stock, you're one-dimensional. So just keep in mind that that's what you're signing up for. So it can be a little bit challenging. So that is Bank of America. That is oil. Obviously, we talked about oil, and that is also Wolf. The Wolf project is over and done, and that's going to be that. So now what I want to do is let's do a couple of trades. So I want to do GDXJ because we've got a lot of earnings coming up. Like if I go to the watch list here. I go to Tasty Default. I mean, you're looking at a bunch of individual names. You can see if you sort by IV rank, which I did here, which I talked about with Liz and Jenny here this morning on the Skinny on Options. That was a great segment. Man, it was like a breath of fresh air, honestly. Like I knew that because I knew the schedule. I knew Tom and Tony were abroad and they're doing some amazing work, obviously, in London, Milan, and those might be the only two main stops. I'm not sure if there are some other like auxiliary stops, but they've got the events. I think Milan happened earlier today in the U.S., which was the evening for Europe, which I can't wait to hear how it went. I heard nothing but great things about the previous event just a few days ago, and so I'm sure that they're doing amazing. But man, this morning on the show. Like I am used to just having to be, just to overcome all of Tom's objections. It reminds me when I used to sell windows. Like some of you might know that in a former life as like an 18-year-old, just young whippersnapper Jay Schultz, I used to sell windows. That was one of my summer jobs, basically between high school and college. And it was quite an experience, man. It was quite an experience. And for some of you that have been to some of my earlier live events, I share some stories about selling windows, and it's a good time and whatever. But, you always had to overcome objections. Like it was full commission. Like I had to overcome all of your objections. Like, you are worried about the cost. I had a rebuttal for that. Like your wife or your husband's not available. I had a rebuttal for that. I had a rebuttal for everything. When I show up on a Monday morning with Tom sitting in the captain's chair, I'm basically ready to overcome some objections. And this morning, man, it was so smooth. It was smooth as silk. Man, it was smoother than Skippy, man. It was unbelievable being on the show with Liz and Jenny. But anyway, I digress. So if we sort by IV rank, though, you can see you've got a lot of individual names here. You got Netflix over here. You've got Chipotle, IBM over here. Right? You've got, Goldman Sachs, Citigroup over here. Right? You got, just basically a lot of the individual names. We're kind of getting into earnings season. I mean, July is going to be next week. How crazy is that? July of 2025 is next week. Not 2020. Not 2022, not 2019, which is basically what it feels like. July of 2025 is next week. That's crazy. That's super crazy. So what I'm going to do here today is let's get into a couple of indexes because I want to get a little bit more theta working for me since the portfolio is looking so sparse. And so you can see here that I've already been doing a little bit of legwork before the show. A little GDXJ, a little EWW. And so GDXJ, EWW, these are going to give us a little bit of exposure to gold, a little bit of exposure to the international markets with the Mexican ETF here. And I kind of think, I don't know that we need to overthink this, guys. I think we go into GDXJ. We go into August with 53 days to go. And let's just sell an expected move strangle, right? Let's just use the copper strip in the center, basically anchor this guy on the endpoints of the expected move. So we're selling a 61 put, which will be over here. We're going to sell, looks like about a 76 call, which will be over here. It's only a $68 stock, so the buying power here is going to be very, very modest and manageable. I'm going to say it's going to be about $1,000 or so. So you're going to be able to fit this into a lot of different account sizes. I mean, you could fit this in if you've got over 10,000. You can fit this in rather comfortably. Even if you have 10,000, well, hold on. Let me see what the actual buying power is before I start spouting off. It's always good to have all the facts and all the information before you start spouting off, which I didn't do a great job of with today's introduction. But buying power effect, only $600. Okay, so it's actually better than I thought. So that means if you've got 10 grand, you can fit this in your account, no problem. I mean, you're going to be at almost 7% of your account, and you're going to be good to go. And so for the position here, I mean, this is a very small position. This is just over 1% or just over 2%, I should say, of our account. 267 on the credit, just playing, gold to exist, just playing for the miners here to just kind of, just carry on, man. Just keep calm and carry on, and that would be great for this strangle. So let's go in at 267. This is a tasty classic strategy. You don't really need to read the tea leaves too closely. You can pretty much just go expected move strangle, and IV rank is high, and then you're kind of good to go. So let's see. If I go in at 265, 263. Boom. All right, got filled at 263. All right, so there you go. The other trade I wanted to do was EWW. Now, for this one, similarly, you have an IV rank that's looking pretty good, 45. And so that's good. Let's go in here, though. I want to mix it up a little bit. I want to kind of shock the muscle a little bit. Did some delts and arms this morning, which, you're not supposed to do that on a Monday. Like, I understand. Did delts and arms this morning. I'm slated for an off day tomorrow, off day on Tuesday. Like, that doesn't make any sense. It's supposed to be chest on Monday, back on Tuesday, legs on Wednesday, which obviously dovetails into an off day on Wednesday. And so we're not doing that this week. We got delts and arms today, which is already done. Tomorrow will be an off day, and then Wednesday. Am I doing chest and back on Wednesday? I think I am. But anyway, if we go into EWW, I'm thinking, man, let's go in here. You got the stock at almost 58. Let's do a straddle. Man, I haven't done a straddle in a long time. Let's sell the 58 straddle. So we're selling, the 58 put. We're selling, the 58 call. The markets are a little bit wide in here. In fact, they're actually kind of a lot a bit wide. Wow, 50 cents wide. That's very wide. Let's see if we have a hard time getting filled. It still may not be too bad to get filled, so I'll still give it a shot. But if I have to chase this guy around the block, like I might in MNQ position, I'm not going to do that because MNQ, we know the liquidity in MNQ is quite craptacular. And so if I'm running into a similar situation here, I'll just have to wait. And I just kind of maybe can I use my Mexican pesos on this trade that we just got from the Wolf close? That would be pretty sweet if I could. 420 on the mid price. Let's see if we get filled. All right, no takers at 420. That's okay. I'll try. Let me try 415. The mid price is 417. I should get filled. No takers. Okay, so you've got okay, so now 410 is your mid price, but the markets are tightening up. Like I kind of have an eye on what's happening up here. Like you can see now we're only 30 cents wide on the put side, still 40 cents wide on the call side. And so I actually feel better about going in now. I'll go in at like 407. I'll probably get filled. But I didn't get filled. Man, this thing, okay, I'm not chasing this guy. I'll leave it on for the rest of the show. And if I don't get filled, then I'll cancel it. Or I'll most likely forget about it and then get filled after the show. And then we'll have to talk about it tomorrow. But anyway, let's go to you guys. Let me see where you guys are at. Man, I appreciate you guys so much. Where are you guys at? Ross is in the house, away from the numbers in the house. Man, look at you guys. Man, look at you guys. The degenerate traders in the house. Man, let me surprise and delight somebody in the middle. Let's see. I see. Yeah, I see you guys. I see Jay's 2 stats. I see Theta Trader helping me out. Yes, Weekend Wall Street, love it. Use it every weekend. That's my official stance. I think it's an amazing product. And so let's see. Where are we at though to surprise and delight somebody in the middle? Here we go. This is just Joel James. I see Joel James says, Dr. Jim, oil's down. What is even happening? I have no idea. Maybe we do legs 5 days a week since we are in upside down world. Well, no, legs 5 days a week. Legs every day would be right side up world. Like you and me, like this delts and arms on Monday garbage, like this, chest and back on Wednesday garbage. We need to be doing legs every day. We need to be squats every day, leg presses every day, and not just any old squat. We need to be doing Bulgarian split squats every single day, right? So we can just hate our lives 24/7, day in and day out. That will be a right side up world. And I'll tell you what though, man, like our rectus femoris would be looking pretty good. Pretty good indeed. And so, but I appreciate you there, Joel. Appreciate you very much. And so let's see, Brian Dowdy's in the house. What's going on there, Brian? Brian says, hey, Dr. J, I sold the put in Google today. What's going on there, Brian? All right, so let's take a look at Google. So Google, 164. So, okay, you've got Google down $3. It's funny. I'm having, Google split a bunch. This was like maybe a little over a year ago now. Google was like a $2,000 or $2,500 stock. And so I still kind of have like muscle memory when I see like somebody selling a put in Google or selling a put in like Chipotle. I'm like, ooh, man, must be dealing with a Shooter McGavin because those are some $1,000 stocks. But now that the still stocks have split, like you can very easily, sneak into a short put in Google, short put in Chipotle, whatever. I'm able to do it pretty easily here in this account. We've only got 30,000 in this account. And so I like it there, Brian. The only thing I don't like, it's down. You've got the IV rank is looking pretty decent. If I go in to sell a put in Google, I'm just going to pick one kind of sight unseen. You go into August, you go to the 30 delta, you're selling a 155 put. I mean, everything looks good. I mean, the buying power is only $2,300. So for me, that's about 7.5% of the account or thereabouts. So if you want to do this trade, make sure you have enough capital. I'd want to have about 25, 30,000 or more. You start getting around under 25,000, now you're getting close to 10% of your account. Sometimes you can push the envelope, in my opinion, and do maybe 10%. But if you're going to do that, I probably wouldn't do it in an individual stock, and I definitely wouldn't do it in an individual stock with earnings coming up. Can you do it in like an index? Sure. I think that you could maybe potentially kind of, push the boundaries there. But I'm not going to do it here, though, simply because, as I just alluded to a second ago, they do have earnings coming up on July 22nd. And so I personally, we're kind of in that weird spot now, right? Where you're in like the end of June, you've got July earnings coming up. It's difficult to find individual stocks that don't have earnings coming up in like 2 to 3 to 4 weeks, right? And so that makes it problematic for, getting a position on where you're not going to have to deal with kind of the muddying up of the waters of the volatility expansion going into the earnings day. Now, some traders feel like, man, the theta decay still overwhelms the volatility expansion. And I think the Tasty research has shown that to be the case. And so there's some truth there, of course. But again, the way I look at this, and again, take it or leave it. If you leave it, I will not take it personally. I will not take it personally at all. The way I look at it, though, this is already a really hard game. This is already a really, really difficult endeavor. Do we really want to make it more challenging? Do we really want to make this more difficult on ourselves by kind of voluntarily getting into a trade where it's going to be a little bit of an uphill battle? Like it's going to be a little bit of, just tough sledding as the volatility begins to creep up. You get closer and closer to the earnings day there in Google. And so I don't personally like to get into trades when it's 2, 3, 4, 5 weeks away. But other traders might see that as an opportunity. So I'm going to pass on that, Brian. But of course, you know that I wish you good luck, my friend. Unless, of course, you are the one that brought me that wolf trade, then I hope Google takes you down so that we can be even. Daniel Perkins in the house, but I don't think it was you, Brian. So we're good to go. Daniel Perkins, hey Dr. Jim, please pour out a sip for me to commiserate. Hims what was a solid month. Yes, Hims. I don't know what the news was on there. Yeah, down 30%, man. That's a pretty big drop. That is a big, big, big drop. So if we bring up a chart of Hims, yeah, that's some serious stuff, man. That's some really, really, really serious stuff. It's tricky, man. And a lot of people got hurt on this. For some reason, it's obviously been, this stock has been in play as of late. And so it's been in play. There's been lots of opportunity in Hims. I haven't traded it for some reason. I don't really have a good reason why. It's just sometimes just because I'm so busy, like with the positions I have on the portfolio, and then obviously connecting with you all. I don't have a chance to trade every hot new thing that might be happening and every shiny object that's out there. And Hims is kind of one of the new shiny objects there on the horizon. But I will just say this. So this could apply to you, Daniel. It could apply to anyone else that might be in a similar situation. If you feel like, because you kind of mentioned this, Daniel, in your comments, so I think maybe I might be able to offer a bit of insight that could be helpful for you, which is not that doesn't normally happen here on the show. So if you find that you're getting it, you're making a lot of progress, you're gaining a lot of momentum, and then all of a sudden you have individual stocks that you have a Hims situation, you have a GameStop from 4 years ago situation, you have whatever else, a Wolf situation, whatever, where it really kind of eats up a lot of your progress for a given month, a given week, a given quarter, whatever it might be, right? On the one hand, you have to understand that is what we're signing up for to some degree. You have to understand, I know you do understand this, Daniel, so I'm not speaking to you individually, but basically just, the royal you. Again, you've got to know what you're signing up for. If you're going to be managing winners quickly, if you're going to be playing the high probability game, you have to understand that your losers are going to be quite large at times. That is the game that you're playing. That is the game that you're signing up for. So that's okay. But there is one way to mitigate this potentially significantly, and it's the following. If you find, man, I just really can't get any progress going with these individual stocks because, a Hims happens, a GameStop happens, whatever. I would encourage you for some fairly significant amount of time. I'd give it at least a couple months, maybe longer. I would only trade indexes. So that's going to be SPY, QQQ, IWM, TLT, GLD, EWW, right? FXI, China, whatever. You could trade the international indexes. That's totally fine too. But the domestic indexes are going to give you the smoothest ride. They're going to give you the fewest number of these type of situations. And in fact, I mean, you're not going to see the market down 31% in a day. Now, can you? Yes. Theoretically, can it happen? Yes. Has it happened before? I think Black Monday was like around 25 or 30%. But you're talking about, so theoretically, I have to tell you that, this can happen. And officially, I have to tell you that, again, IG, Weekend Wall Street, love it. But also, officially, I have to tell you, this can happen, okay? Is it likely to happen? And should you be trading for it? No. Should you be planning for this? No. Like, this is not something that you should be like, man, if the market drops 30% tomorrow, like, I'm wiped out. Like, it's over. Like, a lot of people are going to be in that situation. And even still, with capital allocation, individual position size, you can kind of weather that storm to some degree, potentially. Depends on how much you're leveraged. But again, we're talking about one observation in, I don't know how many days there have been in the stock market over the last 120 years or whatever, but we're talking, tens of thousands of days at this point, I would think. And so I don't know that that's, something that you can trade for, something that you can plan for. I think you'll leave a ton of money on the table if you do, because it's like, man, I'm guarding against that 30% down day in SPY. And it's like, yeah, if that happens, then you're going to be the smartest person in the room. But all those other times that it doesn't happen, and every day it doesn't happen, you're leaving opportunity on the table. And so to me, it's just going to be a much smoother ride. But again, officially, I have to tell you that Weekend Wall Street, it's been my favorite from day one. And also B, this can happen. This theoretically can happen. So hopefully that helps, though, Daniel Perkins. And so let's see. Oh, Brian Dowdy said he did the 150 strike. Yeah, I like it. I like it. I just don't like the fact that it has earnings coming up. Rancher's in the house. What's going on there, Rancher? David Galmore's in the house. Dr. Jim, I saw your show with Liz and Jenny this morning. What's going on there, David Gallimore? Great show this morning. I have 13 SPY beta-weighted deltas. Is that too many? I have no idea. And I know that there's some sarcasm baked in your comment because we talked about that this morning. I have no idea. Now, if I remember, you're dealing with a Shooter McGavin size account. I think you have several $100,000, if I'm not mistaken. And I think you've shared that publicly on this stream. So if you haven't, then my apologies. And you might have 10,000 or 300,000 or a few million. I have no idea. But let's just say hypothetically. You have a few $100,000. If that's the case, then 13 SPY beta with delta, as you know, of course, because I think you're trolling me with this question, but it's a pretty good troll. It's right around the B- level, I would say, which is what we come to expect. That's nothing. That's delta neutral. That is a zero position. You have no directional bias whatsoever. And so again, it's all account size related. Like beta weighted delta is all based on your account size. It's all based on your account size. And so, if you've got 30 grand, right? 100 delta, beta weighted delta is kind of a decent position. That's like 2x leverage to the SPY, depending on which side you're on, bullish or bearish, whatever, but it's about 2x leverage, right? But if you've got, 300,000 and you've got 100 beta weighted delta, it's nothing. It's nothing. You have no directional bias at that point because of your account size. And so hopefully that helps there, David. And I appreciate the troll, as I always do. So Rob Banks in the house. Here we go. This is it. If you're new to the show, this is all you need. If you're listening to the show, this is all you need. If you're multitasking right now, come back to me. This is the only thing you need. Rob Banks 100% nailed it. He says, good day, Dr. J. What's going on there, Rob Banks? He says, great job this morning. I appreciate you. But then he gives us the pathway forward through the forest to success. The best decision tree is A, watch Tom. B, trade the opposite. I love it. 3, deposit profits. It's that simple, guys. It's that simple. All you need to do is do the opposite of whatever Tom does. And then as a little icing on the cake, if that's not quite meeting your financial needs, just do the opposite of what I do on this show, and then you will have everything that you could ever want out of the markets. So I appreciate you there, Rob Banks. Thank you very much. Matt Johnson, if I have a lot of bullish positions and I want to balance portfolio delta, is it a bad idea to use a large position in an index longer term, like a longer term diagonal, versus having many smaller near term positions? No, not necessarily. This is a very, very good question. So if your deltas are kind of out of whack, right, which is kind of what you're saying, and you want to neutralize them, and you're trying to figure out, should I neutralize my deltas with in one fell swoop with one position, or should I neutralize my deltas with a number of positions? Okay, here's a couple of things to think about. Number one, if volatility is high And there's lots of opportunity in the market, which is kind of the case right now. I mean, the VIX is still over 20, even with, the volatility crush here today. Volatility futures, I'm looking at them right now, they're over 21. And so you can see the volatility futures are, right here. So, I mean, we're above historical norms at this point. I would probably, in a situation like this one, I would probably lean more towards a greater number of trades because you have more opportunity just across the board. Okay, but if you're getting into like earnings season, which we are right now, now all of a sudden that's a bit of a plot twist. Like now all of a sudden, things kind of thicken up a little bit in terms of understanding what's happening around me. So there may not be as many opportunities as I would have thought kind of otherwise there. So that may be kind of a supporting point for just the one big position. I think the bigger thing is, do you want to manage something that's longer term? Because that's a different mindset. Like even as we've seen with, I know I closed Bank of America today, but Bank of America, Starbucks, like if you've been following the show this year, as I've, commented on these positions, it's a very different mindset. Very different mindset from like an 45 out of 21. And so you just have to, again, understand what you're signing up for. Know that, okay, I'm playing kind of the longer game with this. It's a diagonal. It probably would be more like a poor man's covered put at that point, I think. So it's like, all right, are you comfortable managing those types of positions? If the answer is yes, then that's another supporting point to do it that way. If the answer is no, maybe go a different route. But then you could also counter with, well, wait a minute, Jim. What if I want to build up my experience with this so the answer eventually becomes yes? I've got to start somewhere. It's like, yeah, that's a fair point. I don't really have a problem with that. My knee-jerk reaction is I don't have a problem with that. My knee-jerk reaction is you come in one day, your deltas are not where you want them to be. You kind of want to restore them back to their factory settings. You could just do it in one fell swoop. I don't really have an issue with that. I guess another thing to consider would be how many positions do you have in your portfolio right now? If you only have a couple, then I would definitely want to get a few more. I wouldn't probably want to do just one fell swoop. But if you have 10 or 15 already, I would say the average portfolio size based on my conversations with a lot of traders is somewhere between 8 and 15, I would say. So a lot of traders have a lot more than that, of course, and there are a number of traders that have fewer than that. But I'm going to say this is going to be kind of where the average Tasty trader kind of falls, somewhere between 8 and 15. If you're somewhere in there, then you could go one fell swoop. If you're only sitting on like 2 or 3, I'd probably want to build that up a little bit more. So these are a couple of things to think about there, Matt. Hopefully that helps you make a good decision on your end. Sparky Dog says, greetings, Doc. It's hot, man. I don't know. I can't remember if you're in Florida or not, but yes, it is. It's warming up, and it's only going to get warmer here in the coming weeks and months. Sam L's in the house. Dr. Jim's in the house. What's going on there, Sam L? He says, Doc, Hims dropped $22. I guess the GLP-1 Wegovy. Oh, was that Hims? I've heard a lot of commercials. So when I listen to when I'm training in my garage, I listen to YouTube music as my go-to on my laptop. I don't have like the paid subscription or whatever. We have the Apple Music plan on our phones. And so I personally like listening to YouTube music on my laptop, and I don't really mind the commercials. It's not that big of a deal. But man, I hear the Wegovy commercial. It's got to be 15 times a day. It's got to be. And I'm like, are they trying to tell me something? Like maybe they are. Like maybe I should be listening to them. Actually, is a better observation. But Sam L says, are they doing their job? What's the play here? And while we're at it, what's your take on GLP-1s for fat loss? Okay, I don't know as far as Hims is concerned. I don't know. I would have to fade this move personally. Just being a short-term contrarian, that would be my play. Again, I don't really know much about Hims. I know they have a lot of health products. They've got the GLP-1s, they've got hair stuff, they've got other stuff. They've got a lot of stuff for, overall health or whatever. And so, I would just say as a short-term contrarian, I would probably fade this move. Personally, it looks pretty overdone. Plus, the gap fill bros, they'll all be on your side. And so that's good, obviously. Always good to have a good gap fill bro kind of in the bunker with you. And so, Hims, that's probably how I would play it. As far as GLP-1s, by and large, personally, I think they're kind of I don't want to say a gimmick because they're helping a lot of people, but you can't replace just hard work, and you can't replace just getting your diet right and getting your training on point. So it's like, hey, if you want to get your diet right and your training on point and you want to go for that, I don't know, I'd maybe go for it. I don't know. I'm still concerned about the health risks. I'm still concerned about the longer term things that we just don't know enough about it yet. And so I personally have no interest in taking that myself. And so that's my take. Take it or leave it. I'd probably leave that one. But let's see if I get to one more. Man, we're already done with the show. I got spoiled last week with the extra long shows. Man, that was real fast. Man, that was super fast. But Emmett Morrison is in the house. Hey there, Dr. Jim. 2 questions. Hopefully I can give you some quick answers. What's going on with MCL? Huge sell-off starting at 11:30 Central. And when putting on a strangle, do you prefer to put them on based on delta or price? Great question. And I think I can answer both these quickly. Number one, I have no idea what's going on with oil. No idea. This is another great example. If you had the information beforehand, I'm not sure you can make money. I really genuinely feel that way. Because again, it looked like, over the weekend, I thought for sure the market was going to be down. Well, the market, I wasn't so sure. I thought it'd be down a little bit, but I thought for sure 2 slam dunks, 2 absolute slam dunks, gold up a bunch, oil up a bunch. Neither one of those things happened. They happened momentarily, like they happened on the open. So I guess, if you were playing those positions, you had a chance to get out on the open of, Sunday futures last night, but it did not last at all. Gold was down significantly this morning. Now oil's getting absolutely crushed. And so I don't know. I have no idea. But strangle-wise, I don't typically use delta or price. I just use the expected move. And then I probably adjust based on price. I don't typically look at delta too often because if it is going to be symmetric, I know the delta is going to be around 0. So I don't really need to look at that too closely. But guys, I got to go. I can't believe the show's over. That's so fast. But you guys got to come back tomorrow and we will pick up where we left off tomorrow. I promise. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically instantaneously, I was hooked. I'd always seen all the stuff on Tastylive with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tastylive to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Everybody, you got Tesla rolling out finally their driverless taxis. We'll see what, obviously you can see what the stock thinks of it. Stock was kind of held down prior to options expiration, but now it's making a strong move. So we'll talk a little bit about that. Novo is taking a hit today. Of course, they had that partnership with HIMS. Remember that? It was just like 2 months ago, and all of a sudden it's dissolved. We'll talk about what's going on there. And finally, there was possibly a huge mega deal in the finance space that still may come to fruition. So we'll talk about those three things and more. Obviously, there's a lot going on in the Middle East that seems to be affecting, well, maybe just one thing more than anything. And there's a couple of earnings coming out and a couple of, we're in the midst of a couple of weird weeks here, right? Some time off last week, and then, of course, next week will be a little shortened week as well. So we'll talk about everything that's going on. But first, welcome to the most dangerous show on the Tastylive Network. Folks, it's Engineering the Trade, and I am your host, Jamal Chandler. Back in the seat, folks. I was out for a week. It felt like longer, man. But, well, you know, there's always there's, of course, the Juneteenth holiday, which was last Thursday. There's no Engineering the Trade on Wednesdays, and I was out of town Monday and Tuesday, so I just figured I'd make it a whole week. I was out of town. My son had a basketball tournament in Wisconsin. It's a pretty big one. It's actually a basketball camp that they run every year, and it's basically 3 days of well, they do skill work, and then they do a lot of games in the afternoon. And so he was on the best team. He was actually, for his age group, it's 7th and 8th grade. His team hadn't lost a game the first 2 days. They were undefeated. So they do like a pool play type deal. And it's a nice, he had a nice little squad, man. He had a nice little squad, and they were just balling out. And then once they got to like the playoffs, they lost. They won their first game. They lost their second game. And then 2 kids kind of got hurt in the game. Nothing serious, but enough that they weren't going to be able to play. And it was challenging, you know, because that's when you got to like go into your parental bag. You know what I mean? Like when he starts asking me questions like, well, dang, I should have passed to this guy. I didn't want to pass to this guy. You can't. I'm like, look, man, you just got to learn how to play with what you got. You know what I mean? Like case in point. Look at last night. I don't know how many of you watched the NBA, but if you didn't, you did yourself a disservice. This series was pretty good. I think a lot of people weren't really sure how this Indianapolis and OKC series was going to go. Great series, a lot of ups and downs, backs and forths, and it ended up, again, at a Game 7. Heartbreaking situation yesterday when you see what happened to Tyrese Halliburton. Another person, man. Ready for the crazy stat of the day? Tyrese Halliburton, Jason Tatum, and Dame in Milwaukee, all 3 of them tore their Achilles. All 3 wear the number 0. Kind of weird, right? Kind of weird. No coincidence in actually how they happened. Just kind of weird. But it sucks to see that. Look, you feel bad for those guys. At the same time, they'll be okay. They got a lot of money. And they got a lot of time to rehab. They'll be okay. But it sucks if you're an Indy fan because you obviously wanted to at least see if your team at full strength could go up and beat OKC in OKC. And for a little bit, it looked like they were, man. I tell you, it was everything that you want in the Game 7. It was a lot of early back and forth. And then Tyrese goes down. And I'm not going to lie. I canceled all my Indianapolis bets. I mean, I'm not going to lie. I did. I mean, come on. What'd you expect, right? It's just like if you hear some bad news right now, some more nuclear strikes, are you going to go out and buy spoos this second? No, you're going to wait. You're definitely going to wait for it to drop at the very least, because that's the kind of market that we're in. And so, like even in the NBA, I mean, I thought there was completely over and it was going to be a blowout from there on out, but no, it was not. Indianapolis held up their end of the bargain. They were in there for a little bit, and they just didn't have enough to get it over the hump at the end. So. Kind of wild. But yeah, hey, man, I was out for a week. It was great, kind of time to sort of reflect and just like not focus on markets. I barely looked at it as much as I could. I love doing that when I'm out. It gives me the opportunity to sort of reset, refocus, and come into the market with fresh eyes. As a matter of fact, when I saw a lot of this news, and again, we can pull up slides, but I got to say, I didn't put it on the slide yet because there's still a lot to come with this current situation. I think there's a lot at play. There's a lot going on, and I'll be honest with you. When you have major geopolitical stuff like this, I don't necessarily follow everything that's going on. I like to wait for all the news to come out, which is a hard thing to do because this is obviously moving around a lot at real time, and there's a lot of changes happening. And so you'll see on these 3 bullet points, none of that has to do with what's going on with Iran and Israel. Honestly, there's really only one thing that I feel like is mostly moving as a result of it, and I'll get to that in a little bit. But Tesla. They'd been talking about this, like the 12th or the 13th were the preliminary rollouts, and then they fully, I think, well, not fully, but maybe about 20 or so cars, handful of cars they rolled out this weekend, small area of Austin, Texas, and they picked certain people, whether it was retail investors, they said, or some of them were sort of influencers so that they could get the word of mouth out there and get people to talk about it. And I guess there were largely good experiences. Again, this is something that you'll see over time. Of course, there's a driver in the side seat. I should say a person in the passenger seat, not a driver, along with the sort of rider in the back seat. And when you look at the videos, it's like, man, the future is here. We're here. We're here. We're actually in a situation where I always liken it to one of my favorite movies, Total Recall, where basically you have a non-human driver in the front seat. If you have that at all, in this case, I think they're going to not have anybody. But it's what it is, man. And maybe that's how people are going to be getting around sooner or later. It's kind of wild when you see it, but wild stuff. Stock took off this morning, was up nearly 10% at one point in time. Stock has been sort of battling back and forth. I don't know if this was like sort of OPEX flows that were holding it down and at the end of the month, because even on Friday, I saw the stock kind of fell some, but then it did bounce back kind of fairly strongly. And then, of course, you just see the move this morning. So where Tesla goes next is anybody's guess. Earnings are coming up in August. Of course, for a lot of us, the July window is coming to a close, right? As far as trading and selling options, it's 25 days to go. By the end of this week, you're going to be, or throughout this week, you're going to be rolling your July stuff to August more than likely, because July is only like 24 days, 25 days, right? We're getting on that 21 day. And so I'm bringing this up because Tesla, I could see this going another big move. I don't know if it goes another 10%, let's just say, to the upside. And this is what I'm waiting for. No position right now. Matter of fact, I cleaned up all my Tesla positions that I had. If Tesla makes another big move to the upside, I think we'll get vol in IVRs in the 40s, and at that point, I'll be looking to sell something. But for now, I'm just waiting. I'm not going to touch it. Nothing to do. Novo Nordisk. Remember they made that deal with a lot of telehealth companies to try to get more sales for Wegovy. This was just back in April. They were like, we're going to work with a lot of the telehealth companies. So it was Hims and, some of those other ones. But Hims obviously was the bigger one, bigger name, also a public company. Well, they just didn't like the way that they were doing some large scale marketing with these type of drugs. As a matter of fact, they were compounding it with sort of the lesser versions of weight loss drugs, and the Novo people are pissed off. They canceled the deal. They got rid of it. You could see the reaction in both stocks, and Novo is down like 7%, but Hims was down like 20+% at one point in time. I jumped in and I got short a put. I did see some other news floating around a little bit, like some investigation. I don't know if that's the case. I just sort of saw the stock down 20+%. I thought that was a pretty big move. Took the opportunity to sell a put. It's not too expensive, especially with a margin account. We'll see how it plays out. I'm prepared to dive in for a little bit more, if necessary, but I don't know. One is enough for now. I really like my cash levels right now. So I'm at about 50% cash, basically 50% of the market, 50% cash. I kind of like that right now. This market, I'll tell you, this whole year, the way we've navigated it, you've had to hold in and sit in some positions for sometimes a little bit longer than you've wanted in this market this year. And I think that just having the ability to have some cash readily available is going to help big time. So this is another one of those situations I am doing, I'm trying to find a few trades here and there, but also just trying to, I've talked about this cash levels for the last few weeks, I think, for the last month. I just think, coming out of what we came through in May, it was like, okay, the nice bounce back was cool, but what we had in April was rough, and then the bounce back in May was cool, but now it's like, okay, where are we going to go from here is anybody's guess. And so I'm trying to find situations where I can wait for a move to happen and then act a la like Hims, right? Big down move, I'm going to react. I was prepared to react if markets had dropped big after all the news we've been hearing over the weekend about Israel, Iran. If markets had dropped, I was prepared to act then, but I didn't want to see. Let me rephrase that. I would have made a move if we were down like 3 or 4%. I would have made a move then. Something big, right? 1.5% just is not cutting it these days, I think, in this market where things are fairly volatile. And then the last thing here, Bank of New York Mellon, they approached Northern Trust about a merger. Now, these are, these fiduciary banks, they are massive, and this would be a huge deal in the financial services. This just one to keep an eye out on if it's gonna, make sense. You wonder how the stocks, what the people think, because when you look at whether or not it makes sense, BNY stock was actually down, and so that tells you like either they're going to be mostly the acquirer or something like that, which again that would be why the stock is down. When Northern Trust stock was up, so either they're acquiring Northern Trust, which I'm not sure if that's the case. So I think they're going to merge, at least a merge of equals. But it would be interesting to see how their stocks react and what would it mean for the whole industry. So, excuse me, didn't come to fruition over the weekend, but still something we need to keep an eye on. Leftovers. Who are the world's largest oil producers? Let's move to the next slide. I mean, everybody's talking about it right now. Everybody wants to know what the deal is. Theta Trader. What's more dangerous than an Iranian bunker? It's Jamal. That's right, baby. That's right. You better believe it. Yeah, I know. I'm sure Frankie, man, it was one. I know it's going to cost him a year, man. He's a young dude, though. And you know what? The best thing about it for him is he has a big contract. I was wondering, and this is really what I was really wondering about this, because what happens in football is when you don't have a big deal yet, you are guaranteed that you're going to be playing, right? You're playing for your big deal. And so you're going to play through an injury like he just had. Clearly, he had sort of something going on with his lower calf area, which, again, you got to understand, once you have something going on with your lower calf area, you overwork it, eventually you can pop that Achilles. And that's kind of, the way it goes. Whoa, what? So I was glad to know that actually he already has a big deal, and even though he was hurt, at least he has a big deal to at least sit back at home. And I mean, when the guy ultimately thinks back through it all, it's gonna be like, man, this sucks. I was trying to be there for my team. He did everything he possibly could. He even played in a game where he probably shouldn't. Regular season, he wouldn't have played the last 2 games for sure, but he needed to be in them, and he was there for his squad. And yeah, he's not going to play for a year, and that absolutely sucks. But his 40 to 50 million per year should come for him pretty well. You know what I'm saying? Lots of money. Speaking of lots of money, this is a chart of the world's largest producers of petroleum and production in petroleum and other liquids in 2024. This is in millions of barrels per day. So U.S. is number 1, right? They also comprise 22% of the world's total. As you can see here, the world's total is 102,810 million barrels. And the United States has 22% of that. Saudi Arabia has 10%, and Russia has 10%. So when you hear all the time about different things going on with oil and who has the most, these are the main 3 countries that you need to really be paying attention to: U.S., Saudi Arabia, and Russia. Honestly, that's really it. Doesn't really matter. I mean, even when this situation, when you talk about Iraq and Iran are kind of low on the list here, right? So just keep that in mind. Canada's number 4. Which, again, kind of was some of the stuff where we were beefing as far as tariffs and all that. Oil obviously was encompassed in that. I mean, 6% is not nothing. China as well. I mean, some obviously, certain names just continue to show up. And this gets to the discussion about tariffs and all that stuff too, right? China is number 5 on the list, and they are 5%. Iran is also around 5% it's number 6 on the list. Iraq is number 7. 4% of the world's share. And then Brazil is number 8 on the list here. So again, top 3 is United States, Saudi Arabia, and Russia, when you're talking about in terms of production of crude, that accounts for over 42% of the world's share of crude. That's right. Who knew? You know now. Let's move to the next slide. Markets have been flying here at the end of the day. It's kind of interesting. And of course, this gets to the next thing that we're talking about here. The forward curve of oil has been in backwardation for a little bit now, as a lot of these discussions have been going on with these talks between Israel and Iran. And to be quite honest, oil appears to be the only asset class really, really reacting strongly to the Iran-Israel conflict. You can at me if you want, but look, I know markets are moving higher right now, but it's mostly because oil has really flipped the script today and is down $7 and change, which sucks because I did buy an MCL contract. I was a little worried about an upside since I have this iron condor on crude oil. So I just decided to sort of, cap my risk a little bit. I'm down $600 on an out move, but it's cool. On the MCL contract, I'm down. I'm kind of flat on my crude iron condor. So hey, it is what it is. I should have kept it. Because I actually had one. If you saw on the follow page, I actually had one that was in the July contract, and it was my short strikes for 68.70, my short call spread. And so I just decided to close that whole thing and go out and sort of reset my strikes and move it out to further months. But if I had kept that, I'd be up on that today. But hey, you live and you learn. It is what it is. But oil really appears to be the main thing that's moving. Not really bonds, not even gold and silver, to be honest with you. And markets to a lesser degree. But I would say oil is your main proxy for what's going on over there. So if it ratchets up tomorrow, you already know something has happened overnight. Let's move to the next slide. Speaking of bonds, the yield curve. We haven't looked at this in a while, and mostly because it really hasn't been talked about much. I know we had a Fed meeting last week where obviously the Fed did not change anything. Of course, you keep hearing about the sort of back and forth between Trump and Powell, but when you look at the yield curve here, you can see that right now, you can see where we are. Basically, the dark green line is last Friday. This is always kind of backward looking. And you can see that the 2s and the 10s and the 30s, the things that we look at the most, have dropped a whole lot compared to, even a week ago. But you can sort of also see, the really light line, which you can't really see, is hidden in between there. We're almost basically back at that same level. That dark line of June 20 and that light line of May 30, they're almost kind of lined up currently when you look at 2s, 10s, and 30s. Those are the main things we look at. So, what does that really mean? I mean, are we getting a cut or not? I guess is the real thing. I've seen different people say today, if inflation data continues to, different Fed people that is, if the inflation data continues to come in as they've seen, then, we could possibly be looking at a cut in July. I don't know. I don't believe it. I just think there's been too much, sort of wrangling and discussion about what's going on with whether these bills and how much they're going to, these bills that are being introduced in the Congress, et cetera, how much fiscal responsibility we're going to have as a government behind those, and how much money they're going to cost over time, and how much that's going to affect bonds. And so, the bond trade is been a little bit harder over the last couple of months. There really hasn't been as much of all, and the movements have been really kind of tight. And so, if you've probably had on like a strangle or an iron condor, you probably made money because it really hasn't strayed much outside of these sort of boundary ranges, but really hasn't been much action. We were at 4.5% for a while there on the 10s, right? And we've retreated quite a bit. And I think as a result, markets have pushed a little bit higher. So we'll see how that keeps up. Let's move to the next slide. I just couldn't help but go another show and not mention this name, Circle. I mentioned it when it first IPO'd, one of the largest holder of stable coins, but you've seen this name move around a whole lot. Oh my God, it's particularly to the upside. The upside moves have been crazy. As a matter of fact, earlier this morning, it was up over 20%. Not sure where it is now. I even looked at trying to trade this thing. I didn't trade it. I wouldn't trade this thing with your money. The options are way too wide, and it's just not that liquid, honestly. I know it has a lot of probably stock volume right now because it's the hot thing, but I don't know. I would assume the options trade by appointment only, and so I haven't touched it. Be careful out there if you are, but man, it makes some crazy moves. Let's move to the last slide. So KBH has earnings today, a home builder. You got Carnival Cruise Lines has earnings. So we've started to pay a little bit more attention to some of these bond auctions, right? Most of the bigger ones, the 10 years and the 20 years, obviously. 20 years a few weeks ago, obviously moved the market quite a bit. 10s and 30s, not so much 2 weeks ago. We have a 2-year note auction coming up on Tuesday. So Tuesday afternoon, we'll see if this means anything. Matter of fact, I'll be on Futures Power Hour with Chris Vecchio at the time of the auction. I'm sure Chris and I will talk about it. We'll see if it actually moves markets. Powell has testimony on Tuesday and Wednesday. He does these annual testimonies every year between the two different places he talks to. I think House of Financial Services, I believe. I'm pretty sure that's what it is. So we'll see if he. The remarks are going to come out tomorrow during the day. I'm pretty sure. We usually get the remarks prior to him even talking, so you have an idea of what he's going to say. They're prepared remarks. So. I don't expect anything wild out of it, but it's always interesting when Powell's talking. GDP is coming up on Thursday. Again, I think that earlier in the year, this kind of moved the markets just because GDP was fluctuating and people were worried that tariffs were going to really tank GDP. That concern has since fallen back some. Core PCE index, the Fed's preferred measure of inflation. Again, another inflation point. You would imagine that all these different inflation points still mean something. And when you hear the Fed, different Fed people saying, we're waiting to see if inflation still remains muted for us to cut rates. This might actually mean something on Friday. Number of S&P 500 stocks above the 50-day moving average is 323. That would be 64% of the S&P 500. It was up to 72% before I left. What'd you guys do, man? Let's move to the platform. Let's move to the platform. Let's see. Ranchers talking about, Circle. You're trading it, bro? Oh, God, come on, bro. Be careful. Be careful. You have to be careful in that thing. Somebody mentioned Hood. Where is that stock trading these days? Okay, yeah. That's. I'm kind of surprised it's down on a day like today, honestly. Not sure what the reason is for that. This stock has been strong recently. I've thought about, at times, not going to lie, as a hedge, I shouldn't even say it. I'll say it anyway. I thought about at times buying either calls, further out, longer dated calls in Robinhood, and there's another retail broker as sort of hedge for our job day to day, right? Like, it's an interesting thing to do. This is what you think when every day of your life as a trader, you think like a trader, you can't help it, you change that. Crude oil, like I said, moving around quite a bit. It's dropped. It's down almost 7% now. It was upwards of 78. That must have been overnight at some point in time. Big range in crude today, $10. That's going to leave a mark. We're going to see that on the chart for a while. We talked about Tesla. Again, I'm not doing anything. No trades in here right now. I am willing to sort of wait this Tesla thing out and see. Oh, come on, Tesla. Oh, geez. I am willing to wait Tesla out and see. I don't know what's going on with the platform, and see if it can get if the IVR goes a little bit higher than 33. It's been hanging around this level. I'm curious to see if there's another big move coming as a result, as more discussions and results come in on the robo taxis. I'm curious to see if this is going to lead to another spike in price, and if it does, IVR will definitely get a little bit more bid, and then I am definitely looking to trade it at that point in time. Big positions right now. No big positions really. This is an iron condor. I think I told you about this a while ago. You could see my strikes. 6,100 is my sort of short strike. So both at the money, 6,100 call and put, and then $50 wrapped around. Been holding on to this position for a little bit. It's the 630 expiration. So we're going to roll with that. The NASDAQ is another one of my big positions. This has been on for a while here. This is these call spreads that I have in the July 18th expiration and end of the month. So I'm holding on to those. HIMS, like I tell you, sold to put in there this morning. Big move to the downside. You wonder if there's more coming. NVO has also been struggling today too. 38 IVR might be one I might have to take a look at as well. Still holding my silver call spread. Again, that's further out, 64 days out. I do, again, when you talk about roll week, right? Most of the things that when I talk some of these positions, this crude position might have to get rolled this week. I've still been holding on to it. It's just a question of if vol is going to even come in over the next coming days. This might be one that I might hold through 21 days to expiration just because things have been so fast and furious in the oil space. So we'll see what ends up happening. Which other broker? eToro. That's the other one. eToro. Yeah. ETOR, right? That's the other one. So yeah, these are our enemies. eToro. No, I'm just kidding. It's not like that. I mean, at least not for me, But yeah, hey, good to be back, guys. Just want to let you guys know tomorrow I will have a special guest on, Matt Cashman from the OCC. Matt is a seasoned trader. He traded in the pits. He traded at a prop firm. He also now is at the OCC and works there, and just a great all-around guy. And so we've been trying to kick around times to come on. He's going to be on the show tomorrow. We'll be in the studio, so look forward to that. I'll see you guys tomorrow. With that, thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Would you rather have perfect entries or perfect exits always as a superpower?
Perfect exits. That means I'm winning. I would say perfect exits is a good one.
I would definitely always rather have the perfect exit. I think there's so many stocks out there that allow you to control your entry a lot more. The exit is something that is kind of out of your hands and out of everybody's hands, so I would absolutely say exit.
I guess with housing, right, they say that you make the money when you buy the house. I would guess it'd be a little bit of both. I mean, maybe because I tend to hold stocks for longer times, maybe the entry.
I mean, perfect exits, because that means you're in the green, right? But I think in a realistic standpoint, perfect entry is where you want to be, because then you have the flexibility to manage that wherever your perfect exit is.
Perfect exits. I feel like entries, it's, you can be more decisive with picking your spots. Once you're in a trade, you kind of need to wait. It could flip around on you. So having perfect exits, I think, would be a lot better.
Hello, everybody. Tim Knight here. Well, as I've written on Slope, if 24 hours ago you had asked traders, what will today be like? I suspect almost all of them would have said, well, equity is going to be down really hard and oil is going to blast higher. And 180 degrees different, totally the opposite. And it's funny how these things can go, because I've been around the markets for a long time, back to the mid 80s, early 80s. And January 16, 1991, the first Iraq war was about to start. And, you could hear the snare drums in the background. And, everyone was tense. And there was all this talk about the Revolutionary Guard and Saddam's army is the toughest in the world. And this will be another Vietnam and oil's going to go to $200 a barrel and on and on and on. And people thought that we were really in for it, and it's going to be a quagmire. And the war started, and crude oil traders were expecting to make a fortune as oil blasted higher. That was January 16, 1991. By January 18, 2 days later, oil was about half its price, half. because once, I mean, like 12 seconds into the war, it's like, this is going to be really easy. And the markets figure things out way faster than the news reporters do. The news loves to be dramatic. The news loves to pump up the narrative. But the markets are pretty shrewd about what's what. And yesterday, when the markets opened, crude oil did blast higher, and equities did plunge for about 12 seconds. And then ever since then, crude oil was up less, then up less, then up less, then it went down. And now it's down really hard, like 7%. And equities were down less and down less and down less, then went green. So every stock index is green now, and energy is getting killed. I was bracing myself for today because I was already short energy in a number of different positions. It's like, well, those are dead. Nope, those are my best winners today. And early today, I shorted XOP. Giving that another shot. So that's worked out. So yeah, very much a bizarre day. Very different than what you might expect. So World War III averted, I guess. I've got my charts ready to roll, so let's jump in and talk about them. We're still kind of grinding away. The market, really just doesn't have a direction now. Just a couple of weeks in, we're just kind of, really not doing much of anything. The spider, kind of peak excitement ended here. And then since then, we get kind of meandering. I grew up near the Mississippi. That's the best word for it. It's meandering, just like the mighty Mississippi. IWM is up. Now, this has been annoying. If you've been watching it closely today, it plunged, then it ripped higher, then it plunged, then it ripped higher, and it plunged again, and it ripped higher. We're at the highs of the day right now. And we are, once again, getting close to challenging. The ultimate stop loss, just completely give up point, is way up here. You could set different levels depending. My own personal stop loss is right at this level here. 2.75 is the stop. But even though we got lower today than we've gotten in a while, so here's the low of the day, it's still showing a lot of strength. So very hoofy. The moment you think it's going to really rally, it falls to pieces, and vice versa. So I'm sticking with it. Now, as I said, and just apropos of nothing, Mexico was one of those country funds that I'd mentioned that kind of pooped out, and this has been slipping like that past couple of weeks. As far as oil goes, USO is down hard, as I said, about 7%. This level here, for whatever reason, has been pretty much resistance for 2 years. I think I did the sound effects on Friday, just like bang, 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 and we've once again gone bang. It just kind of refused to get above that. In fact, let's be a little more generous. Let's sneak this line up to here, which was the peak back in January, and we didn't even beat that peak. With all that's going on, because there were no missiles flying on January 15, with all that's going on, it didn't even match the peak from January when nothing was going on. And so we've reversed all that Israel-Iran excitement, and we've pretty much undone the whole thing. It's like before it even happened. So there's that. That's USO. XLE down about 3.5%. Not a very clean pattern at all. XOP, which I shorted earlier today, as I mentioned, down 4.25%. Not a great pattern, but better than XLE. XLE is a big old mess. It's like pickup sticks falling on the floor. XOP is sort of kind of okay because that pink pattern kind of shows a top. But yeah, really, there have been a lot of surprises today. This is one of those crazy days. And as I made mention before, last week, I had already shorted, I think on Friday. So COP down over 3%. Halliburton, HAL down almost 5%. That's a good one. And then a little less known, Vertiv Holdings, VRT, reversing away over 2%. Now over in Bitcoin land, for whatever reason, yesterday we cracked under the 6-figure level. We're above it again. On the whole, the lifetime high was here. It sank for a while, had another spike, lower high, and sank a while again. So crypto crypto's own unrelenting rally really ended half a year ago. And I think that was in anticipation of Trump and the very crypto-friendly administration. But even though he's been president 5 months, and even though they passed the Genius Act, and there's still, he's doing all of his own crypto businesses, even with all that, we're still where we were before he was even inaugurated. So the thrill ended in December, and since then it's just been like, well, now what? Although I saw Michael Saylor, just to get, I don't know if he's just having more publicity, but his new prediction for Bitcoin is $21 million a coin, which weirdly is how many Bitcoins are potentially allowed in their construct, 21 million. So I don't know if he just grabbed that out of thin air or what, but yeah, so it's about $100,000 now, and his prediction is it'll be worth 210 times this much in, I think, 2047 or something. We can't know it's going to be the case in a day, but so it's actually kind of wise to put out a 20-year prediction, because who's going to know, right? But yeah, there's your sailor. Speaking of, here is strategy, MSTR. And as with Bitcoin, this sank a while, rallied, lower high, sank some more. Ethereum, incidentally, is pretty much unchanged. It was down really hard all the way through here, and it bottomed out yesterday. It took a big tumble. It peaked at around almost 2,900, and it actually got down to around 2,100. So that's big, about 30% or so. So that's Ethereum. Now, one thing I wanted to direct your attention to, I don't remember if I mentioned it on Friday, because on Friday I bought Palladium for the first time. I think I mentioned it, but I just don't remember. PALL was the symbol. But let's talk about Palladium for a little bit. Here is Palladium futures. You'll note I've drawn 3 basing patterns. This one completed with a terrific rally afterwards. This one completed, same result. This one, we're working on it. It hasn't completed yet. It'll take some doing to get there. Now, Palladium, it's thinly traded. It's way easier to trade GLD than PALL. And you can draw your own conclusions, like, why has it been such a laggard? Why has gold been just setting the world on fire, at least through April, and Palladium's just been kind of hanging out? But I'm assuming, I'm hoping this is going to play catch up. And today it's working out. We're up about 3.5% on the futures, and making a little more progress on that base. This is the ratio chart between Palladium and gold. And as you can see, Palladium just straight up stinks compared to gold. It did great for a while here, and it peaked. This ratio chart peaked back in early 2020. And since then, it's been doing pretty crummy versus gold. But that can change. As I say, there aren't great ways to trade this. Kind of the principal instrument is PALL, which itself trades 50,000 shares, 100,000 shares, not much. So you'll often find the bid ask is like a dime apart, even more. But for the long haul, that's rounding error. It won't matter. So anyway, so far so good. Palladium is, for the moment, moving in the right direction, even though that too was kind of a fake out, because at Sunday's open, it fell more than 1%. As far as gold itself, up a little, about 0.4%. So Palladium's kind of the star of precious metals today. Miners doing pretty good, up about 1 2/3%. A couple of individual ones you and I have talked about before, DRD and SKE, which is up about 3.5%. So all these are doing nicely, just kind of clicking right along. The biotech ETF is one I mentioned as a prospective short idea. And as with a lot of stuff, it was down harder earlier today, but it's still down a little bit. And that topping pattern is still in place, with that dashed line, I think, being a reasonable stop loss level. And another item which isn't moving dramatically, but is worth noting, is healthcare. I mentioned this one a couple of weeks back. XLV, the ETF, and we have cracked below this trend line. And it's got a not terrible pattern that it's completed there, but that's slowly cracking on too. I've got an individual stock of Centene CNC, which I'm short in that respect. Couple of other odds and ends. Speaking of, I mentioned the stablecoin, the Genius Act earlier. This has been a big beneficiary of it right here. This is a pretty new offering. Circle Internet Group, CRCL. As you can see, since its IPO, it has been having a grand old time. I don't know what the offering price was, but I imagine it was much lower than the actual public open. And even so, it has continued to soar. Today, it's up again to a lifetime high. And people are kind of scratching their heads because the company doesn't really do too much of anything, but it is all about stable coins. And in that respect, they are very popular among traders right now. So Circle Internet, very little to go in here. This is not the sort of thing I would trade at all. This is like no chart to make decisions on. Plus, it's very speculative. Another one which has also enjoyed great success and having a little bit more struggling today is CoreWeave, also very, very richly valued. But sometimes hot properties can get cold in a big hurry. A standout on that respect today is HIMS, HIMS. For a while there, it seemed incapable of going down. No pun intended, but that peaked up here and it got kind of sloppy, but then recently, and it looked like, as of Friday, looks like it was kind of shoring itself up again. So it fell really hard and then up, and it was kind of getting ready for a zip higher, just a wipeout today. A lot of nasty stuff happening. About a third of its entire market cap just poof, gone on big volume. So yeah, it's kind of a game of musical chairs or hot potato or whatever metaphor you want to use. So just to close up, SOXL, the leveraged on semiconductors, an odd thing to talk about the market in general, and I realize this leverage instrument, but I think it speaks volumes, this one chart, to show what a potent amount of overhead supply there is at these levels. And I just keep looping back to the RTY, the long-term Russell 2000 futures. It is a tug of war. Right now, we're at the highs for the day. It just keeps jerking back and forth. It hasn't been a breakout. It hasn't been a breakdown. We're still in this no man's land where there's this epic struggle going on. So I hope you survived the day okay. It's been a crazy one. Tough stuff. But hopefully tomorrow will be a little more calm. So I'll see you then, and thanks for coming by. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Hola!
Look at you guys looking like spy versus spy.
I'm in the UK. Vanetta, I got in. They let me in.
So how's the vibe in London? How's the weather? What's the tea?
So Britt and I are getting off the plane. We're like, should we wait for Batista's? And I'm like, she's like, should we wait for the Batista's? It's the right thing to do. And I'm like, all right, yeah. And it's like European vacation. We are traveling with that, with that crew. So I have a little suitcase and a backpack. Britt has a little suitcase and a backpack. The Batista's, 75 bags. It's like coming to America.
We have a rule in the Batista house. The wife has to pay for the vacation when we're on vacation. So she has one suitcase full of shoes. So we need to just...
She's paying it forward.
She's paying it forward.
Then why does your son need a suitcase that's bigger than me? So anyway,
Vinny's frosted tips aren't gonna frost themselves. He needs hair products.
Against everybody else, because I didn't want to embarrass him in front of his wife. Everybody else knows the rule. If you check bags, we're leaving you.
That's right.
You get left behind. You get left behind. That's the rule.
Uh-huh.
An hour later, we're sitting there like, oh my God,
They're coming off one bag at a time.
It was about 45 minutes. I will give you that. It really was. And I was embarrassed. My wife is in this train with all these people and everything, like Tom. We're traveling with Tom. We didn't get into the concierge level. We sat in coach. We're sitting on a train.
So anyway, we made it. We took the train. Then I had to walk. Britt made me walk like a mile.
Then it should be nothing. A big, strong man like
You should have carried it. I've never seen it before on a train. There were women getting up for him and saying, "Will you please sit? Would you like my seat?"
I mean,
seriously.
To be fair, when he starts lurching, it's jarring if you're not used to it.
Good morning, you knuckleheads, and welcome back to the show, Tastylive.
That was kind of low energy.
Good morning, knuckleheads.
It sounded like he was going into like a dramatic monologue.
Right?
Yeah, Beth, was that okay?
No.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend. We've got quite the face ripper going on here. We've got E-mini S&P 500 futures up 50 at the high of the day, 60.68 here. The NASDAQ up 212, Dow up 322, and the Russell up 20. Buy them all. Oil getting absolutely killed, /CL, down $5.02, 68.82. Volatility futures have kind of chopped around here. They got a little bit higher in the middle of the day when we had that short little blip of a sell-off. They're down 19 ticks, 20.91. Bonds actually off the highs of the session, but have rallied. 114 and change here, up 12 ticks. Gold up $11. Silver up 27 cents. Bitcoin futures down $400, but they've rallied from the lows. Spots up $1,700. Buy the dip. The war's over. Volatility is dead. Did everything just happen perfectly?
I mean, I just don't. It's very, very surprising to see the E-mini's up 50 after. Like, I could have sworn that today we would be down 100 after last night's futures open, but
have we climbed the wall of worry then? Is what you're saying?
We're
Is
there.
110 point intraday range our wall of worry?
Yeah, and a 10-point range, a 10-point intraday range in crude oil. That's one of the bigger ones we've seen in quite some time.
Oh yeah.
I'm wondering, this actually might be. I think this might be the biggest intraday range
for crude.
Yeah,
going back to like the zero craziness.
Yeah.
I will say, if you haven't looked, OVX, which is oil volatility, OVX :CGI is how you plug it into the platform to pull it up. It's CBOE VIX style implied volatility for the oil futures. You can see over the weekend getting into that 70 handle. It's just absolutely collapsed. We're down at 53.92, the low of the session, with oil touching the lows of the day. The 68 handle. It sure seems like everything is over with the war and, the uncertainty with the oil situation. All that seems to be done with.
Yeah, we've been looking at oil as kind of the North Star as to what's going on. But this sell-off certainly speaks to maybe de-escalation, which feels odd to say because we're kind of still waiting for more information on what's going on. But yeah, if you're thinking oil selling off is de-escalation, oil ripping is escalation, this is a big de-escalation. 10 points the downside. We're almost back at pre-rip levels here, under 70 for sure.
Yeah.
But I mean, it's just nuts. OVX volatility coming in a huge way.
Yeah.
The last 3 days it has come in, but this is it's a big reversal for sure. Meanwhile, Microsoft up another 2%.
I mean, that stock goes up every single day. Another $8 to the upside. You got Tesla moving in that same fashion, up 25 and change.
Yeah.
The laggards, Apple up 30 cents. Amazon has been red for most of the day. Google is just an absolute pig. It doesn't go up anymore. Some of the other tech stocks, I was looking at CrowdStrike up $14 and change today. You got a bit in your PayPals and some of the stablecoin plays, so to speak, with Circle up $22 today, another 10% here, 262. It got up into the 300 handle today. Is that the end of this craziness?
It's a good question. Where does it end? Where does it end?
I don't know. You're seeing Visa and MasterCard catching a tiny bit of a bid. The anti-stablecoin play, although I bet if there is some sort of stablecoin legislation or something that comes down the pipeline, I imagine they're going to be first in line to make their own as well.
Yeah. What a day.
Yeah.
What a day.
Kind of crazy.
Yeah, a lot is moving. Some of it is pretty big. Like this oil move is huge for sure. But the fact that it's paired with an E-mini and NASDAQ rally, I feel like is pretty telling. Volatility futures staying bid a little bit, but not too big of a sell-off there. So you would expect if oil's coming down, E-mini's up 50, you would see a bigger crush in the volatility futures, but we're not seeing that necessarily. With all that said, my portfolio MO has been just removing risk where I can.
Yeah.
So took off the DraftKings inverted strangle this morning, booked a $100 winner there. That was after a couple of rolls. I've got this Ion Q position that's coming in nicely today. I'm going to close that right now.
Very nice.
That'll be a $107 winner. Bought that back for $117. I sold it for $225 initially. So booked another $100 there, but just removing risk in things that are green-ish. Walmart got that 95-100 diagonal spread, long August, short July. That's up a little bit, but I think I can keep that on because it's so small. And yeah, the only other thing I'm keeping my eye on is gold futures. I would like to see gold futures continue to increase here. I've got a put broken wing butterfly there, and that will allow me to move my furthest out of the money long option to 20 points closer to create a symmetrical butterfly, lock in net credit on that, and remove the buying power and risk. So that's pretty much it. What have you been doing?
Yeah, taking a couple positions off. I closed out of that Nike short put that we sold on the show today. Took a couple bucks out of that. Took off a position in Visa. We did an Iron Condor for fast market last week. I took that one off quick. A lot of these stocks that were kind of in play, so to speak. Last week, SMR is another one that's right on the dance floor in terms of profits. Robinhood has kind of come back a little bit into where I need it to be. A lot of volatility has come out of some of those stocks, even your HIMS, which is one of the biggest movers today. It's down $21 and change today on a bunch of headlines on Novo Nordisk pulling Wegovy and whatnot. So you've got it down 21 and change, but volatility has really come in. And even if you look at the change column here on the put side, on a 20-point down move in the stock, and this is something that had significant call skew for most of the time we've been trading it. You could see the 40 strike puts, are up a couple dollars, which is something, but they didn't like explode here. And that's just all volatility coming out here. You could see it on the call side. These calls just getting killed. The stock was trading at like 60 and change yesterday. Those calls losing, $7, $8. So, just finding positions that have worked and taking off some risk seems prudent here with the way the market has been acting. And volatility not getting like smashed in the market overall. Only down 20 ticks, a little under 1% here of all futures.
Yeah, which is interesting because we talk about, when you see big market sell-offs, but it's not paired with a volatility increase, it's kind of just happening.
Mm-hmm.
That kind of leans us towards maybe taking a little buy the dip stance.
Yeah.
But now we're seeing the market rip higher, but volatility staying bid. So does this mean maybe we see this reverse, or maybe we see 50-point moves in either direction going forward? Time will tell.
Yeah, you tell me. If you got the crystal ball, you let me know. Couple earnings coming up this week. You have Micron, MU. What is that, tomorrow after the close?
Wednesday.
Wednesday after the close, 25th, yes. Stock trading at 120 and change here, 121. Had a really significant rally. What was the other one you mentioned to me? We had Nike, too, in the middle of this week.
Yeah.
That's on the 26th, so Thursday after the close there. Was there something else? Was there one other one that you mentioned?
There's Micron, there's Nike, there's FedEx.
FedEx,
That's
yes.
what it was.
FedEx is tomorrow after the close, I believe. Yes, tomorrow after the close. So Tuesday, FedEx, Wednesday, Micron, Thursday, Nike. Any of those have interest to you directionally or non-directionally?
They do. FedEx, I think I have to just play it to the upside again. I feel like I've done that a million times the last 2 years. And I believe FedEx was one of my most profitable underlyings like 2 years ago from just doing call diagonals for earnings because it would just go up almost every earnings cycle. But obviously that's not always going to happen. But it's still cheap. Like you can get into a long August, short the weekly for $800 for a 10-point wide.
Mm-hmm.
Micron's a little trickier. I mean, the narrative is they're doing a lot of things to bring things into the U.S. over the next couple of years. I wrote an earnings preview on this one. It was actually just released.
Shameless plug.
Yeah. It was published with an amazing image on the header there. So check that out. But $200 billion investment for U.S. stuff for Micron. But that's going to be over a long period of time. But still, the stock price has literally doubled from the low of April to where we're at now. So I would say if they post huge numbers and they continue chugging along, then fine. You could see it go up. But if they have any kind of misstep, I think you could see a big move to the downside. Just considering the fact it's doubled in price for the last 2 months. And Nike's kind of the other side of the coin. Nike, they have a lot of tariff implications with a lot of production in Asia. It's trading near the lows of the last. There you go.
Oh yeah.
There you go.
Is that like Prometheus or?
Yeah, it's Micron Netheus.
Yeah, it looks like it's like.
Yeah, Micretheus. How about that? But yes, shout out to Yessi finding that image or creating that image.
Yes. E-mini's off 3 from the high.
Oh, perfect.
They're crashing. They're crashing. You can buy this dip.
Speaking of buying dips, yeah, Nike earnings on Thursday, and they're trading near the COVID lows.
There you go.
So, but that situation is a lot more murky, I would say. Like they have to do a lot to bring themselves back. They've already said they're gonna have to hike their prices on products, which are already sky high.
Mm-hmm.
So, in this economy.
Are you interested in doing anything in Tesla? I'm itching for positions. I think I'm going to do like Iron Condor in there in July. It's tough. I mean, when you're looking around the market, looking for something that's got relatively high implied volatility, everything's kind of, the ones that do have high implied volatility are moving significantly.
Yeah. Tesla's up 8% today. I think it's definitely interesting. But yeah, I think an Iron Condor feels
Feels right.
Feels right.
Shorter duration.
Yeah. It's hard to just like, I don't know. It's hard to play this to the upside or downside into this kind of move.
I sold the 305, 295, the 405, 415. So 10 points wide. I did it at 303 in the July monthly expiration.
Perfect.
So a little bit of extra room to the upside, 5-10 points higher on the call side. E-mini's up 49. They've been chopping around here. Nothing jumping off of my screen here. Costco back at 1,000.
Classic.
Netflix up 22.
Yeah.
Meta's having a nice day. I mean, it's just a buy the dip. I mean, everything's up today. Couldn't miss.
Crazy.
Exactly what you thought
Crazy.
for the weekend.
Yeah. Yeah, Costco's interesting. I'm waiting for them to split the stock.
Mm-hmm.
I think it's only a matter of time. It means nothing transactionally, but psychologically, it opens up the window for a lot more trading opportunities. Because like right now in Costco, we can only do defined risk. We can only do calendar spreads. Like it's hard to do diagonals in there. But if they chop that price down to $100 or $200 with a 10-to-1 or 5-to-1 split, now we're in business. Now you can sell premium, do anything in there. So very much looking forward to that if we can make it happen. And by we, I mean
the market.
Yeah. Yeah, kind of a weird week. SPX expected move for the rest of the week is 90 points. Sorry, no, 77 points.
It's nothing.
It's one day.
Come on.
Yeah, it feels a little
buy
like
that straddle easy.
I mean, but we said this last time. With the Fed announcement, the expected move was like 25 points, and we were like, no, this feels low, and it was within that. It was like a 10-point range. Crazy. Are we just in the
Mini's up 54? They just just caught a little bit of a bid. I mean, you got to get 60, you got to get 6,100, right?
Do you want to know why?
Why?
It's the 250 buy button.
That's it. Yeah, it's back. It seems to be back.
Yeah.
Why not?
The 230 buy button, the 250 buy button, they do
took 10 cents off volatility too, so you got a little bit of a bid from that.
I mean, all kidding aside, this is a wild move to the upside. I'm very interested to hear
110 point intraday range today. 120.
Yeah.
Ish. 110 to 20.
Yeah. And if you told me that without looking at the price of anything, if you told me that there was a 110 point range today, I would have said
it was all to the downside.
Down.
Yeah, that's markets, baby. Climb the wall of worry.
Yes.
It's all fine.
That's the phrase of the day, huh?
Yeah, I mean this was it. This is a perfect example.
True.
You had people calling for limit down over the weekend. Little did they know it was just a little dippy do. Little buy the dip, move on.
Yeah, the oil move is really interesting. I think that's definitely more interesting than the E-minis and NASDAQ. The oil move peaked at about 11:30 when we were on our show.
Yes.
And it hasn't looked back since. It was a swift sell-off closer to 72 and then just continuation to the downside there. So, yeah. Chris and Ilya, very interested to hear what they have to say in a few minutes here on Overtime, which I'll be joining them for.
Ooh, a special edition.
Yeah.
Very nice.
Yeah.
Very nice. Yes.
But yeah, I think for me, just trying to take risk off wherever I can and give myself a lot of cash on the side for opportunities if they do arise.
Shameless plug for a couple things tomorrow. So tomorrow we have a little special occasion. Liz and Jenny will be at the CBOE for the opening bell. It should be really, really cool to see the happenings going on there right when the market opens. So that should be fun. Number 2, we have cherry picks coming out and a nice little update to the back testing software, which should be coming. There we go. There are the ladies. Look at that. CBOE floor, baby. Be perfect tomorrow. We also have an update for the back testing coming out. We're going to be talking about it in the cherry picks tomorrow as well. And we might bring the doctor, the good doctor himself, on for just a little piece on the cherry picks tomorrow, depending on if time permits. So Those are my two little announcements.
And we were talking to Jacob earlier. You know how we were always doing these diagonal spreads.
Yes.
People are always questioning the diagonal spreads. We're doing a piece on the diagonal spreads this week too.
Ah, very nice. Perfect. Good.
So ideally, all the numbers are significantly positive. Doing nothing wrong.
I would imagine so.
I mean,
especially
you're
if
doing
you're
it to the
doing them,
upside.
if you're doing them to the upside in the last 10 years, I think you probably came out on top.
Yeah.
E-minis right now up 56. We're at the high of the session here. You got the NASDAQ up 220, the Dow up 372, the Russell up 21. Oil futures continuing to slide lower. They're at the lows of the session, down $5.51. You got volatility futures finally giving it up, down 30 ticks. Bonds up 10 ticks. You got gold and silver both catching a tiny little bid today, up $6.22 respectively. And then Bitcoin futures basically unchanged on the session. It's risk on. It's buy it all.
Yeah. UAL, also another big intraday range. It was down like $2 or $3 this morning. Now it's up $6 or $3 overall. So 6-7 point range there.
Mm-hmm.
It's up only. I see some characters on the screen.
Do we have them? Do we have the boys? Should we bring them in? Mr. Vecchio with I can see the look on your face of just almost as if you had this crystal ball just ready to go. You know, you've been in your element this last couple days.
In Central Time that the market was going to sell off and we were going to fade it the rest of the day, right?
Yes, you did. Yes, you did.
It's been a decent Monday.
Were you able to catch it though? I mean, come on, we had a sell off of about 35 seconds. Did you catch a little piece of it?
35 seconds. We went down over the course of an hour.
No.
That was nice.
Come on. We were on the show for it. It was like 10 minutes.
It's 250 points to the NASDAQ.
Oh, some micro dip.
Yeah,
micro dip. But that's the right. Like, what's the smooth brain thing to do? Sell oil when the U.S. bombs Iran. Apparently.
Yeah.
Is the move in oil done with? You think?
It's done.
It's done.
This is done.
It's so over. They've already smashed vol. There's zero vol there. So we march higher. Where are we going, Chris?
I've been watching Iranian state TV for the past 2 hours. This thing is over. They've declared victory.
Of course. I mean, this was the perfect. They threw a couple pebbles at, a place in the Middle East, and it's over with. It's done. Now we can buy the dip,
They
move
said
on.
the pebbles were coming.
They said the pebbles were coming. Nobody got hurt. They didn't land. It was like shooting fireworks.
They let Qatar
The White
know.
House
They
said,
let
I
us
see
know.
your pebbles. I'm not going to retaliate.
Exactly. Trump wins. Iran wins. Israel wins. Everybody wins. Market go higher.
Well,
Iran
take a look.
wins.
Markets didn't go down on it. Why should it go higher on it?
It's a good question.
I mean, but speaking of oil, I feel
that's
like
the only thing that bothers me here about getting bulled up on equities at the end of this is they never really sold off. So why should they rally on any of this? I definitely got a little short crude oil, though. In fact, when Chris and I were talking earlier on Futures Power Hour, I did it live as we were talking. And there goes the vol. It's coming out.
Yeah. Yeah, it certainly is coming out.
Yeah, I guess the only time I can see a bigger intraday range for this thing was 2022 when we were above $100.
Ukraine.
Yeah.
The initial invasion of Ukraine.
Yeah. This is crazy big range. This is nuts.
I mean, look, Iran and Israel are going to keep fighting. I don't think that's in doubt, right? But whether or not the U.S. is going to put boots on the ground or there's going to be a closure of the Strait of Hormuz, that's not the signaling coming out. This is so telegraphed, right? The U.S. evacuated its bases. It's moved all of its air assets out. So Iran, if they did hit something, it would just like destroy a runway. Come on. What are we doing here? As Dylan might say, what are we doing here?
Does the speed of everything shock you at all? That there was it was, I think the consensus was that it was over as soon as it started.
When the U.S. killed
market-wise.
Soleimani, right, when the U.S. killed Soleimani in January 2020, it took a few days for them to retaliate because they had a few days of mourning across the country for him. But once the mourning ended, then they fired those rockets at the U.S. base in Iraq. There's 2 U.S. bases in Iraq. So this feels like they had a few days to get their act together. They fired their missiles. They're declaring victory, showing images of an Iranian missile breaking the Statue of Liberty in half on Iranian state television.
Well, me and Gus were chatting. They don't even have to shoot the rockets anymore. They can just have ChatGPT make the propaganda for them, and they could just use those images. You don't even have to do anything anymore.
Yeah. So it's a heck of a reversal in oil.
I mean, but it works for the Iron Condor that I have with the short options between 60 and 70. So there you go.
E-mini's up.
I've been short vol in gold. Nice. Okay. I got short vol in crude earlier today. Nice. Okay. Bonds are up at the long end. Nevertheless, like despite all of this, okay. Dollar looks kind of interesting. It never really got a haven bid this way or that, and is stuck in a range much like stocks are. Starting to smell like maybe we finally get a crack higher there, because if it can't make hay of a war in the Middle East, it's thinking about something else entirely.
E-mini S&P 500 futures up 60. We're at 60.75. I mean, all-time highs is what, 6,200, 6,250-ish. Can we go around and just see when we all think we got there? I mean, that's the only option is the upside. Chris, when are we getting there?
July 18th for my birthday.
Oh, I love it. Mikey, what do you think? It's got to be after the tariff stuff because we're going to push the tariff stuff back another 60 to 90 days. We'll push it towards the end of the year, and then we'll stop talking about it after that. Yeah. It got to be early July, right?
Yeah, it's got to be before the sleigh bells start chiming in because once those come, I mean, it's all over.
Very nice.
Yeah, we'll say earlier than July 18th. How about that?
All right. I'll take the under as well.
Works for me, guys.
Perfect.
All right, boys. Thanks for hanging out with us.
I'll take June 2026.
2026. I like that. That's what I was waiting for.
Let us end the show.
I'll take June 2026.
Thank you, boys, for hanging with us. We're going to take a quick little 90-second break, come back with overtime. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Class is in session.
Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right, Katie. All right, Thomas. What is your take on the rally in AI stocks right now? Do you think AI stocks are a bubble? Do you think it's something that's here to stay, or is it somewhere in the middle?
I honestly think it's somewhere in the middle. I like to be flexible with my strategies and my time horizons and everything like that. So I think that, sure, if there's like a crazy run up or a V bottom or something like that and you want to take the other side, that's totally okay. But I also don't think they're going anywhere.
No, I think it's here to stay. I mean, it has a lot of moving power so far. There's a lot of excitement over it. We're seeing a lot of investment, spending into it. There's a rush for spending. A lot of companies are trying to get ahead of each other. Power companies are now investing in, power hubs to go alongside it. So there's a lot of synergy in the industry between energy and AI. So it's here to stay.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
The war's over. It's Monday, June 23rd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in studio, Chicago, taking you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform on tastylive.com, welcome. Thanks for tuning in. Come over to the chat. Tell us what you're trading, what you think of this stupendous reversal in oil prices, down 12% from their opening highs yesterday on First Call. Stocks end up pushing higher into the green, despite a little brief midday blip when Iran returns the favor, launching a proportionate number of missiles back at U.S. bases in Qatar. Ultimately, we see bonds trading to the upside for most of the session. Gold, silver meander around, but the story of the day is the resiliency of stocks and the pullback in oil here. We can go to the charts right away. It's a stock market that's closing out the session right near the highs, if not slightly off. S&P up 0.92%, NASDAQ higher by 0.96%. Your Russell's lagging. Well, it was lagging, actually. It's now higher by 1.06%. Good news there. We turn our attention to the bond market, where the long end of the curve, notes and bonds, both are seeing lower yields, higher prices over the course of today. Gold prices, they do, again, meander to the upside, but lose 3,400 once more. They were up by 1.1% or so yesterday at the open. But Mike, it's the news of oil, down 8.46%, absolutely crashing into the close. We see here that we're sitting right at session lows right now. In fact, we've now broken down through the levels prior to Israel attacking Iran on June 12th. Volatility is now down below the levels that we were at before Israel attacked Iran on June 12th. Mike, what do the bears have left to deter the bulls at this market right now?
Nike earnings. That's about it. I mean, this is crazy. We were talking about this a couple seconds ago, but this is the biggest. I think it's the biggest intraday range in oil since the Ukraine war started, too. So yeah. Crazy. But yeah, I mean, the fact that the E-minis and NASDAQ are just like, meh, and just ripping higher continuously, it's nuts. Absolutely nuts.
But they're not ripping higher continuously. They're stuck in the same range that they've been in since early May. They didn't care about this war starting. I don't know why they should care about this war ending. And they don't. They're not going anywhere. I mean, of course, they're up intraday. There's no question about that, obviously. But look at a chart of the S&P, look at a chart of the NASDAQ, look at a chart of the Russell. If you're really bored, look at a chart of the Dow. Where have these things gone in the past, I don't know, 4 weeks? Absolutely nowhere. They are still in the same range.
Did the bearish arrow that you pull out of your quiver say, look at the Dow?
I mean, pick one. Pick an index. Where has it gone in 4 weeks?
Yeah, I think
Mike. There's the idea that muscle tension and pain can resolve from mental anguish, and I'm thinking about that chat we were just having in the show, in the green room before the show about Ilya getting his little acupressure mat that I recommended, of course. And I mean that
it
I'm
hasn't
not
arrived
belittling.
yet.
No,
maybe,
but like
maybe tomorrow I'll be less of a curmudgeon. Not today.
Well, I think my point here is that maybe your back pain would go away if you stopped being bearish.
Can't do it. In fact, I think were these markets to roll over, my back pain would be resolved almost instantly. I do have to say, somehow, after spending the night at a Metallica concert last night, it actually feels better. So maybe I should be doing more things to stress it and not less.
Yeah, all that activity jumping around. I mean, Ilya, to your point, technically speaking, the market really hasn't made a substantial break yet. We are still very much in the sideways chop that's defined.
Yeah.
Almost going on a month at this point in time.
That's the thing.
Well,
they don't care.
There's a case to be made that maybe we're starting to test a breakout condition a little bit. I know you're not a lover of the diagonal lines like I am, but
you do have to pay attention, though.
We've started to clear out some of the former swing highs
there's some
in
stuff
here.
that's going on here. Sure.
When you heard when you heard "Give me fuel, give me fire, give me that which I desire," were you thinking of how crude oil prices were going to be impacted there? Or
they didn't play that one yesterday. It's a 2-day show, and they promised not to repeat any songs from one day into the next. They played that one on Friday. I wasn't there for it.
Got it.
But they did not disappoint yesterday. I tell you what.
I mean, yeah, they're iconic.
Incredible.
But yeah, I guess to further elaborate my statement on the E-minis NASDAQ, I would have thought that coming out of Friday and then going into the weekend news and seeing Bitcoin sub 100K, I could have sworn that we would have been down 100 points or more.
Oh, totally.
But
totally.
The fact that it is not happening is just surprising to me. Just in that context.
This entire episode, I think, speaks to that, Mike. I think you're absolutely right. This market did not want to pay attention to any of this whole thing. It wiggled down when it started. It wiggled up today when it seems to be off-ramping. The market seems to be not paying attention to any of this either which way.
Well, I mean, if we have to run a larger budget deficit, first off, a public sector budget deficit is a private sector surplus. So if the government has to run larger deficits to fund a war effort, there's just more money in the market's pocket. And it's not like you're sacrificing substantial revenues from S&P 500 or NASDAQ companies out of this. At the high end estimate, $575 million of revenues for S&P 500 companies for business related to Iran in fiscal year calendar year 2024, 0.003% of revenues. Whereas if you have to sustain any sort of significant war effort, that money goes right into U.S. companies' pockets without sacrificing anything on the revenue side because of the war. It's a sick game, right? But like there's a cold truth to the fact that dollars and cents as a result of us bombing Iran don't necessarily need to change hands outside of the fact that there's some, risk on, risk off sentiment and people speculating on people's various flows over the course of the session. But Mike, we get out of the session here basically sitting on the highs. The Nasdaq's up 1.04% right now. Mm-hmm. You mentioned Nike earnings being a potential roadblock this week, and I realize that was a facetious comment, but we're not really in a hardy part of the earnings calendar right now. So is there anything in particular in the days ahead, if it's a Micron, a FedEx, a Nike, do those move the needle for you whatsoever for the broader zeitgeist of where the indexes are heading?
Yeah, I mean, if you're looking for volatility, I think you can find them in Nike and Micron. FedEx is a little tougher because the FedEx expected move is significantly smaller than the other two, but it's still up there. I mean, 16-point expected move tomorrow after the close for FedEx. Relative to September, it's about half. So similar story in Nike and Micron, but Nike is interesting because I think out of those three, tariff implications are certainly highest there with a lot of production in Asia, but it's already down at the lows. I mean, like if you're bearish, how low do you think it's going to go? I think it's at that point where like we're already at COVID-19 levels in Nike prices. If you're playing it to the downside, it's cheap to do. But I don't think you can really make a killing on that. And then Micron is interesting because Micron's stock price has literally doubled from the low in April. And now we're sitting at this crazy recovery level. But, I think for this stock to keep going up above 125, 130, I think they just have to crush earnings and crush their forecast for the rest of the year. So if they don't do that, I think even if they post good numbers, I think you could see the stock sell off. So it's tricky, but I mean, like FedEx and Nike, if you're playing for price extremes and Micron too, but bullish price extremes, FedEx and Nike, Micron, I think if you're fading their recent success, that would be a bearish play for sure.
The guy who founded FedEx died over the weekend, Fred Smith.
Yeah.
He has one of the more interesting stories for how he saved the company. Back in the early 1980s or late 1970s, I don't know the exact date, but Fred Smith goes out for a pitch to General Dynamics, and he doesn't get an investment for them. And so they have the company has a $24,000 fuel bill due over the next week, and the company only has $5,000 in the bank account. So what does he do? What any good risk taker would do. He went to a casino. He bet the last $5,000 on blackjack, and he turned it into $27,000. So he's able to cover FedEx's fuel bills. And because he was able to cover the fuel bills, he was able to get a line of credit from investor, and he kept the company alive. So FedEx has a really interesting founding, right? I mean, literally sliding door moment in history, It
is wild.
He doesn't do it, right? And that's why the company is where it is today. True story. Encourage people to look it up. So Mike, it's a 56.9 IVR. It's higher than Micron. Micron obviously is a name that's in the AI space. What say you about this? This recovery off the lows is obviously not as it hasn't covered the pre-Liberation Day gap, which I suppose thematically makes sense. It's a shipping company. What do you like about this stock right here? Would you play for just directionally neutral? Stay within an inside move?
I wish I could give you a math-based answer, but over the last 2 years, I've traded FedEx exclusively to the upside with diagonal spreads. And I believe in 2023, it was like one of my most profitable underlyings, which is hilarious. But I think the nice thing about FedEx is that even though IV rank is above 50, the actual implied volatility of August or even July is sub 50. So you can buy Delta here pretty cheap relative to the stock price. Micron has a higher raw implied volatility at like 60%, 55%, over 100% for this week specifically. But yeah, I think for me, I'm probably going to play a diagonal spread in FedEx. You can do a long August, short the weekly for less than $1,000. And Nike, I want to play to the upside, but I don't see how they can get out of this without knowing the actual tariff implications and how they can swerve around it. And Micron, it's crazy to say, but like I feel better about a Micron bullish stance even after its stock price has doubled, just because they're doing a lot to put themselves in a good spot down the road. So we'll see. I read the commentary from Nike executives in the last earnings call, and instead of talking about like what they're going to do going forward, it was just like, we're doing stuff in sports. People that are wearing Nike products are doing big things in sports. It's like, oh man, I've never heard a more not bullish thing said by an executive. So
they fumbled the bag so bad during the pandemic. Okay, and this is really where Nike's problems start. During the pandemic, when people started shopping online, Nike made the decision that they could pull their shoes off of certain retailers' shelves, thinking that the shift to online was permanent. And so they had their own digital store. And like, you go to like a Dick's Sporting Goods or, are there any other big brand stores now that are for sports? Probably not.
I mean, Foot Locker.
They were just purchased. Either way, I digress. The point being there is that you go to you go to a place that sells shoes, and Nike usually has a big stand inside the store, right? They have a big presence, even if it's a Target. That's not the case anymore. And so they let all these competitors get the shelf space, and then people started going back to the stores, and Nike didn't have the ability to get back on the shelves because the spots were taken. So it's been years of mismanagement on the marketing side. You can really see this play out. We go to a weekly chart. It's not just the tariffs. This has been going on from before the tariffs, right? 2022. They really never recover back to where they were pre-pandemic. It's because they made a really bad blunder with called arrogance, thinking that people just love the brand so much that they wouldn't have to sell their stuff in stores. It's like Apple stopped selling AirPods at, Best Buy. They'd just be dumb. Just dumb.
It is wild to think though, like when you look at people wearing Nike, like professional athletes, you're like, ooh, that's a premium contract still. So at least they can fall back on that, but that only lasts so long. So we'll see. Theta Trader in the YouTube chat says that they think that they made a Silicon Valley episode based on the FedEx gambling thing, which I need to go rewatch that because Silicon Valley is one of the better shows ever made.
That's probably what the best show that captures the mood of the 2010s.
Oh yeah, so good.
From a comedy perspective. Air Jordan is a Nike line, of course. LeBron's Nike, Durant is Nike,
Scotty Scheffler.
StockX exists because of Grail Nikes.
Oh, okay. And Caitlin Clark, which is the most important one of that list. Yeah.
Yeah.
Well,
everyone.
Who cares? They have Caitlin Clark and the stock's doing this? Are you kidding?
Come on.
That makes no sense to me.
That's not encouraging at all, actually.
No, that's not encouraging whatsoever.
That's not encouraging at all. That the markets don't want to give him any kudos, even for that level of forward thinking.
What is encouraging, though, is Sophie Cunningham finally coming after Caitlin Clark's opposition. That was great if you saw that video clip.
I have not seen that clip.
Oh, you got to watch it.
I'm surprised that's not like was there a bet on that? Is that how you're aware of it?
No, it's just like Caitlin Clark is just getting.
That's how my dad and brother bring up WNBA stuff up to me. They're like, oh, did you see this? I'm like, okay, but why were you watching? Like, oh, well, I was the pick'em streak on ESPN.
Well, these women in the WNBA just go after Caitlin Clark, like they're trying to actually injure her, and now one of her teammates.
Oh, the fouling's outrageous.
Yeah, one of her teammates, though, Sophie Cunningham, ripped this girl to the ground and was trying to pull her hair out. So it was good in defense of Caitlin Clark.
Some team spirit finally.
Yeah, but in other news, I actually have
checked out there. Crazy.
I have a question for you guys about interest rates. Believe it or not. So
let's go there.
I feel like every time I come onto the show, I'm looking at this chart, and I think this is the first time where I actually see some movement in next month's decision. If I remember correctly, I believe it was 85 to 90% chance that we stay at the current rate, but now I'm seeing a 22% chance we get a 25 basis point cut. What do you think about this?
This is one of the most interesting things coming out of the Fed meeting last week, which was exactly as pretty much anybody would have it, except for one little tidbit. The Fed actually reduced the amount of rate cuts in their forecasting for 2026. And so their net over this year and next went from 100 basis points to 75. And the market said, you're out of your mind nonsense, and moved the other way. And so you now have the cumulative rate cut tally for the markets at 120 basis points. So the market said, no, you'll be more dovish, and the Fed said, no, we'll be more hawkish. There's now a big disparity here, and somebody's going to be wrong. Powell begins his 2 days of testimony for Congress for the semi-annual summer episode tomorrow. So interesting stuff here. You do see that Fed funds futures are tilted more dovish, and that's how you get these odds up for July a little bit. But the Fed is saying the exact opposite thing, which makes this a little bit of a powder keg, maybe.
Trump just said here that he wants to thank Iran for giving us early notice, which made it possible for no lives to be lost and no anybody to be injured. Perhaps Iran can now proceed to peace and harmony in the region, and I will enthusiastically encourage Israel to do the same. Oil prices now down 8.95% on the session. It is it's a remarkable melt-off that's still going. We were coming into the top of the show, 4 o'clock Eastern time, 67.78. So we basically lost another percent, just under that, since the show started.
Mm-hmm.
Yeah, Mike. So maybe Mike, you could talk about this for a second here, because I know I've gone on about this a bit, and so is Ilya. So perhaps a different perspective or a different voice for the same topic. But as traders who are trying to stay mechanical, right? All of us are attached to our phone. We're all using social media. If you're using social media, if you're looking at any business news, these headlines are hard to avoid, right? How do you yourself ensure that you're not allowing yourself to get too emotional when you see these things? And that's not because you're like, oh my God, I can't believe bombs are flying, but like, how do you make sure that you don't overreact and continue to operate within yourself when you have days like today with these dramatic moves?
It's a great question. I think first and foremost, it's trade size. So like if we're going back to oil specifically, if I'm trading oil from a static delta standpoint where I'm just buying a contract, it's in the micro crude contract and it's only one. So like if I owned a micro crude contract, which I actually did through the initial tariff stuff. So I held a contract from when it went from 70 to sub 60. I was long at 66, I believe. So into the initial sell-off there, I had bought the contract and I just held it all the way through. So if I had multiple contracts, that would have been a disaster for me. But because there was only one, I was able to hold through all the way, roll to the next contract, do some spread, do a call against it, sell a spread against it in the main contract, and I got out of it for a small profit, I believe. But now, after the big pop in implied volatility, I shifted towards more of a neutral strategy in the major crude contract, CL, but I did a 1 point wide iron condor. So again, keeping risk small, even through the move today and the last couple of days, it breached the upside strikes all the way up to 78 at the high. But it's a definer's trade. I know exactly how much I can lose. So it really just removes the emotion completely. Like the smaller you trade, the less I'm paying attention to my phone, the less emotional I am. And really that's when you can be mechanical, because you're not making decisions based on your pain or glory of a big move, either against you or for you. You're making decisions based on what you see. So really that's it. I think it's just trading small enough to where you are not having emotional reactions to any move.
Mm-hmm.
Not having emotional reactions to any move it's difficult, right? And I know a lot of people go through this, and you see things, right? You see it on Zero Hedge, you see it on MSNBC, and I point those two out because there's a lot of emotional content on there in political terms that activates that little monkey part of everyone's brain that the Strait of Hormuz is going to be closed and World War III is happening, and Ted Cruz, a U.S. senator, doesn't even know the population of Iran these days. So
holy moly, guacamole!
Right. That's that. But the point is that you have to operate within the system that works for you. And so sticking to the system of staying small, willingly cut losses, recenter your strikes if you have to. Who cares if you're right about any particular trade? The goal is to make money. So if it means you move something sooner and you avoid losing money, that's just as good as being right. Okay. And again, the point here is not to get taken out of the cart. So for those that were short oil now, this is the question, Ilya. If you were riding this out, okay, what do you do here? Because we started to break some below some key technical levels. 68 was like the conflict line in the sand, if you will. We're creeping below there. Do you take profits here? Do you, if you're short a call spread, do you bring your strikes closer in? Do you just slap on an iron condor here, short iron condor, and go home? Because hell, we can go out to say like 53 days here still. The expected move is down to 52 up to 83. We didn't get through 83 last night. What is that free money?
So when I was putting on my short call vertical just a few hours ago, I did go out 53 days because one of the things that I've been doing to manage risk, in addition to keeping size small, is putting more duration in than you might expect, which kind of dilutes your exposure to the directional underlying and gives you a little bit more room. And that's been very helpful for staying power, for not getting caught up in craziness, and for riding things out. So that's exactly what I did. I gave myself more duration. I used MCL rather than the full CL contract, and so kept size small. And of course, used a vertical and not an outright position to keep my risk capped. I don't think there's any reason to think that this move is over. There's still a good amount of IV here to squeeze out, and Asia and Europe haven't even tried to price this in yet. Those markets aren't even open as we get all of these headlines. So even for the next 24 hours, you might have legs. You might keep going here. There might be people here that are stuck long crude that are going to sell it and that are going to reposition as Asia comes online, as Europe comes online. So at this point, I think this thing might have legs. And also the story in crude is generally, in my mind, bearish. And that's why the markets are screaming at the Fed that it needs to cut rates. The Fed isn't saying they're not cutting because the economy is great. They're saying they're not cutting because the economy is fine for them to ride out tariff uncertainty. And they're going to wait for the economy to become not fine in order for that to change, which is why they keep revising down GDP forecasts. It's not like they don't think the issue is there. They're not lowering GDP forecasts because they think the economy is robust and so they shouldn't cut. They're telling us they want to cut. So the story here for crude is of diminishing demand and of a global economy that's slowing. In fact, that's been slowing since the middle of last year. Slowly, gradually, but slowing. So if the geopolitics overhang is out of this is a short. And this is a short not just because of what happened today. It's a short because of what the underlying narrative is once you take the geopolitical situation out of your consideration and say, well, what's the actual supply-demand story here? It isn't great.
No, I mean, listen, we go back to a world where OPEC is ramping up production hikes. Interesting. Trump goes to the Middle East. OPEC Plus, led by Saudi Arabia, ramps up production before Iranian oil is taken off the market. Anyway, Trump's calling here for world peace. Congrats, world. It's time for peace for 2 p.m. So we at least have,
Sure looks like a mission accomplished banner. Just saying.
Well, I mean, narratively speaking, Mike, right? If Iran is telling us that they've responded proportionately and Trump is saying it's time for peace, then Whoever fires the next missile or bomb is the bad guy here because this particular chapter's closed. So no escalation, I suppose, the next few days. Mike, we look at sectors here on overtime to take a look at how the stock market shakes out over the course of the session. The NASDAQ here, as we look to today's close, and there's still about 27 minutes left in trading. We are talking about a market that's up 1.03% here. Top performers today, the construction, the rate-sensitive items, home construction, home builders, telecoms, banks. Consumer discretionary is higher by 1.98% as well. Losers on the downside are all the energy names, OIH, XOP, XLE. So broadly speaking, risk on and quite firm. Like we were talking at the end of last call here about when stocks make a move back to all-time highs. Are semiconductors coiling for that move here as we get ready for the month of July?
I love that term, coiling. It seems they're well on their way, right? I mean, AMD, Micron, NVIDIA, all similar charts to the upside, all up like 50% or more in the last couple of months. But there's one thing I remember saying when we had the tariff implication stuff going on and we were in backwardation in volatility futures. I was saying, you're not going to get back to all-time highs unless you come out of backwardation. And although we are right now, it's barely there. We're still pretty flat. We were actually in more of a contango a couple of weeks ago, of course. But yeah, I mean, if we steepen that contango a little bit and volatility goes from the 20s to, let's say, 17, 18, I think you will see a climb higher, no doubt. When that happens is tough to say, but I mean we're not too far off of all-time highs. So if we're trying to get to like 6,500, 6,600, I would say a home run there would be like the end of the year. But I think we could create new all-time highs pretty soon here if we continue on this path and there is actually de-escalation and volatility gets crushed a little bit. Would not be surprised whatsoever to see that happen.
Volatility was crushed a little bit here. Back under 20 on the VIX. It's not exactly free and clear. We pop up. We have the close on June 12th at 1743. Right, we gap open higher at 2176 on Friday, June 13th. So we haven't necessarily taken the vol out of the market since this Israel attack against Iran, but it's getting back down towards this particular episode's lows. Elliott, tomorrow, Fed Chair Powell might have a chance to help nudge things along. The Fed Chair didn't really mention Israel-Iran last week, right? Kind of hinted at it, but not directly, and that's not atypical. He didn't mention Israel-Iran in May or November of 2024, a month removed from those strikes and attacks. Mm-hmm. What does Powell say tomorrow? Now that we're getting away from the U.S.-Iran portion of the story, what does the market think of Powell's testimony tomorrow?
Well, I think it actually starts to matter because the geopolitics apparently is off the table and because stocks haven't gone anywhere basically since we got the last U.S. CPI data, and neither has the dollar. And that CPI data was relatively soft. The PPI data the next day didn't tell you that it was a mirage the way it was in April because businesses ate all of the tariff costs and didn't pass it on to consumers. So it looked legitimately like there's a cap on inflation. And if you look at break-even rates, they're down. They've been going down. They popped a little bit on this Iran story, but that's because crude oil popped, and we know that's not here to stay. Just look at it. And so aside from the geopolitical spook, which, by the way, didn't even take break-even rates out of their range, they've been down since Liberation Day in a consolidation. Stocks have veered off. They've been the odd one out after both break-evens and stocks fell amid the growth scare from late February, mid-February to early April. So the markets are telling the Fed, you've got a growth issue. You don't need to be sitting on the fence. You need to be cutting. And they're pricing in more cuts, not less, from the meeting last week into now, almost by an extra cut. So that exchange rate that we had last year in cuts now versus cuts later, the Fed says 1 fewer cuts now, and the market goes, right, so 2 more cuts later. That's what the pricing is showing us now. So we're looking at a situation where if Powell convinces them, if Powell comes out and forcefully convinces the markets that in fact he's not kidding, they're not cutting, the bias is to let the economy break first because they don't know what they need to do, then you probably get a higher move in the bonds at the long end as people push more cuts downwind. You probably get a stronger dollar as it looks like it's going to maintain its yield advantage against the major currencies. And then you might really get a nudge lower in gold that there's something to believe. I mean, I'm still long. It's got to show it, but it could be vulnerable here because, like the dollar, that's a crowded sort of trade on the opposite side of maybe a Fed that's saying, listen, you're not going to convince us. There's no issue here. It's coming later than you thought. And then we're going to spend all summer going back and forth on it.
Yeah, actually, we're getting quietly rate cut odds for next year are creeping up to a point where, a little bit more, and you're talking about the main rate being closer to 3% by the end of next year, and being at the end of 3% next year.
It's on the move.
Yeah, it's certainly not the situation we were looking at quietly. It's not a 2025
Very quietly.
story. It's a 2026 story. The market's saying that once Powell's gone, Trump's appointee, we'll give him the goods. We'll give him what he's looking for. He wants lower rates. He's going to get these lower rates, but it's not this year. And the market's kind of comfortable with that. It's not a problem for stocks. It means nothing bad's happened, right? Nothing bad's happened if the Fed doesn't need to give us emergency cuts.
So far, no. But also, again, they're not rallying. And this is the most interesting thing about it. You get that CPI number and everything stops. They're not rallying. The dollar isn't falling, and they're not rallying. And it happens simultaneously. Both moves hit a wall. So, and not even a war in the Middle East gets them out of bed. They're like, nah, you're going to have to tell us something different.
What do we make of the dollar here, though? Because last week I was bandying on about how sentiment was stretched and it was looking good so far. Today it was looking great earlier. But the dollar comes back in pretty heavily, and just like you see in several different assets today, you get an engulfing candle. Technically speaking, we set a new high relative to Friday. We're closing below Friday's low, and this is getting us pinned against our 1-month moving average. Ilya, I'm riding this out so far.
I'm long.
You're still long the dollar.
No, I flipped long on Friday, and I've been getting more long since. I think this looks like a bottom, not a structural bottom. I think the trend for the dollar is probably down for a period of years at this point. But you look like maybe the move since the beginning of the year has run aground. And if anything, this looks more like a head and shoulders that wants to form. Because the same range that you see in stocks, the same kind of sideways drift, the same refusal to pay attention to much of anything since that CPI report, that's what you're seeing in the dollar. You're seeing swings inside that range when the geopolitics demands it, but you don't see, if the dollar was responsive to geopolitics the way it would be, it would look more like crude oil. Like those swings. That's not what you see. Not in here, not in gold, not in stocks. Why? All of these are intimately Fed sensitive things. And they reacted like this war didn't even happen. for the most part. It was crude oil all by itself.
Speaking of crude, at what point is crude a buy? From Peter in the chat. Is it as
That's a
easy
great
as sub
question.
60?
It's a great question.
62. 64. Right? I mean, if we're going to give this a chance, why not back to the swing low from March where the highs were in April and May?
Yeah.
Right? We're going to completely squeeze the latest bit of tension out of the market. Oil started jumping up before. A few days
Narrowly,
before.
yeah. That range top was what, 62 and change? Call it 62.50.
If I'm short oil because of what's happening here, I'm probably looking at 62 to 64 as a place where I would take any short exposure off. That's my plan, at least. And then at that point, maybe flipping long. But Mike, I still think one of the more appealing things out here, if you go to 53 days, again, 54, 52. Let's get rid of you here, actually, because that had a full futures contract in there. 54, 52 on the short put spread side, and we'll call it 82, 84. So that's still six. Oh, gosh, that's really come in over the course of the day. That's not a great risk to reward, risking 5.5, 5.6 to make one. I don't know about that. But if you play with the pop and you're willing to give up a little bit more and you pull this in, you could still get something in that neighborhood of 3-1, 4-1. Directionally neutral may be the best bet. You're just betting that we're not going to clear out oil's highs that we had at the start of this week. Is that an unreasonable thing to do when we're placing a trade here? We're not going to punch through today's highs. I don't know. If the market's going to give us that trade, we got to take it. How could we not?
Yeah. And honestly, a couple days ago, when OXY/CGI was popping off, and that is not the right ticker symbol. I forget what it is. But oil.
What company?
Just oil volatility.
Isn't that OVX?
OVX.
I think it's OVX.
OVX:CGI. It popped off. It reached a peak on a peak-ish on June 17th. So at that point in time, if you're playing neutral, even if you were looking at micro crude or the larger crude contract, like you were able to get way out on the curve because the implied volatility was there. It's come down quite a bit, but yeah, I mean, the neutral range is still pretty wide. Like you can still go above 80 or 75, somewhere around there if you're trying to create a neutral iron condor. But yeah, for me, like the micro crude contracts that I've been trading, where I'm just buying the micro crude contract, I was doing that anytime we went below 70 earlier this year. Now I feel like with this kind of range, I agree with you guys. I think maybe 64, 62, or if we get below 60, that's like an auto smash for me. One contract though, because then I can absorb any variance that goes my way. So yeah, if we see a bigger liquidation here where we get down to 64, 62 pretty quickly, I'd be happy to take that risk for one micro contract.
Maybe just to chew on this for a second here, I couldn't help but notice, just looking back at the chart, when we have the Russian invasion of Ukraine in February 22, we have about a month or so where oil vol stays up. But even so, prior to the pre-invasion machinations getting into play, Russia started moving troops into the area in November of 21. You didn't see oil vol come off the board substantially, right? It stuck higher, basically right around 50 for several months. If oil vol is just kind of pinned here, let's say the IVRs for crude stick around 50 or 60, Mike. Not that I'm saying they will, but let's just say because of this now risk that's going to be sitting at the margins, oil vol can't deflate back to a 20 IVR. What kind of trading strategies would you employ for the market to move around and chop around sideways without vol leaving? How do you capitalize on that kind of situation?
Well, I think you could still do iron condors for sure, because you're really especially with narrow iron condors with the bigger crude contract, it's really like a set it and forget it type trade where you're setting it at the current IV, and instead of waiting for IV to collapse, you're just waiting for time to come out and decay the extrinsic value. Where a micro crude strangle is another way to do that, where you'll get a faster decay there, but maybe you don't get the IV collapse you're talking about. But when we have these heightened implied volatilities, I think it shows up most in like calendar spreads. Because if you look at the crude contract and you look at like the U contract, for example, if you look at the difference in days here, so you can see the 25-day, the July 18th contract for the U contract has a plus minus $6 expected move. If you look at the 53-day August 15th contract, it's got a $7.95 expected move. So more than twice the amount of time, but essentially the same expected move. So like that's another way you could play it, where you're buying the 53-day and you're selling the 25-day, but you're making sure that they're both settling to the same contract, so you're not calendarizing your options. You're in the same options contract in the U settlement contract, but you're still able to stagger those days. So, and that one's nice because you can take that calendar spread, take that idea, and you can still shift it directionally. Like you can do a call calendar out of the money or a put calendar out of the money, and kind of play it both ways.
Ilya, what are the implications for the broader market if oil stays here? When do we stop talking about, I hate to say that we're going to stop talking about this, but it feels like this is an event that is going to remain in the news. But from a trading perspective, what do we do with it?
From a trading perspective, it might be over already. And then you go back to your regularly scheduled programming. You go back to crude oil being a function of demand, and that demand being a function of global growth. And there you come back to a very familiar conversation. Nobody was paying attention to this, of course, today, but S&P Global published their updated PMI numbers for June. And it's a very familiar story. It looks just like last year. Japan, basically standstill. Eurozone, standstill actually. UK, standstill. The US, again, the only game in town. And again, because of the service sector. So you have a situation here increasingly where you're coming back to last year's playbook. Only global growth overall is now slower. It just started last year. And you can see that basically all of last year, you had the US outperforming, and everywhere else, all the other growth engines that matter, the Eurozone and China mainly, with the US, the three of them are 58% of global GDP. And that's before you count that all the other economies, the other 42%, are for the most part vendors and need the other three to grow so they can export into that demand. Otherwise, they don't have economies as such. And so you have a situation here where this just takes you back to, oh, global growth is near 17-month lows. Oh, there's a single point of failure. That point of failure is the U.S. If that fails, there is no safety net. Oh, U.S. economic data has increasingly disappointed relative to forecasts over the past several weeks. The bond markets are not buying what the Fed is selling. And if you look at the Atlanta Fed's GDP tracker here, it's high level-wise because of the arithmetic from the first quarter's tariff aberration, let's call it. But look at the direction of the model's move. Since you got a second quarter GDP now model, where have we been going over the past several weeks? It's down. And it's telling you that the incoming data into the model is fading. right alongside what the Citigroup Economic Surprise Index data is telling you. U.S. data is fading. So if you have one point of failure and the direction of travel is not good in that one point of failure, how good is the outlook for a cyclical commodity? Not great. So I'm pretty happy staying short here. We probably have a little bit more legs on this yet.
Yeah, U.S. City Economic Surprise Index is at its lowest levels of the year. That doesn't really mean anything in isolation, and we actually haven't talked about it in a while. So for those that...
No, it's context.
Right, so it's a time decay function that basically gives you a weighted mean of whether or not data is beating or missing expectations. And so the more negative the index, the worse the data is coming into expectations. And when the index is rising, it basically means that things are getting better. And because it's a time decay function, newer data carries more weight than older data. So something released today will carry more weight than something released 2 weeks ago for the input. And so when you see something like the City Economic Surprise Index falling to new lows, even after today's data, we missed expectations, but those expectations are already coming in. That's the point. And we still managed to miss expectations that were downgraded. So data isn't exactly positive. But if data aren't positive,
this thing is scaled by volatility in the FX market's response. So if the data misses and that moves markets, and we saw it didn't move markets today because markets were looking elsewhere, then it looks bigger. So you might consider if there wasn't a big Iran headline today or over the past several days, the surprise index would be even lower.
I'd like to point out that the surprise index is sitting at levels near where it was last summer when the Fed ultimately made its decision that they should cut rates by 50 basis points. Okay, so we're not, these calls for July cuts aren't exactly coming out of thin air.
No, the markets are clearly trying to goad the Fed into something here and tell them, listen, you were wrong last time when we talked you into it, or at least from our perspective, you were wrong. I've argued maybe the Fed is doing something akin to judo, where they let the markets work themselves up in a direction, and then instead of pushing back, they pull in and then throw the markets off balance. Because the moment, of course, that they cut 50 basis points last year, what do the markets do? They go, oh, no, too dovish. And the Fed is ultimately much better at quelling speculation than if they tried to resist. So we'll see how this goes. But if that's the maneuver, if it's judo that the Fed is doing, then markets might be sniffing out that September they'll go big again after all of this resisting and protesting now.
Mike, we only got a few minutes left here. I'm still gawking at the fact that oil was up near 78 earlier and it's now closing just below 67.35. What's your number one? What's the number one thing you're looking out for this week? What do you care about most?
I think we still focus on oil. I liked Ilya's call out earlier about how really only our markets are involved right now. I think when other markets open up, maybe we see some continued movement. Implied volatility is still high there. But I mean, if things are de-escalating, escalating, whatever, like oil is still going to be the first thing that moves, I would assume. So definitely going to keep my eye on oil. I'm going to keep my eye on it and see if we get closer to that 60 level, in which case I'll be buying a micro contract. I would rather be long oil than short oil, even if we get back up to the mid 70s personally. And outside of that, I'm going to just focus on these earnings trades and see what else the market brings. But I really, like in these environments, like today's a weird move. This market's kind of weird today. But in these environments where there is global uncertainty, I like to just take risk off where I can. So like the Ion Q short put, took that off earlier. DraftKings Strangle I've been managing, took that off earlier. Both were small wins, but I'd rather just have risk off in case something crazy happens, then I'm not stuck in positions and I have the ability to layer on new opportunities. So that's where my mind's at.
Ilya, you have any strong feelings about stocks I think that answer precedes itself. What do you feel about broader market sentiment up here, though? Is there a wall of worry for us to climb, or have bulls shot their shot at this point in time?
If you can't break the range, having avoided a war that you weren't spooked by to begin with, it's very clear to me that you should not take this de-escalation with Iran as a reason to be long stocks. There are reasons to be long stocks, clearly, but that doesn't seem like it. And so I'm focused on the Fed, and to me, this looks like something that is vulnerable to rolling over still. I'm glad I have a lot of duration in it still. I'm glad that they're verticals still, because this is a market I'm plainly fighting. But I think the risk reward here still looks much better being short under the recent high. If you're wrong fast. If you're right, you have lots of room. I also like the flip side of the US dollar, which looks very similar to this. And there, I'm a lot more aggressive. I'm short euro. I'm short the pound. It looks like it's rounding out a bottom, much like stocks look like they're rounding out a top. And I think this is probably where we start a readjustment. If the war is off the table, and all we have to go on is Powell fighting the markets on rate cuts this week, this might be where this whole thing turns. My gold position probably won't like it though, so I'm gonna have to look at how the diminishing evolve from the non-war and the disappointing for gold Fed shake out in the end.
Before we close up here, I just want to complain a little bit. It's almost 5 p.m. here in New York, late afternoon. Why on earth does it feel like 110 degrees outside?
Because the Mets are hot, baby.
Okay, the Mets are 1-8. The Mets are 1-8 since Israel bombed Iran. Okay, all right.
Honestly, that Philly game, I was watching it and I was like, "Ooh, Lindor homer. Vecchio's gonna like that." And then Nimmo, second homer of the day, he's gonna like that. And then Soto, three back-to-back homers. I mean, come on. He must have been just cheering.
You saw what I tweeted, right? Because that happened a little after the news that we attacked Iran was announced. I said Mets dropped 3 bombs on Philadelphia.
Oh my God. They did. Oh boy. They did. That was a good one.
And that's all, folks. Yeah. Overtime's out of time for today. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right here on Tastylive. So for Mike Butler in studio in Chicago, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Ilya is going to take a brief break. Then he's back for more Tastylive macro money coming up next. See you there, folks.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
The U.S. enters the war with Iran, and then not. We have an interesting start to the week here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tastylive, and boy, do we have a lot of volatility, but stuck only in one asset today. All of it surprising, not only because the volatility has been so sharp in crude oil, but also because nowhere else seemed to care very much about imminent war with U.S. involvement in the Middle East. So what in the world is going to move these markets now? That's what we're going to try to tackle here as we look at, surprise, surprise, the Federal Reserve once again. Because as though last week's policy announcement were not enough, Now we have the semi-annual testimony from Fed Chair Jerome Powell to contend with. I'm going to break down how the markets are setting up here and what all of this might mean as that testimony kicks off tomorrow. So let's start first with what the markets did last week, because it really is something to behold. Look at the 13% jump in crude oil, and you might think, oh, well, surely there is a terrible conflagration afoot. Israel has struck nuclear sites in Iran. The U.S. has mulled at the time entering the conflict directly. This is now, of course, a snapshot before the U.S. ultimately does strike Iran itself. But last week, clearly, there was enough of an escalation here, and things remained relatively steady the following week as we sort of got tit for tat results. But if we take a look at what this has meant across broader assets, notice it's relatively tame. You don't get a big response from the US dollar over these past 2 weeks. It's a little bit higher last week, perhaps on some degree of haven support, but considering the yen has been basically oscillating, it doesn't really look like that's the case. The yen also typically finds a degree of haven support in these kinds of situations, and clearly that's not what we're seeing here. Gold found a bit of support initially 2 weeks ago, but hasn't really made headway. We don't exactly have a story of runaway inflation expectations around all of this, because we can see bond yields here. They continued to fall last week after falling in the previous week. So we don't exactly have a story here to paint around. This surge in crude oil is going to be something that is going to negatively impact rates with higher inflation. And stocks really ultimately don't do very much. They're a little bit lower as all of this breaks out. They're a little bit higher last week, but ultimately nothing goes very far. And what's interesting as we get very rapid de-escalation today, after the U.S. strike over the weekend, we find much the same story. It's crude oil, mostly all by itself. There's a dramatic decline here, clearly. And after this snapshot was taken, we seem to have recovered a little bit of lost ground. So we're closing down closer to 8% and not quite as close to 9%. But nevertheless, the decline is eye-watering. This is the biggest decline in crude oil since September of 2022 on a one-day basis. Stocks a little bit higher, but they don't run away. Bonds a little bit higher as yields come in, but again, nothing crazy. Gold steady. The euro a little bit higher as the dollar finds a little bit of a responsiveness to improving geopolitics and sheds a little bit of whatever haven support crept in. And the yen is basically steady, as is Bitcoin, a sort of benchmark for high beta, high volatility, high risk sensitivity type of assets. And so you're looking at a situation then here where the market seemed to shrug off this entire episode. And perhaps it is because you don't really have the makings for World War III here, since the asymmetry conventional forces-wise between the U.S. and Iran is overwhelming in favor of the U.S., of course. And also because Iran's non-traditional, sort of asymmetric capacity outside of conventional warfare has been systematically degraded over the past year, with Israel having basically run over both Hamas and Hezbollah. And so maybe whatever this was going to be was never taken very seriously by the markets, at least as far as an immediate risk to the kind of disruption that would actually impact global macro realities like global growth and global recession risk. And so it kind of stayed within crude oil for the most part and didn't really go elsewhere. Certainly the squawking today suggests that both Tehran and Washington are not in the mood to escalate. Tehran struck some U.S. assets in the Middle East, but telegraphed the move, warned ahead of time, and didn't cause any serious damage. For its part, Washington signaled that it's not looking to escalate further, that it's not going to retaliate to these strikes, and now is the time for peace. So it looks like the entire conflagration here has, from an immediate market impact perspective, come and gone. Now, that doesn't mean that the geopolitics of the situation have meaningfully improved. Israel and Iran will almost certainly continue to clash, and we're almost certainly going to get some amount of reconstituting and response out of Iran, assuming, of course, that the news doesn't bring some sort of change in the political reality there. But that increasingly looks like a story of years. And so in that sense, the implications for the markets now and for the macro narrative now are understandably muted. And the price of crude oil seems to reflect that. All of which takes our attention back, surprise, surprise, to the Federal Reserve. So last week we had their policy announcement, and this week Jay Powell will try to explain it. First in the House of Representatives, next in the Senate. The speeches are going to be, for the most part, exactly the same. But then, of course, there's going to be a Q&A session after each one, and that, of course, will be unique to the lawmakers present there. So different things might come out. Both days are worth watching. When the Fed issued its policy announcement last week, we see that what they said was relatively predictable, that the unemployment rate remains low, that labor market conditions remain solid, and that inflation is only somewhat elevated. But more importantly, that uncertainty about the economic outlook, though it too is still elevated, has diminished. Now, this seems relatively straightforward from looking at just what we already know in business and consumer confidence surveys. We just had an update of S&P Global PMI numbers here earlier today. Not that anybody would notice because of all the Iran news, but what we have here is a U.S. economy that's increasingly finding a cadence and steadying. Very little change here between what happened in May's surveys and in this June update. In fact, what we see here is the U.S. economy sort of stabilizing at modest growth. Of course, as ever, PMI numbers operate where 50 is neutral, above 50 is expansion, below 50 is contraction. The further you go above 50, the faster the expansion. The further you go below 50, the faster the contraction. Here we're clearly above 50 in expansion mode, and over the past several months we've come off from standstill right around here. That's March, give or take. And then we head back to a kind of neutral, it seems, within this range that we've been carving out since the beginning of the year. Now, of course, that's a meaningful step lower, meaningful level change lower from where we were in the second half of last year, but nevertheless, steady growth broadly continues. And then when we look at consumer confidence, we can see, of course, in the latest numbers, there's been a very meaningful recovery as one-year inflation expectations have come in from 6.6 down to still high, but in relative terms, much lower, 5.1%. So the Fed is certainly not off sides in saying the general consensus seems to be that things have calmed down some, even though they are not calm in absolute terms. Now, where things got really interesting was in the update of the forecasts, where relatively predictably, given what the Fed said in May, a further downgrade of growth expectations, a further upgrade of expectations on the employment rate, that is to say, weaker growth, weaker jobs market, and an upgrade on inflation. This, of course, makes sense. The last time that the Fed gave these forecasts was in March, and then in April, we had Liberation Day, followed shortly after by a 90-day pause. The Fed's entire argument since March has been, we don't know what the tariffs will do, but historically they are inflationary and bad for growth. So we're going to expect that there will be more inflation and less growth until we're shown otherwise, but with the economy in relatively decent shape, we don't need to do anything. The unemployment rate most recently, 4.2%. The inflation rate most recently, 2.4%. So we're in a pretty good space here. We don't need to do anything until the economy shows us otherwise. Now, of course, that was March, and in April, what the markets and the Fed have learned is that the uncertainty will be prolonged because, of course, now we have these 90-day pauses since early April. One expires in early July, the other in mid-August for China. And so when we look at all of that, well, the Fed just did more of the same. They said, well, the impact will be pushed out later, so even less growth and even more inflation and an even higher jobless rate. We're just going to move where that tariff impact bump was going to be forward in time. So far, so good. But what really struck and what really seemed to deviate here was in March, the Fed did not want to say what that might mean for rates. They just kept December's forecast for 50 basis points this year in cuts and 50 basis points next year intact. Didn't change anything, didn't say anything, and said, look, we don't know where this is going. We're going to fiddle with these forecasts, but as far as rates go, we'll let you know when we see which side of our mandate, the employment or the inflation, we need to be prioritizing. But this time, that changed. And it seemed like the Fed was pushing rate cuts off even further because for next year, they kept this year at 50 basis points. For next year, from 4.4, that is, down to 3.9 median rate. For next year, they went from 3.4 to 3.6, saying now they only expect one cut next year. And this is where things get interesting because the markets apparently do not believe them. If we look at what the markets have done, and this is despite the fact that they've not taken seriously, it would seem, any kind of an impact from the geopolitics in the Middle East here, is they've gone out to 120 plus basis points between this year and next. The full 50 that the Fed wants for this year, that's in the forecast. But for next year, the Fed only wants to do one cut, and the markets are increasingly starting to approach 3. As if to say, no, you're wrong. You're going to have to do more, not less next year. In fact, even just the move in the implied Fed curve since the meeting last week and into now is looking a little bit more dovish. Only a bit. But the markets are angling in the opposite direction from where the Fed is trying to lead them. We see this really since about mid-May, where if we look at what the bond market's expectations for inflation look like, these are so-called break-even rates, the difference between nominal and real interest rates, which extracts the inflation adjustment that you need to make to get from nominal to real. Real rates are nominal minus expected inflation. They've been pinned in this narrow range here since hitting a low in April. Now, of course, we can see stocks have rebounded and decoupled from them, having been moving lower with them around the growth scare linked with tariff implementation at the beginning of the year. But clearly sentiment there has improved, to the Fed's point. But inflation expectations have not. They're still pointing to some sort of growth downturn. And that speaks to what the markets are saying to the Fed here. So how Powell reacts and whether he convinces the markets or the markets ultimately just take the resistance to cut as evidence to keep pushing this further, that remains to be seen, of course, but the markets are not entirely off sides. Once again, we are back into a situation here where you can see the story is not unlike what we had last year. The U.S. has leveled down on growth, but just like the second half of last year, where the main drivers of global growth, and we've seen this chart many a time before, showing us that it's really just three economies powering global demand here. 58% of global GDP is the U.S., the Eurozone, and China. Of those three economies, the Eurozone is back to standstill, much as it was through the second half of last year. China is still at standstill, and we've put the latest numbers here in orange just because we don't have those numbers yet. This is standstill as of May. The June numbers for China due next week, and since there's not even official forecasts for them yet, we're just kind of assuming that they'll hold steady for the sake of argument. But we can see here, if they did as expected here, based on our very non-scientific forecast of 1 in the sample space, we'd be looking at something that's been the case for China really since the beginning of last year, which is to say sideways drift, hugging that 50 line going nowhere. And while last year the U.S. was outperforming by a much larger margin, now it's still outperforming, just less so. And so what we have here is essentially a single point of failure for the global economy. If the U.S. falters, a global recession becomes basically inescapable. In fact, we saw all through last year as global growth slowed. These are global PMI numbers now, and we can see the composite edging down, showing us that the U.S. is a bit of an island on growth, that it's not spilling over, that it's staying in the U.S. while everything else is anemic. And that's how you get that deceleration. And that's, of course, not so great news when you see that looking at the Citigroup Economic Surprise Index, it is the U.S. where economic data flow seems to be the most adverse. Whereas for emerging markets, it's holding relatively steady. For the Eurozone, it's actually improving. And so when you look at the global total here, you can see that the reason it and the G10 index are drifting lower are surely not the improving Eurozone, it's the sinking US component. And so the markets are not wholly unreasonable here in saying the Fed needs to get a move on. If Powell then forcefully makes the case to policymakers that actually it is this that the Fed intends on doing, and it's because tariff uncertainty continues unchecked, and for as long as that uncertainty continues while the economy remains in semi-idling, but not any kind of emergency mode, at least as far as growth and inflation are concerned, at least at the headline macro numbers, well then you're in a situation where the Fed can continue to wait, and the risk that something breaks continues to extend, further into the future. And if the Fed sells this point and the markets ultimately say, well, we're going to have to adjust. This is not even coming in 2026. This might be coming later. Well, then that starts to look like perhaps gains for the long end of the Treasury bond curve, where yields might start coming in and the long bond, as well as the 10-year, might start to build higher as more cuts get pushed further out in time. The dollar might strengthen after a very rough start to the year, as it looks like it might have more of a yield advantage. But then what stocks and cyclical assets do is a bit of a black box, because if the markets think that the cuts are in fact needed and that the risk to growth is in fact acute, then the Fed's delay is not good news at all, because it is not delay because of economic strength. It is delay out of concern and uncertainty. That is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be back with Chris for Futures Power Hour on Friday as well this week. On with Victor Jones for The Price of Truth on Tuesday. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of Tastylive.com. Commenting at Ilias Pivac on the platform formerly known as Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Good luck trading.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, fellow Crypto Cave member, Dan Cecilia. Dan, what's going on, my friend?
Nothing much. Happy to be here. Market's taking a little bit of a breather. Crypto market specifically, I think.
Yeah, what the hell?
A little bit of a breather, yeah. I don't know what's going on here. I thought we'd be at a 200K by now.
I was hoping the same. We're going to talk about that in just a second. We've got a performance dashboard. We'll talk expected moves, kind of go around the horn here, take a look at some headlines. We had a Fed day. I don't pay attention to much of any of that anymore. I think the probabilities were basically zero of any interest rate cut, at least for right now. I think there's still 2 cuts priced in. I suppose maybe I do kind of pay attention. 2 cuts priced in for the rest of the year. I didn't see anything, and my internet connection doesn't work over here either. So I don't know what's going on, man. Did you see anything? We had, some legislation passed, possibly? The chat's blowing up.
Genius Act passed. So
okay.
Stable coins are now, there's some regulatory framework for US dollar stable coins. So now all these kind of representatives, Sachs, Besant, they're saying that stable coins can reduce debt costs. Besant, I don't know, Scott Besant. Stable coins are a $3.7 trillion market opportunity by 2030, Scott Besant. And then Genius Act extends dollar dominance. So those are some quotes from representatives.
Well, it's good when you have the U.S. Treasury Secretary or the Secretary of the Treasury. I don't know what the exact formal term is, but when he's pumping it,
right?
That's good.
We want that.
Absolutely, yeah. I'm excited about that. Look, we thought that, and I don't know if that's been signed yet or kind of what stage that's in, but passing in the Senate, is that right? Very, very close.
I got a ton of stuff on stable coins now. JP Morgan piloting stable coin on Coinbase's blockchain. They're going to call it JPMD. Let's see here. And then Coinbase or JD.com applying for stablecoin licenses globally.
Okay.
And then Coinbase is seeking approval for tokenized equities. So those are some news items, I guess, that.
Yeah, that's huge. I mean, look, you're going to see this everywhere in terms of financial institutions looking to participate. Clearly today we have some first movers, Tether, Circle with USDC. I'm sure the stock price is up as well on this news here.
Yeah, I mean,
Circle Internet Group straight up, Dan, $200 a share. just shy of it. And so, yeah, this is huge for the industry, right? It's going to pull in more liquidity, capital that's on the sideline. I think this is big for treasuries, real world assets, right? There's this narrative in the market where, people are concerned. Who's going to buy the debt? Who is going to buy all this issuance from the U.S. Treasury? The Japanese are dumping, my friends. The Chinese are dumping. Nobody wants this debt. I think when you look around the world, emerging and frontier markets, dollar-based assets, and if you make it a lot easier to access these assets via blockchain networks, via stablecoins, which clearly stablecoin regulation here in the U.S. and presumably the global harmony that follows that regulation, that will bring a lot more liquidity and a lot more participation on chain in terms of treasury investors.
Yeah, for sure. I think that's why everyone's behind it, right? I think they know that. So, have you looked at the stablecoin market cap dashboard?
The last I checked on DeFi Llama, which is a great source for this, and we can pull it up in just a second, but I believe that we had a total market cap of close to 250 billion. I think about 70% of that is probably Tether, though the market cap of USDC has recovered quite a bit post that 2023 peg when we had the whole regional banking crisis. Right. But I don't know exactly where we are. Let me try to pull that up here. Yeah, 251.686 billion USDT. That's Tether, 62% of the total market cap, or the Tether dominance there. So here's DeFi Llama. If anybody watching is new to this space and you're interested in monitoring some of these DeFi protocols, seeing what's happening on chain from a more fundamental perspective, this is a great source. Token Terminal, Dune Analytics. There's a lot of dashboards out there.
Yeah, for sure. How about Coinbase stock? Got some people in the chat asking about that. That was up 17% today.
Yeah, I don't have my Tasty Trade platform up here just yet. Let me get it on. Boom. I wasn't watching, haven't had a position in this. Presumably, this is on the heels of the positive news around stablecoin legislation. I think this opens the door to a broader crypto markets structure bill at some point. But yeah, I don't know. Have you seen anything else here around this massive move? They didn't have earnings or anything like that.
I don't think so.
This was intraday.
This has got to be around the news of the tokenized equities.
Yeah, I did see that earlier today. Coinbase announced that you can use stablecoins as collateral for their futures. And when you think about Coinbase, a lot of times we look at this as possibly a brokerage sort of competitor, right? When you interact with it as a retail user, but this is an exchange,
right?
And hopefully at some point we'll be able to offer some of the products that are available on that exchange through the Tasty Trade platform. When I think about some of the perpetual futures that they've spun up or some of the other derivatives that they're offering, we don't have regulatory clarity in all areas, but Coinbase did just buy Deribit a month or so ago. So on the options front, there's some interesting developments as well. And assuming you get some regulation, that might open the door to a lot more participation on the exchange and a lot more that we might be able to do.
For sure. Yeah, definitely. I just Googled this quickly. I guess they launched stablecoin payments for Shopify. They partnered with Shopify.
Okay, I saw that on the Base Network the other day.
I guess this news for the stablecoin act passing was the catalyst for this, I guess.
Well, and Coinbase has a huge partnership with Circle, as I think everyone's aware if you're following Circle or the IPO. USDC has been supported by Coinbase, and you can use that on the exchange. I use that at times myself. I don't want to make any big announcements just yet, but as we've talked about, and we were in New York just a couple of weeks ago at the StableCon conference, we're working on stablecoins in other parts of this market. It's readily available today. So to me, this is clearly the direction that things are going in. It's the future. It's instantaneous, 24/7 settlement. You look at the existing payment rails today, ACH wire, and I think arguably they're antiquated. You'll be able to eventually on a Saturday, you want to trade crypto fund your account with stablecoin, you want to buy futures on the Sunday night open, you don't have to wait a couple of days for your ACH deposit to clear or your wire to clear in some cases. You'll be able to fund that, and that money will be readily available instantly.
Yeah, right. Yeah, that'll be a huge unlock for account funding. Velocity of money in 24/7 markets eventually.
Absolutely. As we're talking about kind of the future of markets of trading, and I think what that really relates to is blockchain infrastructure that facilitates this, right? You think about it as a security layer, more so a settlement layer, a little bit more efficient, faster, transparent. You're seeing a ton of announcements around the tokenization of securities. Less relevant, I would argue, for people in the US that can very quickly open a brokerage account with tastytrade, for example, fund that account and trade right away. But in terms of access by global traders or users to financial assets, US listed stocks, options, et cetera, the tokenization of some of these securities really starts to open up the gateways or the floodgates possibly.
Yeah. I think it's a total upgrade to markets globally. Market structure globally, obviously allowing more participants access to U.S. markets, U.S. listed companies. The U.S. has the largest, obviously, market in the world, most liquid, most active. I think it's all a good thing, right? Because to your point, U.S. citizens don't necessarily, have an issue with opening up a brokerage account and accessing these markets, but globally, people don't have access. So I think this type of innovation and tokenized stocks or 24/7 markets is the future, right? It's where everything's going, and I think it'll be interesting to see kind of what shakes out here over the next couple months. That Circle that you're looking at, Circle right now, that Circle stock is interesting because
and shout out to Katana in the chat, said it's up $50 here, and we've got that on the screen. We just had Coinbase up there a second ago.
So what's crazy about that is the market cap of the Circle stock is like 48 billion, and there's only like $50 billion worth of US dollar coin. So it's like it's getting to a level where potentially might be a little overvalued if you're just looking at kind of, market cap and what they're issuing on chain as far as US dollar coin.
Yeah, absolutely. I haven't paid that close of attention to the fundamentals here. I didn't look at the S1. I'm not an investor in Circle or a trader or anything like that in it yet. But clearly there's demand for access. There's demand to participate in this. And you, up to this point, really haven't had a lot of ways from the traditional side of things to invest in, or there really haven't been US-based crypto companies, right?
Right.
Coinbase, I think Galaxy just went public in the US previously on the Toronto Stock Exchange. You have a bunch of different miners that you could invest in as kind of like a BTC proxy, though not always even correlated, in Coinbase stock, as we mentioned. But you're probably going to see a Kraken IPO. You got the Circle IPO, presumably more are coming. It's a new day for crypto, or at least it has been for a few months here in the US. Dan, we got the chat fired up. We've got, they're all here. So shout out to everybody. Lone Sophos, Gregor, Katana. Who else is up in here?
Edward.
Dav, Edward, Emmett.
What's up, Emmett?
If you're not streaming on YouTube, get over there and type some crazy shit into the chat for us. Let's talk about markets, kind of go around the horn here. We sent out our midweek market update email this morning. If you don't get the Tasty Crypto emails, get on the list at tastycrypto.com. Little sign up box there. We send out 2 per day. Sometimes they're jam packed, other times we're busy, but we try to get the signals and the trading ranges and the correlations out a couple times each week with a bit of commentary. I personally enjoy writing some of these emails, but just taking a look at the performance dashboard, you called this out earlier, a bit of weakness. While there's excitement in the market, stablecoin legislation making its way through, crypto company stock prices exploding higher, seeing a bit of weakness when we look at some of the underlying cryptocurrencies, the tokens themselves. What do you make of that?
So I think it's just general pullback from the recent run we had, but I think if I'm looking at headlines here, the Fed left rates alone today, expects weaker growth, sticky inflation. That kind of is a headline that came across. I think we have the global conflict. Iran, Israel could throw some type of pause on risk assets here.
Yeah, to that point, really quickly, let's just jump over to the correlation so everybody can see kind of how things have shifted in the short term. And that's a great point. If you get, well, long term, it might be completely unrelated. I would argue doesn't really have that much of an impact on, say, the price of Bitcoin on the margin, the events themselves. If you get those risk-off headlines, we've had rising tensions, which have now evolved into tit-for-tat kind of escalation, missiles being lobbed back and forth. You've got Trump now weighing in, of course, on Truth Social or Twitter. I mean, it's ramping up. Don't get me wrong. We thought earlier in the week there might be a bit of a de-escalation, then quickly that was proven incorrect. You're seeing a strengthening in correlations here. So if we do get that kind of risk-off move for one reason or another, I don't think crypto is immune.
Right. Yeah, exactly. I definitely think that if we get a broader risk-off move in the markets, crypto is going to be affected, right? So I guess just pay attention to that. And I just think it's a little bit of a pause. I think we're still in a pretty bullish environment.
Yeah, absolutely.
Broadly.
Structurally bullish. We look at price momentum. We measure that through exponential moving averages and the crossovers. It's a simple way to look at it. It's somewhat backward looking, but keeps you on the right side of the trend, in my opinion. You've seen things go from bullish to neutral for Bitcoin and ETH. Everything else has been somewhat bearish from a momentum perspective for a while. But when I look at the structural trend in place, I want to look at weekly and monthly timeframes. And for Bitcoin, still, it's been bullish. Bitcoin market cap dominance, 65%. Bitcoin volatility is near the lows. In a more bullish environment, I want to see volatility pick up because it tends to rise with price at times, at least when price is really ripping. But we've been range bound. We're well off of those levels from early April, about 75,000. Took a shot at new all-time highs, and we've been, consolidating within that 1 week expected one standard deviation move, given the spot price and the implied volatility. So to kind of set expectations here, your upside is, you could probably call it 112. That's been the recent high that we came off of. But when you look at the current implied vol of 41%, and you use a price of, let's call it 104.5, you're going to get about a $6,000 move. It's going to give you 98 on the downside, 110 on the upside, give or take. So well within reason, within the statistical probabilities as implied by the options market right now. It's not uncharacteristic in terms of what we're seeing.
For sure, yeah. I think just pay attention to the ranges. At some point, we'll get a little bit oversold here, and it might be a good spot to go back in and scoop some up. I still think ETH has a good bid on it, maybe.
Yeah, let's jump over to the browser really quickly. Take a look at our price chart for Ethereum. There you go. Yeah, just a big move to the upside to start the month of May. And it just seems like we're building that energy, Dan. We're going to go higher or possibly break lower here. But you're just not going to trade sideways forever.
Right.
I'm hoping for the break higher. You got to take out 2,800, and then maybe the move's back to 3. Maybe it's ultimately to new all-time highs. You look at it this way, which is interesting, and you're seeing the same thing if we go down to ETH BTC. Also looks like, you're kind of priming for a move. This has been, as I like to call it, a very trashy trend over the last year. But let's say that you do run here, the narrative shifts. We know that the real world asset narrative is primarily related to Ethereum. Institutions are building. Stablecoins should start to influence some of that as well, or support the idea. And do you get back to 500ths of a Bitcoin? That's going to, at the current prices, imply a $5,000 ETH price. Basically, 100% higher from where we are here today. Now, it's not the 10x that some of us are playing for in other areas of the market, but it's a pretty good return if you get it.
Yeah, for sure. I mean, I think looking at that ETH Bitcoin trend, it's been down only for over a year. And
yeah, look at the 5-year in here.
Yeah, I mean, that's
2022. Really, this time a few years ago, was the top, and it's been Bitcoin up, ETH down in terms of that ratio.
Yeah. So, I mean, I think you've been saying this for a number of months now. It's like, might be a good time. So we'll see. It looks like that initial move has happened. Like, it looks like we've bottomed based on that chart, but still a long way to go. I still do think ETH is undervalued based on, like you said, all of the development happening on it. But there's a lot more competition too. There's a lot more stuff that has been developed. It's not the only place to develop smart contracts, trade on chain. So we'll see.
Yeah, the way that I like to look at things at times is to price them either in Bitcoin, and you can kind of find these relative value trades. But when you do that up to today, really, it's been Bitcoin over everything. So on a relative basis, Bitcoin has outperformed, up about 12% year to date. Everything against that is down pretty substantially. But you can look at Solana priced in ETH. And let's just throw our indicators on here for a second. We're starting to see some signs of weakness there too, which to me also signals maybe there's some room for ETH to run here. I look at Solana priced in Bitcoin. That's been bearish for some time. Not saying it goes lower, but that worked until it didn't. And so there's some signs here on a relative basis of weakness in Solana, strength in Bitcoin, some strength in Ethereum. Recently, when we look at the daily here, we were, if I zoom in a little bit, we had that bullish momentum signal, and you can see that it's now shifted to neutral. So keep an eye on that. But ETH definitely trading a lot better. Solana for now trading worse. I think these narratives just kind of ping pong around. But Bitcoin has held up and has been pretty resilient, even though we're whipping around within a $10,000 range. The local low in there over the last couple of weeks have been about 101 for reference. But you're just not seeing any signs in the option market that there's a big move one way or the other that traders are starting to position for. I think that, the Fed and interest rate decision, monetary policy does matter, but we knew coming into this that there was no expectation for any cut.
Right. What are you looking for in the options market? Like, I guess if we take a look at IBIT, is it some big... Is it IV? Like what
Yeah, I'm just kind of looking at IV, right? So if IV is going to increase or decrease depending on whether we have a lot of options buyers or sellers, right? And you think about a market like this where, yeah, sure, the bottom is zero. I don't think we go to zero, but there's typically more upside than downside. You often see this positive correlation with volatility and price action. And because there's that FOMO element and there's a speculative nature to it, you have people that come in, traders that buy up a ton of options on the tail. If it's IBIT, maybe that's in the 90s, it's 100 strike, whatever it might be. And you're playing for that big move and you're playing for that expansion of volatility. Same thing on the downside, right? If we were to start to see a lot of concern in the market and there's some fear, hedging activity, a bunch of traders coming in and buying put options, that's going to drive up put option premiums, put option prices. That's going to subsequently drive up implied volatilities on a per strike basis, as well as our kind of VIX style smoothed calculation when you look at 30-day. You're just not seeing that. What are you seeing? Well, you're seeing the opposite. Here is Bitcoin implied volatility. We're looking at this derived from Deribit. We've got to pull up the Volmex numbers here too. We had those guys on the show. That was awesome. Got to have them back. Let's just look at 30-day implied. Pretty much the same thing, right?
Right.
41%. If you look at this on a kind of IV rank basis, well, your 1 year high is closer to, let's zoom out a little bit. Let's call it about 70, and you're at the low. So your range is 70-40. You're at 40. IV rank of 0. If you're looking for a move in vol terms, maybe you get back up into the 60s, maybe you get to 70 or higher, those options would be a lot more expensive than they are today. So you're not seeing many signs in the options market that traders are positioning one way or the other for a big move, at least today.
Gotcha. Okay.
Now, sometimes that's reactive, and so you need realized volatility to then catalyze implied volatility. There aren't earnings announcements. Obviously, there's event risk at times in crypto, but there aren't earnings announcements where you would see premiums bid up ahead of them. I think it's typically kind of more of a reaction to news. But even with some of the recent weakness, it's not like everyone's rushing to hedge downside.
Right, exactly. Okay, interesting. Yeah, that the Volmex and devol indices are good to take a look at too, just to give us an indication of, I guess, positioning and some of that in the price.
Yeah, here's on the other side though. Here's Ethereum, a little bit different. We'll put our indicators on there. So Ethereum volatility, kind of a little bit more of a bullish trend here at the moment. Another reason why I think, okay, maybe you could see, nothing's guaranteed, but maybe you could see a bit of upside in ETH on a relative basis here. We'd see that ETH BTC ratio move higher as a function of that too. But ETH vol is trending a little bit higher over the last couple of weeks, while Bitcoin volatility is at its yearly low.
Right.
You see that with realized as well. Just kind of going around here, Dan, real quick look at, here's Bitcoin market cap dominance stuck at the mid 60s. No signs that it's altcoin season just yet. A couple tokens that have been a bit of a bright spot. I don't know if you have any insight into what's going on with Bitcoin Cash, man, but Bitcoin Cash just ripping. Bullish.
I have no idea. I've never looked at that before.
You know, you could have bought it at 380 a couple weeks ago. It's $100 just about higher.
Yeah.
We're talking about Coinbase is up $40. Who cares?
Yeah. Yeah, Bitcoin Cash. Buy Bitcoin Cash, apparently.
Another one that's been on my radar here, Aave DeFi lending platform here. We'll just use the Coinbase price. You know, it's pulled back, but another nice move where you got that signal just a few weeks ago back in May. Could have bought this, you know, I think when we first saw the momentum flip, you were closer to about 250 and just caught, you know, a nice rip there up to about, what, 320 or so. So that's another one that has shown some resilience in the face of, you know, when we look at the weekly returns here for most alts that I track or that we offer through Tastytrade, we're down double digits on the week, and it's been kind of bloody on the 1 month and 3 month basis too. What else are you trading? You buying any NFTs? What, like everybody that I talk to is like, what's going on with the NFT market? You're in that space. You got a couple minutes on NFTs before we wrap up?
Yeah, I mean, I am just looking. Well, NFT NYC is next week.
Okay.
So I feel like there's always people that launch projects around that because they'll want to go and like promote it in New York. That's when, you know, for anyone that doesn't know, that's the largest NFT conference in the world, New York City next week. So we've couple projects have launched. I'm collecting a few things, nothing major, but yeah, I mean, I don't know. It's kind of quiet out there. It depends on what chain, right? So like I think ETH mainnet typically is reserved for like artists, generative art, stuff that's a little bit higher value, people that have they got rich in ETH, so there's that wealth effect.
Yeah.
Base, Solana, that I would say like is a little bit more I guess lower value NFTs, stuff that's like tied to a product launch or tied to a game or community or some type of like token gated content type thing. You know, just internet memes, things like that. I look at NFT floor price if you want to ever bring up like, you know, the major collections and just see how they're doing. But
so you kind of track, so it's a way to get a sense of the NFT market. You track blue chip prices of things like Bored Apes, CryptoPunks.
Yeah.
Okay.
CryptoPunks, Bored Apes, Pudgy Penguins, Chromie Squiggle. Those are like top 4.
Are they moving higher? Haven't looked recently.
Just kind of sitting in the same spot.
What's a CryptoPunk cost?
$100,000
in current ETH price.
40 ETH.
Okay, so but given, so it's $100,000 given ETH's 2,500 or whatever.
Right.
So ETH goes to 5, and
yeah,
you know, maybe that per ETH price comes down because I think a lot of people still look at things in dollar terms.
But this is like
there's expensive. I mean, maybe it's not expensive. Maybe that's cheap. But
I think it's cheap.
Okay.
Considering
you've heard it here first.
Yeah, I mean, I don't want it to be skewed like it's not cheap in fiat terms if you're like
right. But from a trading perspective, I mean, what's the high in there for CryptoPunks?
Like 80 ETH, 100 ETH.
Okay, some of these have sold for over $1 million, right?
Right. Yeah. 80 ETH, 107 ETH was the top in 2021.
Okay. Well, Dan, we got to jump off. Unfortunately, we've run out of time, but I do want to talk a little bit more about NFT trading and more so like the digital art market, because there's some massive opportunities there. I think people have been asleep. Everybody thinks it's about profile pictures and they're still stuck in the kind of 2021 bubble post FTX collapse. But interesting opportunities abound. So we'll talk about that when you're on the show next.
Wealth effect's huge there.
Yes. Yeah, I want to dig into that a bit more. But that's going to do it for our show. Thank you all for watching and tuning in on YouTube, joining us in the chat. We will be back on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple, and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May, and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out a put spread in SPY. It went well. I regretted to say it was a long put spread that I put on yesterday into the big move, and I closed it out since we retreated in price today, and it's worked out well.
Short gold options.
How'd it pan out for you?
We're still alive, but we're not looking good.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Hola!
Look at you guys looking like spy versus spy.
I'm in the UK. Vanetta, I got in. They let me in.
So how's the vibe in London? How's the weather? What's the tea?
So Britt and I are getting off the plane. We're like, should we wait for Batista's? And I'm like, she's like, should we wait for the Batistas? It's the right thing to do. And I'm like, all right, yeah. And it's like European vacation. You know, we are traveling with that, you know, with that crew. So I have a little suitcase and a backpack. Britt has a little suitcase and a backpack. The Batistas, 75 bags. It's like coming to America.
We have a rule in the Batista house. The wife has to pay for the vacation when we're on vacation. So she has one suitcase full of shoes.
Started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, you know, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, oh, we gotta have this guy. And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, so where are we going on our date then? He said, oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV.
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free
Have you
diet.
managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin.
And earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best
brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go
Hey, trader friends, welcome to the show. Good morning, all the way from London.